in Sona BLW Precision, Tata Power, Ashoka Buildcon, Macrotech Developers, and Transrail Lighting. All of them will be reacting to positive news flow, while Orient Cement and Sula will be reacting to negative news. Slip into that break, come back, we'll get into further detail on all of these names.
So, right now the regional markets are doing okay. It's just China and Hong Kong which are flat to mildly negative, but other markets are looking all right for the time being. The Japanese market up 1%, Singapore's up about 1.6%, Australia's also higher. So the implied open, anyway, we have to catch up with a bunch of those trading holidays. So therefore, the pop on our screen looks quite healthy at 360 odd points. That's how the implied open is indicating we'll start off. What about individual stocks? Plenty to track in terms of news flow, and our team is standing by with the CNBC-TV18 list of top stocks to watch for the morning. Guys, morning to all of you. Abhishek, let's start with HDFC Bank. Why are you tracking this one?
Well, HDFC Bank has cut, deposit rates on its saving deposit side. So they have reduced saving deposit rates by 25 basis points. This is the first time that the bank has reduced saving deposits almost in, about 56 to 57 months. That is about from June of 2020 to right now. It's the first time that they have reduced saving deposit rates. So saving deposits below rupees 50 lakh will now attract 2.75% interest rate, and above rupees 50 lakh will get about 3.25% saving deposit rate. This was earlier 3% and 3.5% respectively. SBI is the lowest saving deposit rate in the country, giving at 2.7%. So analysts do say that the incremental net interest margin benefit will be about 5 to 8 basis points for HDFC Bank. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. Well, let's hop across to Vinny. She's here to tell us about the news flow on Auto Pharma. Morning, Vinny.
Good morning. So we're expecting a positive start coming in for Automotive and Pharma today. They've received a final approval, ANDA approval from the FDA, and this is for the tablet, which is called Rivaroxaban. This is the strength is 2.5 mg for what they've received the final approval. They're expecting the product launch to come in Q1 FY26. The estimated market size of this strength of this tablet is around $447 million, and this was as of February 2025, the last 12-month period, according to the data points coming in. Now, other than that, they've received a tentative approval for this drug as well for other strengths, which are the 10 mg, 15 mg and 20 mg. The market size of all the strengths combined is around $8.5 billion for this drug. So big one coming in as of now. That's a tentative approval for the other strengths. So keep an eye out on this one. A large opportunity that comes in for Aurobindo Pharma, especially this drug and tablet is widely prescribed as well. It's used to reduce strokes as well as systematic embolism in patients. So that is important to watch out for in today's reading session.
Vinny, thank you very much for that. Let's talk about autos and auto parts now. Some green maybe. Samvardhana Motherson, Sona, BLW and Focus. Sur is here with details. Good morning.
Morning, Prashant. So in the series of statements by US President Trump related to tariffs, he has made a statement related to auto tariffs, and that especially for imports that these companies do from Mexico and Canada. He has said that he is considering modifying the tariffs of 25% that he had imposed last month and had come into effect on April 3rd. And that 25% tariff, he might modify the tariff because he believes that US car companies need a little bit of time. Now, why this would be important for Samvardhana Motherson and Sona BLW? Because Mexico and Canada currently contribute 30 to 60% to total sold vehicles, that basically vehicles that are sold in the US, and amongst those, GM and Toyota. For GM and Toyota, the contribution is in the range of 30 to 40%, while for Volkswagen, the contribution increases to 60%. And Samvardhana Motherson is one of the biggest suppliers to these companies, and Mexico and Canada form nearly 4% to its total revenue. And for Sona BLW, total revenue that Mexico and Canada form is 2%, and that is the reason it's positive for both these companies.
Okay, so maybe some reprieve coming in for autos helps these Indian auto component makers as well. Got it, Sudarshan. Thanks very much. Let's get to Vivek now. Vivek, you're watching out for Tata Power and Ashoka Buildcon, is it?
That's right, some positive news flow on both of these stocks. So Tata Power is in focus. The company has signed a power purchase agreement with NTPC to set up close to 200 megawatt of firm and dispatchable renewable energy, a capital commitment of close to 4,500 crore. Again, a positive development given the fact that the PPA is in place. The second stock, like you mentioned, is Ashoka Buildcon. Company has emerged as L1 or the lowest bidder. Now, this is for a central railway EPC project. The project involves construction of earthworks, bridges as well as civil works. Bid price that Ashoka Buildcon actually bid was close to 570 crore. This excludes GST. Positive development given the fact that the order book now swells up further.
Thanks for that, Vivek. Going back to Vinny, she's tracking Macrotech as well as Transrail Lighting. Vinny, take it away.
Yes, so keeping an eye out on Macrotech developers, why now the dispute that was going on between the Lodha brothers, that is Abhishek Lodha as well as Abhinandan Lodha, on in terms of who could use the Lodha as a term coming in for their companies. Now, obviously, that has been officially resolved, so no issue on that front. The overhang that was there in terms of this dispute for Macrotech developer goes off, and Abhishek Lodha of Macrotech developers will continue to, have the rights for the brand name Lodha as well as Lodha Group, and Abhinandan Lodha holds the executive rights for his brand, that is House of Abhinandan Lodha. So the dispute has been resolved, and that's why we could expect to see some green on the screen. Transrail, that's another one that we're keeping an eye out on. They've secured an order of around 1,085 crores, and this is in the domestic market. As on 9-month FY25, domestic market accounted to around 46% of their revenues, and this is mainly a T&D order that they have, power T&D segment. In that main segment, they've received this order, and that segment accounts to around 87% of their revenue. So interesting to keep an eye out on. 87% of the order inflow, I beg your pardon. So more orders on that front is something interesting to watch out for.
Thanks, Vinny, for that. I'm looking at Orient Cement. They came out with this set of numbers. The numbers are less important right now because the street will be looking forward to how Ambuja Cements will turn around the company in the quarters to come. Nonetheless, the numbers were disappointing. Top line degrowth of close to around 7%. That's going with the volumes that were down by close to around 3% or thereabouts. So the 3% volume decline on volumes, that means that realizations were weak. They were down by close to around 4% or thereabouts. The problem was that even on a sequential basis, realizations were down by 1.5%. Well, the street was bracing for some kind of increase, maybe 1% or so, because it has a high amount of exposure to South India. So weak realizations was a disappointment. EBITDA number, well, that was down by close to around 30% on a year-on-year basis, but it improved on a sequential basis, which is heartening because the margin profile as well, from around 9%, it's moved to around 12.5% or thereabouts. So there has been some improvement. EBITDA per ton from around 450 rupees, it's moved all the way to around 600 rupees. So some improvement being seen on a sequential basis, though the street would have liked to see some more. Profitability was down by close to around 38%. So going with red on this one because the numbers were weak. However, that open offer price of around 395 rupees will keep the stock afloat. That said, let's go to Mangalam. He's here to tell us about Sula Vineyards. Well, Mangalam, another weak quarter?
Another weak quarter for Sula Vineyards makes it a weak year for the stock as well and the company. If you look at, over the last 1 year or so, the stock has seen a massive correction from the highs itself, and seems like given the fourth quarter update, there might not be much relief coming in as well, because the total revenue for this quarter grew by just 0.7%, about 132 crores, and that was led by a big surge in their, wine tourism business, which benefited from the Sula Fest that they had conducted in the quarter itself, which grew by about 25%. Their own brands actually saw a decline of 2.9% in their revenues, coming in at just above, just around that 110 crore mark, and taking the entire year's revenue to a growth of just about 1.7%, much lower than the over 15-20% that the company would do in the previous years itself. The only thing I will be watching out for, despite muted revenue growth in the actual numbers that are reported, will be margins. Have they improved from their third quarter levels or not? Because that's exactly what the management had told us when they joined us very recently itself. So if the margins are improving, then maybe the next year we will see better growth and there could be some relief. But on these numbers, one expects the stocks to be in the red today.
Okay, so not quite a high. That's Sula at the end of Q4. Mangalam, thanks for that. Let's quickly recap our list of stocks to watch then. The positive ones are HDFC Bank, Aurobindo Pharma, Samvardhana Motherson, Sona BLW, Tata Power, Ashoka Buildcon, Macrotech Developers, and Transrail Lighting. Stocks with negative news flow, not too many today. There's Orient Cement and, of course, Sula Vineyards. Let's also figure out what's happening with commodities. We have Manisha Gupta joining in with a roundup of all the action. Manisha, so long weekend, 3 days, so we have to react to a bunch of cues. What are the headlines for you?
Well, absolutely. I'll start with the crude oil prices because even as we are 10% down for the month of April, the intraday markets have started slightly on a better note. Well, the US and Iran conversation will reconvene this week. That is what the markets will watch out for. But some reaction also coming in from the fact that the OPEC report that came in yesterday, they have revised down the global demand growth and they're anticipating a supply surplus in 2025, and that would cap too much gains in the markets there. But a segment that has continued to do well in the Asian markets today also has been the base metal prices. Copper is now up by 12% in last 1 week. Strong gains coming in for zinc as well. Aluminum prices are up 0.5% in the overnight markets. You have nickel prices, which were trading at a 4-year lows, also rebound quite strongly. So whether it is about some easing of tariffs that we've seen coming from US, the dollar index that continues to be on the weaker side, and the Chinese trade data that came in yesterday also was on the positive side. Whether it was about crude imports, metal imports, some of the product exports as well, has been positive for the month of March, and that in turn also seems to be supporting many of these metal prices.
All right, Manisha, thank you very much for that. Commodities and metals, etc. I mean, big moves last few sessions, like equities, like bond markets, and we will continue to track these with Manisha. We'll take a break here. Amnish Agarwal for some fundamental stock conversation on the other side.
एयरपोर्ट थे। सोचिए 70 साल में 74। आज देश में एयरपोर्ट की संख्या 150 के पार हो गई है। देश के करीब 90 एरोड्रम उड़ान योजना से जुड़ चुके हैं। 600 से अधिक रूट पर उड़ान योजना के तहत हवाई सेवा चल रही है। इनमें बहुत कम पैसों में लोग हवाई यात्रा करते हैं।
Welcome back. You're tuned in to Bazaar Morning Call. Well, we've listed on all the top stocks being to track. Let's get some more fundamental analysis going. We have Amnish Agarwal, Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Well, let's talk about the auto stocks. There appears there is some kind of softening in stance from President Trump. And that's why we look at a couple of companies like Samvardhana Motherson as well as Sona BLW. Your view on the auto pack and the auto ancillaries? What's your top pick from there?
Yeah, hi Nigel. So two things here. As far as your domestic scenario is concerned, I think even the recent FADA report talked about some lower growth numbers for FY26. So a lot will depend upon how the demand goes in the coming few quarters. And the domestic scenario doesn't look to be that great as of now. Now, as far as your stocks like Sona or Motherson are concerned, I think because there has been a realization that US will now give some more time for the auto component manufacturer, the auto OEM manufacturers now to start manufacturing more in US in the longer term. So there could be some sort of a relief which will come to companies like Motherson or Sona because they are exporting to those countries, or for example, Motherson is having base in those countries and drives a lot of production over there. So to that extent, it is positive for these companies, and I think you could see some positive reaction coming on that front. But having said that, on the domestic side, things are it's more like a cash-22 situation as of now.
Okay, so that's on the auto space. Just to talk about some more names, where this tariff hit has been playing out. Now that we know that there is not a rollback, but at least some sort of a partial pause on electronics and semiconductors, Amnish, do you expect any kind of a immediate reaction on names like Dixon and Surma? Some of these stocks last week, they ran up in anticipation that China won't be supplying anymore. So eventually Indian companies can come in and take that space. So the US is not a big market for them right now. How are you looking at some of these EMS players?
The main thing is when it comes to EMS also, first of all, what sort of technology level products we are manufacturing. So that is one. And secondly, whether we are having the capacity or the current wherewith the demand in the US. Now, on both these fronts, I think the Chinese manufacturer or the companies which are based out, say whether it is Vietnam or Taiwan, they are much ahead of us. And India has actually started investing in this only in the, I would say, the past few years. Now, given that we are not a very large manufacturer and the capacity is very limited, can they incrementally gain something? The answer is yes. Can they, you can say, replace a Chinese manufacturer or do something which is very much out of the world, or they can continue growing very fast? For that, I think the scale of the manufacturing that needs to be go up significantly over a period of time. So I think in the longer term, it will all depend upon where the tariffs actually settle. And it is not only for, I would say, India. It depends upon how the countries like particularly Vietnam, Taiwan, Thailand, China, etc. So how the tariffs and the bilateral negotiations there happen. Because if any of these countries which are having the bigger manufacturing bases, more economies of the scale, so if they are able to supply, or if they are able to get a better tariff deal, then we might not be having big advantage, and many of these companies then would end up again catering to the domestic demand only.
Okay. All right, got that point. Stay on, Amnish. We'll have more questions for you in just a bit. Let's also get our first management conversation of the morning going. The stock on our radar is Senco Gold, which has surged quite a bit. I mean, forget all the tariff business and the outward-looking companies and stocks. Senco is up almost 40% in the last 1 month, 32% to be more precise. Now, the fourth quarter business update looked fairly healthy, and the management is now guiding for a robust first quarter as well, FY26 that is. To talk more about this, we have with us Mr. Suvankar Sen, MD and CEO of the company. Mr. Sen, thanks very much for joining in. So the numbers are looking absolutely fabulous. I mean, for the benefit of our viewers, I just want to remind them of the update. 23% revenue growth in Q4, 18.4% same-store sales growth. It's looking really good. At the end of 9 months, your studded ratio was about 10.5%. I want to start there. Where is the studded ratio now? Because this is a time when a lot of players are facing intense heat in the natural diamond space, and the studded ratios have been falling, across your peer companies as well. So where are you, and, are there specific separate plans for lab grown that you have? Mr. Sen? I think that feed has just gone down. We'll get him again. But yeah, so I was talking about the studded ratio from levels of just about 5-6% in FY 21-22. By the end of last year, FY 24, it improved to about 11% for Senco, and as of 9 months, it's at 10.5. And they've done really well. I mean, throughout the business has been very, very healthy. I think the rise in gold prices plays its own part. But it's bright and sparkly here.
Absolutely. And, gold itself, right, like everything else, high to low, gold fell about 8% while the market was cracking. And then It rocketed. It's basically back at all-time highs. So absolutely a fantastic move. Do we have Suvankar back? Okay, I think we'll go back to him as soon as we have him on the line. But Amnish is with us. Amnish, any thoughts here? The gold plays in that sense. On the lending side, and what's the jewelers for that matter? Anything you like?
You see, we cover Titan only in the jewelry space as a part of formal coverage. But having said that, what usually happens is that whenever the gold prices, they soften a little bit, then the demand for the jewelry or the gold coins, even that goes up. Now, there are two factors which we need to watch out for here in gold. One being that last year we had a very bad first half. That is, I'm not looking at, say, your FY25. I'm looking first half of FY26. Due to monsoons, very low wedding season and all that, we had a very, very bad half for all the companies. So to that extent, I think the numbers in 1Q and 2Q of FY26, they are likely to be far better than what we had seen last year. So that is one. Secondly, if the gold prices remain where they are, I think there is not likely to be, it's more like a left out feeling, but otherwise the gold has been moving up, which gives you the value growth, but the volume growth is unlikely to be very healthy. The third important factor is that many of the jewelry companies which are listed today, so many of them, they are having gold inventory in their books and they are not doing gold on lease, or you can say stuff like that. Now, for those companies, when the gold prices go up, you actually having the inventory gains on the books, which props up your margin. So all the companies which are having gold inventory in their books, I think they will be beneficiary of if the gold prices continue to move up. And the fourth thing is that if you look at the global uncertainty which has now emerged, due to that, the gold on lease charges, which the companies usually pay to banks for taking, you can say, gold on loan. So those charges have also shown a very sharp uptick in the last couple of months. I think it is, you can say, give here or take. There's some you can say some give and takes. But having said that, in terms of the pure numbers, in terms of the growth, I think the first half of FY26 should look far better on a YOY basis, and that will keep the interest alive in the jewelry companies. And I think Titan remains one of the, I would say, the best stocks in terms of, say, balance sheet, corporate governance, and even the recent quarterly numbers were good. And I think from here on, the stock can give you reasonable returns.
Sure. Okay, so you continue to like Titan. I think we've got Suvankar back, so let's go back and get some questions going. Suvankar, what we were trying to understand was, and this is a point that the analyst just made out as well, that for many jewelers, since gold is not a fully hedged commodity, the rise will lead to some sort of investing gains as well. So when you say 23% growth in Q4, how much of that is an inventory phenomenon and how much is actual growth? I mean, actual growth also looks good because same-store sales growth is up 18%.
No, so when you look at the growth levels, you have to see that it is the revenue growth that we are talking about. And here, there is a value-driven growth and a volume-driven growth. So if a gold price goes up by, say, 18%, and the overall value growth goes up by 23%, that means that you will have a volume growth of 4 to 5%. So that is how one has to look at it. And what Sir was saying in terms of the gain in terms of inventory, that is more to do with the profitability of the company rather than the revenue of the company. Because if you are selling at a higher gold rate to the consumer, you need to procure your raw materials at a higher gold price as well. So what really matters is the gross margin. It is only that to that extent that your books that are hedged or unhedged. So the hedged portion is automatically, you have a fixed margin in terms of the making charges that you're buying at a particular price and you're selling, keeping that margin fixed. It is only to the unhedged portion of your books where you have the ability to make an extra margin.
And how much?
Yes.
Got that point. That's what we were trying to understand, Mr. Sen, that how much of your book is unhedged, and to that extent, what could have been the margin boost because of this dramatic rise in gold prices?
So this wouldn't be the right time to talk about the margins, but in terms of our hedging percentage, we stay around 80 to 85% hedged. So that's been the kind of the average hedge portion of the books that we have. So that is the answer to your question.
All right. Hi, Suvankar. Good morning and good to see you. When there was Poila Baisak, that's the Bengali festival that was there over the weekend, and then we also have Akshaya Tritiya that will be coming towards the end of this month. So, a couple of these seasons which are good for gold normally. How was the demand in the past week? Since that was the Bengali festival, if you could tell us, was it good enough? And what is your estimate for the upcoming festival as well?
So yeah, wishing everyone, Shubho Navavarsha as we call it, because today is Poila Boishakh. That's why you see me, dressed up in the traditional
looking
attire.
Good. Suvankar, looking good.
Thank you very much. Shining like gold, if you may say so. So the way I can see that over the weekend, the interest of the consumers, even though the gold prices are at all-time highs, there is a lot of interest amongst the consumers. We have been doing a lot of activities in terms of taking gold in the money in advance for the particular season and giving the benefit of the lower gold price in the previous month that we had. So consumers have been quite interested. The wedding season continues to remain till the month of June. And, we have the Bangle Festival going on. So I can see that, the ticket sizes, the average selling price of the average ticket sizes have been on an upward trend just because the gold prices have moved up. So 10 grams of gold jewelry will be worth close to ₹1 lakh, which was 70,000-80,000 maybe even 6 months back. So that's been the kind of, consumers are happy that the prices are going up, but it's just that the volumes will take a hit. So that's the way to look at it. And there was a question that you all were asking in terms of the stud ratio. So,
yes.
The stud ratio for the 9 months was 10.5%, which as we ended the year, it became 10.5 to 10.9%. So just Q4 itself, which I had been, telling everyone that we are seeing a very positive January, February in terms of the increase in the diamond jewelry sales. So the diamond jewelry sales for Q4 was up by 39%, leading to Valentine's Day, the overall wedding season. So I think that, with the price, there is a lot of news that the diamond prices will also start moving up, and it is gradually starting moving up. Consumers are also gradually getting attracted towards buying the diamonds.
Sure. So, Anka, just a quick follow-up on that. I'm glad you brought up the studded ratio. Your studded ratio has been improving. A lot of other jewelers, particularly on the natural diamond side, they're struggling with either flat studded ratios or declining studded ratios. So your improvement is happening entirely on the natural diamond side, or is it also a function of the lab-grown? Because you have a lab-grown vertical as well. Just leave us with a sense of the trends there.
Yes, no, it is with the natural diamond side. The lab-grown is still a very small portion of the overall sales. Plus, this improvement that, just to kind of give a more correct perspective, is that from the 9 months, 10.5%, the growth of Q4 has been substantial, leading to a 10.9% overall year on year. But if I look at the previous year to this year, then the previous year, the stud ratio was about 11%. And this year, we've ended with 10.9. So you really don't see much of growth on an overall yearly basis. It is only in the Q4 that you have seen such substantial growth. And I think very positively that this particular financial year, we will continue to see a kind of higher interest and traction towards diamond jewelry, especially with such high gold prices. So for the smaller ticket size items, consumers will want to, buy maybe a 14 karat, 18 karat gold jewelry studded with diamonds and stones. So this is how I think, the future looks like.
All right, so Ankur, 10 grams for $1 lakh now, right? I remember I don't remember the rate when I started working, 2003, but I remember in 2009, it used to be about 8,000. So 8,000 to $1 lakh.
Yeah. Prashant, I completed 10 years of marriage over the weekend, and when we were getting married, I think it was around 30,000 or thereabouts. So now there was no buying of gold on the 10th anniversary.
We don't have to deal with that problem.
Now you have notional gains that you're sitting on, all the wedding jewelry that's already been purchased, right? That's why women always love.
Daughter and daughter-in-law will enjoy, let's say that.
Okay.
I think the producer is saying that I'm not laughing, right?
Yeah.
He's focused on the time. So, Ankur, thank you very much for joining us. Appreciate it very much here on CNBC-TV18. Good speaking with you. We'll take a quick commercial break here. We're going to come back, some technical trading ideas and focus on the other side. Okay, 5 minutes to go for the pre-open session to kick off. We have Sudarshan Sukhani and Mitesh Thakkar who are with us with what they'd want you to do as we kick off another week, a short week, Monday holiday, Friday holiday. So we've got 3 sessions this week. Gentlemen, good morning. Good to have both of you here as always. Mitesh, what's the setup looking like? Steadier, better markets all around the world in that sense. So we will react to that. But what after the gap up?
Yeah. Morning, Prashant. So one, I think, this gap up will clearly help the Nifty index get past the 22,800 decisively. The upside targets are around 23,150 and then 23,350, 400 zones. I think we'll head towards the second part, the second level, which is 23,400. So even after the gap up, I think if you get a mild profit kind of a dip in the first 15-30 minutes, it's around 50-70 points. I would look at, exploring long positions in stocks as well as indices.
Okay, all right. So you'll buy even at around, say, 22,950? Is that the level? 22,900 odd?
That's right, Nigel. So I think, assuming that we open around 23,100, I think decline to about 23,000, 23,030 would be the entry point for me.
23,000 odd, you'll want to buy on declines. Got that. Sudarshan, what about you?
Yeah, good morning. See, the short-term trend is up. When the short-term trend is up, usually we want to buy. Now, volatility also is likely to slowly come down. So perhaps we are entering a sweet spot. There is no sense in chasing a gap up. Be patient. Look for a minor intraday dip. It's difficult to quantify, but a 100-point decline from the opening price would qualify as an intraday dip. Consider buying there. Use call options. Keep a 200-point stop loss from wherever you enter. It's difficult to say where the markets will open, but that's the trade. Look to buy a dip.
Okay, look to buy the dip. Got it. Gentlemen, stay on. We'll take a very quick break and then we'll come back with some specific stock ideas as well.
Welcome back. Well, we'll get the pre-open rates in just a bit. It's expected to be a gap up, but as we've been saying, it's not the start. It's going to be the end of today. And Friday's start and end was very, very strong. So the bulls will be hoping for an encore. But let's get our technical experts back with us, Sudarshan as well as Mitesh. Well, gentlemen, we have heard your call on the index. Buy on a dip is something that you're recommending on the Nifty itself. But let's get to stock picks. Mitesh, you go first. What do you have for us?
So, looking at the big gap up, I think all long calls today, traders will have to adjust the levels slightly, with post the gap up. So, for the timing, I have a buy on Grasim with a stop at 2624 for a target of around 27.1020. IDFC First Bank is a buy with a stop at 58.5 for targets of 63.5. Marico is a buy with a stop at 696 for a first target of 735. And Bajaj Finance is a buy. Keep a stop below 88.70. Look for targets of 98.
Got it. Okay. All right. Thanks for that. Well, let's hop across to Sudarshan. Sudarshan, what about you?
Well, it's mainly buying. Ambuja Cement is a buying opportunity. Stop under 530. Axis Bank, I've recommended it earlier also. I think it's likely to be an outperformer. Consider it a positional trade if you want. It's a buy with stop under 1020. My only intraday short is Zomato, where intraday selling can be done with a stop above 225. And I also have Bajaj Finance, as Mitesh had. It's a buying opportunity. It's not just intraday. It's a positional buy with a stop under 8700.
Got it. Okay. All right. Thanks a lot for that, gentlemen. Well, let's focus on the metal stocks. They have seen a big move, big pullback because of the higher tariffs and fears of recession. But you have the US dollar index that's cooled off, which is normally good for LME prices at least. And the domestic steel industry as well has some protection because of the safeguard duty. Parthiv Jonsa, the lead analyst, metal and mining at Anand Rathi Institutional Equities, joins us on the show. Hi Parthiv, good morning and good to see you in as always. Let's get a couple of basic points out of the way. What do you prefer in the metals pack, ferrous or non-ferrous?
Hi, good morning Nigel. Thank you for having me. I actually prefer ferrous in this set of things, comparing, considering all your global uncertainties around tariff. I prefer ferrous as packed, overall pack basically.
Got it. Okay, ferrous is preferred. Let's get a little bit deeper then into ferrous before we move to non-ferrous. From the ferrous pack, among the big names, Tata Steel, SAIL, JSPL and JSW Steel. What do you like from the four big majors?
Let me answer this. If you see your domestic is actually growing and, your domestic demand has been around 12.5 million ton even in March, which is, sustaining over last 3 to 4 months. Your domestic story is very robust. In this entire, global uncertainty, noise around tariff, 90-day extension, XYZ across non-metal, tariffs and everything. I genuinely feel companies like JSW, JSPL, which has a massive, domestic presence, should perform well. In addition to ancillary, raw material companies like MOIL, which basically supports all these ferrous sectors, right? So these names should perform well.
All right. What is the target price you have on MOIL? Because I think that was the one that you initiated coverage a short while back. So your view out there, and if I'm not mistaken, I think you also were quite positive on Lloyd Metal.
Yes.
If you could give us target prices on both those two. And do you think after the pullback, is it a good entry opportunity?
Sure. So my target price for MOIL is around $400 and Lloyd's is over 1,500 rupees. That's a target price. Yes, it's a very good opportunity considering, MOIL is like an exclusive or the largest manganese merchant miner in India, and with, almost 2/3 getting imported and they commanding a lion's share, right? And that's the whole story about it with the EC enhancement and the capex going on. So MOIL is a very good level to enter right now. Similarly, Lloyd's. So Lloyd's is also like multiple stories are playing out there, and especially with the MDO business coming in, over next couple of quarters, that would also give a good substantial upside.
Interesting. And, the smaller player in there as well, Lloyd Engineering, they are looking at doing a rights issue to help, build that big capacity that they're talking about. So we'll keep an eye on the Lloyd Group companies. A quick question with regard to steel pricing for the industry. Even before the safeguard duty came in there, the prices went up. And then, in fact, you did see that the prices actually, they stabilized. We didn't see another big price increase that came after the safeguard duty. One could say that maybe, in fact, the anticipation was already there. So the price increases were done in advance. What's the price difference right now between, domestic prices as well as landed imported steel?
So if you consider China, I'm considering this 12%, right? So if you consider China, it's close to about, we are still about 1.5, 2% discount to Chinese landed, and same with your FTA country landed prices. Right now, your domestic is around, 50 to 53,000 HRC. So that's almost on par with your landed prices. Considering the 12% safeguard duty, if it, potential safeguard duty in place, right? So that's the entire parity right now.
Okay, all right. Let's move to non-ferrous then. Stocks like Nalco, Hindalco, Vedanta, they have got hit very, very hard. Nalco because of the decline that we've seen in alumina prices. But since Vedanta is not backward integrated, it has a bit of a cushion, right? With regard to low alumina prices, which will be good for their profitability. What's your view on Vedanta first? Given that alumina prices are down, Q4 could be a little bit weakish, but you have a special situation that is playing out. Your take?
Yes, absolutely. The special situation play out especially in Q1, in my opinion. So Vedanta being a non-integrated player out here, benefits the most at the end of the day. Nalco, on the other hand, if you consider alumina to the aluminium percentage, right, it has cooled off substantially. It is now back to its long-term average, right? So here, Nalco is because Nalco, sells a lot of third-party merchant alumina. Nalco is the last one out of the three, right, at the end of the day. Vedanta, because it's a raw material for them, benefits the most. And Hindalco is completely integrated. It's somewhere in between. However, as far as Hindalco is concerned, yesterday there was also this potential tax cut rate in US. If it happens, Novelis would benefit at the end of it, if it happens, right? So Hindalco is also better placed that way.
So among the three, I think Nalco, I guess, going by what you're saying as well, is a bit of an avoid because of the alumina prices are following such a great deal. And we know that Nalco is more play on alumina rather than on aluminium.
Absolutely.
So among the two of them, Vedanta as well as Hindalco, both of them have pulled back a great deal. Vedanta has a special situation. Hindalco has that Novelis trigger, and if things are looking up, then maybe Novelis will not get hit that badly. And also valuation-wise, it looks pretty okay. So your view?
In both,
between the two,
coverage on Vedanta. Yeah, we have a soft coverage on Vedanta, so we do not have a target price there. But absolutely, Hindalco is better placed out here. Considering domestic play on aluminium, it is supposed to grow, substantially over the next couple of years. And even from the Novelis angle, I feel Hindalco is much better placed.
Hindalco is much better placed. And how much of the bad news is in the price for Nalco?
I think it's almost there. Again, it's a soft coverage, so there is no official target price on it, but it's almost at about 140, 145 level. It has come out substantially in line with the cooling of your alumina prices.
Okay,
so
all
what was
right.
going at about 30% of the LME, it is now close to about 14.5% of the LME.
Perfect. Thanks a lot. And I think the long-term average is close to around 17 to 18%, right? Alumina as a percentage.
Yeah. You could say about 16 to 18% is the long-term average.
Thanks a lot for that, Parthiv. Wishing you a good day ahead. For the time being, Parthiv's view is that he's more positive on ferrous in comparison to non-ferrous. He likes stocks like JSW Steel, JSPL, as well as Lloyd and Moyle. While on the non-ferrous side, Hindalco is a stock that he likes quite a bit.
All right, the pre-open session is indicating a very, very strong start. So I think the end of the pre-open, we are about 368. So this would be, we'll clear the 23,057 level, which is the 61.8% retracement of the fall that we saw from the highs of 25th of March to the low that we saw on the 7th of April. And then some. So this is a super, super strong start that we have. 2.33% higher is what we got.
Just one point, Prashant, since we have a truncated week, we'll have to see how much of the domestic participation is there. That's going to be important. And since it's a big, in the West world, since it's a big Christian festival, which is Easter at the end of this week, it'll be interesting to see what is the foreign participation as well, because they'll have a very, very long weekend. They'll have Monday as well because it's Easter Monday. So participation as well is something that we'll track.
Absolutely. Liquidity may be a bit of a casualty because of all these holidays and that we have here and around the world as well. 9:10 call. Sudarshan is back with us with what he wants you to do. Sudarshan, morning.
Good morning. Bajaj Finance is a buy. Stop under 8,700. Manage your opening gap, but it's worth buying.
Okay, Mitesh, what about you?
I'll go to buy on grasping for targets of 27, 10, 20.
Okay, all right, gentlemen. Thank you very much for that. By the way, look at Samvardhana surging in trade and even Sona BLW. These stocks are up 5 to 8%, and Sud had highlighted this earlier as well in our top 10 segment. Let's go back and check why these stocks are so excited. It has everything to do with US tariffs once again. Sud?
While all the auto stocks are higher in the pre-opening session, but these two stocks are particularly up somewhere in the range of 9 to 10%. And the reason is because over the weekend, we saw US President Donald Trump saying that he's looking, or basically he's considering modifying 25% tariffs that US government had imposed on autos and auto parts effective April 3rd of this year. Now, what he's saying, basically, he's saying that US companies need a little bit of more time. Now, why it's positive, especially for Samvardhana Motherson and Sona BLW? Because he has said that for Mexico and Canada imports, especially he's considering modifying the tariff, and Mexico and Canada form major part of the revenue for these two companies. For Samvardhana Motherson, Mexico forms nearly 4%, and for Sona BLW, it's in the range of 2 to 3%. Now, if you remember, for US sold vehicles and that come from Mexico and Canada, contribution is somewhere in the range of 30 to 60%, while for GM, it's in the range of 30 to 40%. For Volkswagen, it's almost 60%, and Samvardhana Motherson is one of the biggest suppliers to these companies, and that's the reason it's going to be impacted positively. For Sona BLW, it has an assembly base in Mexico, and that's the reason revenue contribution comes from Mexico, and that's why this is going to impact positively to Sona BLW as well.
All right, Sudarshan, thanks very much for that. So these are big moves, gap ups which we are seeing at this point. Devyani International, Interglobe Aviation, Ajanta Pharma, the other names that we want to sort of address. Hormuz is here to tell us why. Hormuz, morning.
Morning, Prashant. And an upgrade coming in for Devyani International from Kotak. They've upgraded the stock to buy 190 rupee price target. And they are saying that they are expecting FY26 to be a better year, led by a pickup in same-store sales growth due to a weak base, some improvement in underlying demand and proper execution by the company as well. And based on KFC's market opportunity, the strong brand equity, the optionality of other brands, the appetite of portfolio augmentation from RJ Corp and a track record of creating shareholder value, it is what is driving their bullish call on Devyani International. Now, Motilal Oswal has also upgraded Indigo to a buy 65.50 price target. They say that the benign crude prices and favorable domestic demand bode well for the company. They are expecting a 28 and 38% EBITDA and profit CAGR over FY25 to 27, and that an upswing in Indian aviation will benefit stocks like Indigo. And lastly, Ajanta Pharma, where Jefferies has initiated coverage with a buy recommendation at 28.50 price target. Not a significant upside, only 11% from Friday's close, but it says that it is getting 70% of its revenue from high entry barrier branded generics markets, which are in Asia, India and Africa, and they are expecting a 19% profit CAGR over FY25 to 27. So positive commentary coming in for Devyani and Interglobe, and an initiation on Ajanta Pharma.
Okay, all right, Hormuz, thanks very much for that. So we'll keep all of those stocks on the radar as well. 540 points. That's the kind of increase that the pre-open Nifty is indicating. 23,368 is where we're at. While the large caps charge away, and it'll be a very wide move today, IT, banks, everything is going to start substantially higher. We'll see how it goes. Even the mid-cap space is looking interesting. We pointed out some of the stocks like Samvardhana, but even names like United Spirits, Just Dial, Balaji Amines, a lot of these mid-cap stocks also up anywhere between 4% to 6-7%, depending on which ones you are looking at. On the index, of course, it's Bajaj Finance and HDFC Bank, along with ICICI Bank. So it's the financials that are leading this bull charge this morning. That's what we had. And that's the point that, I was looking at earlier as well, because if you simply look at the bounce, the V bounce from the lowest point of this whole tariff storm, then US markets had already done more than us. So it was, it was pretty clear that today is a catch-up day. I guess bulls will just want to see that a lot of these gains, these pop-up gains, most of them can be digested and remain intact by the afternoon.
By the way, Surbhi, we will, with this gap up, right, you're essentially going to be back above the Liberation Day levels. 2nd of April,
yeah.
2nd of April. We were about... You're going to be there, basically. I mean,
so we've been liberated from Liberation Day, maybe, with this morning.
The Nifty Bank will open at the highest levels in 4 months.
Yeah, okay, all right. So what do we have? It's a decent start, 460 points, 450 points on the Nifty. We've got the Sensex, which is up about 1,300, 1,400 points. So these are strong levels to begin the day. 1.7 higher on Nifty. The Nifty Bank is up about 1.7, 51,895, 51,900 basically. The Midcap index is up about 600. That's about 1.25% higher. The small cap index will come up on your screens and it'll give you a sense of how we are starting there. 1.2 higher as well. Look at this. I mean, about 100, less than 100 stocks are lower, 1,800 stocks are higher. So the skew is absolutely clear which way things are. Heat map, I reckon all 50 should be in the green, and they are. Everything is up. So Tata Motors, HDFC Bank, Bajaj Finance, and so on and so forth. But all 50 up and about for now. Should be.
And Tata Motors is in pole position, 4% on that stock. And look at this whole reprieve on autos, where he's saying, okay, I'm thinking of giving the auto guys some more time. That seems to be playing out not just on the ancillary names like Motherson and Sona BLW, but on Tamo itself. Remember, Tata Motors had announced that it is halting all shipments to the US. So investors would want to see if there's any rethink on that strategy. Maybe they'll want to ship more and more cars till the final tariffs on auto kick in. But that's a winning stock this morning. HDFC Bank is the other one. Big move, 3% on the higher side. There's M&M, there's L&T, there's Bharti Airtel. Everything is up and about. Reliance, ICICI Bank contributing about 2 to 2.5% each. Actually, autos even beyond Tata Motors are doing pretty okay. Maruti is up about 2% as we speak. M&M is up about 3%. So autos is a good-looking space. On the downside, no negative stocks on the Nifty, but relatively speaking, consumption is taking a backseat. These stocks had a good couple of days. Today, they're on the lower side of the screen. So Nestle, HUL, Asian Paints, ITC, Titan, all of these stocks are clocking the lowest amount of gain on the Nifty right now. But yes, auto stocks definitely surging higher. Look at Bharat Forge, 5%. Look at Samvardhana and, of course, Sona BLW, as Sur also pointed out. So autos and auto ancillaries in top gear this morning.
Well, that's right, Surbhi. And just to make a couple of more points, Nifty Bank, it's opened at its highest levels we've seen since the 18th of December. So good going on that one. The Nifty Bank is the one that's trading way above all technical levels, and that's boosting away. It's up close to around 1,000 points. Macrotech Developers, the Lodha brothers bearing the hatchet out there. The street likes it. That stock is up close to around 3% as we speak. So big up move is what we're seeing on that one. A few more names. Intellect Design, that stock is up close to around 4%. So big up move is what we're seeing out there. DLF is up close to 3%. JSPL has bounced back well. That's up close to around 2.5%. Remember, the stock was under pressure post those tariff announcements from the management. But that one as well is flying away in today's trading session. Havells is a little bit lower, actually. A very, very small, minority stake is what they've taken in the company, for around 600 crores. I think that's close to around, 25% of the cash they had in their books. If I'm not mistaken, it was 2,500 crores. Street doesn't seem to be liking it, though it's very, very small in the scheme of things. That stock is down 1.5%.
All right, absolutely. You've got, and volumes will pick up, absolutely. I'm just looking at the big volume-led gains right now. It's all, dominated, of course, by autos. So the Motherson, Tata Motors, Sona Comstar, Bharat Forge. This is, the top 4-5 volume-led gains right now. Coming through at this point in time. PG Electroplast, I think we did mention it, 5.5 higher. There's Goldium International, which was a limit up on Friday, and I think it's up another 5%, 7.5% now, Goldium. Of course, the price damage was severe. From almost 600 rupees, the stock had fallen to about 250, from 250 to 350 now, in about 3 or 4 trading sessions. So that is Goldium for you. And there's Bharti Hexacom, which is up about 4.5%, 5% as well. So that's it. There's nothing very much on the downside at all. I can spot Gravita India, which is down 1% on some volumes, but it's not meaningful. It's largely all up and about at this stage. Gautam Shah is with us. Let's talk about price action and where we go from here. Founder at Goldilocks Global Research. Gautam, good morning. Great to have you with us here. Prashant, this side. Just really one for the history books. What we've gone through over the last 6-7 days would rank right up there especially as a trader, Gautam, so much volatility and so much excitement, so much drama. But what from here now, Gautam? Do you believe the worst is behind? We're at about 300 right now.
Good morning, Prashant. Well, drama is part and parcel of today's stock market. I think because we live in such a noisy world where there is so much happening. I think since the COVID lows, we've had so many events, whether it's geopolitics or earnings or the Trump trade that has played out in the last 1.5 months. But I think markets need to discount all of that very quickly, which is what markets have done. I think every bear market has two phases. One is that of price correction and the other is that of time correction. I think we ended the price correction last Monday at levels of 21,800 because I think the technical studies, the breadth, the sentiment, the news flow, everything came together to possibly indicate that it was a panic bottom. Thereafter, we've seen very good constructive action. I think the Nifty is up about 1,200, 1,300 points in no time. And I think we've entered a period of time correction. I think a lot of money which was on the sidelines is now at work because I think participants believe that most of the negatives are discounted. So that's the reason you are seeing this very good-looking flamboyant rally. But I would not read too much into it. I think 23,400 and 23,800 are numbers to which the Nifty can move to. And broadly over the next 2.5 months, I think we are going to stay in a sort of a range. We will not make significant we will not see significant upside or significant downside. But between now and the end of the year, I think it's going to be a stock pickers market. Just be in the right stocks, in the right sectors, and in the right themes. I think there is money to be made on the long side. So I do believe that the worst was over at the recent low because I believe that the charts are well placed on the weekly and on the monthly time frame. And I think a large part of the news flow has already got discounted. I guess it can't get worse than this.
Sounds good. Sounds good. Gautam, can you just repeat the Nifty targets for us? So by December 25, where do you see the index?
Well, Surabhi, it's not about the index. I think let me just reiterate that because I feel that it's going to be a stock pickers market between now and the rest of the year. But still, if you want numbers, I think 23,800 to 24,000 is where we can move to in the near term. Can we go beyond that? We can definitely go beyond that and see much significantly higher levels. But I would like to cross the bridge when it comes. I want to work with a bullish mindset. I want to buy the dip now because in the last 6 months, it's been a case of lower tops and lower bottoms. I think over the next 6 months, it's going to be a case of higher tops and higher bottoms.
All right, Gautam, you mentioned numerous times out there, it's going to be a stock pickers market. What's looking good on the charts? Give us some few stocks.
Well, anything that has relative strength and anything that did not make new lows last week is something which is on top of our list in terms of longs. And I think on top of that list is financial services. I mean, if you look at the Bank Nifty, today it is at levels of 52,000, which I think is an important resistance. And once this is taken out, I think it might be the first index after financial services to actually make new lifetime highs. So I remain bullish on the Bank Nifty, and I think there are immense opportunities. And the way some of the top banks handled the recent weakness itself was quite commendable. I think I spoke about it in our last interaction as well. So we are very positive on the entire financial services space. I think it will go on to make a new lifetime highs, followed by the entire PSU basket. You know, I'm actually refraining myself from staying away from any company or stock that has something to do with foreign soil. Because in today's world, you don't know, what can come out of where. Even though the markets are all good today and autos are doing well, I'm still very comfortable with the PSU as a basket, valuations-wise, chart-wise, ownership-wise. And I think it could be one of the standout performers for the rest of the year. And finally, I think metals. It's been my favorite for a while now. Yes, it saw a bit of a dip after the market weakness, but I think it's setting up really well right now. And I think a 10 to 12% move on metals looks quite likely.
Okay, those are some very interesting ideas and observations, Gautam. So you're saying PSUs are still looking good to you. Chart structures are still positive. Metals 10 to 12%. And can you dive a little deeper in financials? I mean, is everything looking good? Is it more banks? Is it private PSU, large NBFCs? I mean, what within financials looks the strongest?
Well, gone are the days where you could buy into anything and everything. I think we had that phase for about 2.5 years where you bought anything and you made money. I think with this correction of the last 6 months, the men have been separated from the boys. And if you really see, top quality has stood out. I mean, a case in point being what HDFC and ICICI have done versus an IndusInd Bank and maybe some of the other smaller banks in the market. So I'm staying with the industry leaders and challengers, the big boys in each of the sectors. I know the screen looks great today and everybody will suddenly become very optimistic, but I think let's have a realistic view on the markets, and therefore I want to stick to the big names. So the top 3 banks, the top 2 NBFCs, I think they stand out for me, and I think they'll do very well.
Top 2 banks and top 3 NBFCs. So you'll stick to the larger names within banks and non-banks. Just a word, since we're talking financials, what about these capital market stocks? I mean, they were also the poster boys and poster girls of the rally up until September, right? Brokers, wealth managers, etc. What do the charts say here now?
Well, I do believe that equity markets are not running away anymore, which means that it's going to be a huge challenge for the Nifty to go out there and make new lifetime highs. I do believe it will happen, sometime over the next 12 months, but I'm not preparing myself for the same. In that kind of a range-bound environment, I'm not very comfortable with the capital market stocks. I think capital market, defense, railway were themes that did very well in the last 2.5 years. I think that the newer themes have emerged in the last 6 months, which you would have noticed, and that's the reason I'm sticking to some of the other names. On the other hand, I think real estate is one sector which can really come back very strongly. I think it witnessed a large dip. It's a structural story. A lot of stocks are at long-term supports, and the top 4 or 5 names in the real estate space have the potential to deliver about 20 to 25% from here. So I would be very comfortable buying into real estate at these prices.
Okay. All right. Gautam, you mentioned about the financials and the Nifty Bank. What are the levels we should track out there? The Nifty Bank now is holding about 52,000 mark. The last time we saw this level was on 18th of December, at around 52,500 is what we saw on that day. Where is it headed?
Nigel, the interesting data is the average decline on the whole of NSE in every single stock is about 42%. That's the kind of bear market that we've witnessed in the last 6 months. In the earlier times, this could have happened over the last it could have happened over 1.5 years. So I'm sure there's another camp of people who believe that this is going to stay for the next 6 to 12 months. But I think what could have happened over 1.5 years has happened in 6 months. I think that's one key point. Secondly, I think the way HDFC Bank has held out in this terrible looking bear market of the last 6 months is quite commendable. And this is where smart money seems to be hiding. So I do believe that some of these top stocks will do well, and therefore the bank Nifty can easily move towards a level of 55,000. And if you have to think 18 to 24 months, I think a 60,000 number, which we have been working for almost 12 to 15 months, it remains on track. So I think as investors, you should be positioned for that number.
Okay. All right. Got that. So the Nifty Bank is the one that's revving up the engine. HDFC Bank relatively underperformed when the markets were going all guns blazing. And when the markets dipped, actually, it was holding its own. And that was the pocket to hide in, as Gautam mentioned. Gautam, let's shift focus a little bit away from equities for just a bit. How's gold looking on the charts? Where is that one headed? Because all that glitters is gold. Just take a look at the way that one has moved.
Yeah, it's been quite a glitter, Nigel. And I think every single time I've been on your channel in the last couple of years, I've spoken about gold beating the Nifty benchmark returns. And I think that's played out so far. And I think it's going to play out over the next 6 to 12 months as well. Because I don't see more than 10% upside on the index, even now, despite today's good-looking rally. But in that context, I think gold continues to be very strong. It is at our medium-term target of 30 to 50. It's looking slightly toppish here. And I think the market might just get into risk-on mode. So gold and silver could take a bit of a backseat in the near term. But if you have to take a 12 to 15-month view, I think we are still looking at lofty targets of as high as 37, 3,800. But near term, I don't think today's prices is an opportunity. I think a 5% dip could come by. And if that comes by, I think go long. And as investors, you stay put. You don't try to trade gold because it's a mega trend. It will do well. On the other hand, I think silver is a bigger opportunity. I think that is likely to stand out over the next 1 year. And not to forget what NYMEX crude has done. After almost 2 years of range-bound activity, it's broken 65. Looks like there is another 10% downside coming on NYMEX crude. And talking about external factors, dollar index at 100 at levels of 100, I think another 3-4 percentage points downside is likely there.
And that is on the dollar index?
Yes, please.
On the dollar index, 3-4% down. So dollar index, we're looking at a level of 96, 97 odd. On crude, if I got that correctly, that could be another 10% downtick even from here. and silver could outperform gold. What are the levels on silver, Gautam? Because silver has been holding in this vicinity of around, I think, 29 to around 34 or thereabouts. It's been very volatile, but we have seen in the past when silver gets its act together, it outperforms gold. So where is that one headed?
Absolutely. I think silver took a bit of a backseat given all the problems around economics and inflation and recession and, all the talks around it. Maybe that's the reason it's not done as well. But I think 29.30 is a nice long-term support for silver in dollar terms. And I think if all goes as per plan, I'm looking at a number of about $43 to $45 over the next 12 to 15 months. So that's a nice 30% move even from these levels. So if you're taking some profits in gold, might be a good time to top up in silver.
Okay, so book profits in gold, buy some silver. That's helpful advice. But Gautam, what about the mothership, the mother market? I mean, look at what's happened, right? I mean, what drama of the last 2-3 weeks. So given the violent nature of the US market correction, but then the recovery has been equally dramatic. So are chart structures kind of damaged? Are they okay? Are they looking okay? And then definitely a word on the US 10-year, because that's where there was sudden panic. The yield hit 4.5%. Is the worst over, or is there some slightly longer-term damage here?
Well, it's violence everywhere, Surabhi, whether it's our movies or whether it's the stock markets. I think that's the way of life today. And I think markets are just too fast because of this flow of information and AI and social media. And I'm not surprised that this is the kind of world that we live in. I do believe that the Dow found a bottom at that level of 37,000. 45,000 became 37,000. 37,000 is a long-term support. If you go back in history, 2021, 22, 23, you will realize that around 37,000, there was a lot of support. And I think there are some positive divergences that have developed on the charts. And when I see some of the top names, Apple and Amazon and Alphabets and some of these stocks, I do believe that the worst for the time being is over for the US markets. So I think we are entering into a phase of extreme noise to some stability. And that's the reason even the US markets are likely to go through some time correction. In fact, as we speak, in a week from now, we are actually launching our US product because we believe that there are immense opportunities in the US markets, even from current levels after the recent damage. So I would be constructive on global equities in general, led by the US markets.
Violence in movies. What is the...
That we're used to, but the stock market violence was unnerving.
What is the last 7 days in the market? What movie does it resemble? I mean, I don't know what was the last action movie we've had.
Not that I saw all of
I didn't see Sikandar, so I missed it.
What about Godfather? Make an offer you can't refuse.
Yeah.
All right, I think we'll wrap it up here. Thank you very much, Gautam. Appreciate. I don't know if you have a movie which you want to put out, what it looks like, but maybe. Sorry, go on.
Well, I just saw the Sunny Deol one over the weekend, and that's where the violence part came from.
Which one?
Which one is this? I don't know.
This is Jat of Sunny Deol.
Jat. Oh, lovely. Okay. All right. Thank you very much for that. Appreciate your time here, Gautam. And we will, of course, speak again soon enough. I think, guys, we have the management of Federal Bank ready with us.
Yes, we do have the Federal Bank management to talk about some of the important policy announcements that came in the last MPC meeting. The RBI last week published a draft regulatory framework for lending against gold. It is proposing 75% LTV ratio along with tighter valuation and purity norms as well as and also more audits. The RBI has also floated a draft paper to expand the scope of co-lending arrangements to all regulated entities. So two separate regulatory sort of paradigms playing out here. To talk about this, we have with us Mr. S. Harsh Dugar, ED of Federal Bank. Mr. Dugar, thanks very much for being with us this morning. So we just wanted to understand what each of these developments could respectively mean for the sector. Let's actually start with co-lending, which is now being made a lot wider. It's not just priority sector, it's being expanded to all sectors and all regulated entities, banks and NBFCs. So from a business standpoint, who stands to gain here? Small banks, smaller NBFCs? I mean, how does it work out?
So good morning and thank you. Yes, the draft guidelines, when you look at it, there has been a couple of changes and that actually will work good for the sector as a whole. If I have to just enumerate what are the changes which will be actually quite beneficial for the sector, the first one, as you rightly mentioned, it includes all asset classes. Earlier, compared to what the focus was on priority sector assets, Second, they have included many more regulated entities, which was not the case earlier. Apart from that, there are 3 other cases which they have brought in. The minimum retention ratio is no longer there. So you can technically have a co-lending model where there is co-lending together, or it can also be for sourcing and servicing as well. So that actually widens the scope. Other 2 things which has come up is the default loss guarantee, which was not there earlier, which brings more skin in the game. That DLG of 5% is also going to help both the parties in terms of catering to the segment. And the last of all, which is the CLM2, at this point of time, and what it appears from the draft guidelines, that the CLM2 will not be available as an option, which was there earlier. So these are the 5 major differences which is there. But if you look at it from the entire perspective, I think it's going to be significantly beneficial in terms of reaching out to the deeper geographies, to those borrowers who are less served by the formal banking system, by the NBFCs and banks coming together. So I think this is going to be a move in the right direction.
Do you see this having any meaningful impact, even if it is a couple of basis points, on overall credit growth? I mean, the last year we were kind of stuck in that zone of around 10-11% system-wide credit. If co-lending takes off in a much wider and deeper manner, given these draft norms, what impact does it have on total credit offtake?
It will have a not a very significant impact because it's still in the initial stages. So it will take some time for trade offtake to pick up if I have to look at the CLM model alone. However, the good part which I have to understand over here is that the deeper geographies, which can be catered by the 2 kind of lenders who have presence the deeper geographies and people who have deep lending pockets, can actually benefit the borrower as a whole. So that is one significant part. It can bring down the costs for both the parties because it will be a shared arrangement. So from that perspective, it's quite beneficial for the system as a whole.
All right. Hi, Mr. Dugar. Good to see you in, and thanks a lot for speaking to us here on CNBC-TV18. I want to ask you about RBI putting the draft paper on gold loans for NBFCs. Now, this provides an opportunity for banks. For you, I think it's close to around early teens, if I'm not mistaken, as a percentage of your total book is towards gold loans. Could you tell us what is the current exposure? And if you see this as an opportunity, will you think of scaling up this business?
Yeah, first of all, let me clarify. There's been a lot of chatter going on regarding that this will impact the banks less compared to NBFCs. So this is, if you look at it from a bank's perspective, it's actually quite beneficial. First, to answer to your question, we have a portfolio of about 30,000 crores plus. It ranges between 12 to 13% of our total lending portfolio is actually gold, and we are the largest private sector player in this segment. And we take pride in saying that we do understand the segment reasonably well. So that is one part of it. Coming to the other point about the draft guidelines, there are 2 major things which has come up. The draft guidelines seeks to do 3 major things. One, it has simplified the overall. There were 32 circulars, which has kind of been clubbed into one single draft guideline as it comes out. So it will make things simpler. There's no cross-referencing. There'll be no interpretation issues. So that's one part. The second part, what they have done is they have standardized it. So the auction process, the notice period, valuation process, notice to be given, return of jewelry. This is actually good for the sector as a whole because from the customer's point of view, and please understand that at this point in time, the customer is the ones who does not have access to formal finance, and that's why they typically resort to gold loans, most of it, if you ask me. So it's also essential that their interests are taken care of. There's adequate customer protection, there's transparency, which is what it brings about by making the rules more standardized. That's the second one. The third and the most important one is the harmonization across regulated entities. So you have banks, you have NBFCs, you have other lenders. Over here, it has harmonized the rules and regulations. So there's no regulatory arbitrage or a play between different set of guidelines for different regulated entities. So this is going to be extremely beneficial. So now coming to the 2 points which I was talking about as to why it will benefit the banks. The first part is that it's a question of comparative, not absolute advantage or disadvantage, but comparative advantage or disadvantage. So banks were in any case following many of these guidelines, and more so the LTV to be ensured during the entire tenure of the loan. Some regulated entities were required to maintain LTV at the origination of the loan, whereas banks were to do it during the entire tenure of the loan. Now, this has been harmonized. So from that point of view, it is actually beneficial for banks. That's one.
Correct.
Please
go ahead, sir.
Yeah, the second part is that it is regarding the they have classified this into two categories: consumption purposes and for income generating purposes. And if you ask me, this is actually a very, very positive step initiated by the regulator, mainly because the industry should be encouraged, the sector should be encouraged to take loans for productive income generating purposes. And over here, they've widened the scope. Earlier, it was supposed to be given for farm credit and largely agricultural loans. Now, the scope has been widened for any kind of an activity which is income generating in nature. So this has been where LTV rules will not apply. So, except for NBFC, it's been capped at 75%, but banks don't have this cap as long as the assessment and the repaying capacity is done in a proper manner.
Right. No, that's very, very well explained, Mr. Dugar. Good morning, Prashant here.
Hi, Prashant.
Actually, the sense that this is, of course, all sort of informal, but the indication that we got, actually, a reporter got, was that when this was put out, right? I mean, and if you look at the market reaction, the largest gold loan company, Muthoot, the stock sold off very aggressively. So, but as you said, I mean, and you were also in a state where, I mean, you're based out of a state where gold loans are a big thing, and you know that business, just like Muthoot does or others do, right? Who are based out of Kerala, who've been doing this for many, many decades now. But the sense we got is this is actually more aimed at not the specialized players in this space. It's actually based, these are directed towards banks, actually, who've grown their gold loan portfolios in a very aggressive way. So, the net impact, as you describe it, may well play out. But do you think that makes sense, logical sense? I thought so.
Prashant, if you ask me, any sharp growth in any sector or by any bank is something which people tend to envy. In the bank also tend to look at it so that there are no hidden skeletons or issues later on which we may face. Now, the good part over here is that gold, while it's a very safe business, it's an operationally intensive business. That's number one. Number two, if malpractices are there or lack of transparency is there, it comes at the cost of the consumer or the borrower, who are typically, like I said, the ones who do not really have access to formal bank finance. So it is essential that these kind of guidelines are standardized, so there is no scope for interpretation or implementation of these guidelines. And that's a very key thing. So that's what the draft circular does. It kind of, like to give an example, the valuation of gold, it's very clearly identified it has to be a 22 carat. It has to be 30 days average or the last day's price, whichever is lower. It's very clear about it. Or where can you take the price from the IBGA or the commodity exchange? So the standardization and uniformity which comes across for the sector is actually, if you ask me, quite a welcome move. The problem is not about guidelines being stringent. The issue is about it being uniform, both in terms of understanding, application, and interpretation. And if that is done, it gives a level playing field to all the players and the people who can have good processes in place and do this in a manner, it's going to be beneficial for them. And that's the reason why we as a bank are quite welcoming.
No, absolutely. That was an important clarification point, Mr. Dugar, that you made, that the LTV norm will be applicable not just at the time of origination of the loan, but throughout the life cycle of the loan. So that perhaps kind of, reins in any kind of excesses that get built in as gold prices fluctuate. So taking forward what you said, give us some sense, say for Federal Bank, out of your total book, how much is gold loans now as a percentage? And in terms of market share, are you confident of winning over market share from some of the NBFCs now that these the rules will be absolutely uniform and harmonious across both banks and NBFCs?
Okay, so to your first part, our share in gold as a part of our total advances is about 12 to 13%. And that's where we are at, largely in the last few years. We are quite bullish on this business because we do feel we have a reasonably good understanding. What we are looking at it in terms of these rules coming in, which is something which is being talked about since the last time RBI came on 30th September, that a harmonized set of rules and regulations will actually be beneficial for all the players. And the players who have strengths in that will actually leverage. To answer your question, will we gain share? Most certainly would like to gain share, not just in gold business, but in all other businesses of ours as well. But gold in particular, we do feel that we have a strong edge. Our understanding is reasonably deep. We have a reasonably good branch presence, and we have a strong customer base. So, basis for all these things, I think it's a positive for the bank.
Okay. All right, Mr. Dugar, we'll leave it on that note. Thank you very much. Very helpful conversation. Didn't speak too much about the quarterly update, but we'll talk more about earnings and all the usual ratios, I think, once the official numbers are out at the end of Q4. Thank you.
Thank you so much.
We look forward to that as well. Thank you. Thank you very much for that. Quick break right now. We will come back on the other side with more corporate conversations, and also we'll put the spotlight on the macros, the impact of Trump tariffs on India. Tanvi Gupta of UBS joins in.
Welcome back. Let's talk about Trump tariffs and the implications for markets around the world. And we have Tanvi Gupta Jain, Chief India Economist at UBS Securities, now joining in to help us with this. Tanvi, good morning. Good to have you with us back on the program. Prashant here. Market odds for a US recession are still around 50%. So it's like a coin toss. What is your global team at? Where is your global team at in terms of assessing the risks? And what then are implications for EMs and specifically India?
Thanks, Prashant. Thank you for having me on the show. So clearly, I think the global uncertainties have increased manifold since President Trump has announced substantial widespread tariff, including India. So we are seeing 50 to 100 basis point downside on our global GDP growth forecast. Specifically coming to US alone, if I look at the forecast for US, our US economics team has downgraded its GDP growth projections from 1.6%, this is Q4 on Q4, to 0.4% for 2025. If I look at in terms of annual GDP numbers, our US team is now projecting the real GDP growth to slow from 2.8% in 2024 on year-on-year basis to 1.5% in 2025 and further to 0.8% in 2026. So we are still seeing a substantial slowdown, not a recession yet. If I look at China, which is one of the most important countries when I'm looking at EM and definitely for its impact on the emerging market economies, including India, we did lower China's GDP growth forecast to 3.4% today morning for 2025. So clearly, I would say that we are seeing substantial widespread tariff, and this is going to have a substantial impact on the global GDP growth. So when I come back and look at where is India, I think the economic impact will depend on whether these tariffs, how long these tariffs are put in place and whether they are reduced through negotiations. So I would say there are a lot of margins of adjustment that matter, including retaliation, which we are seeing for countries including China, the margin and the FX adjustment and the elasticities of demand. For India, we did reduce our growth forecast for FY26 to 6%. We were earlier at 6.3%, and our 6.3% forecast were already building in 25 to 30 basis point downside of the tariff hike, which we were already pricing in. So clearly, we would say that the substantial impact of the global tariff is definitely being seen in a much slower growth in India. And not only that, I would say within EM, I would say India looks like will be one of the least impacted countries just because we are a more closed economy and a less open economy, but we are not immune.
Okay. Tanvi, so hi, thank you for joining in. Great to have you on the program. So, the range has been around 30 to 60 basis points of an impact on India, and you were outlining some of your estimates as well. Within some of the larger exporting sectors, do you see any bigger hit at this point in time, whether we talk about pharma? The thing is, we don't even have firm final numbers for sectors like pharma or even some of the other plays as of now.
See, if I look at sectoral breakup, I definitely see that there's a lot of room for negotiations. I mean, the bilateral trade agreement talks are already on, but the sectors where we can see a hit and where the negotiations could also take up strongly are agriculture, electronics, automobile, energy, textiles, and alcohol. And these actually account for 50% share of India's exports to the US. I would also say that at this point, India can definitely increase goods imported from the US, including defense and energy. I mean, the biggest and the easiest part that India could do in the interim by the time bilateral trade agreement comes into force is to start substituting, the demand of oil, which we are already coming from Russia, maybe some part from US, and that can clearly reduce the trade surplus, which India has of $46 billion significantly over the coming months. So clearly, I would say the sectors which are going to take impact are the export-driven sectors. But more than that, which I think when you look at US trade tariff and its impact on India, it's not only the slower global growth or the bilateral tariff. I think the biggest uncertainty or the numbers where I see downside is that there could be a postponement of India's private corporate capex recovery due to the risk of China offloading excess capacity to other countries. And that is the biggest concern which I will have, that the investment cycle recovery may get further delayed. From an India standpoint.
Indeed, Tanvi, that's the risk, right? Private sector capex not picking up as much as expected. Got that. But, one positive from this entire tariff tantrum that we've seen from Trump is that crude oil prices have cooled off, which from an India market perspective, it's obviously a positive. And I was listening to the RBI governor last week. He was sounding more growth-oriented. Given that sort of a backdrop, what are you all factoring in from the RBI for the remainder of this year? We've already got a couple of rate cuts. Have you all upped that estimate?
Sure. So if you look at, I think the biggest silver lining, as you rightly pointed, is that oil prices could remain lower for longer. We have taken now $65 a barrel in our growth forecast versus $75 a barrel, which we were pricing earlier before this tariff talk started. Clearly, India is still importing 87% of the oil requirement. So any lower global oil prices definitely bodes well for our economic growth prospects. And that is marginally is an offset when I look at my 6% GDP growth numbers. So the downside could have been much larger, but there is an offset because of lower global oil prices. We definitely think that there is additional policy support needed to sustain domestic growth momentum. And looking at it, the fiscal space is quite limited, and the government already came out with a fiscal consolidation rate part. But I think where we could see some kind of fiscal buffer helping to sustain domestic growth is lowering of retail prices of gasoline and diesel in case lower global oil prices sustain. I mean, clearly a $10 a barrel decline in oil prices, if it's sustaining, can give you a room of at least 5 rupee a litre cut in gasoline and diesel prices over the course of the year. Coming back on the monetary policy, I maintain our view that monetary policy will do the heavy lifting to support economic momentum in this downturn. We were earlier building in 75 basis point of rate cut, and now we have revised it and calling for a 125 basis point easing in this cycle, which means that out of 50 basis point, which has already happened, we are building in additional 75 basis point of rate cut, which will bring down the repo rate to 5.2% by end of FY26.
Got that. Tanvi, have you looked at sector by sector that point that you made that private sector capex may take a hit because China has so much excess capacity to sell? Because of that, which sectors could be at risk, and you think we will need to enact, like we've done in steel, anti-dumping sort of measures for a variety of sectors? Do we largely have that protection? What's your sense?
Okay, so first of all, when I look at the sectors, definitely I would expect some safeguard duties by the government to protect the domestic industries. But I think in a globalized world, it is very difficult to control beyond a point. So even though safeguard duties can be put in place to ensure that excess dumping could be avoided, but in the end of the day, if there's so much elevated global uncertainty and if there's a private corporate player, they will think twice before investing. So clearly, I mean, safeguard duties can help a bit, but whether it can substantially change a private corporate capex incentive to invest. I think I've found it very difficult. In this entire mayhem, I think the sector that should do well when I look at India's growth from a broad macro perspective and looking at consumption, investment, and exports, I seriously think that the household consumption could remain largely supportive. I mean, it is largely domestic demand driven. We are already seeing cyclical rural demand is recovering on good crop prospects. So far, the weather agencies are talking about normal monsoons for 2025 as well. Urban demand, at least the lead indicators, are showing some stabilization, largely on softening inflation and prospective rate cuts. So I would say, so I think if the investment is going to see more postponement, and we do see that the goods export could take a meaningful hit due to slower global growth, the sector of the economy that should held up is basically and largely household consumption, which is a significant portion of India's overall economic growth.
Okay, all right. Thank you very much for that, Tanvi. Thanks for weighing in and giving us some sense of the implication that these US tariffs could mean for India. So that's the view coming in from UBS. Back to the market for now. Let's take a look at what the screen is telling us. We've still got, this nice 500-point kind of a move. So it's a steady morning so far. Look at that, rock solid and steady as of now. It's a good-looking screen. We're putting the spotlight again on the auto space because autos are supercharged, turbocharged, so to speak. A lot of those stocks, including, let's actually check out Samvardhana and Tata Motors, etc. Samvardhana is up about 7%. Sona BLW is up about 7.5%. And Tata Motors from the large cap space is also up 4 to 4.5%. Let's quickly get, I think we've got Sudarshan back with us to revisit why specifically these two. I think, do we have Sud?
Yeah. So,
yeah, go on, Sud.
So auto is the biggest outperforming sector in the first hour of today's trade, and the reason is over the weekend, US President Donald Trump has announced that he might consider modifying 25% tariffs that US government had announced on autos and auto parts effective April 3, and especially for the imports that US companies do from Mexico and Canada. Now, the question here would be, will he consider modifying tariffs only on the imports from Mexico or Canada, or also it would be eased for other imports from UK and from other countries as well? But talking especially about Samvardhana Motherson and Sona BLW, for Samvardhana Motherson, Mexico forms nearly 4% to its total revenue, and for Sona BLW, total contribution is in the range of 2 to 3%. From Mexico, that Mexico production, in the US, the vehicles that are sold in the US, the contribution is somewhere in the range of 30 to 60%. For GM and Toyota, General Motors and Toyota, that contribution is in the range of 30 to 40%, while it's the highest for Volkswagen, which is 60%. And why for Samvardhana Motherson it's positive? Because it's one of the biggest suppliers to these companies in the US, and that's the reason you are seeing big move in all the auto names, and especially in these two counters.
All right, Sudarshan, thanks very much. Got that. Let's actually take this discussion forward with Hemal Thakkar, who is a senior practice leader and director at Crystal Intelligence. He's with us on the show. Hemal, thank you very much for joining in. So from a market perspective, there's a big relief rally playing out on all kinds of stocks. OEM, exporters like Tata Motors, which obviously see US as a big market, as well as the ancillary companies. What did you make? I mean, right now we're only guessing, right, till there's a formal order. What did you make of President Trump's statement that I think the auto companies need more time till they can make here, as in make in the US?
Yeah, of course, auto companies will need more time till the time they make in the US. And US has been largely dependent on Canada and Mexico, which are its neighbors, and other countries, from an import perspective, including the likes of India and China. If you look at it from India's perspective, almost 30% of India's exports are to US. So to that extent, it may get vulnerable. But I don't think, supply chains can be built overnight. It'll take time. This is more of a structural shift, even if it has to take place. So at this point of time, I say we'll be on level playing field, and we may possibly not see much of an impact, in our exports to US, at least in the near term, is the sense that we are able to.
Okay. So, this relief rally that we're seeing within stocks, is it well placed? Because again, in all the tweets, he also reiterates that eventually it all has to be made in America. But obviously, I think he's also finally realizing that supply chains don't move overnight. So do you see, so do you see the Indian auto ancillary space remaining fairly insulated, considering the on-ground realities?
Yes, at this point of time, structurally, it seems that we are going to be fairly insulated. I don't see much of an issue. I would see US continue as one of the largest market for us as such. And, kind of the exports will not get impacted to a great extent. Because if you also look at, the statements that the president has been making, President Trump has been making, it seems that India may possibly stand at an advantage as compared to the other peers, barring, the likes of Mexico and Canada, for that matter. So India may stand to gain. And also, if you see in the last 3 to 4 years, we have had significant increase in share to, US as compared to what it is today. So from that perspective, it's going to be a positive to India. And also, if you ask me, the cost and the quality, kind of combination that India can provide to US at this point of time, which is very much acceptable by most of the large OEMs there, is something which may not be, a competition from other markets as such. So I think India will definitely stand to gain from that perspective.
Hemal, what is the risk to this view? What's the argument if we can approach it from the other side?
What is the risk to the, sorry?
What is the risk to this view that India largely benefits? Go on.
So as Surbi said, supply chains, if they get rewired overnight, or if there are tariffs which are relatively lower on China as compared to what it is for India, then, you may see India being at a risk. But till the time we are better off as compared to, our counterpart, I think we are, in a much better position, because the only option that US at this point of time would have apart from India would be Mexico and Canada for that matter, apart from China. And if Mexico and Canada are also at a level playing field or a little better than us, but still the kind of volumes that they need, they will definitely need India to support the auto OEM industry that is there in US.
Hemal, just a very general question. I don't know if there can be a clear answer to this or not, but assuming that some level of tariff will eventually come in, maybe not right now, maybe 2-3 months later, whether it's 15% additional tariff or 20% additional tariff. I mean, India's original number was 26%. So let's see, 15-20%. Maybe if that does become a reality, do auto suppliers and component suppliers, do they have enough margin cushion to digest some of it? Or will all of it have to be literally passed on to the end consumer, and then we deal with demand fallout as it happens?
Yeah, both could happen, Surbi. I'm not trying to give you a politically correct answer, but today most of the auto component companies are having margins in the range of about 10 to 16%, depending, on the segment to which they are catering. So the EBITDA margins are in that range. So from that perspective, they will definitely have some cushion, wherein they could absorb a little bit of increase and pass on the remaining to keep the demand active. But as I said, what I still believe, or what Crystal still believes, is that, we are in a much better position when we look at our counterparts. So what sense we are getting is, we'll probably be levied relatively lower tariff as compared to, the strongest competitor that we have will be in the name of China. So from that perspective, if we are relatively better positioned, I think we should be in a position to pass on the, kind of increase that we have because of duties, and should be in a position to protect our margins.
So since you're saying that the only real threat is from China, and going by nomenclature and the language of the social media posts, where President Trump is calling China the biggest abuser, I guess we're okay. We're in an okay space. But let's see. This is a fluid situation. Every day you wake up to something new. But thank you for weighing in on the situation as it stands today, that perhaps Indian auto component companies don't have too much to worry about at this point in time. Thank you for that. That's a crystal view. Coming in back to the market, like I said, markets been in cruise control mode, 500 points higher on the Nifty. So I think we've got Mitesh. We've got Mitesh back with us. Mitesh, it's a full green screen. So the gap up has happened. Now what? What should the trades be?
So there's no sign of worry as well. So I think I would still maintain that we will possibly go higher. We talked about 23,350, 400 as the target. We got a high of 23,368. And despite the fact that we have dropped about 50 odd points, the structure and the position on the intraday hourly to hourly chart still looks positive. So we can look at 23,600 and then 23,750 as the next target zones, maintain a long bias. And on the stock side, REC is something, which is on the buy list. Keep the stop below levels of 407, 408 here. And look for target of 430 to begin with. And Reliance is also, catching my attention. It's open with a gap up, and then while it's come off slightly of the day's high, but the gap is being sustained. Buy here with the stop at about 1225 for a target for around 1280.
No, got that, absolutely. So those are some individual. By the way, 10:1 still in terms of advances to decline at this point in time. A small name, Mitesh, have you looked at this one? Goldium, large volumes and big price move from the low of 250 back at about 350 in 3-4 days.
Yeah, it's, so Prashant, I used to track the stock earlier. It's, I think, into artificial lab-grown diamonds. And the stock had a weekly pivot at around 315, which was the closing in the November 24 month. And then we got a 307 weekly closing low on the 4th of April. While we didn't go below that, I think we immediately recovered, and then the weekly closings have been higher. I think bouncing back from weekly pivot, the intraday charts are good. The first target of 360 has been met. I think once we see a closing about the 365 zone, good chance that the stock will head towards 410 levels.
All right. Fair enough. Mitesh, we'll speak again. Thank you very much for joining us with that perspective. We take a quick break here. Commodities in focus. Manisha is here with us on the other side.
अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Welcome back. So equities are having a good morning. Let's figure out what's up with the commodity markets. We have Manisha Gupta with the latest. Over to you, Manisha.
Thank you so much for that. So, yes, commodities also are having a good morning. Across board, we're looking at gains continuing here. The last week was a stronger one as well. So, I want to talk about the crude oil prices, which also is trading firm off those kind of 4-year lows that we saw in the previous week there. So, the US relaxing tariffs on key trade partners clearly seems to be supporting. The markets have seen 4% of gains for crude prices in last 1 week. It still is down 8% on month, though, but we have seen near-term gains come in for this one. Well, the another important point that the markets are reacting to is the China import numbers for the month of March, where the crude imports have been 5% on a higher side on year-on-year basis. Well, China clearly has been buying from Iran and Russia, as those reports show. The other thing that the markets are reacting to is the OPEC and allies statement, where there is an expectation that you could be looking at demand going slightly lower. Remember, OPEC also is adding more barrels into the market from the month of May to the tune of 411 million barrels per day. That is something that will keep the prices in check. The other thing that the street will watch out for is the US and Iran reconvening to meet this week yet again. Those conversations were left midway in the previous week. So that is something that you could be looking at some headlines coming in from. Saudi Arabia's numbers should be on your screens, because when you look at the production from that major oil producer, that stands at 8.9 million barrels per day for the first quarter of 2025, which is the lowest in last 14 years. So this is the kind of data from Saudi Arabia, from China, which seems to be supporting the crude oil prices right now. But what doesn't really support is the oil demand estimates for 2025. The weakest of them really coming in from Goldman Sachs. 0.3 million barrels of demand growth is what they're anticipating in this year as compared to last year. JP Morgan and UBS are talking about 0.8. Most bullish clearly is OPEC, which expects that there will be an additional demand of 1.3 million barrels per day in 2025. The other thing really is about the price outlook, where, as you can see, in the beginning of this year, most of these banks were talking about 80 and 85, and there was perhaps a 90 on those charts as well. But now we're looking at all of that below 80 and in some senses below 70 as well. Goldman Sachs report that came in yesterday talks about an average $63 a barrel of a price for Brent for this year now. You have 66 and 8 coming in from JP Morgan, UBS and Fitch. Stanchart is still slightly bullish on crude oil prices. They expect an average of Brent at 77 for this year. But as you can see, rest everybody else talking about below 70. That's an interesting chart on your screens now. And this is something that the Indian markets are now talking about. Last year, in the month of April, the average crude prices were at 89.4. We've seen a sharp decline from that, $20 down really, in April 2025 in sense of prices. There is a conversation, well, we've seen this custom duty movement as well. And most analysts, oil and gas analysts, will tell you that 2 rupees of a cut, if the prices continue to stay below 70, perhaps is a possibility now.
All right, Manisha, thank you very much for that. Absolutely. Oil, very, very sharp decline. Good for a big oil importer like India. Well, we'll take a quick commercial break here. On the other side, it's our special segment. It's the economy. Lata will connect with Santanu Sengupta of Goldman Sachs, and they discuss the impact of this tariff zigzag back and forth on India and the global economy. Stay tuned.
Welcome to It's the Economy. One of the sharpest cuts to the GDP of Asian countries post the April 2nd reciprocal tariff announcement came from Goldman Sachs. They had brought down Vietnam's GDP by 1.2 percentage points from 6.8 to 5.6. Taiwan's was cut by 1 percentage point. India's GDP was cut by 30 basis points to 6.1%. But now that the tariffs have been paused for 90 days, does Goldman Sachs have a slightly less worrying view of Asian and Indian growth? What are the specific positives, if any, for India from the domestic policy changes like, lower interest rates and easier liquidity? For all questions, India and maybe a bit global, I'm joined by Shantanu Sengupta, Chief Economist of Goldman Sachs in India. Shantanu, good morning. Thank you very much indeed for joining us. Well, any second thoughts on India's GDP forecast? Any upside risk to your number?
Well, we are sticking to 6.1% year over year for both calendar 25 as well as fiscal 26. Look, I mean, the issue is with the uncertainty. It's not just the direct impact of the tariffs, but this flip-flop that you're having multiple times now, not just at a country level, but also at a sector level, makes it fairly uncertain for especially GFCF or investment growth, which is why we are sticking to the number of 6.1% year over year for growth. In terms of upside versus downside, clearly there'll be two other downsides. One from services exports, and we have been very bullish about services exports in India throughout this period, last two or 3 years. But this time round, we think that if US growth is slowing down and our US economists think that we are getting towards 0.5% year over year, Q4, that is by the Q4 of the calendar year, if you're slowing down that much, then undoubtedly in our mind, services exports is going to be hit. You're going to see IT earnings also coming through and get some guidance on that. Secondly, if oil prices are here, there is good oil price decline and there is not so good oil price decline. If oil prices are declining so much, we also think that remittances will be hit a little bit. But on the offset side, you'll have lower oil price feed through into our oil imports and give us an oil boost through the current account. And secondly, we think that monetary policy now is in an easy path, right? I mean, the governor was very clear also. You've seen the change in stance to accommodation, and therefore we think that 50 basis points of more rate cuts and therefore further upside from monetary policy.
Okay. Yes, actually, I wanted to refer to your, current account deficit paper as well, which you wrote in March. I think you had a full year current account deficit of 1% of GDP for last year. What are you expecting for this year? Do you expect the current account? I think you went with 1% for this year as well.
Yeah, so the current account deficit overall can be 1% of GDP because of offsets that you're seeing a little bit from remittances, as I said, and the services export drag. But the oil price boost that you're seeing will feed through into the domestic economy. We are unsure about what that channel will be ultimately. So there could be two options, right? One, you hike excise duties and you feed this through the fiscal, and the government figures out what to spend this on. Or eventually you could have a direct cut at the pump price level for petrol and diesel, which is a direct boost for the consumer and the overall aggregate economy. Because remember, this kind of a price cut is difficult to save. An income tax cut, you can have some savings going on. But in this one, we think that it'll transmit through the economy faster. So we are unsure about what that path will be, but we are pretty sure that will act as a boost for growth.
For growth. Okay, so are you expecting a downside risk to your inflation forecast? Your inflation forecast is among the lowest, 4%, like the Reserve Bank. Do you think it can be even lower than that if oil price cuts are passed on? And a related question, therefore, almost all of you on the street are expecting that 5.5 will be the end repo rate at the end of probably by August. Do you expect it can go even lower?
So firstly, on inflation, yes, clearly. I mean, the 4% inflation forecast that we have is with pump prices not changing. But if indeed oil price declines are passed through to the consumer, then we would have downside risk to the 4% inflation forecast that we have. Right now, what we have built in is only the second round effect that feeds through from WPI inflation into core goods and so on. But if you have a direct pass-through, we think there's further downside risk to inflation. Now, to your second question, our sense of what the governor said about, he clarified on the accommodative stance, is that the real neutral rate for the RBI is between 1.4 to 1.9. So let's call it like 1.5 to 2%. If inflation is at 4%, then you should be able to get to at least 550.
Okay.
But if you think that your output gaps are widening, which is that you're growing below potential, call it like the middle of the year, then there's a possibility that the RBI goes in for a deeper rate cutting cycle where the neutral, where they go below the real neutral and have real neutral, let's say at 1% or 1.25%. That will give you a deeper rate cut. Our sense is, with so much uncertainty, I mean, for the central bank also, it's difficult to call it out 6 months down. And therefore, they'll probably go towards 550, keep liquidity easy, which we think is the most important thing. I mean, you've seen this market for long enough also, Lata. Ultimately for transmission, what matters is liquidity. So if the liquidity is benign, then that will feed through into the domestic economy. And provide a boost to growth. We are factoring in about 10 to 20 basis points of growth offset coming in from monetary policy.
No, actually, I pointedly asked the governor this question on whether he would go for a lower real rate and therefore the end repo rate would be a 5/4. Well, he obviously didn't commit himself, but it did look like he was more dovish than the 5.5 would warrant. Shantanu, you began by this entire conversation by saying that your US economists are marking down the growth in that country, and that's why you are expecting perhaps lower services export flows. What exactly is your team speaking about the US economy? Are they expecting a recession? A lot will follow through from that.
No, we are not in the recession camp, particularly because the Trump administration reversed the tariffs. We still think it is very elevated, though, the recession risks. We are at 45% recession risk for the year, which is pretty meaningful. I think there are a few questions that remain. One is, whether the exemptions or the rate reductions that you've had for telecom, semiconductor equipments, will that remain in place? Will Chinese firms be able to reroute exports to the US via other Asian economies? Or is there any hope of an agreement that brings the broad tariff rate back towards more reasonable levels? So right now, even the 10% tariff rate remains. So if you have a little more beneficial or mutually beneficial trade going on, that is when you can pass without slipping directly into a recession. Overall, the economy was pretty healthy on the US side as you entered into the trade war. And therefore, we don't have the recession call yet. We still think that the Fed goes ahead and cuts thrice in the second half of the year. But again, the uncertainty is what is keeping US growth muted and the recession odds fairly high at 45%.
Okay. What's the Goldman Sachs view on the dollar and the rupee? It's very confusing. The dollar's index has now gone below 100. If one looks at it, the whole effort of the Trump administration is to lower the deficits they have with each country. What does all this mean? I mean, has the rupee seen its worst in terms of 87.95? Both a dollar and a rupee view.
So the dollar view is slightly different from what you're going to see on the dollar rupee in our opinion. Okay. One, on the dollar view, the broad dollar view, we think the weaker trend in the dollar continues. Firstly, there's this combination of unnecessary trade war and the uncertainty, which will be impeding business confidence. Yeah. Secondly, you're seeing the trends in the flip-flop from the governance side from the US, right? And that sort of eats into the appeal for the safe haven status of the dollar. And therefore, we think that the weak trend in the dollar continues. So for euro dollar, for example, we are looking at anywhere between 115 to 120 by the end of the year. Whereas for the dollar CNY, which is more specifically Asia, if you're really imposing that kind of tariffs, we don't think Asian central banks, particularly China, will have the incentive to let their currencies appreciate meaningfully. You've seen it in the CNY move also in the previous week a little bit.
Yes.
Therefore, we think that the CNY stays in the 735 kind of zone. Our call is for the dollar rupee to therefore be around 87.5, 88. Look, if you're having an overall, even 10% tariffs and a growth slowdown on account of that, it does not make a lot of sense for your currency to appreciate in that situation. So we think that if flows are to come back in the future, central banks, particularly the RBI, will stand in the way, will try to mop up and rebuild reserves is what our thought process is. So we are looking at 87.88 on the dollar rupee.
No, I agree. Actually, even today, I'm surprised that the RBI has allowed the rupee to appreciate to about 11.6 versus the CNY. For the longest time, we were closer to 12. So maybe this is a passing phase, and we are going to see the rupee also depreciate, as you say, towards 87.50. The final question, and I'm trying to squeeze in, do you think India has any advantages? I mean, we hear a lot of positive noise that we will replace Chinese exports, especially in iPhones. Do you see India gaining because of the new trade order?
So, firstly, in the short term, we think it's good that there is no retaliation from India. And our understanding is that the US and India are working on a trade deal with the aim of increasing bilateral trade. In fact, the Ministry of Commerce clarified right on the day when the announcements were made that discussions were ongoing between the US and Indian trade teams for a mutually beneficial multi-sectoral bilateral trade. You've already seen oil imports slightly increase. We think that there can be further deals on defense. And once the dust settles, you can have a relook at the new world order, and India can make its place known there. For the interim period, though, we think that uncertainty is what will dominate. That's the point that we are trying to say, that whether the tariff rates are high or low, the fact that it is changing so many times will just lend uncertainty in the minds of anybody who's trying to put up capacity. So even if you want to realign your trade and move into India, you will want the dust or the uncertainty to settle down before you do that. So not in the interim, maybe in the longer term.
Oh, yes, there's no doubt that global investment is going to suffer because of the uncertainty. Why would you want to invest anything? But you keep saying when the dust settles. I hope the dust settles. At the moment, there's no such sign. Thank you very much, Shantanu Sengupta, for giving us some understanding of what is several moving pieces. But we are a little wiser after this chat. Thank you very much for joining us. We have to wrap up on Bazaar on that note. It's a good day for the rupee and for equity markets. The action will be taken forward by Chartbusters after the break.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
The Indian market catches up with a rally in global markets, even as Trump administration continues with its back and forth on tariffs. The Nifty bank and broader markets gain about 2% each. The realty sector is the top performer today.
Automakers and ancillaries surge as US President Trump suggests a potential relief on tariffs on imported cars and automotive parts.
HDFC Bank rallies over 3% after it cuts interest rates on savings deposit accounts by 25 basis points. Analysts suggest this could result in a slight improvement in their net interest margin.
GMR Power divests stake in 3 stressed assets for a sum of around 650 crore rupees. The company says this will deleverage the balance sheet by around 4,400 crore rupees. The stock is up close to around 4%.
A bunch of stocks also surging on order wins. We have Ashoka Buildcon declared the lowest bidder for a 569 crore rupee project. Ircon as well got a letter of award for a 127 crore rupee project, while Ahluwalia Contracts is up nearly 6% on a near 400 crore rupee project coming in from Godrej Properties.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Manglam. Well, Manglam, a super way to start the week. Coming off a longer weekend, the bulls are fully charged. I'll tell you what, with the markets, the net short, you could see an additional fillip moving up the upside because the FIs, they have close to around 1 lakh contracts on the short side. Just take a look at the Nifty Bank. Well, that's zooming away, and that's leading the way today.
That is leading the way today, Nigel. Domestic sector, HDFC Bank leading the charge, and then all the underperformers seeing some pickup as well. IndusInd Bank, case in point, after the big drubbing that it saw all of last month, has now come out and is gaining about 6% odd. Let's see where it goes from here on as well, but not ruling out short covering. And not just the index futures, Nigel, we had them writing nearly twice as many calls as puts in the previous trading session as well. Some of those call writers, because of this gap up that we've seen, would be caught on the wrong side as well. And whether we see further short covering in that end of the market or not is the big question. Importantly, the India Wix coming down and the market breadth looking a lot better as well. So all in all, good going for the markets. Let's see what happens from here on. But let's bring in a big corporate conversation that we've lined up for you today. Cooling solutions provider Symphony. They've announced plans to divest stake in their Mexican and Australian subsidiaries to focus on the higher potential growth markets like India and the United States. A subsidiary of the company has also sold assets to another subsidiary to repay its loan to the parent. Symphony's management, the managing director, Rupesh Shah, now joins in to discuss all of this and more. Thanks a lot, Mr. Shah, for joining in. First up, if you could, just simplify these transactions for us. How much revenue goes out of the company? What proportion of EBITDA goes out of the company? How much money comes into the company via this? And what is the resultant company's growth likely to be over the next couple of years?
No. So we are contemplating, and board has decided to explore the possibility of monetizing full stake of Symphony in Climate Technology Australia and IMCO Mexico. Both put together, until 31st December, trailing 12 months, turnover was close to 350 crore. However, both put together, EBITDA was just about 3 crore. However, capital employed was in excess of 430 crore. So this is what going out. And if we exclude them, then our PAT, as it is where it is, increases almost by 11%, and EBITDA goes up by 12%, while capital employed comes down just to about 46 crore, which includes Symphony India, GSK China, Symphony Brazil, and exports from India. So first and foremost, from high capital employed, particularly in climate technology and to an extent in IMCO Mexico, it will be absolutely low capital employed, translating into ROCE percentage in high triple digit. That's number one. And number two, we wish to refocus top management time as well as bandwidth on much more growth-oriented and profitable opportunities. So in a nutshell, that's what the transaction is all about.
All right. Hi, Mr. Shah. Good morning and good to see you. And thanks for detailing those numbers for us. Now, a couple of quick questions. On IMCO, out there's a question mark. Why are you looking to sell this business? I understand the Australian business has been struggling from the time you acquired it. Turning around has been difficult. But IMCO was doing pretty well, right? Growth was coming about. Margins were fairly decent. And it is more or less an asset-light business, just to break up both the two assets. So what is the rationale of selling the IMCO business? That's point number one. And point number two is, what is the total money you have spent on the Australian business as of now? I think the initial payment you made was around 220 crores. Then there were some loans, there was other expenditure as well. So what was the total cost? Two-part question. Please go ahead, sir.
Yeah. So first and foremost about IMCO. IMCO, unlike Symphony India and GSK China, is highly working capital oriented business considering the nature of business itself. So as on 31st December, the capital employed is 87 crore. However, that is the lowest as on December end. When it comes to the March end or June end, normally capital employed is in the range of 110 to 125 crore. So vis-a-vis Symphony India and down the line what GSK China is going to deliver, still for us, it's a drag on ROC percentage. That's number one. Number two, as I said earlier, IMCO Mexico as well as climate technology is taking decent amount of top management bandwidth and time, which we wish to refocus even on a much better and higher growth-oriented opportunities. Number three, in last 3 years in IMCO Mexico, we had strategized whereby apart from new models of air cooler, many more new products have been launched, which includes air conditioner, washer, heater, etc. And they have reached a decent peak. And we believe that this is the time to have the optimum monetization in the interest of the shareholders.
So, Australian business, how much money had you put in there? Please go ahead, sir.
Sure. About Australian business, if we consider acquisition loan which has been availed from the bank, all put together close to 351 crore. But if we exclude that, then it's close to 280 crore vis-a-vis initial amount of 220 crore, because over a period of time, additional 60 crore has gone to fund the losses of climate technology and repay the acquisition loan.
Now, the most important question, sir, we've understood the rationale, we've understood how much you've invested in it. By when do you intend to sell these projects? And secondly, how much money are you likely to raise from the sale of these products? Because, this subtotal of this business, like you pointed out, would give you 354 crores of revenue, 3 crore EBITDA. It was net loss making at 12 crores. So what do you expect to monetize from this sale?
Sure. So first and foremost, in climate technology, as it is where it is, we expect in 1 to 2 years down the line, a decent turnaround story as we achieved recently in GSK China and earlier IMCO Mexico. Secondly, we have already reduced these overheads to half vis-a-vis when we acquired. So we expect, based on future performance, apart from ready-made access to Australian market, branch of climate technology, team and products which have been completely now streamlined, it should be a good opportunity for a buyer. And considering that we expect the valuation, exit value, difficult to convey at this point of time. As far as IMCO Mexico is concerned, it's decently profitable, and in last 3 years, it has registered 30% CAGR growth in terms of the top line as well as bottom line, and likely to post that way with a new buyer. So accordingly, EBITDA decent multiple, we expect that. So post-board meeting, we have just formalized the investment banker and process has just begun. So about the time frame and exit valuation, I think it's too early to say anything in that respect.
I'm just doing a rough back of the envelope calculations. Your company right now, on the whole, is trading a little around 7 times sales and around 30 times, market cap to EBITDA. Would you expect your asset sales in Australia and Mexico to be in similar multiples? Would that be a fair assessment, or it could be lower because of these businesses being where they are?
See, in the interest of the optimum realization, I won't like to enter into any guesswork or put any figure at this point of time, even though to the investment bankers, we have done certain maths and we have worked out certain expectation, and they are aligned with that.
Mr. Shah, give us a sneak peek. Nothing wrong in wishing, right? What would be the ballpark number? Give us a very wide range. We'll take that. But nothing wrong in hinting at an aspiration. You already had a chat with the bankers. So let us in on that, right? A broad range, what would you be happy with?
You will appreciate that. That falls into UPSI. It jeopardizes the transaction. And obviously, once we have initiated the process, we will realize the optimum valuation. Not only that, also keeping in mind, we are exiting these 2 companies, not these 2 markets, because due to obvious advantages, new buyers will like to continue sourcing the products from Symphony India as well as China. That's number 1. Number 2, for some of the products, Symphony India brand is well known, and there is a possibility of Symphony India brand licensing. And number 3, by releasing the bandwidth and time in current geopolitical environment, we are likely to have a decent opportunities directly exports from India to USA, Brazil, Middle East, and many other countries. And I think main international Chinese competitor cannot beat us now.
We take that point. Thank you so much for joining in. You've told us all you could. We've asked you all we could at this moment without landing you into any sort of regulatory soup. But we wish you good luck for this transaction, but more importantly, for summer season as well. We leave you with the promise of joining us back after your 4th quarter results to give us a lowdown on how that performed as well. With that, we'll slip into a short break, come back on the other side. The management of Muthoot Finance joins in to discuss the new RBI draft gold loan norms.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Muthoot Finance is the stock on our radar. Saw a steep fall last week after the RBI proposed tighter draft rules for the issuance of gold loans. George Alexander Muthoot, the managing director of the company, now joins in to discuss the impact of that from the proposed changes itself. Thanks a lot, Mr. George Alexander Muthoot, for joining in. Let's talk about the RBI's diktat. It's come in for LTVs or loan to value ratio on gold loans till the period of the loan. How do you think this will impact gold financiers like yourself? Let's get this out of the way first.
Objective of the draft regulation is to harmonize the processes which were followed by different NBFCs and banks. So I think that's a good step that everybody's processes are harmonized. And also because, as I always say, gold loan is a very operationally intensive business. Operations in gold loan are intensive because you have to collect the gold, check the gold, etc. So that is the first part. Second part was whether there was any risk in the system. There is any risk coming to the system, or the borrower's interest is being protected. So the second thrust of the regulation, I feel, as a gold loan NBFC, as a leader in the gold loan NBFC sector, I feel that RBI has also certainly looked at and is concerned or would like to protect the interest of the customer. So the customer has very well been protected by various provisions which were actually there, but which were not being followed by some new players. So I think that is the first step. So the second step is about the interest of the customer. The third was about the, the high growth in the LT, in the sector of the gold loan. Before going into the LTV, etc., I would like to say that, gold loan as a sector is quite useful for the common man, because for them, a loan which is easily available, quickly available, is definitely convenient for the customer. And if the interest of the customer is protected, this gold loan sector should certainly be encouraged. It should be encouraged because it has all the good things of a quick loan where people are not able to get loan elsewhere. So this should be encouraged, and the long-term sustainability of this sector should certainly be the hallmark of the new regulations. The long-term sustainability of this sector. Now, coming to the LTV, the loan to value, for gold loan NBFCs or the NBFCs, the LTV is always been capped at 75%. And I think that's a very reasonable cap. But as you say, there are some clarifications which we also require from the RBI. So we will be, as an Association of Gold Loan Companies, AGLOC, and us, we will be engaging with the regulator with regard to the draft guidelines issued, so that there are any clarifications or points which we need clarifications or which we can clarify to the regulator. We'll be doing it in the next maybe couple of days or weeks.
Well, Mr. Muthu, so what is your loan to value at the time of dispersals, and will you have to reduce it to meet RBI's guidelines?
See, so when we give loans, we give loans only for the usual gold loan ornament category. The ornament category is the 22 carat. Yeah, this is a practice which is always there. The guidelines which were always there was that if the gold loan caratage is less than 22%, we have to adjust the LTV on that. That has been every company has been doing that ever since. So I think, as I said first, some of these things which were being done by the established players were now put into one simple regulation. So that a simple regulation, simple guideline, so that it supersedes all other independent instructions, etc., issued earlier. So the caratage, etc., has always been there, and it is harmonized. It is put into one draft guideline. That's it, the caratage. The second, you are talking about the loan to value. The loan to value is something which we have been always talking to the RBI also on that. So we will certainly be looking at some more clarifications we will require on that, how it should be maintained, etc. So that we will be engaging with the RBI as we go forward.
All right, and what will be your growth rate in the next couple of quarters, given that you have to change your business model to comply with these guidelines? If you would give us a sense on that.
No, I think for the last several years, maybe 5-10 years, we have always been giving guidance of 15% is the quarter's growth. And if you ask me today for the 2026 also, I will give the guidance as 15%. But of course, we have always been able to grow 15, 20, 25, 30, etc. over the years. But our minimum guidance would always still continue to be 15%.
Minimum guidance 50 and sky is the limit on the upside. We'll push you a little bit more at the end of the Q4 numbers. Well, tell us, what's the outlook on the interest rates and the net interest margins going ahead, sir?
See, I've always been, so I've been asked this question several times over the last several years. So whenever there is a small increase in the cost of borrowing, we try to absorb it ourselves. But when the interest cost goes high, we pass it on to the customer. The same vice versa happens when the interest rate comes down. When the interest rate comes down, we pass it on to the customer in the form of our lower yield. So if the interest rate is coming down, we will certainly pass it on to the customer as lower interest, but maintaining our net interest margins. The net interest margins have always been in the range of about 10%, and we will continue to maintain that. If the rate goes up, the yield also goes up, but we will try to maintain the net interest margin.
Thanks a lot for joining in and giving us all those details, sir. Thank you so much. We'll keep an eye out on how this pans out over the next couple of quarters. With that, we'll take a short break, come back, get you more on the markets, a lot of stock-specific action. Stay tuned.
और उनको अरेस्ट कर लिया गया है और अब उनका लिए अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Welcome back. Well, the market's holding with good gains. We're holding above this 23,300 odd mark. So it's a good move is what we are seeing. IndusInd Bank, that's the one that got hit the hardest. That's at the high point of the day. So big move we're seeing on that one. Adani Group stocks. Adani Ports has moved up. Adani Enterprises as well is doing pretty well. What slipped a little bit from the top is stocks like Cipla as well as Trend. But otherwise, it's a pretty good looking screen.
No problems for the markets, Nigel. It was a long weekend. I believe a lot of people checked in as well, including you. So we have Indian Hotels, which is up around 5% as well. And then there is another long weekend by the end of this week too. So we'll keep an eye out on how everything pans out. We'll wrap up on this edition of Chartbusters with the news that the market continues to do well. But you stay tuned to CNBC TV18. There's an exciting lineup right after this short break on Trading Hour.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Markets are whiplashing, sentiment is fragile, and no one's quite sure what the next Trump tweet or tariff might trigger. Amid this storm, we are joined by one of India's most seasoned market minds. Manish Shokani is director at Enam Holdings. With decades of experience navigating volatility, Manish brings a rare blend of macro clarity and market insight. We cut through the noise and ask, Is this a buying opportunity or just the first wave of something bigger? And where does India fit in as the world resets its economic chessboard? Manish, welcome to the program. Thank you very much.
Thanks for having me.
As we sit down again, it's been a while.
Very wide canvas. What you've set out is stuff I hope I can address.
We'll try and sort of run through all of it. For our viewers, I just want to put out one graphic set, which kind of just, it's like a placeholder. We'll sort of put this up and throw it to Manish straight. Is this what Trump is trying to achieve? Do we know are we a little wiser as compared to where we were 10 days back? Number one, 10% universal tariffs as a revenue top-up to help the domestic tax agenda. He wants to raise revenue to be able to cut taxes later. That is number one. Second, sector tariffs aimed at bringing production home. So therefore, these sector tariffs need to be higher than 10%. And these are sectors like autos, semiconductors, and so on and so forth. He's spoken about this, Pharma, of course, as well. And number three, China tariffs meant to be exorbitant, because pretty much everyone in the Trump administration kind of believes in this, that China has stolen jobs, manufacturing away, and here tariffs need to be much higher. And so then, I mean, if this is the case, I mean, those negotiations will be much more protracted. Can we say this is the Trump strategy with all that has happened over the last 7 or 8 days or so? Manish, that is my question. Do we have this much clarity now?
So I'll take a step back even from there.
Yeah.
That what is, in my view, Trump trying to do? There have been decades of US benevolence, looking after the whole world and therefore suffering the problems of the world, paying for other people's wars, becoming a home market for others with probably among the lowest tariffs in the world. And then over the last 15 years, they printed money like crazy to come out of whatever crisis they had. Their only weapon was printing the dollar. What that's resulted in is a completely warped current account, a completely warped fiscal deficit, and a decline of really American, how shall I say, power in the world, in military terms and so on as well. And there's been this debate for 10 years now that is the US dollar about to lose its supremacy? And everyone's been kind of pegging away at the margin to see what the alternatives can be. So what he's coming to do, I think objectively, someone needed to do it. And it's high time someone got after what they're trying to do to fix the fisc, solve the debt problem, get after current account and so on. And it's very clear, China and US are now the new adversaries. And the world may be heading into a all-out war at some point. Now, what form and shape this takes, it's not like the old days where you send tanks and millions of people into battle, but maybe this is the new form of warfare to keep the other guys suppressed and down. And the US has actually led this benevolence towards China after they brought them into the WTO and basically just abdicated their entire manufacturing prowess to them. And it's to China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world. I would say already equal, if not ahead of US already. So it's high time someone did this. From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that the first 4 deals we sign are with allies. And he used the word, we didn't, which was UK, Japan, Korea, and India. I was very intrigued to hear that. Because they've always said we want to bring things onshore, we want to bring things near shore, which is Mexico and others, and then we want people which are friendshore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they're laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. The personal equations seem to be okay. The 3 or 4 countries which are mentioned seem to be okay. We are already part of the Quad. Now, what form and shape this takes, because there are so many moving parts, with, like he says, 75 countries coming and wanting to negotiate at the same time. And there'll be countries like Vietnam, which would which are very much in the China camp, but also US can't do without a lot of the product which comes out of China. So that's really that end. At the same time, China is not something one can ignore. They are our neighbors, and they are actually leaders in a lot of technologies. And Xi Jinping has reached out to try and solve the mess they made in Ladakh with us. We will be wary of them. They are wary of us. I don't know why, though, because we've never done anything really against them. But if that equation can play out where India can be a little more in the China camp, plus we have Russia in a sense to keep a check on China as well, and kind of, how do you say, run with the hares and hunt with the hound.
That's the
if you can pull that off,
best of both worlds,
then you land in a really good space, because India is never going to be in the China camp for I mean, obvious reasons. It may play out over the next few decades, because one couldn't have imagined US and Russia trying to get friendly, or indeed US and Japan being allies today. I mean, 40, 50 years after they fought the most brutal war. So history changes, but in the historical context, I think things are moving in the direction of being good for India and getting us into a closer group and a more tightly knit supply chain from which we were really excluded over the last 20, 25 years.
And this will, I mean, if this were to come our way, this will come because of the posturing, much tougher sort of stance towards China that Trump and the US has taken, right?
They can't be running this kind of deficit with China. China runs $1 trillion trade surplus. And they use the money of their surplus very wisely over the last 15 years. Ever since US started printing money post-2008, we did Narega program and we started building dollar reserves largely. China went and bought assets all over Africa largely. And they invested in hard assets. They invested in creating capacity, which today, if they are cut out from the US market, they already have ASEAN, Latin America and Africa to go to. And they can flood the world, and you can, in a way, have a deflationary boom in these countries because they can't produce this stuff anyway. And they can keep exporting their raw materials and minerals and so on to China. So, in a way, China is currently, to use Trump's language, holding better cards than America. And it's really up to the Americans of how they now play this game and redraw this chessboard, as it were.
To strike a deal, we'll have to strike a deal, because you said, well, Scott Bessent said, he mentioned India as one of the four countries. That maybe also is because we reached out the earliest, including countries like Japan, etc. as well, because India's earlier been mentioned constantly.
Tariff king.
Tariff king, tariff king, tariff king. So we'll have to obviously give.
No, but
then, as some have said, you run a 40 billion deficit.
Prashant, remember, the tariffs in India were tariffs on products. It's not directed at US. Because of the way the WTO rules were, it's like, let's say it's a horizontal system where you're running it on product. If you had, say, a zero tariff on automobiles, you would only be driving Chinese cars today, maybe via Vietnam or Thailand. But now that US is trying to make them vertical tariffs, which are country specific or certain sector specific, there's a way to change, which is why India didn't go to the RCEP. If you were part of RCEP, you would only have goods coming from the east into India. And we didn't have the wherewithal to go and export to the west. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. How many will you sell?
Absolutely.
You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst, which is, I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth. Because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning, and then you can start, making your own product. Because we were just not in any of these global supply chains for so long. So, for example, when Maruti came, they kickstarted the whole auto sector in India.
Sure.
Same way I was excited when Apple came, that whole ecosystem will get developed in India, and we can then leapfrog from just being packaging guys in EMS and so on, and then climb the chain. So it won't happen in 1 or 2 years. But over 10 years, you have to be a player in automobile, you have to be a player in defense, you have to be a player in electronics. That's the heart of any manufacturing renaissance. Even today, auto is 50% of manufacturing GDP of our country and most countries. If you're not a player there and you're not part of that ecosystem, there's no way we can cross this 14-15% threshold of manufacturing which we have in India. Our aspiration has been 24, but we've been stuck at this 14-15% range for like I don't know how many years. So I'm hopeful this redrawing of the chessboard actually helps kickstart this, and that's the most bullish thing you can think about.
Absolutely, and I think that number, right, 80,000, 3,000, is
the game.
As they say in markets, khone ko kya hai?
Yeah, that's right.
You probably gain.
You're not. I mean, we're 2-3% of world export. So today, why we look insulated is because we weren't there. How are you going to get affected by stuff which is going on?
So the sectors which may kind of see this. I mean, same textiles and.
See where you already are there. It's a question of India also removing bottlenecks to do that. There's no reason Indian textile industry should not have been 5 times the size. We lost it to Bangladesh, to Sri Lanka, to Pakistan. Like for what reason? Turkey is the largest. Of course, China dominates everything. But you need both the buyer as well as the seller in this case to get aligned and to remove those misincentives that we have. Like question is how they say that we cleared the Apple shipments in 6 hours instead of 30, which is what this whole grant SEZs. Can we create 3 pudongs in India to say this is dedicated now, channel line for Japan, channel line for Korea, Japan, channel line for US, and don't interfere and let these guys get on with their work and create these giant factories with a lot of employment. Because if you're going to go into the main street of India and try and set up, how do you get land?
It's not going to happen.
How do you get your customs clearances? How do you get the logistics to the port? So a lot of this has to be done. It's 15 years late. But like you say, better late than never.
Absolutely.
If everyone's waking up and we get aligned.
You know, we were speaking with this UBS economist in the morning, and there was her view was, according to her, the biggest risk from all of this, of course, she acknowledged that there are positives and we stand to gain, is that there is so much excess Chinese capacity everywhere, and that kind of now start to go. So I mean, we need to be on the guard as well here in India, right?
Of course.
So the fear was that Indian private sector capex, which anyway was kind of not kicking off, I mean, that gets delayed further because I mean, people will be watching what this capacity does.
It's been one of the reasons why we've not done it so far, because we were worried, and how does government react to each type? Do we go for anti-dumping and then it takes 6 months, and by then you're already on a back foot? But if this sort of alignment does come out, and now government's clearly got your back on this, and you're expecting this sort of dumping to happen. I think the game restarts. And that's why I'm saying it's a resetting of a lot of assumptions. So a lot of our old assumptions have to be changed, I think, in the next 6 months. A lot of our old assumptions will change, including about how the dollar trades. Like we just keep assuming rupee must keep falling. If this dollar reset has to happen, and I'm sure we'll talk about it as well. I mean, that's part of his game as well, that you have to have a little more competitive dollar.
Absolutely. So that's exactly what we're going to do. We're going to talk about the real stuff here. We're going to talk about financial markets. So let me take that quick commercial break here. Stay with us. So very much focused on rates, the bond market, equity markets on the other side with Manish Chokani.
अब उनका लिए अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Welcome back. We are in conversation with Manish Shokani. We've been, of course, talking about the real economic impact and how perhaps at the margin India does stand to benefit. Manish, thank you for staying with us. You know, I remember the conversation with Neelkan Mishra earlier, and he was saying that for India, the impact is not so much because we are kind of largely closed and we're not. And at the margin, maybe you said you stand to gain, but it's through markets. I mean, the impact is going to be through financial markets. So let's just parse through some of the stuff which has happened, and let's just start with the bond market in the US. What is the, as they say, bond vigilantes are back.
Right.
They never went away. But what is the bond market telling you? Yields on the 10-year first fell to 3.8.
And now 4.5.
Now it went to about 4.75, 8, and then 4.5 now. What is the bond market telling us?
Look, the US has 30% holding of treasuries by foreign governments. And with, unfortunately, the way they have gone and kind of rubbed all governments of the world the wrong way, do you think 30% of all the refinancing which is coming up over the next 12, 15 months is going to be attractive to foreigners to come in? At 4.5%, maybe you'll be tempted, but then you'll think, what if this guy confiscates my holding of treasuries? Because they've done that to other countries, which is why you've seen not just the bond yields here, but the flight of capital away this time. Number one has been gold. But it's also gone to euro. The Swiss franc is 1.2 to the dollar or thereabouts, which the Swiss central bank, I remember, was trying to hold it within parity for the longest time. The euro, which is actually, you know, we used to call them the sick man. And Larry Summers had this thing of Europe being the museum of the world. The euro is strengthening because that capital is going back, because they've clearly rubbed the Europeans also the wrong way. So I don't see an alternative for the US government, whenever this refinancing now starts coming up, to go back to anything other than printing. And that's the reason for what you're seeing is happening to gold, and why we think there is endemic inflation in hard assets. So when we talk about markets, the normal trend has been US weakens, money goes to emerging markets and hard assets. What Trump is doing is only accelerating a lot of these trends, which he also does want a slightly more competitive dollar. But if you get this rise in gold, silver, uranium, copper, whatever at one end, and real assets like factories and real estate, it's a decadal move. It's not a 2-month, 3-month kind of move. And I think you'll see substantially higher gold and silver prices. And again, with lower oil, higher gold. Again, events seem to be conspiring to
But this runs contrary, Manish, to what they started out. I mean, they wanted lower cost of borrowing. Look, so in that sense, last week has been a defeat.
See, they want to square the circle. You can't have kind of a forced recession in the US, which is what they need to do to crunch the current account. They need to move a lot faster on Doge to get the expenditure side down, which has not been happening at the rate one anticipated originally. Because if you get that expenditure cut and you get some of the income from this tariffs, then you have room for a giveaway, because his next game was, I will pander to my base by saying up to $150,000, no tax. And I will just put a sales tax. And therefore only the rich buggers who are buying stuff will pay for it. So like I said, there are so many moving parts. The world's not sitting idle while US plays the game they want. So people have been reacting, and therefore I think they'll get into a bit of a corner where I think this QE number, whatever infinite number which is coming, at some sense comes again, which is what gives you this inflation in hard assets and emerging markets. Again, consistent with trends for 40, 50
So then
years.
there is no real change in that sense in terms of
it's
higher.
reordering, but look, it's like in 2000-2010 period where we had this bull market in bricks and hard assets. We thought we have arrived and we're going to conquer the world. And then 2010 to 2020, the money went back to US and tech. And typically this decade, if this COVID stimulus had not come, you would have already seen a bull market in emerging markets and metals. Remember, I used to speak about that India could be the bubble market of this decade because all the conditions were aligning. Even what we are speaking now aligns in favor of India, and we may yet well be the bubble market of the decade. Although you typically want to start with depressed assets which people ignore and then they take off. But it's playing into the hands of, say, a Brazil today is one of the cheapest markets in the world and could be a beneficiary of this as well.
So higher yields, you think, in the US?
Well, US can print its way out. And what that just means is your reserves are going to get smashed in real terms. And therefore, all the central banks for the last 2-3 years, it's not new, have been running helter-skelter to go and stock up on gold. And the gold number is still very low. Historically, pre the Bretton Woods breakup in the 70s, gold used to be like 60% of people's reserves. They're probably at 15.
Much lower.
So there's big headroom to go here. The younger crowd and the non-aligned crowd may say we want to go to digital currencies, Bitcoin and others. China has already made its digital currency. They've made their own version of SWIFT, which has been spoken about a lot. So it's a dismantling of the old architecture and plumbing of the world, like I said. There's something we were speaking about when we were in the conference together, which Sharad Sharma puts very elegantly, that if you don't own the standards and protocols, you will not be able to build the platforms on top of them. So all you'll be doing is then playing on the application and product layer and maybe the service layer, which is where India has been traditionally playing. China has understood the game and gone down to the depth, where they are setting the new protocols and standards, whether it's for EVs or whether it's for these payment mechanisms, for industry after industry. Like they control a lot of the critical industries of the future, the critical rare earths of the future. And therefore they've gone and built their own platforms. And kept the Americans out from their walled garden, which is why when US says we won't allow you to buy semiconductors, they can still come out with a DeepSeek.
Absolutely.
So I mean that game is still we're 10-15 years behind, but that's the only way we'll have to go.
Okay, let's talk about equities. Where does all of this leave equities in that sense?
So if whatever I'm saying plays out the way I think it does, it is again a gush of money coming towards emerging markets and hard assets. It's consistent with our markets then having a holding pattern for next at least few months while we figure out what are the new assumptions to plug into our spreadsheets and so on. But post that, there should be a big breakout in emerging markets. The CRB index also looks like it's about to take off. Gold, silver, uranium, you have to go into nuclear and stuff for powering all your data centers and additional power requirements. Europe is going to go into rebuild mode for its defense and its factories and so on, which is again hard assets. So all the old industrial companies which we, I remember I'm looking at some European companies and the names which pop up are like the old used to think of Alfa Laval in America, Ingersoll Rand, and those names look like they're ready to run.
When you say money comes, gush of money into EMs, that is China as well? Or you think it's
So, well, the Chinese government's propping up their own market, and they're very clear they want their market because they need a wealth effect after property got smashed. So the Chinese market is exhibiting great resilience. China performs actually, but what's happened is post the September stimulus which China gave, the global money started going to China. And India was expensive at that point, and that's really the big 30-40% correction we got over here. And most of the Trump correction, I think, is already done, and we are back to where we were. Because I think markets realizing that we will end up on a better side over here. But from a global perspective, if global money is not going to go into China, at least from America, question is which way do the Europeans swing now? Because they are in a bigger mess. They can't do without China, and they don't have the defense which America has. They don't yet have the currency in the world. So if China plays, its cards well with Europe, and India says we are Vishwa Mitra and we are friendly with America and with China. Chinese market is actually very cheap, and they actually are incredible companies and incredible technology leadership in the world over there. So I may not love them as a patriot, but as an investor, you can't deny that country's.
In a way, from what I'm getting from you, Manish, is that a lot of the things which we spoke about in, say,
Diwali time,
they all kind of are still there.
So
we spoke about Europe, you're still bullish. Well, a lot of European companies, because the valuations are very cheap and maybe they're starting to reindustrialize. China, you spoke about, still the same.
Hard assets and EM.
Hard assets and EM.
Because it became a joke, right, that EM as an asset class is going to die. We have Sridhar in our office who comes and speaks to you often. He says EM as an asset class is dead. When someone says that, my ears go up. I love it. When people say, like in the past, PSUs are dead, we love it, because that's when you get valuations. Because we are not, I don't count myself as some very smart tech investor who knows the future and what's coming in technology. So as value investors, we have to find things which are asymmetrical bets, I call them, where things are so beaten down and cheap that when they do turn, and things tend to revert to mean. It's just a question of what time horizon you have. And I like to invest on that basis, that things which are beaten down, neglected, they eventually come back and discover their value.
EM as an asset class. India, though, does not fit that bill, as you yourself
India is not
also
cheap enough. It is better than it was. The large caps are, maybe one level above where you would have a lot of comfort, because the cheapness of the index is really on financials and metals, PSUs. But the segment which everyone will want to love and buy are by no means cheap. And Sanjeev Prasad at Kotak, he keeps putting out, investment stocks are expensive, consumption stocks are expensive. They, poor chap's been saying the right things for a long time, but it does play out. Because in the long run, the market is a weighing scale. And until we get earning support, this market isn't taking off. And that will come.
And you had a very, very cautious view on mid caps and small caps and SMEs, etc. Still very expensive. To your
Look,
mind.
when you're a marginal supplier in a bull market, the excess goes to the marginal supplier, and then their rate of change is the fastest. When things are getting recorrected, you go back to what you call the leaderboard, and the leaders gain and the marginal guy dies. In a way, you think of India as the mid cap, small cap in the context of the global scenario. We may get the tailwind now of this new chessboard being drawn out, and those orders may come to India. But for those earnings to come, these guys will have to put up capacities, hire the people, build the product, get them quality tested, and then start shipping out. So it may be 2-3 years away. Like you take Indian textile stocks, the leaders are, I don't know, Wellspun and Indocount and stuff. They're probably like 10-12 times 1 year forward. And the market hasn't caught it yet, because we're still wondering what terms of trade will we get. Will the buyers squeeze everything out of us, every last penny, and we eventually only make a 15% return on capital, in which case I'm better off buying, the index, because the index can make you a 15%, kind of return anyway. So it's those kinds of things which I think the market will tussle with over the next few months. And then we'll see where we go from there.
Any sector, banking, financial services has always been something you like.
So banking is the leader of this this cycle, and the way things are aligning in the world, this sector is, I think, still going to be a very, very large wealth creator. I don't know if I spoke with you earlier. If you take the 2027 numbers, not 26, the numbers of all the banking sector stocks will exceed the erstwhile leadership from the IT sector stocks, with greater stability and greater terminal value. And therefore, does the multiple from one sector apply to the other? Because in some cases we had abandoned this price to book, right? When earlier we used to talk about HDFC or Kotak or Bajaj Finance, we talked in terms of PE multiple and not price to book multiple. Then we went through a phase where we are still talking about price to book multiples. I think the PE scenario will start coming back for a lot of these companies. And then we'll go forward and we'll discover SOTP, that they also have insurance, they also have AMCs and so on and so forth. So it plays out, it's a normal cycle. So just have patience. I mean, on balance, we are in good shape as a country. 6% band hai GDP ka. So you're not going to go to 8 suddenly, you're not going to collapse to 4. It's a holding pattern. Until we get this new stimulus coming in, that catalyst is required to kickstart. The government's played its part. You've got the fiscal stimulus.
Last time we spoke, you said you need this exact thing. I mean, you need a new source of wealth effect. And maybe precious metals, I don't know. I mean, is that...
Well, one sector takes off and then that animal spirit spreads. Today...
that is missing.
It's like, the average industrialist is like, should I go in this direction? Should I go in that direction? Will policy change? What will happen? Will I get the support? I think stars are aligning. We just have to be patient, I guess. We can't have a bull market every single day of the year. Sometimes it's good to just pause and reflect after a good meal. 4 years you had a good meal. just do a detox for a while and then take it from there.
So just to recap this for our viewers, you're saying a few months of holding pattern, a ranged market.
I'd hope so.
Yeah, right?
Yeah.
And then then maybe the market looks more constructive, basically.
Yeah,
right?
this market wants to go up.
Yeah.
We're not giving them enough reasons because that has to come from earnings. When you're doing a single-digit earning growth, you can't say at 20 PE we're like okay market. Some earnings come and then we're off to the races. And it'll still be very specific. I don't think the tidal move across sectors happen because in typical periods like this, you separate the men and boys as well.
Manish, we'll leave it there. Thank you very much for dropping by. Great conversation as always. And we will chat again soon.
Great. Thanks for having me.
Revisit some of the stuff. Thank you. Thanks very much. Well, that's it from me. Back to the studios.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insight.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer. And it's a terrific Tuesday morning as Donald Trump dials back on some of the reciprocal tariffs, at least on electronic goods. He sounds hopeful on autos. Global markets are cheering. Wall Street, as we've been pointing out, two back-to-back sessions of gains. In Asia this morning, you've got green on the screen for a Nikkei, Kospi, the Taiwanese markets. It's only the Hang Seng and the Chinese markets which are a bit subdued in trade. So those markets are flat. But look at the Indian markets over the last 2 hours since opening. Absolutely strong, 475 points up on the Nifty. The Nifty is now above 23,300. The Sensex is advanced nearly 1,500 points. Midcaps participating, solid advanced decline ratio, 10:1 in terms of an advanced decline ratio. So many sectors doing well. Banks are higher, auto is higher. Autos, of course, leading, but you've got realty, you've got defense, PSUs. All these sectors are like turbocharged.
Good morning, and absolutely nothing to complain about this. This Tuesday, it's a strong screen, broad end of the markets, the advanced decline ratio very, very strong. Let's have a look at some of the individual names that are doing very well. Like you mentioned, banks are leading the charge today. Within the banking pack, have a look at HDFC Bank. Lending rate cuts, followed by also deposit rate cuts across the banking pack. HDFC taking the lead over there, and that particular stock leading the entire sector higher. All of the banking stocks today doing very well. Names like Axis, Bandhan, IndusInd, in fact, high by almost 7% today. So that's a significant up move that you're seeing there. You mentioned auto and auto irons. There is softening as far as the stance towards tariffs are concerned. So names like Tata Motors, remember Tata Motors had actually paused shipments of JLR to the US market, so that's doing very well. Bharat Forge, Motherson, Sumi, as well as Sona Comstar, all of them who have exposure to the US market doing very well. And Realty Pack doing very well today. They are rate sensitive, remember, and along with that, some positive news in terms of macro tech developers. That also is aiding the up move. Macro tech amongst the top gainers within the Realty Pack. The pack itself is up close to 5% today. So the rate sensitives, especially in today's trading session, doing very well.
Okay, let's find out how you should trade this market then. Mitesh Thakkar is now with us for a quick technical check on the markets. Mitesh, we haven't had even a little bit of a dip for someone to enter into. It's been a gap up opening and we've held on to all those gains. So what does one do in today's trade?
That's correct. I think on the index, we've not seen any kind of weakness. Just a mild, 70-80 point from the day's open and high. But my belief is that I think, you can still fish for stocks which are showing some kind of reversal pattern that are giving you a good reward entry point. And so on the Nifty, before I go to stocks, on the Nifty, I think 23,350, 400 was one of our target area. I think that's in May. We got a high financially 368 or so. And the next target will be 23,600 and then 23,750 to about 800.
Okay, Mitesh, and your individual stock picks in today's trading session, anything you'd like to chase?
Yeah, I would, want to have a long call on Tata Consumer. Sorry, just a minute. Yeah, sorry, a long call on Tata Technologies. And that's where, I would recommend buying. And these are spot level because the futures are trading on discount. So Tata Tech is a buy with a stop at 639 for a target of 680 in spot. And the other stock which I like is OFSS, which I would recommend buying with the stock just below levels of 76.20 and a target of around 79.10 can be.
Okay, that's Oracle Financial Services, a stock that Mitesh likes, OFSS. Yeah, you wanted to say something?
I was just talking about how he's talking about the mid-cap IT name. So that's what he's liking today, a very sharp bounce back. But one particular space that we are looking at is the banking pack. Remember, HDFC Bank has reduced savings deposit rates by 25 basis points. Abhishek joins in with more details.
Well, in a declining interest rate scenario wherein, bankers are wary of the fact that they might lose out on net interest margin, HDFC Bank has gone ahead and, cut down on the saving deposit rates by 25 basis points. So first time they have cut saving deposit rates since June of 2020. So saving deposits below rupees 50 lakh will now get 2.75% versus the earlier 3% rate that they had. And above rupees 50 lakh, they'll get 3.25% from the earlier 3.5% that they had on these accounts. So, this is now one of the lowest rates that you are seeing in last few years on saving deposit rate. The lowest saving deposit rate right now in India is offered by SBI at about 2.7%. Now, analysts do say that incrementally the net interest margin accretion could be anywhere between 5 basis point to 8 basis point, given the fact that these rate cuts in saving deposits have taken place for HDFC Bank. Back to you.
Thank you very much for that. That's been a big force behind today's up move, providing that support. Let's talk about autos, because auto stocks like Samvardhan Motherson, Sona BLW are in focus. US President Donald Trump says he's considering a modification to the 25% tariff on auto imports. He wants to help the auto industry. Sudarshan is here with the details.
So while market is seeing an all-round gain, one sector that is the biggest outperform is the auto. All the stocks are higher, somewhere in the range of 4 to 9%, and two stocks especially that are seeing big gains are Samvardhana Motherson and Sona BLW, and it's on the back of softening of stance related to auto tariffs by Donald Trump. Over the weekend, he has announced that he is considering modifying 25% tariffs that were announced and that came into effect on April 3rd. And it was basically for the imports from Mexico and Canada, because he believes that US companies need more time to implement these tariffs. Now, why this is positive for both these companies, Sona BLW and Samvardhana Motherson? So basically, Mexico and Canada contribute in the range of 30 to 60% to US sold vehicles, and for GM and Toyota it's in the range of somewhere around 30 to 40%, and for Volkswagen its contribution increased to almost 60%. And Samvardhana Motherson is one of the biggest suppliers to these companies, and that's the reason it's positive. And for Samvardhana Motherson, 4% revenue contribution comes from Mexico, and for Sona BLW, Mexico contributes around 2 to 3% to its total revenue, and that's the reason it's positive. But apart from auto tariffs, one more positive for Samvardhana Motherson, it's related to electronic products. The news flows have been going on around the tariff exemption or tariffs coming in, and as per Nomura, India has exported electronic products, especially smartphones, worth $11 billion in 2024. And Nomura believes that Motherson, in partnership with BIL, is a supplier to displays to Apple. And because of that, it might impact positively to Motherson. Apart from Motherson, it can also be positively impact Dixon, because Dixon has manufactured 11.5 million units for Motorola in FY25, and Nomura believes that overall it has factored in 50 million for FY26 and 65 million units of smartphones by Dixon in FY27. So considering all the factors, you are seeing positive move in these names.
Thank you very much for that. Mitesh was talking about Midcap IT, particularly names like Cyient, KPIT Tech are having a good session. Remember, these are not the typical IT services companies. They're engineering R&D companies. And they've had a big free fall. In fact, you should pull up, Cyient, KPIT Tech, Tata, LXC, how much they've fallen from their 52-week highs, and they're all off 40 to 45%. Now, Ambit has a note, and they say that they like Cyient and KPIT Tech. And this is premised that because the stocks have corrected so much, the current market price or the valuation implies a certain growth rate, right, for the next 10 years. And that growth rate for both Cyient and KPIT Tech is lower than the historical growth rate, which basically means it's possible perhaps for the companies to achieve it, right? So now their implied revenue growth rate for the next 10 years, FY24 to FY34, for Cyient is just 2.9% after the correction, which is lower than the 4.6% growth that they've seen in the last couple of years. Similarly, for a KPIT Tech, the current market price or the valuation implies KPIT Tech will grow at 13.5% top line for the next 10 years. Again, lower than the historical growth rate, which gives you greater confidence that the companies will be able to achieve it. But when it comes to other companies, say for instance a Tata LXC or a Tata Tech, these two companies, the ask rate which is implied is higher than the historical growth rates. And for companies like Persistent and Coforge, given the valuations, even after the correction, the valuations imply that these companies will need to grow at 20% top line growth for the next so many years. Is that achievable? Well, remains to be seen. But Ambit has a buy call on Cyient and KPIT Tech, because after the current correction, these stocks, the ask rate appears to be far more palatable compared to the others.
Very interesting link there as far as Midcap IT is concerned. But one stock that I'm focusing on today is GMR Power. Remember, this particular company is from the GMR group. We generally talk about GMR Airports, but GMR Power too quietly has gone about, especially in the last year, going ahead and addressing significant leverage issues that the company had. Remember, at the end of the March quarter, the company informed the exchanges that as far as certain subsidiaries are concerned, they had reached a one-time settlement with lenders. Now, yesterday, there has been a further update from the company to the exchanges, where the company has gone ahead and divested stake in 3 non-operating as well as stressed assets, and the divestment has been done to a private equity firm, which was in most of the cases the existing partner in these 3 assets. So the total consideration for all of the 3 assets that the company will be receiving is a little over 650 crore. The first asset is GMR Bajoli Kohli hydropower plant, where the company actually operates a 180 megawatt hydroelectric power project. Close to 80% stake is what the company will be divesting. The other plant is GMR Vemagiri Power Generation. Again, 51% stake will be given to Synergy, and it's closed to 388 megawatt natural gas power plant. The third asset that the company is divesting is GMR Rajahmundry Energy. Again, a 768 megawatt natural gas based combined cycle power plant. What was the issue with the power plants, especially as far as natural gas power plants was concerned? The company did not have access to low-cost natural gas, on the back of which operating these particular power plants was leading to increased operational losses. So what is it that the company says? The company says post OTS and post this particular development, they will be able to delever the balance sheet by close to 4,400 crores. Along with that, the move will help spin off the non-operational gas plants as well as the stressed assets. And remember, Synergy Capital is the private equity fund that goes ahead and has eventual ownership of Synergy. A positive development for GMR Power, close to 10% higher today, Rima.
Okay, big moves in so many individual stocks. Let's talk about Devyani International now, Interglobe Aviation and Ajanta Pharma. Here, there are some brokerage notes which are coming through. Harmis is here with the details.
Some interesting upgrades and initiations as well. Devyani International has been upgraded by Kotak. They've upgraded it to a buy. Earlier rating was an add. The target has been raised to 190 from 175 that was earlier. And they like the stock. They're expecting FY26 to be a better year for Devyani International because of a pickup in same-store sales aided by a lower base, a better execution profile, and some improvement in underlying demand as well. And what they also say is that KFC's market opportunity, strong brand equity and under-penetration in India, the optionality of other brands, the RJ Corp's appetite for portfolio augmentation and their track record for creating shareholder value are some of the key factors what is driving their upgrade for Devyani International. The stock up 5% as we speak. And for Interglobe Aviation as well, Motilal Oswal has gone ahead and upgraded the stock to buy a 65.50 price target here, saying that benign crude prices, favorable domestic demand bode well for the airline, and they are also expecting a 28% and a 38% EBITDA and profit CAGR over FY25 to 27. And this flip that you are seeing in India's domestic aviation will continue to bode well for Indigo going forward. And lastly, Jefferies has initiated coverage on Ajanta Pharma and has a 28.50 price target, and with a not significant upside though, but they're saying that they're getting 70% of its revenues from the high entry barrier branded generics market of India, Asia and Africa, and they are here too expecting a 19% profit CAGR over the next 2 years. So positive notes coming in for a lot of for these three names, and the stocks doing well for themselves today as well.
Thank you so much, Harmaz, for joining in and talking us about all of the individual stocks as far as what brokerages are saying. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
On the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself. as India's longest-running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today you're focusing on gold, right?
Well, it's another week where we are looking at the gold price holding above $3,200 an ounce. The all-time has been at $3,250. So while we've come off those kind of highs, but we still are holding quite firm. Another week and a stronger week starting on for the gold prices. If you look at the last 1 week, we are up by nearly 5%. And in this year until now, it's 23% of gains that the gold prices are working with. Well, support continues as there's a lot of uncertainty even now with what way the US tariffs and the retaliatory tariffs are headed on. Importantly, the US has launched national security investigation when it comes to sectors like pharmaceuticals and semiconductor imports, and that is what has led to some more premium coming in for the prices. Apart from that, there also are various statements from the Fed officials suggesting that the US will perhaps need to cut rates sooner if the tariffs continue to remain where they are. So all the scenario is positive for gold. The latest one to now increase their forecast for the gold prices is Goldman Sachs. They say that $3,700 an ounce is what they are looking for gold prices now, and in an extreme kind of a situation, $4,500 an ounce by the end of this year is also a possibility. So I'm only talking higher numbers from here on because Bank of America, for one, is talking about $3,350, Deutsche Bank at around $3,200, and then $3,700 on the higher side as well. You have $3,300 and $4,500 of a range coming in from De Beer as well. And then we have that headline of a number coming in from Swiss Asia Capital talking about $8,000 an ounce for the gold prices by year 2028-29. So bullish cues continuing for gold and higher targets as well continue.
Thank you so much for joining in and explain to us what exactly is transpiring as far as the world of the yellow metal is concerned. It's been on a roll this year and target prices being taken higher by most of the brokerages. Well, let's look at the markets themselves. The advanced decline ratio was very strong at the start of this year. It's actually improved further on. What's aiding the kind of market rally? Have a look at some of the auto stocks. Tata Motors, Bharat Forge, Motherson Sumi. Now what's actually joined the pack is Ashok Leyland. All of these stocks doing very, very well in the session today. What's not doing so well are actually some of the OMCs. In fact, names like Hindustan Petro, despite lower oil prices and despite what's actually transpiring in the broader end of markets where there's so much strength, names like Hindustan Petro actually trading near the day's lowest points. Reports are indicating that there could be some negative news in store as far as the Allied Blenders is concerned, and Allied Blenders, that particular stock is now down almost 6.5%. We'll have to wait and watch by as to what exactly is the negative development there, but that's a particular stock now trading at the day's lowest point. Some of the other stocks in focus, remember, Havells opened the day lower. It saw a sharp intraday dip, but post that, that particular stock has recovered very sharply. Havells almost 1.5% higher. Remember, the company has gone ahead and made a 600 crore investment as far as the renewable energy subsidy is concerned. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime report is done next.
सिचुएशन बहुत ही टेंस है, बहुत ही खराब है। अभी भी केंद्रीय वाहिनी को बहुत दिनों तक यहाँ पे रखने से ही कुछ अच्छा हो सकता है, इससे अच्छा नहीं तो अभी परिस्थिति ऐसा नहीं है कि केंद्रीय वाहिनी को यहाँ से हटाया जाए। तो मैं स्टेट गवर्नमेंट को, माननीय मुख्यमंत्री जी को अनुरोध करूंगा कि आप इनिशिएटिव लीजिए, आप केंद्र से बोलिए कि आप केंद्रीय वाहिनी यहाँ पे सीआरपीएफ तैनाती हो, और सीआरपीएफ जब तक परिस्थिति स्वाभाविक ना हो तब तक पूरी ओज केंद्रीय वाहिनी यहाँ पे रहे।
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's very simple. It's inversely proportional. The higher the tariff, the faster they come.
Do you have a percentage in mind and a timeline?
I have a timeline, yeah, not too distant future. We're doing it because we want to make our own drugs.
Stocks climb, reacting to Trump's easing tariffs on imports of electronics, computers and chips after a market holiday. Realty industrials are the biggest gainers. FMCG lags.
Auto stocks rev up on expectations of a pause on tariffs for car parts and makers after US President Donald Trump says he's looking to help car makers by giving them time to move manufacturing to the US.
And days after RBI cuts repo rates by 25 basis points and signaled a shift to an accommodative stance, top banks HDFC Bank and Axis Bank have cut rates on savings deposit. The move props up the banking stocks.
The stock of macrotech developers perks up after brothers Abhishek and Abhinandan Lodha amicably settled their differences, with macrotech retaining exclusive use of Lodha and Lodha Group brands, while Abhinandan Lodha will have sole rights on the House of Abhinandan Lodha brand. We are counting down to the WPI data, but it is a very, very strong start to this truncated week. If for the bulls, you're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me today is Reema Tendulkar. Reema, good afternoon.
Hi, good afternoon. You know, at no point of time, the bulls have got a dip to enter in, right? We've had a gap up opening and the Nifty is held above 23,300. It's like an absolutely straight line that intraday will come up for you on your screen. 500 points up on the Nifty. The Sensex is up close to about 1,600 points. Very strong advanced decline ratio and many sectors contributing on the upside.
No, almost every sector contributing to the upside.
Except
FMCG. Yes, seeing some profit booking after the up moves that we've seen during the times of the market volatility. But otherwise, a lot of these stocks have done fairly well for themselves, be it the defense names, be it the other PSUs as well. Of course, we are counting down to earnings from Ireda as well. Later in the day, you can see Mazgaon Dock is up almost 9% in today's trading session. A lot of these defense names have done well today, in line with how the other PSU stocks have moved, and the broader market has moved as well. The broader markets have done fairly well for themselves as well. But the story of today has been the auto names and the auto ancillaries as well. The Midcap index is up 1,000 points as well. So good recovery there as well from lower levels. But the auto stocks are the ones that we were mentioning, right? Samvardhana, Motherson, Sona, BLW. Even Tata Motors is doing well for itself, among the top gainers on the Nifty. And that is after US President Donald Trump said that he's considering a modification to the 25% tariffs on auto imports. And Sudarshan is here with more details on that. Sudarshan.
The sector is the biggest outperformed today, and all the stocks are somewhere up in the range of 5 to 8%. But two stocks that have been outperforming the most are Samvardhana Motherson and Sona BLW. Both the stocks are up somewhere more than 6% each. And it's on the back of the announcement that have come over the weekend by US President Donald Trump. And
WPI numbers for the month of March are on your screens now. 2.05% is the number that has come in compared to 2.38% on a month-on-month basis. So the numbers are lower compared to the previous month. So another number that is trending on the downside when it comes to the wholesale price inflation. We'll be counting down to the CPI inflation number later this evening as well. So at least one positive factor coming in on the inflation front.
I think fuel prices were lower. You know, fuel prices had already started moderating, so that could be a positive. And even according to a few economists, vegetable prices could trend lower in March versus February. So that could explain why the WPI inflation number for the month of March is moderated to 2.05 versus 2.38% on a month-on-month basis. As he said, we are awaiting the CPI print. But from what the RBI had to say, I think the CPI inflation forecast for this year, at least for the first 3 quarters of the coming fiscal year, would be sub 4%, or at least. So anyway, I think inflation was expected to be fairly benign. But we have Madan Sabnavis, Chief Economist, Bank of Baroda, now joining us on the show. You know, the overall WPI inflation is moderated month on month. Your initial thoughts? What could be driving this?
No, I think it could be a combination of factors. I think one is that food prices have definitely come down. There's also been the base effect, which will be having a similar kind of moderating effect going ahead also. And I think more importantly, we have seen the crude oil price. I think that is something which holds a clue, because that's something which has been going in the negative region. And given the fact that based on the global dynamics which we're witnessing, there will be a tendency for crude oil price to remain well below $70 per barrel. I think this is something which gets reflected more in the WPI rather than the CPI. That's the second factor. And the third would be, of course, in terms of manufactured goods. I think even manufactured goods inflation would tend to be low, which I expect even for the month of March and going ahead. It will be on similar lines. The main reason is that we still need to see the demand side factors play out for these prices to move up, which presently we are not really expecting. So I think all the three segments would be contributing to a low WPI inflation number, not just for March, but also for the months going ahead.
Okay, manufactured products inflation at 3.07 is a marginal increase month on month, but the food inflation though 4.66 compared to 5.94% in the previous month. And Madan, good afternoon. Thank you for joining in. See, we are counting down to the CPI number as well, and the RBI in their policy statement too has trimmed down its CPI inflation forecasts for the full year as well. Now, with this kind of number on the WPI front, what are you expecting from the CPI later this evening?
See, we have a forecast of 3.6% for CPI inflation for the month of March. But I think going ahead, we will actually be expecting this number to moderate further. This is primarily an account of the base effect, because I think that we had very high numbers last year. So that's going to translate into lower numbers, because we haven't really seen food prices actually cooling down that much in the market. So if you're actually going to the shop to pick up your vegetables, fruits, or your pulses, the prices have remained more or less unchanged, maybe marginally gone down. But I think it's the base effect which has contributed to this moderation, which will continue for the next 3 to 6 months. So I think the important part will be as to how the monsoon pans out. And information which we got from SkyMet is they're expecting a normal monsoon. I'm quite sure IMD will have their forecast very soon, which should also be on similar lines. So I think there'll be less worries in terms of food prices. So to that extent, I think CPI inflation, which has a large proportion of the weight in for food items, would be under control. The only concern could, of course, be vegetable oils, which is an imported product. That was something which could be pushing the inflation numbers up. But on the whole, I think it will mean moderation. In
fact, today IMD will be releasing their long-range forecast for the current monsoon at 3 p.m. So all eyes will be on that. IMD's forecast will come at 3 p.m. today in the afternoon. But Madan, what's your expectation of how WPI and CPI will trend, say, in the month of April, based on the first half, the first fortnight that we've seen?
It looks like that WPI will moderate further. Again, the main reason is base effect, as well as the fact that crude oil prices have actually been lower in the month of April compared to March. So I think that's why we could be expecting WPI to move downwards. In terms of CPI, I think a similar kind of trend can be seen, though I think the only worrisome factor will be the gold component, because we have seen in the so-called core inflation component, gold has been one thing which has a significant weight in the CPI, and that's something which has been doing very well in the market, which means that core inflation pressure could be there. But on the whole, well, it will be lower than 4% for sure.
All right, Madan, thank you so much for sparing time and joining us today this afternoon on this coverage for the WPI number 2.05% for the month of March. Expect that to further trend down is what Madan Sabnavis of Bank of Baroda just said. Core inflation too at 1.5% compared to 1.3%, but the food articles inflation is significantly lower on a month-on-month basis. So we take a short break here on this on halftime report. On this note, the Nifty still almost 500 points higher, continuing to remain above that 23,300 mark. More on the markets with Sandeep Bansal of ASK Investment Managers on the other side to decode whether the market rally will sustain. Stay tuned.
हैं और उनको अरेस्ट कर लिया गया है और अब उनका लिए अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या
Welcome back. IT is rebounded gains. The biggest IT gainer today is Mastech as it reports numbers later this week. But you can also see up moves in Cyan, Tata Elxsi, Tata Tech, KPIT Tech. Remember, these are the auto ER&D. These are the ER&D companies, engineering, research and development. They cater to the automotive sector, but even others, like whether it's semiconductors for, semiconductors for Cyan or the aerospace railway. These stocks have been beaten down. Stocks are down 40 to 45% from their 52-week highs. So compared to the IT services companies, like your, say, Persistent, Coforge, ER&D companies have gotten hit harder. Today, Ambit has come out with a note, and their preference lies with Cyient and KPIT Tech. And the key reason is that after the recent correction, the current valuations of Cyient and KPIT, the current market price, factors in a revenue growth, a future revenue growth for the next, say, 8-10 years, which is lower than the historical growth rate, which basically gives you greater confidence that the company will be able to achieve it. So now, for instance, in the case of Cyient, the current market price implies the revenue of the company will grow by 2.9% CAGR from FY24 to FY34. This is lower than the historical growth rate of 4.5%. Similarly for KPIT Tech, which we know was a big outperformer, they're saying after the correction, the current market price implies the top line of the company will grow at a CAGR of 13.5% over the longer term, again lower than the historical growth rate. But this is not the case for some of the other companies like a Tata Tech or Tata Elxsi, where the street is still expecting the revenue, the projected revenue growth going by the current market price is much higher than what they've delivered. So what gives you the confidence? So therefore, Ambit has a sell call. And on Persistent and Coforge, they're saying that the market price implies that these companies will grow 20% from CAGR every year, 20% compounded. So, there is just no confidence that Ambit has that they will be able to achieve it, which is why they have a sell call on these companies, and they like a KPIT and a Cyient.
A lot of these Persistence and the Coforges have been ranked outperformers.
Yeah,
so
they've delivered on numbers, like a 30-35% revenue growth. The question that Ambit has is, can it continue, right? You are saying that these companies will continue to grow that for the next 10 years. Like that's not perpetuity, but for a very long time. So there are cycles in this.
As they say, it's hard to get to the top. It's equally harder to sustain being there. But we'll continue this conversation with Sandeep Bansal, the Deputy CIO at ASK Investment Manager. Sandeep, good afternoon. Thank you for joining in. Since we are on the subject of IT, we'll get to the markets in just a bit as well. But IT has been the focal point, right, of this entire conversation with the US fearing that it will slip into a recession, maybe in the second half of this year, maybe in 2026. Stocks have been beaten down, but despite being beaten down, they are still expensive. What do you do in a sector like this where there is a lot of fear compared to greed? Do you still take a bet here, or do you stay away from it and look for better opportunities?
We think that there are better opportunities available in the market than the IT sector because the uncertainty that is surrounding the sector is just too much. There are too many variables at play which will be difficult for us to figure out. And while the stocks might have corrected from their peak levels, they are still not attractive given the likely growth that is going to pan out. So our idea is more to focus on domestic oriented businesses, more to focus on manufacturing oriented businesses rather than have exposure to sectors like IT, which are more of a macro play on the entire US economy and discretionary spending, wherein the risks could be relatively higher.
Right. So what are these better opportunities, Sandeep, that you're spotting in comparison to IT? What's on your radar right now after this recovery that we have seen from the lower levels as well?
Yes, there has been, around a 5% kind of a recovery in the markets. Maybe the broader market, specific stocks have rebounded more sharply. But we believe that still there are opportunities which is available, on discretionary consumption. We are likely to see the boost from the tax cuts flow through the next year. There is anyways a uptick in the rural economy. urban consumption is also likely to bottom out in a quarter or so. Then there is going to be the pay commission effects that is going to come in from next calendar year onwards, perhaps. So discretionary consumption is something which we are bullish on. It's a domestic granular story. In addition to that, domestic manufacturing infrastructure, these are businesses that we continue to like. We believe that this entire tariff episode that is playing out ultimately is going to lead to an advantage India kind of a scenario. Obviously, there would be short-term hiccups and pains because supply chains take a lot of time to reorient themselves, and there is potentially a global growth slowdown as well. But once all of this settles down, Indian manufacturing should end up as a big beneficiary. Infrastructure, we believe, especially on the power side, government thrust and capex continues, and there are various ways to play the entire power story. In addition to that, healthcare as a space is something which we like. While there is an overhang in terms of what could be the ultimate tariff announcements on the entire pharma space, given its essential nature, given the fact that Indian companies contribute around 40 to 50% of the generics market in the US, we believe that we have a solid footing, and the impact of tariffs, if at all, might not be that high. In addition to that, there are domestic-oriented pharma plays also available, which we think will continue to do well.
Okay. Hi, this is Rima here. Talking about the India manufacturing opportunity. Now, there are companies like a Dixon, there is a Syrma SGS. Now, Dixon has, in a way, a little bit stolen a lead over Syrma SGS purely in terms of a stock price. And then there is that added tailwind about electronics because Dixon supplies to a Motorola. So it's got a bigger play in the smartphone market, which could shift to India as it's disadvantaged China. So can you tell us, because in your top holdings, you've got a Syrma SGS. So a lot of our viewers ask us, why not Dixon, right? Why is Syrma SGS? So give us your thoughts on this.
So Rima would not be able to talk stock specifics, but we have quite a few names across our different portfolios in the broader EMS space. There are different drivers for each of these stocks. But if we look at the broader sectoral story, the Indian EMS space only caters to a fraction of the domestic consumption requirement, and the export market is a multiple of that. So even if we are able to just fulfill the domestic requirements of the next few years, there is a huge headroom for growth that is available. In addition to that, we will see this global diversification of supply chains, wherein perhaps there is going to be a higher levy of tariffs on China, which is going to incentivize the move towards India. If we look at these different plays that are available in the EMS space, each of them has, while the businesses are quite similar in one sense, in another sense, there are different drivers for each of them because they have their own niche areas which they cater to. Some of them could be more diversified. In few cases, valuations could be more attractive. In few cases, the return on capital employed or capital efficiency is very good. And in a few of the other cases, there are newer growth drivers in terms of adjacencies to their businesses or backward integration that they are doing. So we actually like the entire space.
Sandeep, because of all of this tariff-related drama that we've been unfolding over the last couple of weeks, there are a lot of sectors that are hanging in the balance right now, be it auto, be it pharma, with Donald Trump saying one thing one day, the other thing the other day. Now he's going to consider tariffs. He's already warned of pharma tariffs coming in. So let's ask pharma here. What do you do in pharma? Because most of these companies, say for the likes of Gland or Aurobindo, they have significant amount of revenue coming in from the US market. How does this significant quote-unquote tariff imposition impact a sector like pharma, and how do you position yourself here?
Yeah, so, a few things are relatively certain in this environment. Maybe for the market for now, the peak of fear is behind because of the various reprieves that have been gotten around in the tariff drama over the last few days, whether it be in terms of imposition of timelines or certain sector-specific carve-outs. Second thing is that markets and tariffs are going to remain uncertain for a length of time, because there's been a 90 days window. The US perhaps has to negotiate 75 to 90 trade deals with different countries during this period of time, which seems quite unlikely. So this tariff uncertainty and overhang in the market is going to continue for the next few months. Perhaps the market will learn to make peace with it and move on. Thirdly, it does seem that in the overall scenario, it is still going to be beneficial for India. As far as the pharma sector is concerned, what we like are plays that have a mix of domestic exposure primarily, but also domestic plus overseas exposures. In the US market exposure, what we believe is, given the essential nature of pharma, given the fact that Indian producers are 40 to 50% of US generics market, given the cost advantage, given the scale efficiencies that India can offer as a country, and given the timelines associated with reorientation of supply chains that might be required, we believe that the ultimate impact on India might not be as severe as the market might be fearing at the current point in time.
All right, Sandeep, thank you so much for sparing time and joining us today with your views on the various sectors that are currently in the news. Time to take a short break, but just before we do that, here's some good news for our viewers. India's business news leader, now just a click away, and that is CNBC-TV18's all-new app, where you get instant access to breaking news, in-depth articles, and financial world updates, all of it at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen. Take a short break, back on the other side.
एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Welcome back. Markets holding on strong, 500 points up. Just take a quick look at some of the big mid-caps which are moving around. Fino Payments Bank, 17% higher. Inox Green, Upper Circuit, 16% up. SH Kelkar, Data Patterns, Goldium, KEC International, and Mazgaon Dock Ships, where the street is awaiting that dividend. These are some of the big movers on the mid-cap end. Sachidanand Utekar is now with us for a quick technical check on the market. Sachidanand, at these levels, is there a buying opportunity? Because the dip hasn't come through, and your stock calls.
Good afternoon, Nima. Good afternoon, almost. I think clearly the market momentum has been very strong and very significant. Even if you look at the Nifty Bank, especially, it has broken about that 25th March high of 52,000, and it is sustaining well. So if you look at the contribution slate, clearly, banks are leading from the front. We're expecting this rally in Nifty Bank to continue towards 54,000 eventually. If you look at the OI data as well, there's a very convincing base at around 52,000 which has been built in. And we may see a strong elevated rally towards 52,650 during this particular week itself, followed by a move towards 53,400. When we look at Nifty as well, almost 70% of the fall has already been covered. And the way, writers are confident at that base of around 23,000, I think that particular base will also shift towards 23,300 eventually. And even here, we are expecting this particular rally to continue towards 24,000. So it's a long, call on both the indices. If you look at Nifty Bank, the conviction is much more higher. One can place a stop loss somewhere close to around 52,260 on a closing basis. And long positions can still be added for a target of around 52,650, which could be achieved during this particular week itself. When we look at the stock calls, Kotak Mahindra Bank is, has displayed a fresh breakout from its bullish flag formation. The pattern is indicating a price target towards 2250. Stop loss can be placed at around 2090, and fresh long positions can be added here. The other stock on our radar has been Bajaj Finserv, which we have also recommended to our clients. If you look at the overall weekly structure, there has been a very strong relative outperformance by this counter. On the weekly scale, we have a kind of a cup and handle formation, indicating a price target close to around 2090. So the reward to risk opportunity is still better. One can keep a stop loss at 1940 on a closing basis and still continue building long positions for a trading target of around 2040, followed by a positional target at around 2090.
All right, Sachidanand, thank you so much for sparing time and joining us with your views on the index and on specific stocks as well. And a small programming note for our viewers, CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can scan the QR code and submit your entries for the SME Champion Awards Season 2. Take a short break. Back on the other side.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most...
Welcome back. 515 points higher now on the index. So the bulls are in top form as we speak. But it's time for our special offering, Quarter Se Quarter Tak, where for the first time we bring you key earnings expectations from the insurance sector. And who better than Yash to summarize what's expected from this sector in the fourth quarter. Yash.
Well, Hormaz, as you rightly said, 13 companies listed now from the insurance sector, 2 as far as a part of Nifty is concerned, and for the first time that we're covering the insurance sector as a part of Quarter Se Quarter Tak. As far as the fourth quarter is concerned, not expected to be one of the best quarters for the life insurance sector, but some players certainly expected to throw positive surprises here and there. For the industry, private players are expected to grow their annualized premium equivalent or APE in the range of 13 to 15%. That's a wide bracket to consider, but as I said, positive surprises expected from 2 companies, HDFC Life and SBI Life Insurance on the APE side, whereas ICICI Prudential Life Insurance, which reports its earnings today, could throw a negative surprise. Let's now talk about individual companies. The street is expecting a 15% APE growth, 16% VNB growth and a 26 basis points margin expansion for HDFC Life. A balanced product mix is likely to aid strong growth when it comes to value of new business and margins for HDFC Life. From ICICI Prudential Life Insurance, APE is expected to grow by about 3%, VNB by about 7%, and margins could see an expansion of 30 basis points coming in at about 21.8%. For Axis Max Life Insurance, total APE, that is expected to see a double-digit growth of about 10%, VNB at 2%, but the sour point for Axis Max Life Insurance is the margin decline. That could happen by as much as 216 basis points, coming in at about 21.6%. For SBI Life Insurance, total APE is expected to grow by 5%, VNB by 3%, and margins contraction by 43 basis points. Despite that contraction, SBI Life is expected to have the highest VNB margin in the industry at 27.87%. Though APE growth could be muted for SBI Life because of the transition away from bancassurance as a channel and slow growth as far as the ULIP portfolio is concerned. Finally, for LIC, very weak numbers expected. APE expected to decline by 17%, VNB expected to decline by 9%, but the focus on the non-par segment can bring margins higher as much as by 170 basis points to 18.9%. On the valuation front, FY26 basis, HDFC Life trades at 2.3 times price to embedded value, ICICI Prudential at 1.5 times, SBI Life at 1.9 times, and finally, LIC, the cheapest amongst its peers, at 0.6 times FY26 price to embedded value.
Thank you very much for that. We will slip into a very short break. We'll come back with more on the markets and individual stocks. Stay tuned.
Text of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
सिचुएशन बहुत ही टेंस है, बहुत ही खराब है। अभी भी केंद्रीय वाहिनी को बहुत दिनों तक यहाँ पे रखने से ही कुछ अच्छा हो सकता है, इससे अच्छा नहीं तो अभी परिस्थिति ऐसा नहीं है कि केंद्रीय वाहिनी को यहाँ से हटाया जाए। तो मैं स्टेट गवर्नमेंट को माननीय मुख्यमंत्री जी को अनुरोध करूंगा कि आप इनिशिएटिव लीजिए, आप केंद्र से बोलिए कि आप केंद्रीय वाहिनी यहाँ पे सीआरपीएफ तैनाती हो और सीआरपीएफ जब तक परिस्थिति स्वाभाविक ना हो तब तक पूरी ओज केंद्रीय वाहिनी यहाँ पे रहे।
Welcome back. It's time now for an exclusive conversation as Trump's tariffs continue to disrupt global trade. How is the global economy adopting to and adapting to Trump's new world tariff order, and how is India positioned to navigate the tariff threats? To discuss all this and more on global trade, Shireen Bhan caught up with Bob Sternfeld, Global Managing Partner, McKenzie, and Rajat Dhawan, Managing Partner, India, McKenzie. Listen in to excerpts from that conversation.
When you talk to clients today, what are they telling you? Is there a sense of panic? Is there a sense of fear? Is there a chilling effect that nobody wants to do anything at this point in time?
Well, it's great to see you again, Shireen, and thanks for having me on. And yeah, I would start with, it's clearly the context. There's a lot going on in the world today, but if you take the lens of at least what I'm hearing from CEOs around the world, which I think was the departure point of your question, I think it's very different than a year ago. Okay. So if we backed up a year ago, most were saying, and you were clear on this, that hey, 2024 is the year of elections, and there were more elections around the world than I think in any year in recorded history, and so as a result, many CEOs were saying, let me wait and see how things play out. Let's see what happens with this particular election, and so if I can defer some decisions, I will, and I'll play for time. Well, you fast forward to the beginning of 2025, and folks are saying the elections have happened.
Yeah.
The world's no less volatile, and might even be more volatile than it was a year ago. But I can't afford to wait. I actually have to make decisions, and I find that's one big departure point from even 12 months ago, that despite this volatility, there's a real desire to still need to move forward.
You know, when you talk about moving forward, and as I pointed out, CEOs are used to dealing with uncertainty and ambiguity, but in a situation like this, where on an hourly or even on a minute-by-minute basis, you don't know whether a tariff is going to stick or not stick, whether there's going to be a further hike or there's going to be a rollback, as we've seen in the last 2 weeks. How do you make decisions in this environment? And are people now essentially saying, let the dust settle before we make big calls, whether it's capex or expansion? I mean, that's the kind of feedback that I'm trying to understand how that's playing out.
I think you're really getting to the root of the issue here. And how do you make decisions given so many different impulses, and the fact that these inbound new bits of data can happen multiple times a day? I think all of us look at our phones many times a day to see what's the what's the latest, particularly coming from my country. But you know, what I hear from CEOs underneath this are a few things that I think are useful in these times. And on the one hand, making long-term decisions on things that may not have long-term assurance is not a recipe for success. And so many CEOs are coming back to a couple principles that at least I hear. One is the notion of resilience. How resilient is my company to future shocks going forward, because these may not be the last. And I'm hearing more and more, I may need just to plan for a world that is fundamentally volatile as opposed to hoping for a return to some kind of normality. And so how resilient is my company? And the resilience notion is not just defensive, but how do I have enough capital, enough talent to make a few bold bets while I protect myself from shocks? So I hear resilience as one. The second thing is this notion of timeframes. Will the decisions that I'm making be durable over the time frame of that investment decision? So if it's moving a supply chain, if it's developing a natural resource, if it's making an R&D decision, these are often decade-plus decisions with decade-plus payback cycles. And so what I often find is, how do I marry the return profile with the volatility profile to say, is this something that is robust no matter what? So take a practical example on this. Many are asking around the world, how much of my supply chain should I have in the US, right, given tariffs? Well, if you back up, we had done some work in the pre-tariff era that said supply chains aren't resilient enough, that COVID and the Russia invasion of Ukraine showed that we actually had fragile supply chains. And there was a logic for moving part of your supply chain closer to the source of demand. The US is the largest source of demand, irrespective of tariffs. And so several CEOs are coming back to that foundational logic to say, would I make this decision even without tariffs? What portion of this is robust long-term, based either on resilience logic, long-term demand logic? That's a practical example of this time frame piece. And maybe the third thing I'm hearing, if it's resilience, time frame synchronized with the investment decisions, the third is this notion of where are no regret moves just to speed up? And in particular, one of the topics that's around that is the implementation of new technologies to change my business. No matter what happens in the world, I am going to have to implement technology faster to change my business. That's a no regret move. And so I'm often asked the question, Bob, what are the no regret moves that I can be implementing irrespective of these external stimuli?
The role that you believe India is likely to play, when we look at what happened in between 2017 and 2024, and this is the data that McKenzie has put together, the beneficiary of the supply chain diversification out of China was to the ASEAN region and more to countries like Vietnam. So India has seen an incremental uptick, but perhaps not to the potential that it would like to see. How do you believe that's likely to change?
To the future growth potential for India, and you start with manufacturing, India is nowhere near its full potential around this. And you highlighted, I think, a success story. I think you have to hand it to Vietnam. in how quickly they moved. But you know, on a relative basis, Vietnam's small. And Vietnam now is facing all of the secondary issues, labor shortages, supply chain issues, overconcentration, etc., that India won't face for a while. And I think this is really the moment to now move from a catalytic change that has started in India about this notion of a strong manufacturing base to now kinking the curve and really starting to drive acceleration at scale. And so I am very excited, and I'm excited because you root this logic not in tariffs, right? You root this logic in the fundamental notion of resilient supply chains. And therefore, from an investment decision, whether you're an Indian company or an MNC, looking at Indian manufacturing and Indian supply chain, you can get excited about making that long-term investment.
And you believe it makes business sense, irrespective of whether the tariff differential varies and India stands to benefit at this point in time or not?
Could be, just building on that, I think there could be granularity to that approach as well, right? And granularity at two levels. I think firstly, where are the end markets? I mean, if you are really exporting, manufacturing in India for the world, we cannot be super competitive in everywhere, right? I mean, you have to pick your. It's like going and winning Olympic gold. You pick your categories, as opposed to saying in all the 120 sporting categories, I'll win a gold. You say, here are my 10 or 12. I think that analogy plays out even in manufacturing. We actually have identified 10 to 12 value chains. In fact, further segmented into saying we are already competitive globally. Let foreign capital come in here. Let it create jobs. Let it create investment, and let's scale. Pharma formulations is one of those examples. Auto components, specialty chemicals. I would call them as the scale industry. Just build scale from 20-odd billion of exports towards 1,800 billion.
Interesting conversation, and you can catch this full conversation today on Global Dialogue, 6 p.m.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's very simple. It's inversely proportional. The higher the tariff, the faster they come.
Do you have a percentage in mind and a timeline?
I have a timeline, yeah, not too distant future. We're doing it because we want to make our own drugs.
Welcome back. Joining us on the show now is Sumit Gupta. He's CEO at Waseda Commodities. Sumit, thank you so much for joining us. And I want to start, first of all, with wheat itself, because various statements in Parliament as well, where the Rabi harvest is on. And we do understand that 38% of wheat harvest already is done. What is your sense on, one, how would you look at the numbers? Do you also think that the target that has been set out by the government in sense of procurement would be met this time around?
Hi, Manisha ji, good afternoon. I think wheat is the most critical commodity when it comes to food security in India. And from that point of view, Government of India making statement in Parliament shows not only the importance of commodity, but also how central it is for the food planning of the country. And you're right, approximately if out of 38% of the total harvest that we are talking about, largely 70 to 75% of the harvest in central and western India is done. We have just started harvesting in North India, especially Haryana, Punjab, and UP, but rains last week has delayed it by another 1 week. So you might see that harvest pace slowing down in this week and picking up again in the coming week. In terms of procurement, government has procured around 3 million tons as of now, largely in MP. And I believe government will be able to procure somewhere around 24 to 26 million tons of wheat. Because the pace of arrival in MP is extremely good. And once this time it will not slow down, it will go away. So we'll do around 6 million tons in MP plus Rajasthan and around 20 million tons in Haryana plus Punjab plus UP.
Sumit, also, we've seen a lot of uncertainties in the last 2 years when it comes to wheat. We've seen some policy actions as well. This year, would you say, is going to be more sane than what we've seen in the last 2 years?
My answer is going to disappoint most of the people because my answer will be no, because it is not a question of our supply going up. It is a question of our demand revolution in this country, which Government of India should be proud of, because it shows that the benefit of the economic revolution which this country is witnessing is percolating to every strata of the society. They have more money to spend, and as they have more money to spend, they are spending on food first. And wheat, from that point of view, Government of India gave around 5 kg of wheat to 800 million people, wheat plus rice to 800 million people for free across the country, which takes care of the food security largely. But the ratio of wheat and rice keeps on changing depending on the stocks that Government of India has. And this year also, I don't believe wheat stock is going to be comfortable because if Government of India procures more, they leave less in the open market.
Sure. Sumit, so when you say that the wheat demand or the consumption in the country has been growing, what number are you putting it as wheat consumption for the country, and what percentage growth number are you seeing year on year?
Very interesting question, because in India, whenever we talk about numbers, we only talk about supply number. Even Government of India, whenever they publish supply numbers. And this year, Government of India supply number is around 116 million tons. Last year, it was 112 million tons. And year before that, if I'm not wrong, was around 108 million tons. But largely, is it, but we are not building stock. That means whichever number you go with, it means our supply is equal to demand. As privates, we take India's supply number at around 100 million tons and demand number at around 96, 97 million tons, okay? Which means whatever we are producing, which we are consuming. And it's a change in production that matters, and we don't foresee that there is an increase in production this year over last year. To your question number 2, what is the change in consumption level we are witnessing? If you look at the delta of income and urbanization in India and population, our population is growing at around 1.6%, income level and urbanization is another 0.4%. So our net demand in India is going up between 1.8 to 2% per annum, which is around 2 million tons per annum on wheat alone.
The other question really is about the weather, and while we've seen those heat waves and those hailstorms even as the harvest is on, would you say that it has impacted the harvest or the cut crop in some sense?
I will say wheat is a fairly resilient crop, and number one, it has delayed harvest for sure, okay? Because Baisakhi, as we know, is the harvest festival in India, and on 14th, and rains and hailstorm happened around 11th and 12th in North India, which has delayed our harvest by almost a week. So I will say now the full pressure of harvest will be around 17th and 18th. Has it has done any harm on the quantity? Answer, I don't foresee in a big way. On quality, few pockets of North India may have luster loss or potia problem, but it will be largely limited. So there should not be any big concern or flag because of that.
All right. So whether or not a major concern right now, wheat has been resilient, and the numbers that you've shared with us, Sumit, do tell us that the consumption really seems to be increasing, production not as much, while this year, of course, the final numbers that we see is something that we'll keep an eye on. Thank you so much for joining in. Well, that's the view coming in for the agriculture space. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.
अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Stocks climb, reacting to Trump's easing tariffs on imports of electronics, computers and chips after a market holiday. Realty and industrials are the biggest gainers, while FMCG lags. Auto stocks rev up on expectation of a pause on tariffs for cars and part makers after US President Donald Trump says that he is looking to help car makers by giving them time to move manufacturing to the United States. Days after the RBI cut repo rate by 25 basis points and signaled a shift to an accommodative stance, top banks HDFC Bank and Axis Bank have cut rates on saving deposits. The move props up bank stocks. The stock of macrotech developers perks up after brothers Abhishek and Abhinandan Lodha amicably settle the differences with macrotech retaining the exclusive use of Lodha as well as Lodha Group brand, while Abhinandan Lodha will have the sole rights on the House of Abhinandan Lodha brand. Inflation continues to show signs of easing, with the WPI for the month of March falling to 2.05% from nearly 2.4% in February. Food price inflation continues to decline, while a minor rise was seen in fuel and power inflation. CPI for the month of March will be released post-market hours today. Hello, good afternoon. You've tuned into Business Lunch, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much for tuning in as always. Now, Friday did see a rebound, and today seems to be the day that we see this continue as well. And green is continuing on the screen, opened up on almost 2% uptick, managing to hold on to that gain as of now as well. Nifty 2.3% gain as of now is what we're seeing, 23,300 levels in the get-go, up 500 points in today's trading session. Let's look at the Nifty Bank as well, because that is managing to hold on to good gains as well. So Nifty Bank holding on to gains of almost 2.5%. Mid and small cap continuing to perform in line with the benchmark indices as well, both managing to hold on to strong gains in today's trading session, both up more than 2%. Let's also see the top sectoral gainer today, Realty, like we were talking about that. So Realty is the top sectoral gainer. As of now, all sectors are trading in the green. Even the Nifty FMCG, when you look at it, very, very mild gains. But yes, that's also managing to hold on to some bit of a gain in today's trading session. Banks, that's doing well. So HDFC Bank, ICICI Bank among the top gainers. L&T as well as Reliance is the top contributors for the Nifty 50. On the flip side, we have ITC, HUL and Nestle, which is a bit of a drag. And that is why those FMCG names are, a bit subdued on today's trading session. And that's why the Nifty FMCG as a whole also is seeing a bit of a mutedness. It's just 0.04% gain recovered from the day's lowest point as of now. But we'll keep an eye out on where that's headed. But yes, that's how the market setup is looking like as of now, holding on to that green. But important updates coming in the tariff front, right? US President Donald Trump's reciprocal tariff continues to waver. Now let's break down the latest in terms of the surprise guidance issued by the United States Custom and Border Protection on Friday, and said that smartphones, computers are among other tech products that had been exempted from reciprocal tariffs. The guidance included exclusion of other electronic devices as well as components, including semiconductors, solar cells, flash drives, as well as memory cards. The White House said this in a statement, and that the exemptions were made because Trump wants to ensure that companies have time to move production to the United States. Day later, Trump said that and clarified that nobody was off the hook yet, and that there was no tariff rollback. Speaking to reporters on board of the Air Force One, Trump said that tariffs on imported semiconductor chips would be levied soon. Meanwhile, the president reiterated his stance to impose tariffs on pharma soon, but however suggested that he might temporarily exempt some auto manufacturers from tariffs to give car makers time to adjust to their supply chains. Listen in.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, is very simple. It's inversely proportional. The higher the tariff, the faster they come. And yeah, we're going to be doing that. That's going to be like we have on cars. We have, as you know, a 25% tariff on cars. We have a 25% tariff on steel and aluminum. And that's what that category fits right now. I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places. And they need a little bit of time because they're going to make them here. But they need a little bit of time. So I'm talking about things like that.
Okay, now as this Trump tariff saga is continuing, today we have auto stocks that are in focus like Samvardhana Motherson, Sona BLW. Why? Because US President Donald Trump says that he is considering a modification to the 25% tariff on auto imports. Sudarshan is here to give us more details on this one. Sudarshan?
As you have mentioned, US President Donald Trump has been making statements related to tariffs, and the latest one that he has made is related to the auto sector. Over the weekend, he has said that he is looking at the modification of the tariffs that were announced related to auto sector, 25% tariffs, and especially for the imports that are being done from Mexico and Canada. He believes that US companies need a bit more time related to this tariff, and that's the reason he has taken this stand. Now, why it's positive for Samvardhana Motherson and Sona BLW? So for all the US companies, imports from Mexico and Canada form nearly 30 to 60% of their total sales that are done in the US. And for companies like General Motors and Toyota, that is in the range of 30 to 40%, while for company like Volkswagen, it goes to up to 60%. Now, for Samvardhana Motherson, it's one of the biggest suppliers to these companies. You name it, General Motors, Toyota, or Volkswagen, and that's the reason it's positive. And as far as Mexico is concerned, it contributes almost 4% to Samvardhana Motherson's total revenue. For Sona BLW, Mexico forms nearly 2 to 3% to its total revenue, and that's the reason you are seeing a big move in these names. And apart from Sona BLW and Motherson, you are seeing a big move in other auto stocks like Tata Motors and Bharat Forge as well, because now the question is, will the US President Donald Trump easing the stance only on the imports from Mexico and Canada, or will it extend to other imports from other countries as well? And just factoring this thing, you are seeing a big move, and Tata Motors is one of the top Nifty gainers, up around 5%, and same move can be seen in other companies as well.
Okay, Sudarshan, thank you so much for that, keeping an eye out on these stocks in today's trading session specifically. But let's move on and let's get you an exclusive. Now, sources say that special investigation team set up by the Andhra Pradesh government has ordered the freezing of bank accounts of allied blenders and distillers in connection with the Andhra Pradesh liquor scam. Shilpa is here to give us more details on this one. Shilpa.
Well, you're absolutely right there. You know, we have accessed a letter that the special investigation team set up by the Andhra Pradesh government has sent to State Bank of India dated 10th of April, where it has ordered the freezing of certain accounts of allied blenders. And this is in regard with the ongoing investigation that is happening with regards to a liquor scam in the state. Now, the letter accessed by CNBC says that, you know, there were some suspicious transactions that they have noticed in these accounts, and so have asked SBI to freeze those accounts of ABD. Now, let me give you a little bit of a background. Now, this is regarding a liquor scam that is being investigated in the state. Now, the Andhra Pradesh government, led by the Telugu Desam party, had constituted the SIT on 6th of November to probe an alleged 4,000 crore scam. That is the amount that is being pegged as of now. And they're investigating to see if liquor companies had paid kickbacks to the earlier government. Now, this is, you know, the scam has allegedly happened during the previous regime, which is the YSRCP government, to see if the YSRCP government had received any kickbacks, you know, in return for orders and sales in Andhra Pradesh in the state. And, you know, it is also investigating allegations that, you know, did the Andhra government then shut out all the national brands and only allowed a sale of certain specific brands, especially some local brands only allegedly were allowed, like Governor's Choice, President Metal, Seventh Heaven. These were some local brands, and certain only national brands, which the allegation here is that it was ABD. But it is important to note that currently these are just allegations. The SIT probe is ongoing, though it is near completion, and a charge sheet is expected to be filed in 4 to 6 weeks. Now, we reached out to ABD to comment on the same, and they have said that they have not received any letter or intimation yet from the bank or from any other authority. So, you know, so far the order has been sent to SBI, but that's what the company is saying, that they have not received any intimation. We'll keep you updated on any further updates on this case. Back to you.
Okay, Shilpa, thank you so much for that. As of now, Allied Blenders is down almost 7.8% in this trading session. But let's move on. And the WPI inflation data that's just come in for the month of March and was released earlier today, where the wholesale inflation is easing to 2.05% in March from nearly around 2.4% that we saw in the month of February. Food price inflation that continues to decline, while a minor rise was seen in fuel as well as power inflation. Remember, the CPI inflation for the month of March will also be released post market hours today, so we'll be watching out for that important data point as well. But on that note, we're going to slip into a very short break, viewers. Up next, we'll get you the views on US economy and the impact of Trump's tariff agenda could have on the growth rates across the globe and geopolitics. How is that shaping up?
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Welcome back to Business Lunch on CNBC-TV18. Now let's move on. BlackRock CEO Larry Fink told CNBC earlier that US is very close to a recession and maybe in one now. Listen in.
I think we're very close, if not in a recession now. What may be...
You don't need that.
Good. What may be happening is a lot of people are buying in advance of the elevated increases, like lines around Apple stores buying iPhones and all that stuff. But I believe all the uncertainty is really making everyone pause. And everyone's wait and see. And so I think you're going to see this across the board. We just say slow down until we have more certainty. Yeah. And, you know, we now have a 90-day pause on the reciprocal tariff. That means longer, more elevated uncertainty. Another economic force, Jim, post-World War II was consumerism. So we built the whole foundation of economic policy around consumerism, providing Americans with the cheapest products. Right. And so that was the foundation. Now, did that come at a cost that some of our communities were decimated, where they lost jobs? Absolutely. So maybe we went too far on the whole concept of consumerism. But let's be clear, the major economic foundation was based on consumerism. And so we wanted our companies to go around the world to find the best places to provide the highest quality at the cheapest prices. By now changing this equilibrium, it's going to be harder to consume.
Now, billionaire Ray Dalio, in a conversation with NBC, said that he's worried about something worse than a recession. He claimed that the world may be moving towards an order that may cause great conflict. Listen to what he had to say.
I think we'll see. So far, very disruptive. So far, very disruptive, right? And so we don't know what the numbers are. But that could be part of a process, right? It depends where we are at the end of the 90 days. because what was put there is like throwing rocks into the production system. And those impacts would be enormous in terms of the efficiency of the whole world, great cost.
I want to ask you about something that's on a lot of people's minds, your predictions for the future. And I want to start with the R word. I know you think this is just a piece of it. Of course, I'm talking about a recession. Do you think it is likely that the United States will dip into a recession because of President Trump's tariffs?
I think that right now we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging the existing power, if you take those factors and look at the factors, those changes in the orders, the systems, are very, very disruptive.
Worse than recession. You're saying this is reminiscent of the 1930s. We should tell our viewers you correctly predicted the 2008 financial crisis. What is your prediction for where the country is headed right now?
Right now, we're at a juncture. Let's take the budget. If the budget deficit can be reduced to 3% of GDP, it will be about 7% if things are not changed. If it could be reduced to about 3% of GDP, and these trade deficits and so on are managed in the right way, this could all be managed very well. I believe that members of Congress should take the pledge, what I call the 3% pledge, that in one way or another, that they will get that budget deficit down to that number. If they don't, we're going to have a supply-demand problem for debt at the same time as we have these other problems. And the results of that will be worse than a normal recession.
And let's move on to some more international updates. In the United States and Iran completed the first round of indirect talks over a potential nuclear deal over the weekend. The talks held in Oman were constructive and held in a calm and respectful environment, as per the Iranian foreign minister. The U.S. envoy Steve Witkoff also affirmed that the talks were held in a peaceful and constructive atmosphere. The countries will again meet for indirect discussions on the 19th of April. U.S. President Donald Trump also commented on the talks. Let's listen in to what he had to say.
I want them to be a rich, great nation. The only thing is, one thing, simple. It's really simple. They can't have a nuclear weapon. And they got to go fast because they're fairly close to having one. And they're not going to have one. And if we have to do something very harsh, we'll do it. And I'm not doing it for us. I'm doing it for the world.
And moving on, Meta CEO Mark Zuckerberg testified in a historic antitrust case against the U.S. Federal Trade Commission earlier today. CNBC's Amon Javers is joining in with us to give us more details on this one.
Meta CEO Mark Zuckerberg wrapping up the first of what we expect to be 2 days of testimony here in Washington, D.C. Over the FTC's case that Meta's acquisition of Instagram back in 2012 and its acquisition of WhatsApp in 2014 amounted to anti-competitive conduct because they essentially strangled the competition in the cradle at that time and allowed Facebook, now Meta, to grow unhindered by aggressive competition. Now, Meta has been arguing in court through the day on Monday that that's a ludicrous case. They say that this case is way too late, should have been filed years ago, if at all. And on the merits, they say the case fails because there is competition. They point to TikTok being one of the big competitors here for Meta. We do expect on Tuesday to see Mark Zuckerberg testifying again, and we expect that this case will run several weeks. So no decision expected anytime in the month of April necessarily. But at some point here, Meta, if they lose lose this case, could be forced to spin off WhatsApp and Instagram. For CNBC Business News, I'm Eamon Jabbers in Washington.
Thank you so much for that. But on that note, we're going to skip to a very short break. More news and updates on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. You're watching Business Lunch on CNBC-TV18. Nifty managing to hold on to those 23,300 levels. No major move that we've seen in today's trading session. But here's some important corporate commentary that we have coming in. ITC CMD Sanjeev Puri has said that the tariff uncertainty can help India to get new opportunities in the global markets. My colleague Shivani began by asking him about the potential impact of Trump tariffs on Indian goods. Listen in.
While there is a lot of uncertainty, my sense is that it will open up. It will open up a lot more opportunity for interest for the industry as the bilateral trade agreements get signed, and not only with the US. I think we are hopeful that we should see one with the EU and UK during the year, and that does create a lot more opportunity for the Indian industry. Gives an opportunity to integrate with global value chains. 70% of the global trade is in the global value chains. So I think ultimately it will turn out to be good for India. And I think the other good news is that India has its own momentum. So despite the uncertainty, I think India will continue to progress and remain a resilient economy as we have demonstrated in the past.
Well, sir, what seems to be the biggest highlight of this entire trade war is the dynamic between China and India. While the industry has always maintained that, the China plus one strategy has not played out that well for India, do you think this is the time when we need to navigate it better and it could open up opportunities for the industry?
No, as I said, with the bilateral agreements and with the EU and US are large trading partners. EU, we have been in discussion for quite some time, maybe nearly 20 years or so, and UK. So all of these are markets where there is a lot of opportunity, and I'm quite hopeful that ultimately it's going to be beneficial. Short term, there may be some uncertainty, but it will be beneficial and it will open up a lot more opportunity for the industry. Of course, to leverage the opportunity, we'll have to do our bit in investments and IP and innovation and all of that. Yeah.
So, last question. Since our Commerce Ministry is also in talks with the US and EU, as you said, bilateral, what are the key points that you think from the industry's perspective, that they should put on the table? Is there something that you think should be brought in from India's side in this entire, management of things?
No, first of all, I think all these agreements work well when it is mutually beneficial, of course. The second is, I think we have to be careful about rules of origin. I think this would be an important thing to be keep in mind. And the other thing to keep in mind is, as the new trade regimes emerge because of the tariffs, and certain places which have face higher tariffs, we might see dumping of goods in India. And that's something that we need to be cognizant of and have agile responses to that. The good news is that the government has already announced setting up a group to monitor that closely. We're already faced with dumping in several sectors already, and their investigation. Not only steel, there are other sectors as well. There is paperboard, there are some chemicals and so on and so forth. So several sectors are there. So it's important that there is a close monitoring and quick action on it. And I think we're quite encouraged by the fact that the government has already announced setting up a group.
And with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, your Midcap Radar.
सिचुएशन बहुत ही टेंस है, बहुत ही खराब है। अभी भी केंद्रीय वाहिनी को बहुत दिनों तक यहाँ पे रखने से ही कुछ अच्छा हो सकता है, इससे अच्छा नहीं तो अभी परिस्थिति ऐसा नहीं है कि केंद्रीय वाहिनी को यहाँ से हटाया जाए। तो मैं स्टेट गवर्नमेंट को, माननीय मुख्यमंत्री जी को अनुरोध करूंगा कि आप इनिशिएटिव लीजिए, आप केंद्र से बोलिए कि आप केंद्रीय वाहिनी यहाँ पे सीआरपीएफ तैनाती हो, और सीआरपीएफ जब तक परिस्थिति स्वाभाविक ना हो तब तक पूरी ओज केंद्रीय वाहिनी यहाँ पे रहे।
Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I am Vivek Iyer and with me today is Nigel D'Souza. Nigel, what a wonderful day for you to join on MCR. Markets are completely green.
Well, that's right, Vivek. On these sort of days, you like to be on air for longer, right? And my wish has been granted today because, you know, with just a couple of hours of trade to go, we're up a whopping 500 points in the Nifty and portfolios feeling superb because the breadth of the market is in favor of the bulls. Lots to talk about. First up, let's run you through all the top stories at this hour. Stocks climb reacting to Trump's easing tariffs on imports of electronics, computers and chips after a market holiday. Realty and auto, they are the biggest gainers while FMCG lags in trade. Midcaps at par.
GMR Power divests stake in 3 stressed assets for a sum of 653 crore rupees. The company says this will deleverage the balance sheet by 4,400 crore rupees. The stock is up by over 5%.
IndiGlobe Aviation surges after Motilal Oswal upgrades the stock to buy with a target price of 6,550. The brokerage says that the benign crude prices and favorable domestic demand bode well.
Automotive Pharma gains over 4% after receiving the US FDA nod for an anti-blood clotting tablet that will be launched in Q1 FY26. The market size of the product is estimated at $447 million US.
GM Breweries in focus after reporting the Q4 numbers. The net profit declines by 31%. The EBITDA surges 17% on a year-on-year basis. Well, the markets are holding well, and the high beta names are doing well in today's trading session. You have metals as an index that's doing well. That got hit the hardest. Now, the hope is that, we'll be back to normalcy. So you have Tata Steel as we speak. That's moved to the high point of the day. One of the underperformers in the bull run was the paint stocks. Asian Paints is the stock that suddenly moved to the high point of the day. It was trading in the red an hour or so ago. But now you have Asian Paints that's moved to the high point of the day. So it makes sense to pull up the intraday chart of that stock. I just pull up a couple of more names. Sundaram Fasteners, the stock was in the red actually. That's moved into the green. So big spike up is what we're seeing out there. ICICI Lombard is now up close to around 5%. So big move is what we're seeing on that counter as well. But let's get straight to our special segment, Midcap Movers. Vivek has hopped across to the wall to tell us about all the midcaps that are doing their jig. Vivek, take it away.
Absolutely, and the screen is completely green today. Advanced decline ratio as far as the broad end of the markets are something that is very, very strong. And within, whole host of stocks that we could choose from, actually what we've done is we picked out and cherry-picked a few sectors. So first, look at the entire auto and auto ancillary, something that Sudarshan's been telling us since morning. The entire auto pack is doing very well. Not only that, the entire banking pack. So first we'll start off with the banking pack. IndusInd Bank up almost 7%. Bandhan, IDFC First Bank. Remember, there's a pref issue that the company said that will be coming out in a couple of days. It'll be interesting to see, what kind of funds that the company is raising. So the entire banking pack, led by HDFC Bank, of course, is doing very well. Auto and auto ancillary, something that Sudarshan's been telling us for quite a while. The tariff tantrums or the uncertainties receding, and on the back of that, the entire pack, not only auto anchors, even tire companies. Remember, a couple of reports have indicated that raw material prices are benign and there could be margin expansion. Back of that, auto ancillaries, tire stocks like Balkrishna, MRF, all of them doing very well in this session. The other set of stocks that have rebounded quite smartly is the entire real estate pack. The rate sensitives today doing quite well. So names like Lodha on the back of the positive development, Anantraj, DLF, Brigade Soba, all of these stocks doing very well. And lastly, very few laggards, but still a few interesting names. Max Healthcare, that particular stock seeing quite a bit of selling pressure. Aster DM Healthcare, Godrej Consumer, one of the few laggards in the session today. And Hindustan Petroleum, this particular stock too under a bit of pressure. Other than that, it's a green screen, not much to complain about.
All right, Vivek, come back to your seat and let's take the show forward. For the time being though, let's welcome Shrikant Chavan onto the show from Kotak Securities for a technical check. Hi Shrikant, good afternoon. After a while we speak, during lunchtime, but tell us, what's your view? It's been a super duper rally. Someone would say, where were the tariffs? What happened to Trump? Because we are now trading above the levels that we were trading on the day that Trump, in fact, announced those tariff measures. That's April 2nd. So the Indian markets have pulled back all the losses, and now we're trading above those levels. Forget about making up those, the losses. Tell us, what would you do? Take the money off the table, or are we good for more?
Yeah, absolutely. In fact, not only we are trading higher, but in fact, our markets are outperforming two other markets, including MSCI Emerging Market Index. So if we consider the overall pattern of the market, then at these levels, I am of the view that the market had seen its worst when the market was around 21,700 on last Monday. And today we are at 23,300, 400 sort of levels. And even after opening with a gap of 300, 400 points, our markets are trading comfortably around these levels. So I am of the view that, yes, it is better if we switch some of our weak investments to strong investments or maybe strong ideas. Because from here onward, if we see the market is reaching towards the levels of 24,000, then in that case, relatively outperforming stocks can do much, much better. Okay. Ideal strategy should be to look for adding position if there is any correction in the market close to, let's say, 23,200. Now, I'm not expecting market to sustain below the levels of 23,000. So in case if there is any drop, minimal drop to the levels of 23,200 or 100, there we should look for taking some contra bets.
And what are the individual stocks that you have for us today?
Yeah, afternoon, Vivek. Yes, if we go through with sector-specific activities and performance, then in that, all these defense-related stocks, they are doing really well. And most of these stocks have crossed their immediate resistance levels. In that specifically, we like Bharat Dynamics, which is around some 1230, 1240 sort of levels. If we consider the overall technical pattern of the stock, then it is currently trading at 1385, 1386 levels, and it has broken the level of 1350. So based on its technical formation, I am expecting stock to move towards the levels of 1500 or maybe 1600 in next few weeks. So it's a buy at current levels. The other stock which we like is Deepak Fertilizer, and there also, if we consider the its overall long-term pattern, then it has broken its swing highest levels, and now it is moving towards its previous high of 1450 or maybe 1500. So even at these levels, it's a buy because the momentum of the stock is indicating us that it is heading higher.
Okay, thank you so much for joining us, giving us a view on the markets as well as the individual stock picks. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, is very simple. It's inversely proportional. The higher the tariff, the faster they come.
Do you have a percentage in mind and a timeline?
I have a timeline, yeah, not too distant future. We're doing it because we want to make our own drugs.
अरेस्ट कर लिया गया है और अब उनका लिए अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है
Welcome back to Midcap Radar. Well, the small cap index is surging. It's 2.8% higher even as we speak. But we'll now shift focus to nuclear software. Talk today as the company and Deem Finance have expanded their long-standing partnership with Fin1 Neo. We are now joined by Vishnu R. Dusad, co-founder and managing director of Nuclear Software. Thank you so much, Mr. Dusad, for joining us. First up, give us a sense of what exactly this deal means for you. What are the earlier terms and conditions? What is the extended term of conditions? And what is the period for which this particular partnership has been extended?
This is an extremely important deal for us because while we have been in Middle East market for almost 2 decades now, it is one of our earliest implementations of our flagship product Fin1 Neo, where we have enhanced our technology very, very substantially, and it has gone live with Deem Finance, again with whom we have had a partnership for more than a decade. So it brings a lot of operational flexibility and efficiency to Deem Finance's collections operations, and that is how they would be benefited with our solution. The deal has been extended for 5 years, but we are confident that it'll like most of our deals, or if not all of our deals, it will continue for decades to come in coming years.
Okay. Hi. Good afternoon, Mr. Dusad, and congratulations, on this win. So good on you. And I had a 2-part question, but you have answered 1 part. That it's for at least 5 years, and you're looking at a longer-term duration post that as well. What is the size of the contract, though? How much of it is incremental?
Okay, I would not be able to talk about the numbers specifically, but it is certainly better than our earlier deal.
Better in the sense on pricing?
On pricing.
How much better?
Okay, again, I won't be able to talk about numbers. Please.
Single digit, mid-single digit. No, it's a positive read-through. So I ask you if you're getting.
No. It's certainly double digit. It's certainly double digit, and the fact remains that the benefits that our customer would be able to derive out of this latest technology that has been implemented would be far higher, and that is how we are very excited about this deal. Our LMS module, loan management system module, is something that is absolutely industry benchmark, and so is we feel is our collections module, which is debt management, and we did not have an implementation so far in Middle East for the debt management. In UAE, we did have a implementation in Oman, but in UAE, this is our first go live, and that's how we are excited about it.
Right. So, there was one concern, especially at the end of the previous quarter. Number one, you did say that certain deal closures are getting extended. Was this one of those deal closures? And now there is clarity in terms of at least top line growth. And secondly, top line has actually remained static for quite some time now, something that we alluded to last time. Q4 FY26, can we see some extension, or can we see better margins and top line coming through?
As far as, again, Q4 is concerned, I should not be talking about it at all. But
if you could qualitatively give us a guidance as to how has been the demand environment.
That I certainly would like to talk about. I would once again reiterate the point that I made about the orders taking long, and yes, that continues to be there. People, our customers are taking much longer than what they used to take to take decisions. But having said that, the way things are moving, the way things are panning out, now we feel that the flat line that was there on our that hopefully would be gone in this current financial year, 25-26.
So FY25 will be flat in comparison to FY24, right? Around the flat line.
Again, I should not be commenting on that.
So I mean, just going by your 9-month numbers, there was a bit of a downtick. So that's why I ask you. So FY25 is done. It's over. It's fine, and we want to stay, in step with the regulator as well. So don't want to ask you about FY25, but I want to ask you about FY26, Mr. Dusad. What kind of growth can you give? Because there'll be 2 years actually of no growth. Last year, this year, if I compare it. So FY26, your investors will be hopeful. What kind of growth number should they be working with these, newer announcements that have come?
Yeah, as far as, once again, as a policy, we do not give any guidance. So again, I won't be able to give you any number on what sort of growth we are looking at in FY26. But I can certainly say that, our conversations with a whole lot of customers are pretty encouraging, pretty positive. So we are looking at some growth kicking in FY26.
Double digit? Double digit?
Again,
in the past, you have grown at 25-30%. So I wanted to ask you if you're going to be getting back to those, what used to grow in the past. Will you be getting to those kind of growth rates in FY26?
I won't say in FY26, but yes, that is what is the target, that we get back to high growth rates.
Right, we get that. So higher growth rate is what you are trying to achieve. Now, we can't let you go, without getting your comment and also getting an on-ground reality as to what exactly is transpiring as far as tariff uncertainties are concerned. A lot of IT companies, in fact, have sounded caution in terms of spending by some of their clients. What is the on-ground reality that you're facing? And we also understand that, you do a lot of your, top-line growth does come in from the UAE market. So what is your exposure to the US market and any slowdowns seen over there?
Okay, as far as US market is concerned, we've had just 1 or 2 customers. So our revenue from US is very, very limited. So, from that perspective, there is no uncertainty as far as we are concerned. Now, having said that, we are talking to customers in US also. And see, you need to appreciate one thing. Our numbers are very, very small as compared to our peers in the services, IT services part of the industry. So, because we are a $100 million kind of company, these headwinds or whichever way you look at them, they don't really affect us because of the size of our operation. So we are continuing to talk to customers in the US, and we are reasonably hopeful that things will not affect us, at least, unless of course there is a fallout at the global level, which hopefully better sense will prevail and things will settle down in next few weeks, and then things will start getting back on track.
Give us your aspiration for the next 5 years, sir. Very quickly, as you said, you're a $100 million revenue company approximately. In the next 5 years, where do you see this number headed? You have got cash in your books as well, so maybe there could be some inorganic growth. Put everything together, what is the revenue outlook 5 years down the line? Sir, you can give us that number.
No. Again, I won't be able to give any such number. But one thing I can certainly tell you is we are not looking at any inorganic growth again almost as a matter of policy. We will continue to make use of the cash in a very robust manner by continuing to invest in technologies, the latest technologies, and making sure that our customers are able to derive value out of the investments that they do with us.
Thank you so much, Mr. Dusad, for joining us, giving us a sense of what exactly this deal entails. We didn't get too many numbers out of you, but hopefully post your Q4 results, that's something that we will be able to get as well. But we'll now slip into a short break. We'll get you more on the markets and focus on Interglobe Aviation, which is surging in trade. Stay tuned.
अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Welcome back. You're tuned into Midcap Radar here on CNBC-TV18. We'll keep an eye out on a couple of stocks in the broader markets. DB Realty, big surge is what we're seeing on that stock. You know, massive volumes out there. It's up close to around 12%. I think Nimish was telling us a few sessions ago on D Street Chatter that there is some kind of buzz on the stock, and maybe we'll hear some corporate announcement. For the time being, big up move. Amrutajan, another stock that's up close to around 10%. Most of the move actually has come in this hour itself. And Repro India, that's the other one that's up close to around 14%. So big move on that one. And finally, Windlass Biotech, you know, I think I saw a note coming in from a brokerage, try to pull that out, but they've come out with an upgrade. That stock, in fact, is up close to around 15%. Well, let's talk about Interglobe Aviation. Vinny joins us to tell us about a brokerage note on that one. Vinny?
Yes, so Interglobe Aviation is in focus on the back of the brokerage note that has come in from Motilal Oswal. They've upgraded the stock to a buy. Target price of 6,550 rupees per share. Now, what are the factors that work out for Interglobe Aviation? One, the benign crude prices, right? We've seen the sharp fall coming in crude prices. And do not forget, for Interglobe Aviation and aviation space, overall 40% of their fuel cost comes in from the crude prices and fuel prices. So that is why a fall in those prices is a positive for them. Favorable domestic demand trends are also shaping up in the aviation sector, which is positive for Interglobe Aviation. Overall, you know what Motilal Oswal is estimating, it's around a 28% EBITDA CAGR growth over the next couple of years, as well as a 38% PAT CAGR growth over the next couple of years. Also, the upswing in the Indian aviation space will work out well, and that is why Interglobe Aviation is in focus, and they will upgraded the stock to a buy.
Thanks so much, Vinny, for joining us and giving us all of the details as far as the upgrade on Interglobe Aviation is concerned from Motilal Oswal. Well, a couple of stocks from the broad end of the markets that are doing very well. Have a look at Policy Bazaar. That stock up almost 5% in today's trading session. And the other stock that's seen a bit of a surge, especially in the last half hour, is SBI Cards. That stock too is trading near the day's high. But with that, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.
Informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Hello, good afternoon. You've tuned into MF Corner on CNBC-TV18 and I'm Vinny Motiwala. Thank you so much as always for tuning in. Now, what have we seen in the recent times for the AMFI data that came in the month of March? Before we take a look at the AMFI data, let's look at what the Nifty did in the month of March. 5 consecutive months of decline was there, and then we saw the Nifty bounce back smartly in the month of March with a 6.3% month-on-month gain. March 2025 recorded FII inflows that we saw in that month versus previous 2 months of the outflows that we had seen coming in. For the AMFI data and for the mutual fund industry data that came in, the total AUM for mutual fund industry, that saw an increase of 1.9% on a month-on-month basis in the month of March. That was primarily led by the AUM growth that we saw in the equity funds. There are more such trends that have come in as well. Small cap funds, that saw an increase as well. Mid cap funds doing well. Gold on that other side, gold ETF side, saw a bit of an increase coming in. But to discuss all of this, what does this data point mean for you as a mutual fund investor? To discuss that, we have our experts joining in with us. We have Seemant Shukla, who is the CEO at Quantum AMC, as well as Mr. Sandeep Bagla, CEO of Trust Mutual Fund, joining in with us to discuss the recent mutual fund data that we have seen coming in. Good afternoon, gentlemen. Thank you so much for joining in with us on the show. Mr. Sandeep, I'm going to start with you. Given that we have seen a visible dip in the equity mutual fund inflows, and this is, I'm looking at it especially in the month of Jan to March, okay, 2025. Now, what are the factors do you think that are driving this slowdown? Is it just this one-off scenario that we're seeing coming in, given that, this global uncertainty that has come in? So there's a bit of a fear that comes in for investors as well, and that is something that is impacting, or is it a structural change that we're watching out for now?
Hi, Vinny. Thank you for having me on the show. So it's definitely not a structural shift. I think the investors have completely shifted. They have revealed their preference. Now, gone are the days when we used to invest mostly in bank FDs, gold and real estate. I think clearly the equity culture has sprung a new leaf in India. And I think it's going to continue for many, many more years to come. It is a mega trend that we are living through, where investors are shifting. They have understood that the growth in India is best captured through equities, and that too best captured through mutual funds because of their transparency, because of the regulations, because of the different schemes that they offer, and because of the transparency. So I don't think this is a structural shift. I think in this quarter we had some events like, of course, the local economy, domestic economy was also slowing down. The markets were not performing. And for many investors, this was the first time they saw a meaningful dip. So it could have, shaken them up a bit. But as I'm seeing, there are more and more folios that are getting added. And I think the SIP book remains strong. So I don't think this is a structural shift. This is a mega trend. This will continue for the times to come. The intensity of that mega trend can come down. This is one of those events. Of course, there was March also. There were issues of, year-end considerations, tax harvesting, global, Trump tantrum, tariff tantrum did not really help. And I think flows will pick up as we go along during this year.
Absolutely. Flows will pick up as we go along during this year. Mr. Seemant, good afternoon, and I want to bring the same point to you as well. How are you reading this data point as well? And, like Mr. Sandeep was mentioning right now, the Trump tariff tantrums that we're seeing right now, every day is a new story, right? So that fear still continues, right? Then do you think in the near term, maybe we could see the similar level of flows going in? What's your thought as well?
So if you see last 1 year as a country, equity flows has been around 4 lakh, and which has been a jump. And if you see last October till March, let's say last 6 months, the peak would be around 41,000 crore. And considering March number at a global level, yes, I agree that everybody thinks that there's a global news, tariff, geopolitical thing. Must have added the dip in the number to an extent. But if you see granular basis, you will see that larger part in first 5 months of H2, which is October till February, there was a good amount of flow into thematic fund if you granularly cut the data into slices, and that has dipped significantly. So broadly, if you see from 40,000 to 25,000 crore, 26,000 crore is looks like a 40% jump, 40% dip. But if you take out just thematic fund, which has gone down from 15,000 crore to almost 170-180 crore, I think the number comes down to almost 10 to 15% down. So from a regular flow, and we all know that thematic fund and sectoral fund has got their flavor, their different type of risk level. So that is one thing, and obviously these are tax season. Advanced tax might be reason for a debt side, but arbitrage, hybrid, and equity might have seen some amount of tax management. So broadly, I feel that equity as a investment from via mutual fund or even a direct equity, India has got that tectonic shift on investment side, as Mr. Bagla was also saying.
Okay, so this is, you believe this is not, but you're not going to see any sort of a short-term pause, right, Mr. Seemant?
So little bit here and there will happen, but structural changes, if you ask me, it's not on a dip side, it's more on a long-term investment, and equity as an asset class will be a key tenets for all investors in this country. I think that culture has started.
Right. Okay. Now, when you're looking at it, the mutual fund inflows that hit around 8.2 lakh crore. This I'm talking about FY25 as a year as a whole, with over 50% that came in from the equity side. And like you all are saying as well, equities, there's nothing, no going anywhere, right? That's here to stay. That's not going anywhere, no matter what happens across the globe. What does this tell you about the evolving mindset that we have of these Indian investors? Do you think they will be able to, pass through this tough time that one is seeing right now and the ups and downs? Because a lot of retail participants that are there maybe are some of those who have just come in post-COVID, right? So for them to understand mindsets coming in from experts as well is important. Mr. Bagla?
See, it's a good question, Vinny, because a lot of new investors came into the market thinking that it's a quick fire machine where you just, put in money from one side and get returns on the other side. One has to mature and understand that equity is a long-term growth story. Only long-term capital, which you do not require for the short term, should go into equity markets. So it's a coming of age for the new Indian investor. We have all learned the hard way. Equity markets have the mind of their own. Sometimes they are ahead of economic developments. Sometimes, they remain, despondent for a long period of time. The returns are bulky in nature, and we have had a fantastic run in Indian market with very good returns coming. So I think this is going to be a coming of age story for the Indian investor. A lot of new investors might get disappointed if they are leveraged, or if they are over allocated to equities. One thing I would like to point out that there was a shift in debt taxation, where the taxation benefits for most debt and fixed income schemes were removed. And from an asset allocation perspective, a lot of money got allocated more to equities than it should have. So I think it's a correction phase that we are going to go through. I think it is also maturing of the new retail investor. And one should understand that this is a long-term story which is going to unfold for many years to come. And money is made by the patient investor. This is not a T20. This is more like a test cricket. And I think investors are gradually moving towards that mindset.
And not a T20, but a test cricket, and everyone should be prepared for that as well. So surely easy to understand references given that we have so much cricket and IPL is going on. But Mr. Stevens, I'm going to come to you with the same question as well. While obviously, if someone has invested just in the month of Jan and they are looking at the returns, you are seeing that negative return coming in, right? So for an investor, anything that you would say on that front as well? And also what I'm seeing in that Amphi data that has come in, pace of redemption, that has picked up a bit, right? On a month-on-month basis in March, 37.6% uptick from what we've seen in February. How should one be understanding that data point as well then? And is this just because it's a year-end phenomena?
Well, I'll say on a debt side, it's a year end because a lot of investment is of treasury and cash and liquid money, which usually doesn't stay, and so arbitrage in these one. But yes, as the tax filing has gone up, I think it's more of a tax harvesting. Also, people are trying to utilize that window of tax March end basically. But broadly, if you see in gross number also as well as net number also, as a country we might have doubled. Somebody was talking to me and saying that we have almost doubled from 1.885 to now to 4 lakh crore of flows. But one has to see that there's a retail flow also. 90,000 incremental has come via SIP also. So from 1.89 or 1.9 to now almost 2.89. is via SIP, and there's a good jump in last 1 year, which has been in a range of 20ish on a folio side before last year. Last year we have moved from almost equity side, I'm just saying, 12 to almost 12 crore to 16 crore now folio, which is again a jump of almost 35% of folio. So 45% you have just got through SIP way, as well as 35% through folio way. So in that way, as your base goes up, yes, there would be a profit booking, there would be a jitteriness, but put together, I think as a broad segment, we should see that flow will continue, and cycles quarter end, you will definitely see some amount of extra redemption due to certain factors.
Right. Mr. Bagla, that important and interesting point that I actually found was small cap funds, right? Because I was thinking that everyone is being more cautious. They're not going to be investing in mid and small cap because the fall due to uncertainty is much higher in these funds. But 10% increase on a month-on-month basis. Do you think that retailers are now coming back, or should they be more cautious going forward? What are your thoughts on this?
The small cap, unfortunately, is a much maligned, category. We must understand this very clearly and once for all, that only the 100 largest companies in India are classified as large cap companies. Next 150 are called mid caps. India is a very large country with a large economy. It is not dependent on one sector. More and more sectors are coming out of the closet. They're growing very fast. More and more companies are getting listed. The only way to get exposure to the fast growing sectors in India is through the small caps, because the amount of variety, we had made some calculations, in the large caps, you have 1 or 2 infrastructure companies. In small caps, there are more than 50, 60 companies to choose from. Now, the fund managers will do their job. They will choose, the roses from the lemons. And that is the job of the fund manager. So I think small caps over a period of time have the potential to create wealth by investing in companies which are far larger in terms of growth, far faster in terms of growth than large and mid caps. So I think small cap is going to emerge as an evergreen category. I think gone are those days when small cap was meant. By small cap we meant a small company like 500,000 crores. More than 2,000 crore market cap, there are 1,100 companies in India. So there's a huge set of companies to choose from. There are concerns on valuation, on liquidity, but those concerns can be handled by expert fund managers. So I think small cap is a testimony of the India's growth story. It is the pallbearer of India's growth story. So I think this will continue for some time to come. By some time, I mean few years, few decades to come. So I think small cap is fast emerging as an evergreen category. And the investors are also investing openly into that.
Fast emerging as an evergreen category. So that's a word coming in from Mr. Bagla. But Mr. Stevens, your word on this as well. What are your thoughts on the small and mid-cap side, and how should one be viewing both these sides of funds?
I think as a category, I agree with Mr. Bagla that the larger tail end for searching a good company is with small cap as a category, because you just get finished by 250 in large and mid cap primarily from that side. So you have a longer tail to fix. Certainly liquidity and all those things are there, but for a longer period of investment goal or aspirational side, I think it's a good tool to have under the asset allocation. I personally feel like in January, I think Jan has seen the highest flow in small cap, and still 4,000 plus is in the March also, which might reflect that SIP part. So one is January, the dip side when the market was correcting, we have seen a good number, 5,700 something. And that trend continues because one thing I feel that larger part of SIP based on equity assets are 25 to 30% might be into small cap and mid cap. So that continue to be the trend line or a flow which are there, which we can see in numbers.
Okay. So that's about mid and small cap funds that we were discussing right now. But on that note, we're going to step into a very short break. Viewers, don't go anywhere. We'll be back with more on other mutual fund data after this break. So stay tuned in.
Well, anything that has relative strength and anything that did not make new lows last week is something which is on top of our list in terms of longs. And I think on top of that list is financial services. I mean, if you look at the bank Nifty, today it is at levels of 52,000, which I think is an important resistance. And once this is taken out, I think it might be the first index after financial services to actually make new lifetime highs. So I remain bullish on the bank Nifty, and I think there are immense opportunities.
Welcome back to MF Corner on CNBC-TV18. Let's keep it going and discussing about the mutual fund data that had come in for the month of March 2025 last week. And to discuss that, we are continuing a conversation with Mr. Siman Shukla, or CEO at Quantum AMC, as well as Sandeep Bagla, CEO of the Trust Mutual Fund. Mr. Seaman, I'm going to continue the conversation and coming to gold ETFs. After 10 months of inflows, gold ETFs saw 77 crores of outflows in the month of March. And I think it merits it, given that, we've seen those gold prices also rise, right? So is this just profit booking? And do you think we'll see that buying coming back again, given that safe haven right now and commodity side is something that is the only respite that comes in from the uncertainty?
So broadly, if you ask me, we Indians love gold. I think that's the legacy or historical data point, if you see, and be it in a physical form or maybe in a. And the good part is the financial form last 1 year has been, I think, 20,000, 23,000 crore plus in ETF flows and gold saving funds, which has been a phenomenal. But if you see internationally, also gold for 2020, if I'm not wrong, April was around $1,500-$1,600 per ounce, and that touched 2,000. And for a pretty long period, it was ranging around 2,000 to 1,800, 1,700. In last 1 year, if you see the rally, it has from 2,100 to almost now 3,200 in international, and that is reflected in domestic market also. So the two good return in last 1 year. There would be a certain amount of profit booking, considering that the amount around $1,200 dollar range, or maybe from 60,000-70,000 to now almost lakh crore. So that's one part. But broadly, if you see, it's still considering all as a safe haven. Earlier, it was more of a US treasury, but now with all issues which are coming out of tariff wars and everything, I think people are looking for a gold as another option. And those people who have heavily invested or skewed investment in equity, I think this can be a good time if there is some correction to invest in gold. Typically, on a financial side, we still lack gold as a product or a financial instrument. It's more of a physical one, which we have seen. So I think broadly, it's continue whenever there is a risk on, or maybe a volatility across the geopolitical things, gold should do well.
Right. Mr. Bagla, what about the stoppage ratio, right? I'm just trying to understand this. If you view the ratio, the last couple of months, we've seen that increase coming in. Does this show any sign of panic, or maybe it's a seasonal blip? How should one be reading this data point?
It's difficult to read this data point properly. Even I am not very good at it. But I am told that, if you stop a particular SIP, the entire amount that you have accumulated over the years goes out. So this number is somewhat overstated compared to somebody who's starting a SAP whose only one installment is counted. So I think if you look at it in that perspective, I think the number of SIPs is going up. I think that we should not read too much into the stoppage data because it's an accumulated number which is slightly overstated. I think we should concentrate, I think, on the future, and I think that future is very bright. I don't think one should read too much in the stoppage data.
Okay, don't reach too much into this data point as of now. Mr. Seemant, what I want to know is in terms of when I was reading the data and seeing the mutual fund sector holding that was moving around as well, private banks had over 18% of the mutual fund sector's holdings in the month of March. Long-term bear, do you think this is tactically overweight situation? How should one see this point as well?
Probably if we say on a large cap Nifty side, around BFSI or financial are 37-38%. And if you take out all four large bank, private bank are around 27-28% contribute. In last 1.5, 2 year, 3 year, if you see larger allocation has been more to the defense, manufacturing, consumption, and EVs were there. These were less allocated. I think one thing is a valuation. Second is you cannot be too away if the valuation are good. And considering the economy is going to go at, let's say, 6.5% at a real, at nominal, maybe 10. These banks with their efficient way of working will reflect that growth of the country also. So considering that, I think it's a good way, and certainly valuation has corrected in many of these names.
Sure. Mr. Bagla, quick one. If you had to pick one of the asset classes on the mutual fund side, right? Equity mutual fund, debt mutual fund, gold, hybrid, multi-asset, what should one be picking for the next 12 months as a best bet?
Yeah, I don't think you can pick just one. We offer a whole bouquet of products, and there's a place for everything. Debt is there for stability, for regular income, for tax deference. I think somebody was telling me that debt has performed quite well compared to equities over a over last 1 year, I think. So it's possible. There's a place for everything I think in equities, while equities are dangerous, equities are risky and volatile, large cap is less volatile.
Right.
Small caps is potentially for higher growth. If you were to ask me one wild card for the year, I would think that probably gold has a very good chance.
Okay.
I think one should allocate a little more to gold because with global uncertainty increases, if there's inflation, if inflation goes higher, then gold has a potential to outperform. Not to say that other asset classes won't do well, but gold could be,
a bit of a better performer than others.
Bit of a better performer, yes.
Okay, gentlemen, thank you so much for joining in with us today. We're absolutely out of time on this edition of MF Corner. It's a pleasure getting your insights coming in on the outlook for the industry going forward as well. So thank you so much, gentlemen. And with that, viewers, thank you so much for tuning in. Up next, you have Closing Bell.
सिचुएशन बहुत ही टेंस है, बहुत ही खराब है। अभी भी केंद्रीय वाहिनी को बहुत दिनों तक यहाँ पे रखने से ही कुछ अच्छा हो सकता है, इससे अच्छा नहीं तो अभी परिस्थिति ऐसा नहीं है कि केंद्रीय वाहिनी को यहाँ से हटाया जाए। तो मैं स्टेट गवर्नमेंट को, माननीय मुख्यमंत्री जी को अनुरोध करूंगा कि आप इनिशिएटिव लीजिए, आप केंद्र से बोलिए कि आप केंद्रीय वाहिनी यहाँ पे सीआरपीएफ तैनाती हो, और सीआरपीएफ जब तक परिस्थिति स्वाभाविक ना हो तब तक पूरी ओज केंद्रीय वाहिनी यहाँ पे रहे।
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's very simple. It's inversely proportional. The higher the tariff, the faster they come.
Do you have a percentage in mind and a timeline?
I have a timeline, yeah, not too distant future. We're doing it because we want to make our own drugs.
Market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Largely positive start, courtesy the handover that we have received from Wall Street. The Taiwanese index is up 1%.
All I have to do is impose a tariff. The more, the faster they move in.
I think we're very close, if not in a recession now.
Nifty last Friday broke above the previous high of 22,697 and 22,806, 460 points, 450 points on the Nifty.
I think we ended the price correction last Monday at levels of 21,800.
We are seeing 50 to 100 basis point downside on our global GDP growth forecast.
Gold loan is a very operationally intensive business.
China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world.
The Nifty is now above 23,300. The Sensex has advanced nearly 1,500 points.
Food inflation, though, 4.66 compared to 5.94% in the previous month.
From an investment decision, whether you're an Indian company or an MNC, looking at Indian manufacturing and Indian supply chain, you can get excited about making that long-term investment.
Whopping 500 points in the Nifty and portfolios feeling superb because the breadth of the market is in favor of the bulls. Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Manglam. Well, the markets are actually looking good today. And if someone had to say that getting into the last 60 minutes, you'll be up close to around 500 points, well, you would have taken it. And as we speak, the markets are now up close to around 500 points, the breadth of the market. That's the big positive today. And the big heavyweight names, whether you look at HDFC Bank, whether you look at IndusInd Bank, Shriram Finance, all of them holding in good stead in today's trading session. That's the screen you like to see. Breadth of the market good. Nifty Bank is well good. And importantly, the Nifty Bank has taken off the recent high. The recent high was around that 52,000 odd mark, which now it's trading above. And the Nifty as well was facing some resistance at around the 23,100 odd mark. Well, it's trading above that mark. Hey, Manglam.
Hi, Nigel. You know, this afternoon, if you look at the nature of the stocks as well, they're not just restricted to one sector, even though the banks are outperforming. Among the top Nifty gainers, just look at it right now. We have, Hero MotoCorp that should come up for you individually on the screen right now. The intraday chart tells you that a big up move has taken place just in the last 10-20 minutes or so. That's Hero MotoCorp, top Nifty gainer. We have Bajaj Auto, which has been doing well all through the day, but currently at the higher end of today's trading range. Titan, Apollo Hospitals, Wipro, and IndusInd Bank. So, top 6 Nifty gainers, 5 different sectors. Similar is the case for the broader markets as well. We are seeing a big traction on names like Sammaan Capital, the erstwhile, from the Indiabulls group itself. So this is up around 7%. RBL Bank is the other one, which is up 4%. Then you have IRB Infra and Tata Communications, along with Nykaa. Nykaa too has found its feet among all the other consumer companies that have reported their fourth quarter update so far. Nykaa has been fairly strong with mid-20s sort of growth coming in, led by their beauty business. That stock continues to see traction. But you spoke about the resistance that we've seen, a little over 23,000. Today that was taken out because, a large part of the street was hoping that maybe the market sees resistance at 23,000, which is why we saw a lot of call writing at the 23,000 mark itself. Look at what's happening now. All those call writers caught on the wrong side. They have been running across to, cover their position. So that's the 23,000 call. This morning, the market opened higher, continued to stay higher. And what's powering it ahead is an element of short covering, not only in the futures space. We'll get the data today in the evening. But as of now, we're seeing that. But at the other level, 23,300 put writers are also fairly active for a premium of 90 rupees, telling you that now that the market's moved higher, the base also has moved higher to 23,200 itself. So we'll keep an eye out on that. The broader markets, you spoke about the market breadth. It looks like a train track. Right from the morning, we've had the green line above the red line, and that continues without any sort of volatility, the mid-cap index at the high end.
Well, that's right, Mangalam. And the two new entrants, I don't know whether it wants to change things around because Eternal, right? That's the new name.
Yes, Eternal.
Eternal is up close to around 2% or thereabouts. So normally we've seen in past instances when a company comes into the Nifty, sometimes it loses its fizz. But that one's up 2%. And Geo Financial, well, that's looking very, very good as we speak. Sharp up move is what we are seeing. It's taken off some crucial technical resistance levels as well. So that's pulled back a goodish bit after correcting from around 360, 370 odd mark. It went down to around 210. And from there, it's seeing some bit of a bounce. How do you position yourself in the final hour of trade? Mitesh Thakkar joins us on the show. Hi, Mitesh. Good morning. Good afternoon. I remember this morning, that you told us that you'll be looking to buy into any kind of dip. You'll be looking to maintain your long bias. That's worked out well. And as we speak, actually, the Nifty is higher than those levels that we saw even on the day these Trump tariffs were announced. And India is one of the few markets that actually have been outperforming. Are we good for more? Where are we headed?
Yeah. Good afternoon, Nigel. So I think, given the fact that there's been hardly any decline post the open, we are slightly off the day's high, but only about 50 odd points. And we recovered well. The early buy and, profit pretty much happened was immediately bought into. My sense is that I think we should eventually head towards 23,600 and then in a good case scenario about 23,750, 800 zone. So stay positive and use declines to buy into. On the stock side, I have a buy call on Policy Bazaar with a stop at about 1585 for targets around 1660 and maybe more. And the other one which I like a lot is Poonawalla Finance, which has been showing good strength and today is a good continuation on the upside. So buy here with a stop at about 369 for targets of 395.
All right, we take that point. So Poonawalla Finance is one of them that you like. You're keeping your long bias intact. A bunch of stocks which are doing a lot better right now. This afternoon, we have GMR Power opened well after the announcement of them selling some of their power assets to strengthen their own balance sheet. That continues to do well. A lot of these chemical stocks which are actually taking a bit of a knock on account of uncertainty regarding the tariffs have come back. So we have, Bodal Chemicals, which is up 10%, Paradeep Phosphates, another 8% higher. And because of the uncertainty of tariffs, we had a big drubbing in a lot of these auto stocks. Now, there is hope that maybe there could be some sort of relief coming in for these auto stocks. And that explains why all of them are buzzing higher, especially the ones which are higher, global exposure as well. The likes of Tata Motors, which is doing well. And then you have Samardhana Motherson, Sona, BLW, all of them which supply to companies that supply to global auto companies as well. They're doing well. Donald Trump says that he's considering a modification to the 25% tariff on auto imports. Sudarshan has been telling us that this is a positive development. He joins us to get us up to speed with what's taking place now. Sudarshan.
So while there is an all-round gain in the market, but one sector that is amongst the outperformers is the auto sector. Most of the stocks are higher, especially the stocks like Samvardhana Motherson, Sona, BLW, Tata Motors, all these like global exposed stocks which have the exposure in the countries like US, UK or European countries. Now, what's the reason behind this? Because Donald Trump has been making statements related to tariff. Now, in the latest statement that he has said about the auto, that he is considering modifying the tariff announcement that was done of 25% tariffs on foreign-made auto companies, basically for autos and auto parts, and that had come into effect on April 3. Now, why this is positive for companies like Samvardhana Motherson, Sona, BLW? Because Mexico forms nearly 4% to Samvardhana Motherson's revenue, and for Sona, BLW, Mexico contributes nearly, basically it's in the range of 2 to 3%. Now, if you look at the Mexico-produced vehicles in the US, so for General Motors and Toyota, the contribution is in the range of 30 to 40%, while for Volkswagen, the contribution increases to almost 60%. And Samvardhana Motherson is one of the biggest suppliers to these companies, and that is also one of the reasons that this Samvardhana Motherson is higher, and it's followed by Sona, BLW as well. But why all the other auto names are gaining? Now, as you have mentioned in your link, that there is a hope that it's not limited to the imports from Mexico and Canada, it's also extended to countries like Europe and UK, and that would be a huge positive for someone like Tata Motors.
Got it. Okay, all right. Thanks a lot for that, Sudarshan. So good relief is what we are seeing out here. Mitesh, Tata Motors, the stock fell one way from around that 1100 odd mark to around that 600 odd mark. But today it's seeing a bit of a bounce. Any levels you're looking at on Tata Motors? You know, I recall during COVID, well, it went down to around 60 rupees. So a lot of investors that got in there, well, they are still way in the money. But from the peak, it's come off. So how is it looking on the charts?
So Tata Motors, if you look at it with that positive news flow, I think has bounced back from lower levels. But looking at the big decline, I think you will see a lot of supply emerge at higher levels. So I think anything close to about 645, 650 would be an area to exit. I think we might go till there. But in the near term, I think, and even for a fortnight or so, I think that will be a very difficult level for the markets to cross.
Right. Mitesh, a surprising mover today has been Dabur. Just pull up the intraday of Dabur that tells you, it's been a big mover up around 2.5%, outperforming the other FMCG pack as well. But earlier it was underperforming. The fourth quarter update was fairly weak. The stock saw a big sell-off after that. Do you think from a price standpoint on the charts, the worst is behind Dabur, or maybe there are lower levels that one can look at as well?
See, for Dabur, my sense is that Marico is something which has done extremely well and has made a new high, while Dabur is struggling. While there is a reversal on the hourly to hourly charts from lower levels, again, I think the earlier supply pivot was around 485. I would be surprised if it manages to get past 485 and show more strength. But instead, between the two, I think I'll choose one, Marico, or even a Britannia, which was a call a few days earlier. So I think both these stocks slowly, if they are accumulated, I think in the next few weeks they'll make much higher highs.
All right, that's about Britannia and Dabur. Mitesh prefers Britannia and Marico to Dabur itself, which currently is outperforming. 485 is the big resistance there. But the stock that has been, on a big up move in today's trading session all through the day and currently at the high point of trades, GMR Power looks to divest stake in its stressed assets, strengthen its balance sheet. Vivek joins in with all the details and more. Vivek.
Well, that's right. So GMR Power and Infra, one stock from the GMR group that we don't discuss too often, most of the attention is towards GMR airports. But remember, this particular company, the thermal power producer, also has a few gas power plants, and along with that, also is quite active as far as the smart meter segment is concerned. An important development, remember, at the end of the March quarter, the company did say that they had reached an agreement as far as lenders are concerned regarding a significant debt outstanding that the company had, and they had reached a one-time settlement. In further to that particular development, that the company has informed the exchanges that they are now going ahead and divesting stake in 3 non-operating and 3 stressed assets to a private equity firm called as Synergy Investments Holding. The total consideration that the company will receive for all of these stake transfers is a little over 650 crores. Let's have a look at each stake divestment that the company is doing. The first one is GMR Bajoli hydropower project. It's a 180 megawatt hydroelectric power project. The company will transfer close to 80% equity stake in 2 tranches to Synergy. And along with that, the next company or the next JV that the company is actually looking to divest it is GMR Vemagiri Power Generation. The company owns almost 388 megawatt natural gas power plant, of which the company will transfer its 51% stake to Synergy. And lastly, GMR Rajahmundry Energy is the one where the company will divest close to 51% stake, and it operates a pretty large 768 megawatt natural gas combined cycle power plant. Now remember, out of all of these 3 assets, in fact, GMR Bajoli Holi Hydropower was one of the assets that the company was intent on turning around. In fact, Q3 and Q4, there was a significant turnaround. What is the company saying? What is the rationale for this particular stake development? It's a non-core asset. Remember, the natural gas plants that the company was actually operating were not operating at peak capacity, given the fact that the input price of natural gas was pretty significant. So the company continued to make operational losses over there. Along with that, the company says that the transaction will help the company to meet the proposed one-time settlement to the lenders. They say that it will de-lever the balance sheet by 4,400 crores, and the move will help the company spin off non-operational gas plants as well as stressed assets of the GMR group. Synergy is a private equity firm, so overall a positive development. No wonder you're seeing the stock surge in today's trading session.
Thanks a lot for that, Vivek. Well, let's get you some market opinion as well. Earlier today, we spoke to the founder of Goldilocks Global Research, Gautam Shah, on how the markets are expected to move and what are the top themes that he's betting on. Let's hear him out.
One is that of price correction and the other is that of time correction. I think we ended the price correction last Monday at levels of 21,800 because I think the technical studies, the breadth, the sentiment, the news flow, everything came together to possibly indicate that it was a panic bottom. Thereafter, we've seen very good constructive action. I think the Nifty is up about 1,200, 1,300 points in no time. And I think we've entered a period of time correction. I think a lot of money which was on the sidelines is now at work because I think participants believe that most of the negatives are discounted. So that's the reason you are seeing this very good-looking flamboyant rally. But I would not read too much into it. I think 23,400 and 23,800 are numbers to which the Nifty can move to. And broadly over the next 2.5 months, I think we are going to stay in a sort of a range. We will not make significant we will not see significant upside or significant downside. But between now and the end of the year, I think it's going to be a stock pickers market. Well, anything that has relative strength and anything that did not make new lows last week is something which is on top of our list in terms of longs. And I think on top of that list is financial services. I mean, if you look at the Bank Nifty, today it is at levels of 52,000, which I think is an important resistance. And once this is taken out, I think it might be the first index after financial services to actually make new lifetime highs. So I remain bullish on the Bank Nifty, and I think there are immense opportunities.
Okay, all right. Well, Gautam sounded pretty optimistic earlier today. But let's focus on the MSCI May 2025 rejig, as the cutoff date for the calculation should ideally be around today, as it's typically calculated the last 10 working days of April. And since we have a couple of global holidays, well, pretty much this should be the calculation phase where we see the cutoff date somewhere today or maybe in the next few trading sessions. Well, the MSCI index review will be announced on May 14th, 2025. The changes will take effect by May 30th. Novama Alternate, they have estimated 4 inclusions and 2 exclusions. They expect the inclusions with expected flow should come up for you on the screen. Coromandel, $210 million. That's around 13 times its average traded volumes. For Paytm, around $200 million approximately. Nykaa, another big one out there, only around $175 million, but that's around 14 times its average traded volume. So that's a large amount, in terms of the total traded volume. While Adani Energy Solutions as well, around $176 million is what the inflows could possibly be. The expected inclusions, well, exclusions, they come up for you on the screen. Sona BLW as well as Thermax, and the approximate outflows could be 111 to around $162 million odd. So Coromandel in particular, because of the possible inclusion, we have seen the stock do quite well. Today as well, it's now at the high point of the day and volumes rather large. The intraday chart of Coromandel should come up for you on the screen. Big spike up is what we're seeing on that one. Gurmeet Chadha joins us on the show. Hi, Gurmeet. Good afternoon. Good to see you, and thanks a lot for joining in. How are you feeling about the markets? You've been a Pharma bull on the markets, putting out all those stats on why do you think India is going to do well. But what are you all buying? Give us a couple of top ideas that you'll have. Earlier in the show, we had discussed, the auto names. HDFC Bank, that's the other one that suddenly found its form. It didn't participate when the markets were going zooming up, but now it's been the place to hide. Your view?
So Nigel, one learning in last 20 years in the market is that, only when there is a lot of gloom is when you have bargains on the table. And every pullback is led by a very different sector always. So in 22, 23, nobody actually gave a chance to PSUs or defense names to lead the rally, because the last 5-year, 10-year returns were quite sad. Same has been the case with banks. Look at HDFC Bank, the last 4-year returns probably FD and now after appreciation of stock. So had you put money in a HDFC 4 years back and now stock returns would be identical. So was the case with Kotak. So was the case with ICICI, also consolidated for almost a year and a half. So I think with RBI pivoting, not in terms of rate cut, also in terms of the overall stance, one is officially having, accommodative stance. Second is ensuring that the credit flow in the economy goes up, the capital flow in the economy is more free. So look at, they have reversed the restriction on MFI and NBFCs in terms of weights. They have reprioritized, restructured the PSL lending, and they are ensuring through OMOs that liquidity would be 1% surplus of the total deposits. So that's very clear guidance. And with now wholesale inflation coming low, probably there is more rate cuts to follow. So that's a sweet spot. Entire bank Nifty is still 13, 14 times earnings, below 2 times price to book. Makes it a reasonable case. Domestic consumption names, I think there's a very early sign of rural consumption coming back. And I think that's very good news with monsoon surplus, better harvest expected. I've been taking some channel checks and feedbacks. So two-wheelers, basic food-based NBFCs should possibly start doing better, because that's another pocket which has been very subdued. And NBFCs. Look at Bajaj Finance. Nobody is very willing to touch it at $6,000. Right. So I think the importance here is that look at sectors which are under-owned right now. Valuations are reasonable. Earnings can, positively help. And that's the place to be in. Right.
All right. We take that point. Rural is something that you're speaking about in terms of showing signs of recovery. Gurmeet, we're seeing an up move on Dabur that we spoke about, but also keep an eye on a couple of these urban consumption names, especially, in the alcohol space. We have United Spirits, which is continuously doing well. Pull up United Breweries. That stock is just less than 10% away from a fresh high. It's, been a big mover. Summer typically good for them. More importantly, the Telangana issues that they have been sorted for the company as well. They've gotten a price hike. And at the same time, the fourth quarter will be a strong one for them itself. We're also seeing some traction come by in a couple of these travel names. So pull up yatra.com. That's the one which is up around 6%. So urban discretionary, rural names, and some of the consumption names picking some pace as well. As we speak, we also welcome along with Gurmeet, Prashant on the show. Prashant, I believe you had run out for some meeting, but what a meeting that would have been. 500 points on the Nifty in your absence. Nearly 1,400 points on the Nifty Bank.
I want to meet a couple of lawyers, Mangalam. So they were chillaxed. They were relaxed.
All well, man.
No, not for me. But this is a good-looking screen, isn't it? 500 points nearly, and 23,320. So actually, just look at that chart. We gapped up, and that gap up is sustaining, almost plateauing out at this 500 point plus 500 point kind of gain at this stage. Gurmeet, did you? By the way, I remember you talking about specific auto names maybe a couple of interactions back. You want to name some names which are looking particularly interesting?
So Prashant, I think one reason for auto relatively underperforming was this tariff thing. And, we have a lot of clients who are into forgings and tooling and applications in terms of the wealth part of our business. And some of them are both listed and unlisted space. So our interaction with them suggests that India is not uniquely disadvantaged because it's all, it's for everyone. And some of the Asian peers, it's higher. But the supply chains are readjusting. So it will take a little more time, and the global demand, especially Europe, has been very, very soft. So companies with a lot of Europe exposure, overseas exposure, are the ones where probably the earnings could be soft. companies where the exposure is less, so for example, domestic on two-wheeler front, I think TVS remains one of our better picks. In auto, I think Uno Minda's exposure is around 20% to US and other markets. A lot of it is domestic. Two-wheeler and four-wheeler mix is also 60-40, continuously adding new facilities there. So stocks, obviously today, auto entire pack is doing well, but it will take a little time. What is probably going to do better is the tractor makers like M&M and some of the value chain there. And more, as I said, I was telling Mangalam on the rural consumption side, some of the food-based FMCGs, some of the other larger, some of the chemical names. That's again one sector, agrochemical, completely under-owned. So we are looking at pockets under-owned, valuations being low. Some uptick can lead to a positive surprise, and that could probably help us. So margin of safety is extremely important as we enter the earnings season.
All right, and just before we take a break and take your leave, what on the property space, because we have all these real estate stocks, wherever they are, North or Bangalore, Mumbai, all of them buzzing around. You spoke about earlier in the conversation about RBI, not only cutting the rates but changing the stance to accommodative as well. Usually rate sensitives bounce back. The realty index is up around 5% right now, but look at individual stocks. We have macro tech developers up around 7.5%. DLF itself has seen a big traction, up around 6%. Prestige estates. So this is basically covering Mumbai, Delhi, as well as Bangalore. So we have Prestige estates, which is up around 6% too. Oberoi Realty, another one, which is up 5%. So the real estate space is abuzz. Do you think there are opportunities here even after the up move that we've seen?
I have my doubts, Mangalam. Selectively, maybe in few pockets, yes, because what we are seeing is that most of the launches were in the mid-premium and higher luxury segment. And because of the rub-off on equity and a bit of a larger slowdown, we are seeing the second and third checks aren't coming as freely, even for some of the larger names, including DLF. So there's a bit of a rub-off with, you can call it a negative wealth effect. And a lot of these investors, they were investors. They were not really end consumers. So for example, NCR, the launches were upwards of 8 crores. Places like Noida had launches starting at 6 crores, 8 crores. So I think there could be a little bit subduedness on account of that. But I'm bullish on home finance as a space. I think that's one pocket. So whether those are NBFCs like Home First or partially playing it through some of the banks or PNB Housing, I think to me that's a better play. And home improvement again is very under-owned because of last 3 years underperformance in tiles, paints, etc. So we are looking at more under ownership and something which is completely out of favor where earnings can be slightly better.
I don't know if there's any news flow in IndusInd Bank, but everything gapped up today. IndusInd Bank did not gap up. IndusInd Bank opened at about 705, and the previous close was 10 rupees below. So about 1% higher, and now it's up 6.5%. So 45 rupees on IndusInd Bank, and bulk of that move has happened through the course of the day. So the highest today has been made at about 740 odd rupees at about 11:30ish or so, and we're trading not very far away from it. So that's another big one. Gurmeet, thank you very much for joining us. Good speaking with you. And it's always a pleasure. We'll take a break. Aditya Sood from Intred Asset Management on the other side. A more market conversation in just a bit.
Go back to 1989, which is when you actually started your project, your passion, which was how do you take Priya and make it a modern cinema-going experience for the Indian consumer. Same time as the iconic Amir Khan movie Qayamat Se Qayamat Tak, which was set to capture the imagination of the Indian moviegoer. Was Papa Kehte Hain the anthem playing in your head at that point in time?
Well, Papa Kehte to the in my case as well. But I was really never thinking of the Indian consumer or the macro economics of the business or the vast potential. Simply speaking, I just want to prove to my father that I'm not a failure.
We're starting at a new financial year. Is there a silver lining that you can spot?
Sid Field is one of the writers I read a lot. So he used to always say, in every story in life, or there's Act 1, Act 2 and Act 3.
Where are we today?
Act 1 is a setup. Act 2 is a conflict. And Act 3 is a resolution. My Act 2 has become very long.
Do you believe that there are likely to be regulatory headwinds?
Regulation should not happen at all. It is not part of an Essential Commodity Act. We don't come into that. So every time there is something that we hear from any state government, that's the only thing that saves us.
अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Okay, welcome back. There are some flashes at the bottom of the screen, and trade liberalization will look into bilateral sort of agreement. First part of the India-US trade agreement expected to be finalized by September, October 2025. Some stuff coming through. So removal of tariff and non-tariff barriers on both sides. So these are flashes coming in from the Commerce Ministry. Really, I mean, it's going to be about headline watching. But now, as has been said earlier as well, this is a third quarter CY25 story in terms of by the time something of this sort comes together. An agreement, a bilateral trade agreement. Aditya Sood is with us, a fund manager at Intrade Asset Management. Aditya, good afternoon. Good to have you here. So, you know, it's always interesting speaking with you because you come up with ideas and you back them up with, you know, what you're feeling about specific stuff. And we've spoken about many in the past interactions. To your mind, given this entire tariff tussle which has been going on, are there any clear kind of winners, long drawn out, but maybe valuations right now are completely discounting the potential? Anything out there?
Yes, obviously, if you have such a big disruption happening in the world, it is logical to expect that, once you have clarity, there are going to be big winners, big trends will emerge. So our view is that, obviously, for people like us who believe in doing value investing and embracing volatility, these are times wherein you can construct, very interesting portfolios from a 3-5 year perspective. And obviously, this is one of those times wherein a reset of world order is happening. I think so. What we see today is that, what does Trump 2.0 want is lower yields in the US. Obviously, that to a certain extent, is very, very clear. It is amply clear because of refinancing, lower crude oil to snap the war between Russia and Ukraine. Obviously, it benefits India. And more importantly, this is the first, crisis for a longest period of time. Even if you go back to long-term capital management collapse, you have seen softening of the dollar, which is clearly very, very positive. And that creates, enough room for the Reserve Bank to, cut rates fairly aggressively. And this is what would differentiate, a lot of emerging market central banks, because they are in a much, much better fiscal consolidation space, and that is what we believe. So the early trends which are, sort of emerging based on these sort of macro change in macro that we are witnessing, what we are trying to understand is that, wherever there is the gap between capability and, vis-a-vis, competition in China. And secondly, obviously, cost of production, you have got a real chance wherein, in India can compete globally. So we are just trying to see wherein, globally competitive companies who have been exporters for the longest period of time, obviously, they are going to benefit immensely out of the new trends which are emerging.
All right. Hi, Aditya. Good afternoon. Good to see you in. Nigel on this side. I'm looking at some of the holdings that you have, and we've spoken a lot of them in the past, be it the healthcare companies like Newland, Indraplast, that one we spoke about. We've spoken about Healthcare Global as well in the past. But I'm just looking at the financial space, and there's a, the not talked about stock, that's Arman Financial Services, which is up more than 25% in the last 1 month or so. Want to give us a couple of tidbits on this one? Why are you all positive on it?
Sure. So one of our beliefs is that, that you can buy the best companies when, the sector is completely out of flavor. I think so. The most hated sector in the market today is MFI. In the previous cycle, closer to COVID, we took this view that, Credit Access, Grameen possibly is the best managed MFI. It continues to be one of the better managed MFIs in this country. And obviously, it is about, cross-cycle NPA recovery experience. So if you look at Arman in particular, it is a 32-year-old company. This is the first quarter wherein possibly, they have reported a loss. Even if you go back to the COVID year, they had managed asset quality reasonably well. If you look at their track record, it has been impeccable. 10 years back, the equity capital for this company used to be 6 crores, which is close to 10 crores today. Reserves have shot up from 37 crores to 850 crores. I think so. They are one of the better managed MFIs. It used to be a very, very Gujarat-focused MFI till 2017-18. Then they, moved out of Gujarat. Today, they are present in, close to 18 odd states in the country. And we believe that Arman is one of the better ones in terms of, managing asset quality. So we are seeing, one of the themes that we are very, very focused today on is to buy companies wherein multiples have been cut, earnings growth has been cut, and promoters are buying. It is a very, very interesting combination if you are managing money in a flat or a bear market. And this is where I think so Arman completely stands out. They are having ample liquidity. They are not as levered as their MFI peers. Obviously, we have got some of the larger MFIs like Fusion or Spandana, which obviously are much more levered. But I think so Arman will clearly stand out in terms of asset quality performance. And that is what matters in this business.
All right, we take that point. You said that, it's a good time to buy good companies when they are in the sectors were facing a tough time. I remember sometime in the past we've had a conversation where you were positive on IT stocks, citing valuations being comfortable. Almost 6-7 months down the line, we've only seen further destruction in those valuations and the market cap, increasing uncertainty on account of what's taking place in the globe right now as well. Do you still see this as a pocket which is attractive? Are there signs of any turnaround right now? If yes, then what specifically are you backing in the IT space?
So I think so. Valuations clearly are, closer to, what we have seen. If you do a 10-year average multiple, IT companies have been battered so much that possibly they are trading, somewhere closer to that. Actually, with the top 5 IT companies, the real problem seems to be growth, to our mind. Dollar revenue growth trajectory of 2.5% to 3%. That sector got massively re-rated post-COVID, in the hope of, obviously IT spends picking up. We are seeing the reverse happening at this point in time, at this juncture, wherein, people are too much concerned about IT companies not doing well. Obviously, historically, IT has been a defensive sector. Today, I think so there are two things which are happening. One is disruption on account of, AI, which is happening all through the world, basically, and that is impacting the IT companies. But we like mid-cap IT as a space. To be very, very specific, we have favored product companies here like Intellect Design Arena or Oracle that we have held in the past. So we have created within the IT basket, we like mid-cap IT. Within mid-cap IT, we like, companies which are more focused on the product side, because we believe that there is going to be 1 or 2 IT product companies, which will make it very, very big over the next decade or so. Services was a thing of the past. So we are very, very positive on the prospects of Intellect, for example, because we believe that you have a real champion in the making if you purely focus on capability. Obviously, they have been not in a position to, crack US till now, but we do believe that this is going to be a very, very critical year for them. For this quarter particularly, I think so they would have the highest growth quarter, possibly, margins are going to also improve. And specifically to Intellect, I think so the balance sheet is improving because they got out of the GEM contract, and that was putting some strain on working capital as well.
All right, Aditya, we'll leave it there. Thank you very much for your time. Good speaking with you. And it's always a good conversation. Well, time for our segment, D Street Chatter. Nimish will get us all the intel from the market and people that he's been speaking with. Nimish, what are you picking up?
Hi, Prashant. So good day for the markets. Is just holding on to the early morning gap up, and all the indices are up 2%. The good part is today's rally is led by the financial. So the bank Nifty is up to more than 2.5%, but there is a lot of buzz or a lot of flows as well into large cap bank names. So that's clearly the sector of the day. And there is a bit of tailwind as well, right? I mean, there is rate cut, there is easy liquidity, and also the fact that HDFC Bank and a couple of other banks have gone ahead and cut the deposit rate. So that's the reason why you've seen a bit of momentum back in the financial stocks today. From a flow perspective, again, it's a mixed day, not very large buying or very large selling. It's little biased towards buy flows. And within that, the real estate stocks and some banks, some autos are well bid. So that's one sector which is getting well bid by the institutions today. 23,300 is the level to watch as a near-term resistance. Beyond that, I guess the next level to watch on the upside will be 23,800 on a technical basis. So that's the level to watch. But clearly, the momentum seems to be with the bulls now, and leadership is back with the financial stocks.
Right. And individual stocks, what is it that you're picking up, Nimish?
Well, Mangalam, there is a lot of buzz in the market today, and that generally happens when there is a lot of momentum in broader market names. The first stock on my list today is 361 Wealth, which is erstwhile IFL Wealth. That's been buzzing in trade. The volumes on the higher side. Looks like the HN interest is back. And also there is a strong buzz that maybe you'll hear a corporate development very soon, a potential stake sale to a global wealth company. That's the buzz as far as 360 Wealth is concerned. So that's the first stock. The second stock is IndusInd Bank. Out of the blue, that stock is buzzing in trade. The volumes are on the higher side. I understand some HNIs are again actively buying into IndusInd Bank at these levels. But also for IndusInd Bank, the very near-term trigger would be the auditor's report. That is potentially likely to come this week. So that's something to track there. The third stock is Samudra Motherson. Sud spoke about the tariff impact and it's been buzzing with the auto names. But within the auto stocks, Samudra stands out in terms of very high delivery-based buying. And also there was a Morgan Stanley tactical buy today, so that's helping Motherson Sumi today. And the last stock is JSW Infra. Well, the stock is up today, but I understand there is delivery-based selling happening for the last couple of days, and that stands for today as well. So while the stock is up, there is this upside has been used by some larger institutions to sell into this rally in JSW Infra.
Okay, all right, Nimesh, and congratulations. You gave us a heads up about IDFC first as well as Adani. Both of them were looking to raise some money, and that announcement has come. They have the board meeting that's scheduled in the next few days. So good on you, Nimesh. Another one to the kitty.
Nigel, if I can just, this 361, the one that you highlighted, Nimesh, stake sale, right? What is what you're picking up? I mean,
that's the buzz that maybe a large global MNC,
a strategic one, a financial one,
a strategic one, an MNC, a global MNC player is likely to buy a reasonably, I wouldn't say substantial because that would trigger an open offer, but a sizable stake is what I understand that a global wealth company is likely to buy into 361.
Oh, wow. We've been hearing for a while global wealth companies wanting a foothold in India. I mean, they have been operating, but of course, they've been small. I mean, it's the local guys who've really done very, very well. The cities, the UBSs of the world have been here around for a while, but without making too much of a dent. But maybe now is the time. Strategic and a global MNC wealth player is what Nimesh is pointing out. That's 361. Thanks very much, Nimesh, for that. At the bottom of the screen, news that the IMD forecast is coming through. I think we got the SkyMet forecast earlier for a normal monsoon.
Yes. Yeah.
And I think now this is, of course, the official one. They're forecasting a above normal monsoon for 2025.
And, the minute they said that, just look at some of these rural-facing companies as well. Most notably, we were talking about how Hero MotoCorp has been doing well. You have, Bajaj Auto, which has been spiking as well from a two-wheeler standpoint. Dabur had been outperforming all through today's trading session, and now we understand why. So this is a positive out here. Alongside that, as we speak, we have, Britannia, which has moved higher as well. It will be very interesting to see how names like HUL as well as, Imami take this, because from a percentage standpoint, around 35 to 40% of HUL's revenue does come in from rural India. But on an absolute number, HUL is the biggest player in rural India itself. Imami and Dabur, both of them, get about 50-55% of their revenues from rural India. Rural has shown signs of gradual improvement. It is only urban which is under a wee bit of pressure. Whether that improves or not is something we'll track in this quarter's results. But the fact that in this year itself, there is an above normal monsoon prediction after a normal monsoon that took place last year as well, 2 consecutive years, should do extremely well for rural demand. And we're seeing some of these staples pick up. Britannia has moved higher. Dabur has moved higher as well. We take a short break, come back, get you more on the markets after this break, tell you what you could buy today or sell tomorrow, calls from Mitesh coming back. And we also get you more market opinion after this short break.
if you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Investing.
Well, we asked Mitesh for some of his stock picks. He did refer to Poonawalla Finance. That's the one which has now moved to the high point of trade. An order win coming in for, Ircon has also taken that stock higher. But we have Irida, which has moved higher alongside that. Intellect Design Arena, which, Aditya spoke about too, is another stock which is higher in mid-teens. Container Corp, despite missing its full-year volume guidance and after having underperformed a bit, is now coming back on people's radars. That stock has moved to the high point of trade as well. We promised you that we'll get you some interesting insights coming in on the markets. Manish Chokhani is who we spoke with this morning. Prashant spoke with him. He did touch upon a range of subjects, including Trump's tariffs, the global financial markets, gold prices, but more importantly, the state of the Indian market. Let's hear him out.
Decades of US benevolence, looking after the whole world and therefore suffering the problems of the world, paying for other people's wars, becoming a home market for others with probably among the lowest tariffs in the world. And then over the last 15 years, they printed money like crazy to come out of whatever crisis they had. Their only weapon was printing the dollar. What that's resulted in is a completely warped current account, a completely warped fiscal deficit, and a decline of really American, power in the world, in military terms and so on as well. And there's been this debate for 10 years now that is the US dollar about to lose its supremacy? And everyone's been kind of pegging away at the margin to see what the alternatives can be. So what he's coming to do, I think objectively someone needed to do it. And it's high time someone got after what they're trying to do to fix the fisc, solve the debt problem, get after current account and so on. And it's very clear China and US are now the new adversaries. And the world may be heading into a all-out war at some point. Now, what form and shape this takes, it's not like the old days where you send tanks and millions of people into battle, but maybe this is the new form of warfare to keep the other guy suppressed and down. And the US has actually led this benevolence towards China after they brought them into the WTO and basically just abdicated their entire manufacturing prowess to them. And it's to China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world. I would say already equal, if not ahead of US already. So it's high time someone did this. From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that the first 4 deals we sign are with allies. And he used the word, we didn't, which was UK, Japan, Korea, and India. I was very intrigued to hear that because they've always said we want to bring things onshore. We want to bring things near shore, which is Mexico and others. And then we want people which are friendshore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they're laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. Look, the US has 30% holding of treasuries by foreign governments. And with unfortunately the way they have gone and kind of rubbed all governments of the world the wrong way, do you think 30% of all the refinancing which is coming up over the next 12, 15 months is going to be attractive to foreigners to come in? At 4.5%, maybe you'll be tempted, but then you'll think, what if this guy confiscates my holding of treasuries? Because they've done that to other countries, which is why you've seen not just the bond yields here, but the flight of capital away this time. Number one has been gold, but it's also gone to euro. The Swiss franc is 1.2 to the dollar or thereabouts, which the Swiss central bank, I remember, was trying to hold it within parity for the longest time. The euro, which is actually, you know, we used to call them the sick man, and Larry Summers had this thing of Europe being the museum of the world. The euro is strengthening because that capital is going back, because they've clearly rubbed the Europeans also the wrong way. So I don't see an alternative for the US government, whenever this refinancing now starts coming up, to go back to anything other than printing. And that's the reason for what you're seeing is happening to gold, and why we think there is endemic inflation in hard assets. So when we talk about markets, the normal trend has been US weakens, money goes to emerging markets and hard assets. What Trump is doing is only accelerating a lot of these trends, which he also does want a slightly more competitive dollar. But if you get this rise in gold, silver, uranium, copper, whatever at one end, and real assets like factories and real estate, it's a decadal move. It's not a 2-month, 3-month kind of move. And I think you'll see substantially higher gold and silver prices.
All right, with that, we'll take a short break. On the other side, more market talk lined up for you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show.
Welcome back. It's Tuesday, so we get Jay Bala of CashSecures.com who joins us on the show. Hi, Jay. How are you feeling today? The markets are bullish, but are you feeling the same? We are holding around this 23,350 odd mark. I think the crucial level you're looking at is around 23,800. Tell us your reading with regard to that level.
That's right, Nigel. See, as I spoken last week, the damage to the market has already been done by Reliance Metals Index, autos, and one more sector. I don't recall exactly, but the markets that went below the March low, that's the auto index. Yeah, so auto index which went below the March lows, they've already saying this move, even if it were to cross 23,800 on the Nifty, this is likely to be a corrective move. I'm waiting for the markets to once again turn turn lower and signal that it's starting the next leg down. But from a slightly higher time frame, like I pointed out last week, I want the next low to be higher than 21,608 for me to turn outright bullish on the medium term. So the pattern looks like possibly this is a bull trap, but there is no tradable setup here. So stay on the sidelines. And the more important thing is I want to see HDFC Bank clock fresh all-time high. If it does that, that will be completing a major top from the pandemic low. So I want HDFC Bank to cross 1880 and then see a reversal. So that this will probably put the banking index to resist 52,600 to 59,800, that range. So, watching HDFC Bank like a hawk, I think it's completing a very important move. I had put out a note in December and even called this a short-term short call in December. It came to 1620 and change. I was anticipating 1580. And it's now coming up to one of the possible opportunities. So let's HDFC Bank clock fresh record highs. If it does that, I think we are in for a major turn.
All right. We saw 1876.8 as today's high on HDFC Bank. Your target or the level that you're looking at is 1880. We'll watch out for that. You're calling this a bull trap. You also call it not tradable. But if one had to, play this via individual stocks, what would be the longs and what would be the shorts that you would recommend at current levels?
Yeah, see, capital goods is something very interesting. And from the July low, it's the one sector I'm unable to pinpoint as a very clear downtrend. So capital and chemical sector, I pointed out a few times, and SRF being the best within that space. So these two are, we can prospect bullish opportunities within the space. But I want capital goods to, the BSE Capital Goods Index to not print 58,662, even on an intraday basis, and then cross 63,812. If it does that, I think it's presenting a very good bullish opportunity for the bulls, but still some more minor fluctuations in the short term remains incomplete.
Got that. By the way, any thoughts on Jai, hi, afternoon, gold prices? I mean, I know you've got, and of course, run us through some of the other stuff that you have views on oil, Brent, for example, copper. I think big moves since the last time we spoke.
Yeah, that's right. See, gold, the froth is building up over there, and as long as gold can hold 2970 on futures, I think it's okay. It still can be a trailing stop for people who are long. But sentiment is hugely one-sided in gold, and I'm anticipating once the decline starts, I think gold will surprise a lot of people to the downside. And when it comes to copper, like we didn't have enough time last week. Copper generally has a tendency to clock a significant top after the equity markets clock the top. It did like that in 2000, 2008, even in 2011, the secondary top. And it's probably doing right now in 2025. So copper is, as I pointed out last week, copper gets its doctor degree because of its ability to spot its bottom early, but not the top. It's generally late at the top. And when it comes to the NYMEX crude, or even Brent crude, I'm anticipating volatility to come through. I'm anticipating Brent to bounce to somewhere close to 70s and then come back to one more lower low. And when it comes to US 10-year yields, I think we are in for a significant hardening of the yields. I'm anticipating 480 bips to get crossed. So probably that can cause some problems to the equity markets.
That won't be good news at all. Actually, Trump's plan was going perfect until the yields were cooling off. The problem was once they jumped, then that entire equation went out of the window. Well, Jay, I request you to stay with us. We want to hear more about your calls on markets forward. For the time being, let's do a quick recap. Good trading session. Second day running, the Nifty goes home at the high point of the day. What really did well in today's trading session was the Nifty Bank was up close to around 2.8% or thereabouts. The Midcap index as well was up close to around 3%. The advanced decline ratio firmly in favor of the number of stocks that are advancing. You like to look at that screen. 2,300 stocks advancing. The final tick at the high point of the day, Coromandel, that's a stock that we pointed out. It could be a potential MSCI inclusion once the rejig announcement comes in the middle of May. That went home with a gain of close to around 7.5%. Sun TV as well up 4.5%. Abbott up close to around 5%. Poonawalla Finance up close to around 4.5%. On the downside, Atul Limited was underperforming, down close to around 2%, and Max Health as well was down close to around 1.5%. From the front of the day really was those ones that got hit very, very hard in the last few trading sessions. Metal index speeding away in today's trading session, and the auto index as well, revving up the engine in trade today. President Trump, a bit of a soft statement coming out of there. The street liked it. But I'll tell you what, we'll wrap up on this edition of Closing Bell. You don't go anywhere though. Markets Forward is waiting for you on the other side.
And entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Well, anything that has relative strength and anything that did not make new lows last week is something which is on top of our list in terms of longs. And I think on top of that list is financial services. I mean, if you look at the Bank Nifty, today it is at levels of 52,000, which I think is an important resistance. And once this is taken out, I think it might be the first index after financial services to actually make new lifetime highs. So I remain bullish on the Bank Nifty, and I think there are immense opportunities.
A good start for D Street after a market holiday. The Nifty reclaims the 23,300 levels while the Sensex ends around the 76,700 points. The broader markets end in the green while the volatility index slips close to around 20%. Realty, auto and financials, they charge ahead while FMCG lags in trade.
Days after the RBI cut repo rate by 25 basis points and signaled a shift to an accommodative stance, top banks, HDFC Bank as well as Axis Bank have cut rates on savings deposits. The move props up bank stocks.
And in stocks in news, yet stocks of macrotech developers surge after the Lodha brothers amicably settle a trademark dispute after a 3-month-long battle. GMR Power also surges in trade after it offloads stake in non-operating and stressed assets to reduce debt. Hello and welcome to Markets Forward, your go-to show. We'll get you up to speed with regard to today's trading action and set you up for tomorrow as well. I'm Nigel, and joining me today is Vinny. Hey Vinny, a rather good trading session.
Absolutely, Nigel. A very good trading session. And that's what we'll talk about in the next 20 minutes as well, right? Take you all through what has happened through the day as well in terms of key events to watch out for, key developments on the D Street as well, and events to track. But Nigel, kicking off with the markets, right? An interesting day, continued momentum that we saw.
Well, it was a beautiful trading session. And I'll say that because in Friday's trading session as well, I made this point, it's not where we start. It's where we're going to end. Even today, we were opening up to a gap up and we ended at the high point of the day. So the intraday chart of the market should come up for you. The Nifty's last tick actually was at the day's high. The bulls will like it. Not only gapping up, but ending as well at the high point of the day. Now, important to note that the Nifty actually has made up any kind of losses that we saw post Trump's tariff announcement, because we saw a correction towards the 21,700 odd mark, and now we've recovered all of those losses. So good looking screen. India has started outperforming the globe. That's the key point for me. The Nifty Bank, that's been bursting ahead. It's conquered all technical levels, 20, 50, 100, 200. And in today's trading session, it hits the highest level that we've seen in the last four months or so. So the Nifty Bank seems to be getting its mojo bank. Valuations as well out there, pretty okay. And a lot of interest back in those names. The advanced decline ratio, well, that should come up for you on the screen. You have 2,300 stocks that were advancing. The ratio was close to around 10:1, and that's where your portfolio will be feeling very good. And just one more data point, Vinny. On days when the markets were sliding, we had sometimes 400-500 stock that the door was closed, there was no exit. In today's trading session, close to around 450 stocks on the BSE were at upper circuit. That means that there were pending buy orders. Well, what a way the markets turn around, right? Sentiment seems to be back, interest is back, and that's always a good sign.
Absolutely, always a good sign. And that's seen like advance decline ratio is so favorable as well in terms of the advances. And that's why the mid and small cap, we saw that outperformance coming in for the Nifty mid as well as a small cap, both holding on to gains of almost 2-3% in today's trading session that we saw. Other than that, when you're looking at it in terms of the top sector move, we have the Nifty Realty as well as Auto. Auto, obviously, after those comments that came in from Trump overnight and over the weekend, is something that is keeping these auto stocks abuzz as well. Now, FMCG, yes, ended on the positive side, 0.2% of gain more than that we saw for the Nifty FMCG. But versus the other sectors, it was a bit of an underperformer. ITC, HUL, a bit of a lag coming in from these top names from FMCG side. But yes, that's what we're watching out for in terms of the market. Will be interesting to see where it goes from here on as well. But well, here's the lineup for you all that we have in store for you today. We'll start with the top movers and shakers of the day with Vivek. And well, the stock of the day were HDFC Bank, GMR Power, as well as Macrotech Developers. We'll give you key reasons of why these stocks were buzzing in today's trading session. And last but not the least, we'll look at the key events to watch out for in tomorrow's trading session as well. On that note, let's get started. And for the first segment for the day, Vivek is joining in with us from the big wall to tell us which are the important stocks in terms of the movers and shakers, what's happened for the day as well. Vivek.
Thank you so much for that. What a wonderful trading session. The advanced decline ratio, the broader end of the market is very, very strong. Absolutely nothing to complain about for the bulls today. What led the markets higher? Rate sensitive. So banking pack, all of the banking stocks today doing very well in the session. HDFC Bank, news flow coming in there, positive news flow, up 3.5% higher. IndusInd Bank, 6.5% higher. And along with that, the whole host of private banks, IDFC First Bank, news of preferential fundraise via preferential allotment, that particular stock too doing quite well. The entire auto pack, auto ancillaries, tire stocks, the entire pack moved higher today. Samvardhana Motherson, one of the top gainers in case no tariff does come through. That stock higher by 8%. Bharat Forge a 7% move today. Some of the tire stocks doing very well like Balkrishna and MRF, and Ashok Leyland also topping off the list there with a 3% gain. What also did well, the entire realty pack, a very, very strong bounce back. Macrotech Developers low down on the back of the positive news flow of both of the brothers coming to an agreement. That stock are higher by 8%. But the other realty stocks weren't left behind. So names like Anantraj, DLF Prestige, all of these stocks doing very well in the session. Now, moving to the broader end of the markets, if you look at the NSE 500, Sai Life Sciences, that particular stock doing very well in the session today. And Mazgaon Dock, again, this particular stock was one of the stocks that actually saw very, very strong volumes, and it ended as the top mid-cap gainer. On the other hand, very few negative stocks, but one of the stocks on the back of regulatory concerns, Allied Blenders ended low by 3%. Saw a bit of a recovery, clarification coming in from the management towards the end of the trading session. Bit of a bounce back, but ended 3% lower. And Aster DM Healthcare, the NSE 500 top laggard, and that particular stock ended lower by 2% today.
Okay, all right. Thanks a lot for that, Vivek. Well, those are all the top movers in trade today. But let's get in our guest. We have Jay Bala of CashSecures.com who joins us, and Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, who joins us. Hi, gentlemen. Thanks a lot for joining in. Jay, you go first. Good recovery. We are thumping the table. The bulls are feeling good. Are you feeling as good, or do you believe that this market is providing you very good shorting opportunities? Because that's been your stance for the last few weeks or so. The Nifty and the Nifty Bank, what are the levels you're looking at?
Yeah, there is no fixed ceiling for Nifty at the moment, Nigel. So that's the reason why it's not presenting a good shorting opportunity. Probably it needs to fix the boundaries and show that it's resisting a particular level. The fact that markets went below the March lows in April, that's a lower low signal. And the bounce right now is looking corrective for the markets. So I'm waiting for the markets to define its boundaries so that it can present a negative opportunity, but it's not yet. Probably, the boundaries aren't quite clear. So 23,870 is the nearest resistance I can see for the market. I don't know if it's going to get a lower low below that and then try to clock a low below 21,743. So I'm watching out for that. But what is interesting is in the banking space, HDFC Bank is probably trying to complete a major pattern from the pandemic low. If it can cross 1880 record highs and then little past that and reverse, that will probably give a negative trigger for the banking sector. And HDFC Bank, by its weight, can give a negative trigger for the overall market too. And even the US markets, from the recent bounce of last Monday, from an intraday perspective, which gives an early indication, it's showing that this is probably just a corrective bounce within a bear market rally.
Okay, let's move on. And the shares of top automakers inched higher in today's trading session. And this came in after US President Donald Trump expressed willingness to support the automotive sector. Sudarshan is joining in with us to give us details on this one. Sudarshan.
So it was a good day of trade for majority of the auto companies. While the entire market was up, the auto sector was one of the biggest outperformers, and especially names like Samvardhana Motherson, Sona, BMW, both these names were up 8% each. Also, we have seen healthy gains in the names of Tata Motors, Bharat Forge and other auto stocks. Now, this came on the back of the latest announcement related to tariff by US President Donald Trump. He said that he's looking at modifying the tariff announcement that was made, the 25% tariff on foreign-made auto companies, especially autos and auto parts. Now he has mentioned that this would be done for the imports from Mexico and Canada. That was the reason we saw a big move in Samvardhana Motherson and Sona BMW. For Samvardhana Motherson, Mexico forms nearly 4% to its total revenue, and for Sona BMW, Mexico's contribution is in the range of 2 to 3%. But why is it so positive? Now, if you look at the Mexico-produced vehicles, contribute in the range of 30 to 60% to US companies. For example, companies like for GM, General Motors and Toyota, the contribution is in the range of 30 to 40%. For Volkswagen, the contribution rises to almost 60%. And Samvardhana Motherson is one of the biggest suppliers to these names. Now, why did we see big gains in other auto companies too? Now, there is a big hope that this softening of the tariff stance will not be limited to the imports from Mexico and Canada. It can be extended to even other countries, and that was the reason stocks like Tata Motors also saw a big move of 5%.
Okay, surely keeping an eye out on these auto stocks. Thank you so much for that, Sudarshan. But Sudeep, coming to you, what are you looking at in terms of the auto pack? Any of the names that Sudarshan highlighted, are they interesting, or you would go with maybe just those names like Tata Motors, M&M? Is that on your list?
Well, Tata Motors, I'll be a little cautious because nothing has been announced as far as UK and China is concerned. I think UK continues to remain a large production base, and they do export into US out of UK. I mean, if and when there is exemption announced as far as UK is concerned, they may benefit, but this is in the realm of speculation. And knowing the way the policy making is happening in US, I will probably be a little cautious. If I have to look at one of the automobile companies in India today, I'll look at M&M. I think there are enough legs to support that. Of course, the SUV business is doing exceedingly well. They are leading as far as SUV sales are concerned. Also, the tractor business is expected to pick up. There has been a prediction of normal rain by SkyMet, a normal monsoon by SkyMet, and IMD has now predicted above normal monsoon. So I think this augurs well for M&M's tractors business. So I think at current level, I will look for M&M, not any other auto company for the time being.
Okay, all right, got that. Let's turn our attention to the biggest sector of the day, though. Banks were in focus today, and a couple of those names like HDFC Bank and Axis Bank, both of them were higher in trade. Lenders, remember, they trimmed their savings account interest rates. Abhishek joins us to break it down for us. Abhishek, take it away.
Well, in a declining interest rate scenario wherein the net interest margin of lenders can come under pressure, interesting move is being seen by lenders, that is they are cutting their saving deposit rates. So HDFC Bank, they have reduced saving deposit rate by 25 basis points. This is the first time that HDFC Bank has reduced saving deposit rate since June of 2020. So saving deposits below rupees 50 lakh will now get 2.75% versus earlier that they used to get about 3%, and more than 50 lakh will get now 3.25% versus earlier rate of 3.5%. So SBI still gives the lowest saving deposit interest rate in India at about 2.7%. Now Axis Bank has also revised its saving deposit rates on domestic NRO and NRE deposit that you have with them. So less than rupees 50 lakh, the new interest rate will be 2.75%. 50 lakh to less than rupees 2,000 crore will be about 3.25%. And rupees 2,000 crore and above to overnight MIBOR, that is about 7.2% plus 0.7%. So that could come to around 7.9%. Spoke to a few analysts. They said that the net interest margin positive impact could be anywhere between 5 basis points to as high as 8 basis points, depending on the bucket that they use more. Back to you.
Okay, Abhishek, thank you so much for that. Jay, let's talk about banks. Now, whether you are looking at private banks or PSU banks, what are you looking out for? And what I'm seeing is YTD performance. Private banks have done well, like Kotak, ICICI Bank, HDFC, Axis. All of them have seen very good gains, while in terms of the losers, you do have Canara Bank, which is more of the public side, SBI, which has not performed well. So what are you looking at right now in terms of the banking side?
For the banking sector, I think HDFC Bank is the bellwether. It sets the sentiment for the whole sector, be it private or public. If HDFC Bank were to do well, the whole sector will do well. If it were to catch a cold, I think the whole sector will underperform. And we've had a recent negative price action for IndusInd Bank. From that, it's looking like the private sector banks are right now, which are doing okay and in fact reasonably well. They could be the ones which could be causing the downdraft if what I'm anticipating is likely to come through. And PSU banks are, they still, if you take the SBI stock as the leader, even that's not signaling the bounce from the 670 odds levels for SBI. It doesn't look like a start of a new trend. Although it didn't clock new lows, but there are certain price parameters where what we watch for. That's saying that the recent move of the low from 670 odds to 780 plus and change, it's still a corrective bounce. So, both the private sector and public sector space are looking like they don't have too much headwinds, though too much upsides left, although the private sector banks are slightly outperforming. And I had pointed out I'm anticipating one final high to come through for ICICI Bank 3-4 weeks ago.
Okay, all right, Jay, got that. Well, let's focus on the broader market. GMR Power, well, that stock was bursting away in trade. It's divested a couple of their non-core assets to deleverage their balance sheet. Actually, Vivek is standing by to tell us exactly why that stock was a rocket today. Vivek?
Well, that's right. So GMR Power and Urban Infra, that particular stock, one group of stock from the GMR group, one that we don't discuss too often, but today higher by almost 13%. Remember, at the end of the March quarter, the company informed the exchanges that they had reached a one-time settlement with the lenders. And what is it that the company had announced to the exchanges? Number one, they're divesting stake in 3 non-operating and stressed assets. This is to a private equity firm called the Synergy. The total consideration of all of the stake transfers is worth close to 653 crores. So what are the 3 assets or 3 power assets that the company is divesting? First one is a 180 megawatt hydroelectric power project where the company is looking to divest close to 80% stake. The second is a 388 megawatt natural gas power plant, and the third is again a 768 megawatt natural gas based combined power plant, of which it will go ahead and divest close to 51% stake. Why is the company doing this? Well, the company says, number one, gas-based power plants of the company that they are divesting were unable to operate efficiently on account of non-availability of affordable natural gas. Number two, the transaction will help the company to meet the proposed one-time settlement with the lenders. The move will help delever the balance sheet by close to 4,400 crores, and along with that, all of the non-operational as well as stressed assets of the GMR group will move away. So overall, a positive development as far as GMR Power is concerned, and the stock one of the top gainers in the broader end of the markets today.
Absolutely, Vivek. Thank you so much for that. Saw strong gains in today's trading session. But another stock that was buzzing in trade today was Macrotech Developers. Now, why the stock jumped in trade? Other than the real estate pack obviously was buzzing, but Macrotech Developers had a specific reason as well. The Lodha brothers, that is Abhishek Lodha as well as Abhinandan Lodha, there was a dispute going on for the trademark of the word term, that is the brand Lodha and Lodha Group. Now that has been resolved, amicably resolved between both the brothers, and that overhang or one has an issue or worry that, where would this be heading? That has gone away from the stock. And that is why that we're seeing that Macrotech Developers was also buzzing in trade because of these issue being solved. Now, Macrotech Developers will have the trademark towards Lodha and Lodha Group, while Abhinandan Lodha will have the trademark for his house of Abhinandan Lodha. So yes, that's the issue that has been resolved, and that is why the stock was holding on to gains of 8%.
Okay,
Nigel.
all right. Any interest, Sudeep, in any of these two counters?
Well, I think, the real estate pack, Nigel, definitely looks good. We have been positive on real estate for quite some time, and we maintain our view. We believe that there is a secular, up cycle going on in the Indian real estate space. And probably we are in the middle of that run. So there is some way to go before that upside gets exhausted. If I have to buy one real estate stock, I'll go and buy DLF because, of the multiple positive factors, premiumization and the kind of land bank they hold in NCR. But even otherwise, whether it's an Oberoi Realty or Macrotech, as far as Bombay Developers are concerned, they do look good at current level if you have 1 year plus kind of a time horizon in mind.
Okay, Sudeep, thank you so much for that. But, Sudeep and Jay, thank you so much for joining in with us on the show. It's always a pleasure getting your insights. On that note, we're going to slip into a very short break. But after the break, we'll get you the key market events to watch out for in tomorrow's trading session.
सिचुएशन बहुत ही टेंस है, बहुत ही खराब है। अभी भी केंद्रीय वाहिनी को बहुत दिनों तक यहाँ पे रखने से ही कुछ अच्छा हो सकता है, इससे अच्छा नहीं तो अभी परिस्थिति ऐसा नहीं है कि केंद्रीय वाहिनी को यहाँ से हटाया जाए। तो मैं स्टेट गवर्नमेंट को, माननीय मुख्यमंत्री जी को अनुरोध करूंगा कि आप इनिशिएटिव लीजिए, आप केंद्र से बोलिए कि आप केंद्रीय वाहिनी यहाँ पे सीआरपीएफ तैनाती हो, और सीआरपीएफ जब तक
Welcome back. You're tuned into Markets Forward. And as we normally do, we tell you about today's trading action, but also we set you up for tomorrow. Vinny, tell us about the key events we need to track.
Interesting events that are coming in as well. From the global front, before I reach global earnings, which will interest you, I'll talk about the global events to watch out for. In the US, you're watching out for the industrial output as well as the retail sales data. Important to keep out on those data points in the US market. China, the GDP for Q1, that's what they'll be releasing tomorrow. So maybe we'll see the markets react to that as well. Industrial output in China, the housing data in China, as well as retail sales for the month of March are key to watch out for in China. UK, let's watch out for the CPI as well as the PPI data. And overall, the World Trade Organization is going to be publishing their annual global trade outlook and statistics. So given the current scenario, let's keep an eye out on any interesting data points that come in from that front as well. Now, other than that, global earnings, Alcoa will be reporting their numbers tomorrow. So this will be post-market hours for us, but still keep an eye out on Alcoa on the global front. And domestic, a lot of earnings that we have tomorrow, starting with the IT pack. We have Wipro that will be reporting their numbers, Angel One then, and Swaraj Engines, as well as Avari in Renewable Tech will also be reporting its Q4 earnings for FY25. And where these earnings are going to be headed, Nigel, is going to be important because it's been a bit of a subduedness that we've seen in the last few quarters in terms of numbers. Now it's going to be key if they deliver those.
Thanks a lot for that, Vinny. Well, before we wrap up on this edition of Markets Forward, we leave you with some key market commentary that we got in on the impact of Trump's tariffs on the global economy. Listen in, and we'll see you tomorrow.
One is that of price correction and the other is that of time correction. I think we ended the price correction last Monday at levels of 21,800 because I think the technical studies, the breadth, the sentiment, the news flow, everything came together to possibly indicate that it was a panic bottom. Thereafter, we've seen very good constructive action. I think the Nifty is up about 1,200, 1,300 points in no time. And I think we've entered a period of time correction. I think a lot of money which was on the sidelines is now at work because I think participants believe that most of the negatives are discounted. So that's the reason you are seeing this very good looking flamboyant rally. But I would not read too much into it. I think 23,400 and 23,800 are numbers to which the Nifty can move to. And broadly over the next 2.5 months, I think we are going to stay in a sort of a range. We will not make significant we will not see significant upside or significant downside. But between now and the end of the year, I think it's going to be a stock pickers market.
Decades of US benevolence, looking after the whole world and therefore suffering the problems of the world, paying for other people's wars, becoming a home market for others with probably among the lowest tariffs in the world. And then over the last 15 years, they printed money like crazy to come out of whatever crisis they had. Their only weapon was printing the dollar. What that's resulted in is a completely warped current account, a completely warped fiscal deficit, and a decline of really American, how shall I say, power in the world, in military terms and so on as well. And there's been this debate for 10 years now that is the US dollar about to lose its supremacy? And everyone's been kind of pegging away at the margin to see what the alternatives can be. So what he's coming to do, I think objectively, someone needed to do it. And it's high time someone got after what they're trying to do to fix the fisc, solve the debt problem, get after current account and so on. And it's very clear, China and US are now the new adversaries. And the world may be heading into a all-out war at some point. Now, what form and shape this takes, it's not like the old days where you send tanks and millions of people into battle, but maybe this is the new form of warfare to keep the other guy suppressed and down. And the US has actually led this benevolence towards China after they brought them into the WTO and basically just abdicated their entire manufacturing prowess to them. And it's to China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world. I would say already equal, if not ahead of US already. So it's high time someone did this. From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea, and India. I was very intrigued to hear that, because they've always said we want to bring things onshore, we want to bring things near shore, which is Mexico and others, and then we want people which are friendshore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that, in a sense, for them. So in that context, the way they're laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage.
स्वाभाविक ना हो तब तक पूरी ओज केंद्रीय वाहिनी यहाँ पे रहे।
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, is very simple. It's inversely proportional. The higher the tariff, the faster they come.
Do you have a percentage in mind and a timeline?
I have a timeline, yeah, not too distant future. We're doing it because we want to make our own drugs.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Global markets continue to reclaim lost ground. President Trump signals more tariff concessions after giving a breather to US tech companies. Stocks gain across Asia and Europe. The Sensex and the Nifty gained 2% thanks to strong global cues. Midcaps outperform. All sectoral indices close with gains. Shares of auto and component makers rally after President Trump hits at some tariff concessions, including a temporary pause. But Trump signals fresh tariffs on pharma and semiconductors as trade officials launch an investigation.
You see their meeting today? Is that wonderful? It's a lovely meeting. They're meeting like trying to figure out how do we screw the United States of America.
President Trump lashes out after China's President Xi Jinping makes a diplomatic outreach to neighboring countries after signing deals in Vietnam. Xi Jinping heads to Malaysia. Beijing orders Chinese airlines to stop taking deliveries of Boeing jets. India's trade deficit widens to more than $21 billion in March due to a sharp rise in imports. Commerce Ministry says India and the US have signed the terms of reference for a trade deal. The first tranche of an agreement is likely by September or October this year. India's weather department predicts an above normal monsoon for the year. The long period average of 105% is higher than the 103% estimate by private weather forecaster Skymet, which expects a normal monsoon.
India century, and I'm not backing off of that. I really do think this is the moment for India to lean forward.
The top brass at McKenzie bet big on India, say the tariff war presents an opportunity to build resilient supply chains, adds India's manufacturing is nowhere near its potential and remains an attractive proposition for global CEOs. That's an exclusive. Mark Zuckerberg takes the witness stand on the first day of a historic antitrust trial in Washington, defends Facebook's parent Meta from allegations of creating an illegal monopoly. The US authorities are seeking to unwind the acquisition of Instagram and WhatsApp. The US government freezes federal funding worth over $2.2 billion to Harvard University. This after the institution rejects a list of demands from the White House, including changes to its governance structure over alleged anti-Semitism concerns. Harvard president says the university will not surrender its independence or relinquish its constitutional rights. A special investigation team constituted by the Andhra Pradesh government has ordered the freezing of bank accounts of allied blenders. As per sources, the SIT is probing allegations of bribery during the previous Jagan Reddy government. Urban Company is set to cut the size of its proposed IPO by 80% due to recent market upheaval. Sources say the company will file papers with SEBI next month to raise 528 crore rupees. The issue will value the company at over $2.5 billion. Southern states top the annual rankings on the delivery of justice. India Justice Report puts Karnataka on top, followed by Andhra Pradesh, Telangana, Kerala and Tamil Nadu completing the top 5. Uttarakhand, UP and West Bengal rank at the bottom. Well, the big macro data of the month, retail inflation has eased in the month of March. Lata standing by now to take us through the inflation internals. Lata.
Oh, it's an excellent number, 3.34 compared to a CNBC poll of 3.6%. I mean, 3.34 is a distance below the mandate given to the Monetary Policy Committee, which is 4%. So now if you look at the Jan, Feb, March, the whole quarter itself, the average falls to, below 4%. So that clearly is, the average actually falls to 3.73. And that is, again, a good quarter percent below the RBI's mandate. For 3 months in a row, the average is standing lower. The market's enthusiasm would be that the Reserve Bank, clearly a June rate cut is given, but more importantly, they will perhaps now expect that the governor may even go for a 5.25 as the end rate of the cycle. Until now, everyone was expecting 2 more cuts and therefore the repo rate going to 5.5. Now the market will push for 5.25 because clearly for the full year, inflation is likely to remain well below the 4% mark. That's the indication from here. This 3.34 is quite a shocker, and that's been delivered primarily because of the fall in food prices to an average of 2.69. I mean, it's a number we have not seen in many years, perhaps in 2-3 years. We've had between 8 and 11% food inflation, so falling to 2.69 is a sight for sore eyes. I mean, it's an across-the-board fall in food prices, primarily, of course, in agriculture, in vegetables, but more so in, cereals, milk, eggs. Eggs have fallen considerably. It's a minus 3.16 year-on-year egg prices. We've also seen a sharp fall in vegetables, minus 7% year-on-year. Pulses, again, a very important component, weighty component in food CPI, minus 2.73. And finally, a big fall in spices as well at minus 4.9. So there's an across-the-board fall in prices. Weighty items like cereals, just about 5.93 below the 6% mark. So this is going to go down as an excellent number for the bond markets. The expectation, of course, now will be that the Reserve Bank will be ultra soft in this cycle of rate cutting. All told, a good reason for a rally in the bond markets.
All right, Lata, many thanks for joining us. That's the inflation picture looking good, so it should give comfort to both the RBI and the government. Stock markets regaining some lost ground across the world after President Trump's tariff flip-flop from Japan to UK. Stocks clawed back some gains after the recent brutal sell-off. Gains are largely on account of President Trump pausing the sweeping tariffs on mobile phones, computers and semiconductors that are largely manufactured in China. Now, Trump has also hinted at potentially pausing the tariffs on automobile makers and auto component makers. However, he did double down on imposing tariffs on pharmaceuticals and semiconductors. That's the global market picture for you across the board. Nikkei, the CAC, the Kospi and the Shanghai all green. Shanghai flat. US trade officials have launched a probe into pharma and semiconductor industries before taking a decision on potential tariff increases. So that is the latest there as far as the tariff war is concerned.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's inversely proportional. The higher the tariff, the faster they come. And yeah, we're going to be doing that. That's going to be like we have on cars. We have, as you know, a 25% tariff on cars. We have a 25% tariff on steel and aluminum. And that's what that category fits right now. I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places. And they need a little bit of time because they're going to make them here. But they need a little bit of time. So I'm talking about things like that.
Well, that's President Trump. And back home, Indian markets playing catch-up again after a trading holiday yesterday. The Sensex and the Nifty have gained over 2% in what has been a broad-based relief rally. Mid-caps and small caps did fare better than the blue chips. The Nifty closing 500 points higher. 1,500-point move up on the Sensex. Mid-caps up by about 1,400 points and 1,377-point jump there on the Nifty Bank. So what we have now seen is the markets regaining all the losses since President Trump's so-called Liberation Day, the day that tariffs were announced, which was the 2nd of April. Prashant is standing by now to wrap up the market action for us. Prashant, relief rally globally at this point in time, and India no exception. Is the mood changing in the market, or is it just now used to absorbing the measures announced by President Trump on tariffs and then the rollbacks?
A really strong day in response to 2 days of good days on Wall Street. So you were reacting to about 2.5% gains on the S&P, and the market did not disappoint. So about 2.5% on the Nifty and the Nifty Bank, but the mid and the small cap indices did even better with about 3% apiece there. The top sectoral gains came through in some of the most beaten down names. Real estate as an index was up almost 6%. Defense came up about 4.5%. You had the capital market index, which was up 4% today, led by stocks like 361. I'll get to stocks in just a bit. But you also had the auto index and the metal space, which continues its repair and recovery after what we saw last Friday. I'll go to the large cap pack. IndusInd Bank was a top gainer, started slow, but then picked up quite a bit of gains, about 7% higher by 3:30. Shriram Finance was up 5%. Tata Motors, L&T, Dr. Reddy's, Axis Bank and Adani Enterprises were up about 4%. About 8 names with gains about 4% plus. On the downside, not very much at all. I mean, the biggest loser was ITC with about 0.25% in terms of a cut that came through. So not very much. 10:1 advances to decline ratio, and that's the kind of move that we had. What was up in the broader space? Mazgaon Dock was up 10%, Data Patterns 12%, Sai Life was up 13%, Anantraj about 9%, Goldium after Friday's 20% move, another 16% today. You had Inox Green, DB Realty, Fino Payment Bank, and so many others which went up on solid volumes as far as today's session is concerned. Again, on the downside of the broader space, there was an Aster DM which was down 2%, Atul Limited and a Max Healthcare which were minor losers. Otherwise, a very, very good session in response to last 2 days of much better and stabler markets. Back to you.
Prashant, many thanks. Gold prices, meanwhile, continue to remain firm as uncertainty over the economic impact of President Trump's tariffs boosted the bullion safe haven appeal. Investment flows into Chinese gold exchange-traded funds so far this month have exceeded those for the whole of the first quarter. Crude prices edging higher after Trump suggested that he could offer automakers some relief from the 25% tariffs on imports of vehicles and auto parts. A rebound in China crude oil imports also supported prices. Meanwhile, cryptocurrencies rallied after Trump announced tariff exemptions for certain electronics, lifting market sentiment. Bitcoin prices hovering near the $86,000 per mark, while Ethereum prices have also seen a move up. China pulling all stops to win over its Southeast Asian allies in order to counter President Trump's tariff threats. Chinese President Xi Jinping headed to Malaysia from Vietnam. The Chinese government has signed dozens of cooperation agreements with communist-run Vietnam, including an enhancing supply chains. President Xi met Vietnam's top leader and called for stronger ties on artificial intelligence and the green economy. Reacting to their meeting, Trump said Xi was in Vietnam to figure out how to harm the U.S. The Chinese president will also visit Cambodia this week.
I don't blame China. I don't blame Vietnam. I see their meeting today. Is that wonderful? That's a lovely meeting. The meeting, like trying to figure out how do we screw the United States of America.
President Trump, and speaking of China, the country has reportedly ordered Chinese airlines to stop taking deliveries of Boeing jets amidst trade tensions with the U.S. Madhya is standing by now with more. Madhya, what could this mean for China's aviation industry? What could it mean for Boeing?
Well, to understand whether a pause on Boeing's deliveries will change anything for Boeing or China, we need to look at China's aviation landscape and how it stands as compared to India. So according to planespotter.com, China has 67 airlines, including passenger carriers, general aviation and cargo airlines. That's more than double of India, which has 22 players, big and small. Now, the next number is even more startling, which is the capacity. China has over 4,000 operational planes, and this includes your wide body, narrow body, as well as the 70 to 80-seater regional planes. Indian airlines put together have only 740 operational planes. So does China need more capacity? Let's look at how many planes Boeing has to deliver. As per Boeing's website, it has to deliver 130 planes to Chinese airlines as compared to 506 planes to Indian airlines, including Air India, Akasa Air and SpiceJet. We also have to remember that Chinese airlines had already placed orders for Airbus and Boeing, and Indian airlines are now expanding their capacity and are also facing shortage. So if China market closes, it could also mean early deliveries for Indian airlines, which have been struggling to expand capacity. Moreover, China also has its own plane maker Comac, which has already started delivering its 737 and A320 rival called C919. There are 114 Comac planes operational in China, of which 13 are the narrow body C919. So Comac has a long way to go to match the production capacity with Boeing and Airbus, but as things stand, it doesn't look like a pause on Boeing's deliveries will hit Chinese airlines very hard, as over 4,000 planes makes them seem quite comfortable with their capacity.
All right, Madhya, many thanks for joining us. Time for us to head into a short break, but up next, McKenzie bets big on India, says the tariff war presents an opportunity to build resilient supply chains. That and more when we return.
अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Investors should be prepared to be fooled many more times, warns Morgan Stanley on Trump's tariff plans in a note titled, "Fool me once, shame on you. Fool me twice, shame on me." The global brokerage firm urged investors to buy the weakness and not let their guard down. Morgan Stanley has also cut its FY26 GDP growth forecast for India to 6.1% from 6.5% earlier. S&P Global Ratings expects the growth of major Asia-Pacific countries, including India, China and Japan, to slow by between 0.2 to 0.4 percentage points over the next 2 years if Trump implements the reciprocal tariffs. UBS believes the higher U.S. tariffs could delay private capex pickup in India. It also cut its FY26 GDP forecast for India from 6.3% to 6%. UBS downgraded its GDP estimates for China and the U.S. as well. On to a CNBC-TV18 exclusive. The top brass at McKenzie is betting big on India. Global managing partner Bob Sternfels believes the tariff war presents opportunity to build resilient supply chains. Remember, India's share in the U.S. smartphone imports has increased from nearly 8% in 2023 to 13.7% in 2024 after Apple started to assemble phones in a factory near Chennai. McKenzie believes India's manufacturing is nowhere near its potential and remains an attractive proposition for global CEOs. Take a look.
To the future growth potential for India, and you start with manufacturing, India is nowhere near its full potential around this. And you highlighted, I think, a success story. I think you have to hand it to Vietnam in how quickly they moved. But on a relative basis, Vietnam's small, and Vietnam now is facing all of the secondary issues. Labor shortages, supply chain issues, overconcentration, et cetera, that India won't face for a while. And I think this is really the moment to now move from a catalytic change that has started in India about this notion of a strong manufacturing base to now kinking the curve and really starting to drive acceleration at scale. A lot of this volatility could be great for India. And I think there is this moment, and I've been on record before of India's century, and I'm not backing off of that. I really do think this is the moment for India to lean forward. What I hear from CEOs underneath this are a few things that I think are useful in these times. And on the one hand, making long-term decisions on things that may not have long-term assurance is not a recipe for success. And so many CEOs are coming back to a couple principles that at least I hear. One is the notion of resilience. How resilient is my company to future shocks going forward? Because these may not be the last. And I'm hearing more and more, I may need just to plan for a world that is fundamentally volatile as opposed to hoping for a return to some kind of normality. And so how resilient is my company? And the resilience notion is not just defensive, but how do I have enough capital, enough talent to make a few bold bets while I protect myself from shocks? So I hear resilience as one. The second thing is this notion of timeframes. Will the decisions that I'm making be durable over the time frame of that investment decision? So if it's moving a supply chain, if it's developing a natural resource, if it's making an R&D decision, these are often decade-plus decisions with decade-plus payback cycles. And so what I often find is, how do I marry the return profile with the volatility profile to say, is this something that is robust no matter what? So take a practical example on this. Many are asking around the world, how much of my supply chain should I have in the US, right? Given tariffs. Well, if you back up, we had done some work in the pre-tariff era that said supply chains aren't resilient enough, that COVID and the Russia invasion of Ukraine showed that we actually had fragile supply chains. And there was a logic for moving part of your supply chain closer to the source of demand. The US is the largest source of demand, irrespective of tariffs. And so several CEOs are coming back to that foundational logic to say, would I make this decision even without tariffs? What portion of this is robust long-term, based either on resilience logic, long-term demand logic? That's a practical example of this time frame piece. And maybe the third thing I'm hearing, if it's resilience, time frame synchronized with the investment decisions, The third is this notion of where are no regret moves just to speed up? And in particular, one of the topics that's around that is the implementation of new technologies to change my business. No matter what happens in the world, I am going to have to implement technology faster to change my business. That's a no regret move. And so I'm often asked the question, Bob, what are the no regret moves that I can be implementing irrespective of, these external stimulus that's going on out there?
And you can catch that entire conversation with McKinsey's Global Managing Partner, Bob Sternfields and Rajat Dhawan on Global Dialogue at 6 p.m. and 9:30 p.m. right here on CNBC-TV18. Has India Inc. placed as Trump's tariff winds blow across continents? We spoke with ITC's top boss, Sanjeev Puri, Apollo Hospital's MD, Sunita Reddy, for their take. Take a look.
If you look at healthcare in the US and pharmaceuticals, 47% of the generics that America uses are from India. And this results in a net saving of $270 billion. So if they were to put a tariff on that, I think it will become far more expensive for the US healthcare, which is already at $15 trillion. So it would be a huge expenditure for the US.
It will open up a lot more opportunity for interest for the industry as the bilateral trade agreements get signed. And not only with the US, I think we are hopeful that we should see one with the EU and UK during the year. And that does create a lot more opportunity for the Indian industry, gives an opportunity to integrate with global value chains.
The U.S. Education Department has cut federal funding of Harvard University. As per statements by the department, the Trump administration has frozen Harvard's grant of $2.2 billion as well as multi-year contracts worth $60 million over anti-Semitism concerns. Harvard University accused the Trump administration of overstepping its authority. The university's president, Alan Garber, said Harvard will not surrender its independence.
U.S. President Donald Trump's administration announced on Monday it was freezing $2.3 billion in federal funding to Harvard. The move came hours after the university rejected numerous demands from the Department of Education, which Harvard President Alan Garber wrote in a letter would allow the federal government to, quote, control the Harvard community and threaten the school's values. The funding freeze comes after the Trump administration said last month it was reviewing $9 billion in federal contracts and grants to Harvard. That's part of a crackdown on what it says is anti-Semitism that erupted on college campuses during pro-Palestinian protests over the past 18 months. The administration has already frozen hundreds of millions of dollars in federal funding for numerous universities. It's pressing institutions to make policy changes, citing what it says is a failure to fight anti-Semitism on campus. Deportation proceedings have begun against some detained foreign students who took part in pro-Palestinian demonstrations, while visas for hundreds of other students have been canceled. In a letter on Friday, the Education Department stated that Harvard had, quote, failed to live up to both the intellectual and civil rights conditions that justify federal investment. Harvard agreed in January to provide additional protections for Jewish students. And Garber said in his letter that while the university is taking steps to address anti-Semitism on campus, quote, these ends will not be achieved by assertions of power unmoored from the law to control teaching and learning at Harvard and to dictate how we operate. To ease any funding crunch created by a cutoff in federal funding, Harvard is working to borrow $750 million from Wall Street.
Well, that is the latest there from the U.S. Now, back home, Urban Company is set to cut the size of its proposed IPO by 80% due to the recent market upheaval. Sources say Urban Company will file papers with SEBI next month to raise 528 crore rupees. Rachna standing by with more details. We saw a similar story play out for Ather with its proposed IPO, and now Urban Company is scaling back its plans too.
Sources have told us that home services unicorn Urban Company has secured a shareholder approval to raise 528 crore via an IPO. The company will file its DRHP by the end of next month. While the company had initially planned to mop up 3,000 crore, as you said, market volatility has forced a rethink. A pre-IPO placement with select investors may shrink this offer size further. The IPO, which will include a stake sale by existing investors, is expected to value Urban Company between $2.5 to $2.8 billion, leading the issuer Kotak Mahindra Capital, Goldman Sachs and Morgan Stanley. But on the business front, Urban Company reported a 30% jump in FY24 revenue, clocking in at 827 crore, and the losses have also narrowed to 93 crore rupees from 312 crore rupees in FY23. The company offers a wide range of services from home cleaning, repairs, pest control to beauty and wellness, which continue to be its strongest category. In FY23, home services made up nearly 78% of its total revenue, with product sales, which now also includes native RO purifiers, contributing the rest. The company is also diversifying into new categories like wall panels, smart locks, and is currently operational across India, UAE, and Singapore.
All right, Rachna, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Don't go anywhere. We're back in a moment. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Well, anything that has relative strength and anything that did not make new lows last week is something which is on top of our list in terms of longs. And I think on top of that list is financial services. I mean, if you look at the bank Nifty, today it is at levels of 52,000, which I think is an important resistance. And once this is taken out, I think it might be the first index after financial services to actually make new lifetime highs. So I remain bullish on the bank Nifty, and I think there are immense opportunities.
Welcome to a very special edition of Indianomics. We are glad to announce that the March CPI number has come in at 3.34 compared to a CNBC-TV18 poll of 3.59 or nearly 3.6%. And this is also much lower than the 3.6% that we got in February for the headline inflation and the 4.26% headline inflation we got for January. So it's a clearly falling trend. 3.34, more importantly, is way below the MPC mandate, which is to keep CPI inflation at 4%. So it's a good 66 basis points below the mandated number. Importantly, this inflation number has come down because of a sharp fall in food prices to 2.69%. We don't know when last food prices were as low as that, probably 3-4 years ago. And that's what has helped inflation come down so sharply. Does all this mean that we are going to expect a sharper than the 5.5% repo rate that everyone is expecting the Reserve Bank to take the repo rate to? Will we expect a double cut in June itself or 50 basis? For all those questions, I'm joined by an elite panel of economists: Aditi Nair, the chief economist, ICRA; Devang Shah, the head of fixed income at Axis Mutual Fund; Radhika Rao, the executive director at DBS Bank; and Sameer Narang, the head of economics research group at ICICI Bank. Ladies and gentlemen, thank you very much for joining me. Sameer, if I may start with you. This is far lower than expected, 3.34. Are you revising your full year numbers? Are you revising your next quarter numbers for inflation?
Well, Lata, we were at 3.44. So, yes, it is 10 basis points lower than our trajectory, but still very close. So, not much. Next year, we are at 3.9%. That's 10 basis points lower than RBI's trajectory. Baseline could be lower if oil prices are even lower than what we have forecasted, around $70 a barrel. So if it remains at 60, 65, some more easing is possible if pass-through is there. Otherwise, the government may just choose to erase excise duty as what it has done over the last week and use that to spend more to spur growth.
Okay. Radhika, what is your take? At 3.34%, we are a distance below what the MPC is mandated to keep the inflation at. Are these numbers strong enough for the Reserve Bank to come in with a 50 bips cut in June?
Hi, Lata. Certainly, we were also on the lower end of the forecast range, so it's quite interesting to see that's about 3.3%. And I think food, as expected, has been the main reason why inflation is at these levels. We were tracking actually food inflation. It has been punching above its weight for almost a year plus now. Now, finally, you see it punching below its weight. That's why there's a counter effect. And to your mention, absolutely, not only the March 25 quarter is a cool 70 basis point below where the RBI expected, but also it puts the FY25 inflation weaker than and sets FY26 trajectory on the lower end as well. We are at about 4%, but I think we'll have to revise down the FY26 number in the coming days. Going back to your RBI question, I think certainly keeps the door open for policy easing. But I think the central bank would still prefer to be, calibrated and incremental in its approach. So I would still think that they would go for a 25, perhaps do more rather than, in terms of the next few meetings, than to do more at a meeting. And I think what that really goes down to what's happening in the global environment. Luckily, the currency is under control, but otherwise, certainly, they would prefer incremental moves.
Okay. I'll come back to you for more, but I just wanted to add another bit. Let us get the core inflation number coming up. That's come in at 4% compared to 4.1 in the previous month. But the way core inflation is counted, you also include gold in it. It comes under personal services in India. And because gold prices have shot up, you have a 4% core inflation. If you deduct gold, then core inflation also falls to 3.22. So even the argument that core inflation is above 4% doesn't quite hold at this point. Core inflation also ex-gold would work out to 3.2%. So Aditi Nair, that question to you. First question, will you reconsider or even have a lower FY26 number?
Thanks, Lata. Well, certainly today's number has come in lower than what we had forecast, and we're now looking at a number of around 3.5% for the current month. This is an interesting month. While a lot of vegetables are still tracking quite modest numbers in month-on-month terms, if there is a pickup in temperatures, we could end up seeing a very rapid increase in perishable prices, as we have seen in the last in the month of April and May in several years in the past. So I think we shouldn't really go by the first half of the month in terms of how the food prices are tracking, particularly for perishables. As of now, we're looking at a 3.5% for April. So a cut in the June policy, of course, is clearly on the table. I agree with Radhika. It should be in incremental steps instead of being front-loaded. So possibly now we were looking at a 50 basis points cut spread over the next 3 policies. I would say now it's going to come in the next 2 policies. After that, how things have played out. So the next two policies still gives us almost 4 months of global developments and our own growth inflation data to parse. And whether there is scope for more rate cuts after that, I think, by the October policy, half the year will be done. We'll have a lot more information on global growth, domestic growth. And, I'm not certain at this point that more than 50 bips additional is warranted.
Okay, well, the two ladies are not in my camp, but I want to persist about this double cut in June. And let me ask Devang, let me see the gentleman out on my side. Devang, the market itself, the 10-year paper is standing at 6.41. Is the market pricing in a sharper cut in June? What's your sense?
Oh, Lata, you're right. I think markets are now pricing in aggressive rate cuts. In fact, the swap curves are already pricing in more than 30 basis of rate cuts in the next policy, totally pricing in more than 50 basis of rate cuts. So our perspective is, yes, I think bond markets have been happy over the last couple of months, especially in the last 1 month, we have seen 30 basis of rally largely on account of couple of things. I think, first of all, two key messages for me from the RBI policy itself, along with the inflation data today, is that because the near-term inflation is significantly lower, the policy tilt is towards growth. And any delay in tariff implementation leads to a mar on growth. I think, in fact, they are optimistic at 6.5 today also when they are projecting next year's growth. So that will surprise. In fact, the growth data might give us more positive vibes on what rate cuts to price in. Second perspective is that I think he messaged this in his public conference also, where he's trying to keep minimum liquidity of 1% of NDTL. Now, persistent more than 1% of NDTL liquidity, last we have seen in COVID environment, where we are talking about an absolute terms of 2.5 to 3 trillion of liquidity. That kind of liquidity comes into the market. I think that will be very, very positive for bonds. And we can see, irrespective of 25 basis or 50 basis, I think probably bond markets will continue to rally, and we can see a 6-quarter on 10-year very soon.
Okay, when you say the growth number will be a positive surprise for inflation, you mean that growth will disappoint. And therefore, right? Okay.
Sorry, positive for bonds. What I meant was positive for bonds.
I take your point. Positive for bonds. I agree with your 1% for NDTL. I tried very hard to price that number from the governor in the press conference, and he finally coughed up that number. So that clearly is a positive for the bond markets. Samir, I wanted to present Devang's point as well to you. The IIP number that we got was particularly disappointing at 2.9%. The consumer goods numbers were especially bad. The consumer non-durables was negative. It was a contraction. Consumer durables was positive, but I think it was about 3.8 or thereabouts, a very disappointing number. Other than capex and infrastructure, both of which are government-driven, the other numbers, primary goods, intermediate goods, all of them were in low single digits. Would growth be a good reason for the Reserve Bank to move forward with a double cut? That's a 50 bips cut in June.
So, Lata, you're right. Even the last quarter's number compared to what the MOSPI is anticipating, around about 7.6, the HFIs right now are indicating closer to 6.5. If you take the Kumbh effect, which is not too much visible in the HFIs, it could be 7%, so it will be lower than what the MOSPI is.
One minute. What is HFI?
High frequency indicators, sorry.
Okay, sorry. Yeah, go ahead. What is not evident in the high frequency indicators? Not much of growth from the Kumbh demand, is it?
Yes. Okay. So even if you take the baseline at 6.5, our baseline before the Trump tariffs came in for the next year was also 6.5. Okay. The impact of the Trump tariffs on India is muted, but still it will range between 0.1 to 0.3. Earlier, we were looking at 0.3 when the April 2 announcement happened. Now, given that reciprocal tariffs on India are only 10%, and along with other countries, the impact is limited. But there will be second-order effects as well. So overall put together, yes, growth will have a downside bias. But we still believe growth will sustain above 6% in each of the foreseeable quarter. And that implies that you don't need to do double cuts right now. You need to keep your firepower with you depending on how the situation is evolving. If there are more headwinds facing us, perhaps you use it then rather than right now.
Okay. All right. Well, I don't have a casting vote over here, but it's the four economists. And it looks like it's a 3-1 in favor of a 0.25% cut. But Aditi, would you not worry that there are deflationary forces at work, that growth is actually indicating a serious amount of weakness at this point in time? And given that uncertainties, even private investment, even if it is given a low interest rate, may not pick up because of the uncertainties. So isn't growth a good reason for the Reserve Bank to give a double cut?
So Lata, let me offer a few thoughts over here. If we look at what already has been done in terms of fiscal policy, we've got the cut, the relief on income tax, which already had come in the budget. And now initially we were looking at 50 basis points of cuts in this cycle, which have already happened. We're talking about at least 50 basis points more. So a lot more monetary easing is already on the cards than what we would have probably thought 3 months back. And this again would be at least something that is going to support private consumption and things like, residential real estate, etc. In terms of government capex, we've got a fairly decent number coming in from Government of India in terms of the capex growth. I think the key really is going to be front loading it and getting it off the ground as early as possible this year as compared to last year, where the election and then the rains had really pushed capex to the second half. Third point on state government capex, I think the FY25 RE numbers are extremely optimistic. When we're looking at the 11-month data, there is very little chance that in aggregate the states are going to be able to achieve their FY25 RE. And the headroom, therefore, in their FY25 BE to grow is very, very high. I'm taking that as a positive, that we could end up getting a lot of high capex growth, especially in the early months from the state governments. So from the domestic impulses point of view, there are a lot of palliatives or a lot of factors that can buffer what is clearly going to be high uncertainty in a very disruptive year. Exports, we saw the initial data that has come out for merchandise exports for March. I was a little surprised. I thought we were going to end up seeing a lot of front loading of shipments, but that really hasn't come through in the March trade data. So I don't know if that's going to come through in the April trade data, in the first week or 10 days of April. Maybe there is still some sort of bunching up that we're going to see on the export side. The other factor where I'm still a little positive is that the services exports numbers have been doing really well in the last few months. So maybe that will come under some pressure now because of the overall uncertainty on IT budgets, etc. But I think it's not a very panicky situation for us. Given what's happening globally, I think there are domestic buffers, there is fiscal policy that is going to be supportive. So I'm not sure that we need to overcompensate from the monetary policy side. I don't think there is a requirement for that, at least right now.
Okay. Well, I take your point about probably government capex, but government capex, center and states put together, is not a very big percentage of India's capex. I mean, ultimately, government capex is not even 3% of GDP, and our, gross fixed capital formation is well over 30%. So where is government in the whole scheme of things? It can't move the needle that much. And as you point out, we've got the trade data, and that's also indicating that exports are probably already under pressure. It's barely, it's flat if you compare it from year-ago levels. And this is not even the start of the tariff war. We're probably going to see it in the months to come. Though, of course, the next 3 months could be an extraordinary performance with people front-loading their exports. That possibility also exists. We have to take a break. And after that, let me get from my guests what are their growth expectations and their inflation expectations for the coming quarter. We're back in a jiffy.
सिचुएशन बहुत ही टेंस है, बहुत ही खराब है। अभी भी केंद्रीय वाहिनी को बहुत दिनों तक यहाँ पे रखने से ही कुछ अच्छा हो सकता है, इससे अच्छा नहीं तो अभी परिस्थिति ऐसा नहीं है कि केंद्रीय वाहिनी को यहाँ से हटाया जाए। तो मैं स्टेट गवर्नमेंट को, माननीय मुख्यमंत्री जी को अनुरोध करूंगा कि आप इनिशिएटिव लीजिए, आप केंद्र से बोलिए कि आप केंद्रीय वाहिनी यहाँ पे सीआरपीएफ तैनाती हो, और सीआरपीएफ जब तक परिस्थिति स्वाभाविक ना हो तब तक पूरी ओज केंद्रीय वाहिनी यहाँ पे रहे।
Welcome back to the special edition of Indianomics, where we are discussing the March inflation data and the state of the economy. The March inflation number, headline number, came in at 3.34% versus the CNBC-TV18 poll of 3.59. This makes the Jan-Feb-March average CPI down to 3.7%, whereas the Reserve Bank's forecast as recently as February was as high as 4.4%. So that's a measure of the disappointment or the fall in inflation, which is above the Reserve Bank's expectation. The IIP data, industrial output data for February, was also a disappointment, coming in at 2.9%, as bad as perhaps the Jan data. So, as bad as the December data. So we are seeing a lot of poor readings in growth and lower readings in inflation. The lower 3.34% inflation number for March comes on the back of a 2.69% food inflation data and a 4% core inflation, but core subtracting gold would still fall to 3.2%. So basically an all told lower than 4% inflation number is what we have. I've been speaking with Aditi Nair of ICRA, Devang Shah of Axis Mutual Fund, Sameer Narang of ICICI, and Radhika Rao of DBS Bank. Ladies and gentlemen, thank you for your patience. Let me get your growth forecast now. Radhika, where do you stand in terms of Q1, that is April, May, June, as well as full year FY26?
Sure. For the current quarter, the quarter we are in, we are at about 6%. And for the year, we're going to take it down to about 6.3. Still a lot of, like Sameer mentioned, now that the tariff, the risk of an high headline tariff has gone away, even then, I think there is quite a bit of blowback expected from slower global growth. If you see the conversation, the narrative is kind of changing now. We're not talking about the impact from tariffs as much as talking about slower growth in the US, slower growth in China, thanks to the, trade dispute between them, which is going to impact this part of the world as well. And not only does weak global growth really only impact exports, it also tends to have impact on the capex interests as well. In fact, one of the work that we had done tried to map what was it that private sector players were looking at. Were they looking at lower interest rates, and were they looking at more interest coverage ratios, or were they looking more at demand? And that clearly showed that demand is something locally and globally that really impacts their capex commitments. So I think that's something to watch out for as well. To come back to your question, yeah, we are a full year at about 6.3%, lower than the central bank's projection.
Yes, certainly, but not as low as some numbers that I have got on the street. For instance, the Goldman Sachs number is 6.1%. So there are people who are cutting growth forecasts primarily because of the global overhang. Sameer, what's your current number, and is there a downward bias?
So we'd cut the growth forecast to 6.2%, Lata, after the reciprocal tariffs were announced. Even in our MPC review, we mentioned that. Though the tariffs have come down, but I think the indirect effects, the uncertainty, the equity market inflows, all of that get impacted. So all of that put together in some summary, 6.2% is our growth forecast for the year. And more or less each quarter is around that number, 6.1 to 6.3. And a lot will depend on how spending pans out, because exports are likely to be weaker. So if oil prices do come down and government increases excise duty, that will give it buffer in order to spend. And we should remember in 2015 to 19, and that is how we managed the 6.7% growth with the oil prices at $45 a barrel. That was a big kicker for domestic spending led by the government.
No, I agree. But, a lower oil price has also coincided with lower remittances. And, with the uncertainty over global growth, probable recession. I mean, there are some people who give a 50% chance of a recession in the US. Even services exports could come under a bit of a cloud. At least the TCS management warning or guidance was not very encouraging. Where does ICRA stand, Aditi, in terms of growth forecasts?
So, Lata, we also reduced our growth forecast from 6.5% to 6.2%. And as of now, very similar to what Radhika and Samir said, uncertainty, disruption, supply chain issues, sentiment issues, and I think certainly private capex is going to get deferred in sectors that either have a large component of exports or where imports can come in very easily. So I think 6.2% is a fair number to work with for now for the full year. Now, I'm not actually going to give you a Q1 number. I think it's far too early. We don't know whether exports are going to get front loaded into April. And we also don't know how the government capex program and other things are going to kick off. I think it's not very prudent to really plug in a Q1 number right now. But for the full year, we have knocked off our forecast by 30 basis points.
Okay. So basically, we are averaging between 6.1 and 6.3. I think that's the best number I got over here. So we have to run with a 6.2% average from this panel of economists. I've heard lower numbers, of course. Devang, what is the, final repo number that the market is working with? Is it giving you a sense of 5.25 in this cycle?
So my understanding is that at this point of time, large part of the market is pricing in between 5.25 and 5.5. So it's somewhere in between there. Our expectation is also that probably, yes, 50 basis of rate cut is very much possible from current levels, whether it is one policy, 1+1. It depends on how the impact on growth is. And that is where it's going to determine the policy actions. The important point for bond markets is that I think two things which I touched upon. One is this liquidity entire piece, which is very, very positive. The second thing is the amount of OMOs which RBI has done, and he is front loading it because of FX outflows and currency leakage, which happens in this quarter. So the net supply for the month on government bonds for April is almost zero, because we have seen 120,000 crores of OMO announcements. So I think that is also being a big catalyst for bond markets and the rally behind on the yields front. The only caution or word of caution I think probably all of us are looking at is what's happening on US Treasury yields. And if you ask me, I think because there's a lot of dollar weakness and this entire rise in yields is keeping bond markets, probably the rally is getting a bit slower. Otherwise, for the dovishness which RBI governor spoke about in the monetary policy, for the liquidity actions, I think yields could have rallied further.
No, I take your point, but there could be a divorcing of inflation trends in the Western Hemisphere and in Asia. There is, of course, an expectation that in Asia, because China could be locked out of exports to the US, that those goods and services, those goods could look for a home in other countries in Asia. So a disinflationary impact on other Asian economies cannot be ruled out. So we should be prepared for this, and therefore divorcing of interest rate cycles as well. In any case, the expectation is at least a couple of rate cuts. At least that's what the Fed Fund futures are telling us. A couple of more rate cuts in the US as well is expected. So the expectation that the Reserve Bank will hold back because of what it expects from the US perhaps has to be changed at this point in time. We're already seeing a weaker dollar. So that one threat to the Indian currency also seems less. The conclusion on whether the rate cut will come, of course, it's a long time from now to June, and we could have many Trump tweets in between to know, how the interest rates might move. We are out of time, but thank you very much, Radhika, Aditi, Devang, and Samir. The consensus from our economists is that the Reserve Bank will go with only a single rate cut of 25 basis point in June, and the end rate cut will be 5.5. That is 4 rate cuts in this cycle. But as Devang of Axis Mutual Fund points out, the market is pricing in a possible double cut of 50 bips in June because of the far lower than expected inflation number we have got for March and disinflationary expectations in the rest of the year as well. The other compelling reason for the Reserve Bank could be that growth is also likely to disappoint on the downside, and therefore asking for advancing the rate cut. If it is anyway going to be given in August, why not in June itself? That's my conclusion, but not the conclusion of my economists, who still expect a single rate cut in June. But the important takeaway today is inflation is far lower than expected, including core inflation, which is actually 3.2% if you count it ex of gold. That's it on this edition of Indianomics. Thanks much for watching. There's more news and headlines lined up for you after the break.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's very simple. It's inversely proportional. The higher the tariff, the faster they come.
Do you have a percentage in mind and a timeline?
I have a timeline, yeah, not too distant future. We're doing it because we want to make our own drugs.
Hello and welcome to this special episode of Trump Watch. I'm Parikshit Luthra. Amid a 90-day pause on US President Donald Trump's reciprocal tariffs, India and the US have finalized the terms of reference for the first phase of a potential bilateral trade agreement. India is aiming to finalize a deal by fall or even before that. Virtual discussions between the two countries will begin this week, while in-person discussions are expected to start in the second half of May. India has said that it will pursue a path of trade liberalization with the United States. Both countries are aiming to achieve a bilateral trade deal worth bilateral trade worth $500 billion by 2030. Sources have told CNBC-TV18 that US Vice President J.D. Vance and NSA Mike Waltz are set to visit India on the 21st of April. Vance will hold bilateral meetings with Prime Minister Narendra Modi, External Affairs Minister S. Jaishankar and other senior cabinet ministers. His visit is expected to create momentum for an early trade deal. Joining us right now to discuss this is Mukesh Aghi, President of US-India Strategic Partnership Forum. Mr. Aghi, thank you very much for joining us. So the virtual negotiations are happening this week. How hopeful are you of a trade deal before fall?
Well, the objective is to, as you mentioned, increase the trade between the two countries to $500 billion. And to achieve that objective, you need to remove what I call impediments such as tariffs between the two countries, non-tariff barriers between the two countries, and smooth out the process. Both countries needs the trade deal. I think for Indian economy to grow to 7-8%, it needs to increase its exports. U.S., as it dealings with China, needs to find a partner which can basically leverages both domestic manufacturing, also partnership manufacturing with India itself. So I'm very optimistic that we will find a rightful solution in the near future.
Right. Mr. Aghi, we have been seeing greater imports of iPhones, electronic goods from India into the United States. Do you see, as a result of the high tariff policy vis-a-vis China, do you see deepening of supply chain relations with India, greater imports from India into the US in not just electronics and smartphones, but other products as well?
Absolutely, Parashit. You have to understand there is a geopolitical alignment between the two countries, and both countries sees China as a stress point. But more important is you have economies where quite interlinked. And so you will see de-risking of supply chain coming in from China, Vietnam, and Cambodia, where Chinese companies have set up their own manufacturing. India becomes a true partner in every aspect for the current administration. So you will see increased exports. I think it's important to understand that we also need to change perception about India being called the tariff king by the president. So we have to go extra step to ensure that we are moving the right direction, making sure that the exports from India are moving in an accelerated fashion. But more important is India become integral part of the global supply chain, because the complex electronic equipments are not made in one country. They're made in multiple countries. So making sure that the transition of these goods coming in, going out is very, very smooth.
Right. Could you give us a sense of the pushback the US government is actually facing for the tariffs that it has imposed? Yes, the reciprocal tariffs have been put on hold, but the baseline tariffs are still there. The high tariffs on China are still in place, and China has said that anything beyond this will now become a joke.
Yes, I think China is pushing back. They have basically stopped some of the critical minerals to the United States. They announced today they will stop buying Boeing planes from the United States. And China was almost a 20% market for Boeing planes itself. So we will see pushbacks. But you have to understand, all this was calculated in the thinking of the current administration, that we will have a pushback from China. And I think that's actually a positive news from India. India can step in and say, listen, we can fill in some of the void which China is going to create. So yes, you will see a much more stressful environment between China and the United States. And we do see a much more friendly environment between India and the United States. If you look at, both countries have taken a different approach dealing with the tariff issues. China has taken a very confrontational approach, and India has taken a much more conciliatory approach, trying to find a solution which is win-win for both countries. So I believe that the trade, the partnership between the two countries will move in the positive direction.
Right. What's your sense of the current trade negotiations? Where do you think there are points of agreement right now? And what percentage of the product lines have been agreed upon by the two countries? What's your sense on the negotiations?
Well, Overall, it was announced yesterday, at least from a reference point, they agreed on the framework. And to me, that's important. Now you will get into nuts and bolts, looking at every aspect of exports from India, exports from the United States. And so I believe that's where devil lies in the details itself. Yes, there will be a point of disagreements because you have to protect local interests. And this is for both United States and India. But the intent and the attitude is that let's find a solution. I think to me, that's more important than dealing with nuts and bolts itself. When you have two leaders of the country saying, hey, we'll find a solution, when you have trade negotiator announcing that they will find a solution, I believe you will see a win-win value proposition coming in. Yes, you can't please all parties on both sides of the countries itself, but I think it's important that we conclude an early trade agreement, which will set an example to the rest of the world that if there is intent on part of India and the United States, you will find a solution which is good for both countries.
Right. The other question that we'd also like to ask you, are you expecting this trade deal to be signed in tranches? Possibly, for example, today the Commerce Ministry has said that the framework for this deal, for the bilateral trade agreement, has been finalized. The contours are clear, but do you expect maybe phase 1 to be announced in the next 3 months?
I think it will be not prudent to give a timeline for announcement because it puts undue pressures on negotiators or on both sides. I think it is important you find the right solution if it takes 3 months or 4 months. But we do have what I call is a potential to wrap up the deal sometime by fall because we're expecting President Trump to come to India for the Quad Summit. And I think it'll be good to be announced during that time. It is, again, important that, yes, boundaries have been set up when Prime Minister visited the President early part of this year, and they agreed that they will try to conclude some kind of a trade agreement by fall. So I think both sides understand those timelines, and they will work towards that. The momentum is there. You have to understand, in earnest, right after Prime Minister's visit, both sides got down and started working on. You have to also understand that the framework reference which have been announced was not there. India and US have been negotiating trade deal for the last 10 years. India has been negotiating trade with Europe for the last 20 years itself. So what we are seeing is a genuine intent on part of government of India and the United States to come to a conclusion in an expedited manner.
Right. Now, speaking about manufacturing, are there certain areas where USISPF and industry chambers like yours are asking for a lowering of non-tariff barriers? This seems to be a major issue in negotiations right now. And which would be some of those top 2 or 3 non-tariff barriers which you would seek removal of or easing?
Well, on both sides, the agriculture is a red line. US subsidizes farmers tremendously, and so does India. And you have to understand, for India, when you have 50% of the labor working on the farmland, which contributes only 15% of the GDP, that's subsistence farming. And I think India has to protect that. So in the discussions, it has been made it very clear that substance like products like maize, rice, wheat are red lines. So is the issue from the United States also. I mean, so US subsidizes is farmers. It gives 100% insurance on crop production itself. So I think both sides understand, and both sides have stayed away from some of the critical, sensitive issues, respecting the need of both countries. So from a tariff barrier perspective, agriculture, dairy will be a critical issue. I think non-tariff barriers, the regulations, is critical. And I think this is a fantastic opportunity from the government to basically deregulate some of the economy. For example, the standard bureaus have set up standards for everything which comes in, which is part of the critical supply chain. And I do recall almost 2 2 years ago, they only were looking at 100 items. Now it's 800 items. What we're doing is basically making it more and more difficult for global supply chain to move into India and be part of the complex product itself. So you will see more discussion happening on non-tariff barriers than tariff itself, because that's where the issue lies.
Right. Mr. Aghi, my final question to you would be, do you get a sense that tariffs on agriculture and dairy could be left aside out of the BTA in order to conclude it? Because this is a red line, as you said, for Indian farmers, the Indian government and the US government as well. And this has been the stand for many years now. So is it possible that the two sides may go ahead with a trade deal without agriculture and dairy?
I believe so. I think you will find some items both sides will put in because, for example, India does not have genetically modified goods in the country, which is understandable. And I think the US respects that. At the same time, India may say, listen, we'll bring in more pecans and almonds and bourbons into the country itself. So you will see give and take happening on both sides. But all, at the same time, US and India do understand that agriculture is critical for both economies, both countries, from a national security perspective. And so let's not go into that. And so the sense I'm getting at least is respect each other's red lines and work around that area to conclude a trade deal.
Great. Mr. Aghi, thank you very much for joining us. So you're saying that non-tariff barriers are currently more important than the tariff barriers, and it's possible for the two countries to go ahead with a BTA without going to the red lines on agriculture and dairy. Thank you very much for joining us here on CNBC-TV18. It's time for a quick break, but don't go anywhere. Coming up on the other side, US President Donald Trump says tariffs on chips and pharmaceuticals are coming soon. We will delve into what this means for India when we return.
अपील फाइल करना होगा और इस अपील के प्रोसेस में ही रिक्वेस्ट की जाएगी कि उनको प्रिजन में ना रखा जाए और जो है क्या कहते हैं उनको अपनी एक्सट्रेडिशन रिक्वेस्ट को इंडिया की जो है उसको कंटेस्ट करने की अपॉर्चुनिटी दी जाए विदाउट कीपिंग हिम इन कस्टडी।
Welcome back to Trump Watch. The Trump administration is inching closer towards imposing tariffs on imported semiconductors and the pharmaceutical products. U.S. trade officials have launched a probe into pharma and semiconductor industries before taking a decision on potential tariffs. Currently, India charges a 10% tariff on pharma imports from the U.S. America does not charge any tariff on pharma imports from India. Just to give you a sense on why is U.S. important for Indian pharma companies. Top pharma companies on an average have a 30 to 40% exposure to the U.S. India exported pharma products worth $7.6 billion to the U.S. in 2023. That brings us to the big question. Will pharma tariffs be a bitter pill for the Indian pharma industry to swallow? Analysts believe that India pharma companies will aim to pass on the increased cost to consumers. We'll discuss the impact of the potential tariffs on India in just a bit. But first, let's also listen in to Donald Trump doubling down on pharma and the semiconductor sector and hinting at some relief for automakers.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's inversely proportional. The higher the tariff, the faster they come. And yeah, we're going to be doing that. That's going to be like we have on cars. We have, as you know, a 25% tariff on cars. We have a 25% tariff on steel and aluminum. And that's what that category fits right now. I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places. And they need a little bit of time because they're going to make them here.
Joining me now is Ashok Chandak, President of the Indian Electronics and Semiconductor Association, Keval Handa, President at Samarth Life Sciences and former MD of Pfizer India. Gentlemen, thank you very much for joining us. Mr. Handa, in FY24, US accounted for $8.7 billion of total $27.9 billion pharma exports that he had. 30% of India's pharmaceutical exports go to the United States. How badly are we going to be impacted in case these pharma tariffs, as Donald Trump has promised, will kick in?
I think if you take two statements, the one now you have just displayed it, the other one when he said that the administration is looking at a potential tariff in pharmaceuticals in near future and not in distant past. So he's very clear that there would be some tariff. Currently, we are enjoying no tariff. And for the imports of US products in India, pharmaceutical products, there is a tariff around about 11%. So my best case is 10% to 11% tariff. And the worst scenario would be around 25% tariff. So in between, based on how we negotiate and what is the bilateral negotiation is, that tariff would be levied. But let me tell you, the pharmaceutical industry is going to be very tough for him to levy huge tariffs. The reason is very big, simple. US is facing a great challenge of shortages of products. There are almost about more than 300 products which are shortage in US. And at this scenario, when the products are shortages and the delivery is going to be uncertain, and 80% of raw material in the pharmaceutical products are being imported by US, levying a tariff and then being a reciprocal tariff by the other countries. For example, Europe is exporting almost about $120 billion to US. They have already hinted that they will do a reciprocal tariff. So it's going to be a war. So he is conscious about that. And therefore, I feel the tariff on pharmaceutical would be very marginal.
All right. So you expect only a marginal tariff on the pharmaceutical sector. The other condition that he is trying to impose on the likes of Johnson & Johnson, Pfizer, Eli Lilly. He wants all these companies to manufacture more in America, and even Indian companies. He's saying you need to manufacture more. Do you think all of that can be done? Because manufacturing capacities are built over years. India is a large supplier of generics to the US. Can those things be changed? Do Indian pharma companies either have the capacity or those plans to set up shop in the US?
So companies like Pfizer and Eli Lilly have already committed that they will shift the manufacturing in US. So there is a strong commitment from multinational companies. Now coming to India, there are already companies like Zydus, Dr. Reddy, Sun Pharma, Lupin. They already have a base in US. Now they have to scale up that base. And I think it would be very wise to do so, given the fact that these tariffs are going to stay for a longer period of time. But somebody new who want to enter a new green field in US is going to take time, maybe 2 or 3 years. But let's see how it plays out, what type of tariffs are there, what is the advantage post-tariff, and how much is the price that you need to pass on, and how much you can retain. I think that becomes very critical to take a decision whether you want to set up a plant or you don't want to set up a plant. But those who already have a plant, I think for them, Trump may also give some more incentives in domestic US market and would be much wiser to have a closer look at setting up additional facilities in US.
Right. Let me go across to Mr. Chandak. Mr. Chandak, semiconductors, again, a big issue. There was a relief for electronic and smartphone and computer imports into US last week. But on semiconductors, both Harbert Lutnick, the Commerce Secretary, and the President have said semiconductor tariffs are coming. How do you expect India to be impacted in that supply chain? Mr. Chandak, you're on mute.
Sorry. I would say both semiconductors and electronics would go hand in hand, as there is a dependence of electronics on the semiconductors clearly. And the current exemption is more of a short term, actually. The underlying thread is pretty clear. It's the America first and manufacturing need to move there, actually. That's going on. I will deal both the topics in a short way, in a crisp way. First of all, on semiconductors, it is clearly understood that it's a critical importance for every country, including US, and being a foundation technology. It has to be dealt a bit carefully. Second point is in a world semiconductor market, the US companies already have more than 50% market share, but most of that is manufactured outside of US. There is a limited amount of manufacturing which is happening in US right now, and something is import. Mostly it's import. From India perspective, in the short term, I don't see any major issue, even if any tariffs are imposed, because we do not make, as of now, much of a semiconductor manufacturing. And number two, we are still a net importer, and most of those US companies are importing from the hubs or exporting to US from their hubs in Asia. So the disruption of supply chain, which is likely to happen actually, in case the tariffs are imposed on some other countries, which includes the Taiwan, Korea, Japan, China, while India would remain relatively unimpacted. But I do see an opportunity for India over here because the India OSATs, as many of the industry people, including you, are aware, that the India is expanding its semiconductor manufacturing with the outsourced semiconductor assembly test operations OSATs by Micron, Tata, Keynes, and other people. And there is a fab coming from Tata. So once these are operational, let's say by end of the year or next year onwards, we also get an opportunity to export to US, because this $500 billion bucket, which has been identified as a wish list between two countries for a trade import-export, something need to fill up that. And electronics and semiconductors is a good candidate to fill those buckets of $500 billion trade agreements. Number two, the global semiconductor industry is also expanding very fast. Last year, it's already $656 billion, and it's still growing, actually. So as this keeps growing, and even if there is a manufacturing which shifts to US, no country would be 100% self-sufficient in semiconductors, particularly, and also electronics. So there would always be a situation where US will also be an importer of electronics and semiconductors. And with our current policies and step up which is happening, I would see that India would get good opportunity to export to US. So I think we should stay tuned, not to get too much worried about these tariff topics. Those are coming actually, and there are some surprises, some changes which are happening. We already have a robust the policy framework which has been defined by the central government, and I call as a winning trio, which is the PLI on electronic components, PLI on electronics manufacturing, and a Semicon India program. All three put together.
Right.
Additionally, the state governments, there are about 7 state governments, those are rolled out very lucrative policies at the state level, which is creating a lot of momentum of setting up the plants and manufacturing activity. So all these things should help us actually. In fact, to increase our trade with United States. And also importing is not a problem because currently our import from US on semiconductor is hardly $4 billion.
Chandak,
pretty much.
What would your recommendation be for the India-US bilateral trade agreement?
My view would be in that there are two factors to be looked into. Create more interdependence because, as I said, electronics and semiconductor has become really a global business where no single country would be fully independent or self-sufficient. So create that interdependence of supply chain between two countries, and there are several companies actually that are operating in that direction. Then on electronics side, I would call there is a category of manufacturing called the Electronics Manufacturing Services, EMS. And there are global players such as Foxconn, Jabil, Flextronics, Sanmina and others, and Indian players such as Dixon, Keynes, Sirma SGS, Avalon and others. They have a wonderful opportunity to quickly scale up the electronics manufacturing activities, looking at the policies and start working towards the export to US, and also import to US should not be a problem. So these are the two things which we need to add up over there. OSAT I already mentioned. And one my point is actually the BTA which is going on, you already mentioned some time ago in the program, the bilateral trade agreement is gaining momentum. It's one of the most constructive dialogue which I would say I would have seen in the recent times. So earlier we do the BTA is better, no need to be disparate, but earlier we do is better for both the countries because both countries would like to show some outcomes to their country fellow citizens actually over here.
Right. So as early, the earlier the better, but let's not rush into it. Let's not get desperate either. Thank you very much, Mr. Chandak and Mr. Handa for joining us on the program. With that, it's a wrap on this edition of Trump Watch. More news and updates continue right here.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Markets are whiplashing, sentiment is fragile, and no one's quite sure what the next Trump tweet or tariff might trigger. Amid this storm, we are joined by one of India's most seasoned market minds. Manish Chokani is director at Enam Holdings. With decades of experience navigating volatility, Manish brings a rare blend of macro clarity and market insight. We cut through the noise and ask, is this a buying opportunity or just the first wave of something bigger? And where does India fit in as the world resets its economic chessboard? Manish, welcome to the program. Thank you very much.
Thanks for having me.
As we sit down again, it's been a while.
Very wide canvas. What you've set out is stuff. I hope I can address.
We'll try and sort of run through all of it. For our viewers, I just want to put out one graphic set, which kind of just, it's like a placeholder. We'll sort of put this up and throw it to Manish straight. Is this what Trump is trying to achieve? Do we know are we a little wiser as compared to where we were 10 days back? Number one, 10% universal tariffs as a revenue top-up to help the domestic tax agenda. He wants to raise revenue to be able to cut taxes later. That is number one. Second, sector tariffs aimed at bringing production home. So therefore, these sector tariffs need to be higher than 10%. And these are sectors like autos, semiconductors, and so on and so forth. He's spoken about this, Pharma, of course, as well. And number three, China tariffs meant to be exorbitant, because pretty much everyone in the Trump administration kind of believes in this, that China has stolen jobs, manufacturing away, and here tariffs need to be much higher. And so then, if this is the case, those negotiations will be much more protracted. Can we say this is the Trump strategy with all that has happened over the last 7 or 8 days or so? Manish, that is my question. Do we have this much clarity now?
So I'll take a step back even from there.
Yeah.
That what is, in my view, Trump trying to do? There have been decades of US benevolence, looking after the whole world and therefore suffering the problems of the world, paying for other people's wars, becoming a home market for others with probably among the lowest tariffs in the world. And then over the last 15 years, they printed money like crazy to come out of whatever crisis they had. Their only weapon was printing the dollar. What that's resulted in is a completely warped current account, a completely warped fiscal deficit, and a decline of really American, power in the world, in military terms and so on as well. And there's been this debate for 10 years now that is the US dollar about to lose its supremacy? And everyone's been kind of pegging away at the margin to see what the alternatives can be. So what he's coming to do, I think objectively, someone needed to do it. And it's high time someone got after what they're trying to do to fix the fisc, solve the debt problem, get after current account and so on. And it's very clear, China and US are now the new adversaries. And the world may be heading into a all-out war at some point. Now, what form and shape this takes, it's not like the old days where you send tanks and millions of people into battle, but maybe this is the new form of warfare to keep the other guy suppressed and down. And the US has actually led this benevolence towards China after they brought them into the WTO and basically just abdicated their entire manufacturing prowess to them. And it's to China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world. I would say already equal, if not ahead of US already. So it's high time someone did this. From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that the first 4 deals we sign are with allies. And he used the word, we didn't, which was UK, Japan, Korea, and India. I was very intrigued to hear that because they've always said we want to bring things onshore. We want to bring things near shore, which is Mexico and others. And then we want people which are friend shore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they're laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. The personal equations seem to be okay. The 3 or 4 countries which are mentioned seem to be okay. We're already part of the Quad. Now, what form and shape this takes, because there are so many moving parts, with, like he says, 75 countries coming and wanting to negotiate at the same time. And there'll be countries like Vietnam, which are very much in the China camp, but also US can't do without a lot of the product which comes out of China. So that's really that end. At the same time, China is not something one can ignore. They are our neighbors, and they are actually leaders in a lot of technologies. And Xi Jinping has reached out to try and solve the mess they made in Ladakh with us. We will be wary of them. They are wary of us. I don't know why, though, because we've never done anything really against them. But if that equation can play out where India can be a little more in the China camp, plus we have Russia, in a sense, to keep a check on China as well, and kind of, how do you say, run with the hares and hunt with the hound.
That's the
if you can pull that off,
best of both worlds,
then you would land in a really good space, because India is never going to be in the China camp for I mean, obvious reasons. It may play out over the next few decades, because one couldn't have imagined US and Russia trying to get friendly, or indeed US and Japan being allies today. I mean, 40, 50 years after they fought the most brutal war. So history changes, but in the historical context, I think things are moving in the direction of being good for India and getting us into a closer group and a more tightly knit supply chain from which we were really excluded over the last 20, 25 years.
And this will, I mean, if this were to come our way, this will come because of the posturing, much tougher sort of stance towards China that Trump and the US has taken, right?
They can't be running this kind of deficit with China. China runs $1 trillion trade surplus. And they use the money of their surplus very wisely over the last 15 years. Ever since US started printing money post-2008, we did Narega program and we started building dollar reserves largely. China went and bought assets all over Africa largely. And they invested in hard assets. They invested in creating capacity, which today, if they are cut out from the US market, they already have ASEAN, Latin America and Africa to go to. And they can flood the world, and you can, in a way, have a deflationary boom in these countries because they can't produce this stuff anyway. And they can keep exporting their raw materials and minerals and so on to China. So in a way, China is currently, to use Trump's language, holding better cards than America. And it's really up to the Americans of how they now play this game and redraw this chessboard, as it were.
To strike a deal, we'll have to strike a deal, because you said, well, Scott Bessent said, he mentioned India as one of the 4 countries. That maybe also is because we reached out the earliest, including countries like Japan, etc. as well, because India's earlier been mentioned constantly.
Tariff king.
Tariff king, tariff king, tariff king. So we'll have to obviously give.
No, but
then, as some have said, you run a 40 billion deficit.
Prashant, remember, the tariffs in India were tariffs on products. It's not directed at US. Because of the way the WTO rules were, it's like, let's say it's a horizontal system where you're running it on product. If you had, say, a 0 tariff on automobiles, you would only be driving Chinese cars today, maybe via Vietnam or Thailand. But now that US is trying to make them vertical tariffs, which are country specific or certain sector specific, there's a way to change, which is why India didn't go to the RCEP. If you were part of RCEP, you would only have goods coming from the east into India. And we didn't have the wherewithal to go and export to the west. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. How many will you sell?
Yeah, absolutely.
You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market's going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst, which is I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth. Because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long. So, for example, when Maruti came, they kickstarted the whole auto sector in India. Same way I was excited when Apple came, that whole ecosystem will get developed in India and we can then leapfrog from just being packaging guys in EMS and so on and then climb the chain. So it won't happen in 1 or 2 years. But over 10 years, you have to be a player in automobile, you have to be a player in defense, you have to be a player in electronics. That's the heart of any manufacturing renaissance. Even today, auto is 50% of manufacturing GDP of our country and most countries. If you're not a player there and you're not part of that ecosystem, there's no way we can cross this 14-15% threshold of manufacturing which we have in India. Our aspiration has been 24, but we've been stuck at this 14-15% range for like I don't know how many years. So I'm hopeful this redrawing of the chessboard actually helps kickstart this, and that's the most bullish thing you can think about.
Absolutely, and I think that number, right, 80,000, 3,000, as they say,
is the game.
We were speaking with this UBS economist in the morning, and there was her view was, according to her, the biggest risk from all of this, of course, she acknowledged that there are positives and we stand to gain, is that there is so much excess Chinese capacity everywhere, and that kind of now start to go. So I mean, we need to be on the guard as well here in India, right? So the fear was that Indian private sector capex, which anyway was kind of not kicking off, I mean, that gets delayed further because I mean, people will be watching what this capacity does.
It's been one of the reasons why we've not done it so far, because we were worried, and how does government react to each type? Do we go for anti-dumping and then it takes 6 months and by then you're already on a back foot? But if this sort of alignment does come out, and now government's clearly got your back on this, and you're expecting this sort of dumping to happen, I think the game restarts. And that's why I'm saying it's a resetting of a lot of assumptions. So a lot of our old assumptions have to be changed, I think, in the next 6 months. A lot of our old assumptions will change, including about how the dollar trades. Like we just keep assuming rupee must keep falling. If this dollar reset has to happen, and I'm sure we'll talk about it as well. I mean, that's part of his game as well, that you have to have a little more competitive dollar.
Hello and welcome to the Global Dialogue. I'm Shireen Bhan. We are living in a VUCA world. CEOs around the world have been used to the idea of dealing with volatility, complexity, ambiguity, and uncertainty. But what we've seen happen in the last few weeks is perhaps VUCA on steroids. To help make sense of the global reset, where India finds itself, and more importantly, how we should position ourselves as this global reordering takes place. Joining me now is a global managing partner of McKenzie, Bob Sternfeld, and the managing partner for McKenzie in India, Rajat Dhawan. Bob, Rajat, great to have you here joining us on the Global Dialogue. Let me start by asking you just that, Bob. When you talk to clients today, what are they telling you? Is there a sense of panic? Is there a sense of fear? Is there a chilling effect that nobody wants to do anything at this point in time?
Well, it's great to see you again, Shireen, and thanks for having me on. And yeah, I would start with, it's clearly the context. There's a lot going on in the world today. But if you take the lens of at least what I'm hearing from CEOs around the world, which I think was the departure point of your question, I think it's very different than a year ago. So if we backed up a year ago, most were saying, and you were clear on this, that, hey, 2024 is the year of elections. And there were more elections around the world than I think in any year in recorded history. And so as a result, many CEOs were saying, let me wait and see how things play out. Let's see what happens with this particular election. And so if I can defer some decisions, I will. And I'll play for time. Well, you fast forward to the beginning of 2025, and folks are saying the elections have happened.
Yeah.
The world's no less volatile, and might even be more volatile than it was a year ago. But I can't afford to wait. I actually have to make decisions. And I find that's one big departure point from even 12 months ago, that despite this volatility, there's a real desire to still need to move forward.
You know, when you talk about moving forward, and as I pointed out, CEOs are used to dealing with uncertainty and ambiguity. But in a situation like this, where on an hourly or even on a minute-by-minute basis, you don't know whether a tariff is going to stick or not stick, whether there's going to be a further hike or there's going to be a rollback, as we've seen in the last 2 weeks. How do you make decisions in this environment? And are people now essentially saying, let the dust settle before we make big calls, whether it's CapEx or expansion? I mean, that's the kind of feedback that I'm trying to understand how that's playing out.
I think you're really getting to the root of the issue here. And how do you make decisions given so many different impulses, and the fact that these inbound new bits of data can happen multiple times a day? I think all of us look at our phones many times a day to see what's the latest, particularly coming from my country. But you know, what I hear from CEOs underneath this are a few things that I think are useful in these times. And on the one hand, making long-term decisions on things that may not have long-term assurance is not a recipe for success. And so many CEOs are coming back to a couple principles that at least I hear. One is the notion of resilience. How resilient is my company to future shocks going forward? Because these may not be the last. And I'm hearing more and more, I may need just to plan for a world that is fundamentally volatile, as opposed to hoping for a return to some kind of normality. And so how resilient is my company? And the resilience notion is not just defensive, but how do I have enough capital, enough talent to make a few bold bets while I protect myself from shocks? So I hear resilience as one. The second thing is this notion of timeframes. Will the decisions that I'm making be durable over the time frame of that investment decision? So if it's moving a supply chain, if it's developing a natural resource, if it's making an R&D decision, these are often decade-plus decisions with decade-plus payback cycles. And so what I often find is, how do I marry the return profile with the volatility profile to say, is this something that is robust no matter what? So take a practical example on this. Many are asking around the world, how much of my supply chain should I have in the US, right? Given tariffs. Well, if you back up, we had done some work in the pre-tariff era that said supply chains aren't resilient enough, that COVID and the Russia invasion of Ukraine showed that we actually had fragile supply chains. And there was a logic for moving part of your supply chain closer to the source of demand. The US is the largest source of demand, irrespective of tariffs. And so several CEOs are coming back to that foundational logic to say, would I make this decision even without tariffs? What portion of this is robust long-term, based either on resilience logic, long-term demand logic? That's a practical example of this time frame piece. And maybe the third thing I'm hearing, if it's resilience, time frames synchronized with the investment decisions, the third is this notion of where are no regret moves just to speed up? And in particular, one of the topics that's around that is the implementation of new technologies to change my business. No matter what happens in the world, I am going to have to implement technology faster to change my business. That's a no regret move. And so I'm often asked the question, Bob, what are the no regret moves that I can be implementing irrespective of, these external stimulus that's going on?
We don't have the ability to pay your fee today, but we're going to ask you, Bob, nevertheless, to give us some of those no regret moves in just a second. But let me get Rajat to comment on the feedback that you're getting from your Indian clients today, because the way that we look at the narrative that's shaping up, the feeling is that India is going to be a beneficiary of this tariff move, or even as Bob put it, even outside of the tariffs, India has been positioning itself as a manufacturing hub. Case in point, the smartphone success story. Build on that. What are you hearing now as far as the near short-term implications of this global reset and the decisions that you believe CEOs are likely to take on the back of it?
Yeah, great. So as I talk to the CEOs and the boardrooms here in India, I think you called it. I think the general posture is let the dust settle. Because I think this news flow, which is a flip and flop going on over the last couple of weeks and will continue, there's a lot of short-term noise. But equally, I think to Bob's point, there are some no-regret opportunities coming out, right? Electronics value chain you already cited out. It's starting to play out, and I think continued investment there is going to work. But I step back a little bit to say, hey, in this moment, what is the real long-term signal emerging for the Indian economy, right? And firstly, I'd say that we are at a good place already, not just because of the global dynamics and where we are positioned, but also a lot of hard work over the last 5, 10, 15 years, where the Indian economy has now gotten to and what is the potentiality. I think we're at a good place. I think the real long-term signal emerging in this moment is that we need a new playbook to take it to full potential growth. And by full potential, I mean 8.5% real GDP growth consistently for 20, 25 years. And that's possible. I think there are 3 elements of this new playbook. And I think the sooner we embrace it and start to execute it, the better. I think the first one is we need a new playbook for investment formation. And I'll come back and talk about it. But at the second level, I would say we need a new playbook to raise our competitiveness, and innovation goes with it, especially in manufacturing. And again, I'm happy to talk about the elements there. And then third, I would say, is really a new playbook needed to dovetail skilling with job creation in a significant way, because that starts to get us closer to where we would get our demographic dividend to play out. Let me talk about the first one at least, and then pause and then see where you want to take the conversation. On the investment formation, at the end of it, there are 3 elements to it. I think there's a government spending around infrastructure.
Which has been doing the heavy lifting.
Which is doing the heavy lifting. If I take the IPL cricketing analogy, Bob, the IPL tournament is going on. That's the batsman that's making the runs in the last 5 or 10 years. We've got to about 11 lakh crore, what's about 120, 130 billion. I think the new playbook now is go away from what I call linear infrastructure development, linear and point infrastructure of roads, railroads, ports, to what I call economically dense infrastructure. Think of cities, new cities, 20, 30 new cities. It could be brownfield next to already existing city hubs. It could be around economic clusters. But imagine, our analytics tell us that if you really go for even a brownfield city, leave alone a greenfield new city, over a 20-year period, it could be anywhere between $80 to $120 billion of cumulative GDP that accrues. Jobs happen, and the government the federal government along with the state governments, if there was a way to partner in with a very efficient vehicle, right? I remember the DMRC phenomenon of 20 odd years ago, and then Delhi happened, and then so many other cities came forward with the metro. I think something similar, could be a great way of what I call economically dense infrastructure creation, and government could be the catalyst. Let's talk about corporate investment, private sector investment. It's stagnated about 12-13% of the GDP.
Yeah.
There you see, there is an underlying, improvement or strengthening that has happened which has not been noticed, which is that, look, erstwhile it was all debt finance. Most of the investments were debt financed. Over the last 4-5 years, with capital values appreciating, equity markets going up, particularly in mid and small caps, a lot of that risk has shifted onto equity. People have, companies have infused capital, they have deleveraged, and now the interest rate cycle is also turning, right? With the RBI adopting a pro-growth stance. So I feel like the timing is right. We're waiting for the demand signals. But the mix of capital as we go forward in the new playbook will be a lot more equity-oriented, a lot more risk capital-oriented. Because, I mean, promoters and CEOs don't want to lose their sleep. I think they're sleeping better because of all the deleveraged balance sheets.
Oh, without a doubt.
Goes back to the resilience bit that Bob talked about. And then the final bit on investment is really the MNC capital. You see, our domestic savings rate around 30% is not going to go up substantially, right? Because, I mean, as income demographics grow, households want to consume rather than save and so on and so forth. I think we need foreign capital. We need FDI capital, MNC capital. And there, I think the only big shift we want is not so much ease of doing business. A lot has been done. And frankly, no boardroom or CEO globally decides based on whether I have to fill 20 forms or 70 forms, right? They decide, is there an upside for value creation in the country? And if there is a downside, am I protected with the right legal framework, the right settlements? So I would shift from ease of doing business to a new playbook called facilitative foreign capital, inviting and facilitating a fair play for the MNC capital.
Equal level playing field for foreign companies in India. Is there a feedback coming in that they feel that the playing field is not equal?
Look, I mean, empirical evidence is in front of us, vertical by vertical, industries by industries. You see that actually it's a share of the domestic private sector as well as government PSU sector. I mean, the share is actually growing, and the MNCs by and large are getting squeezed in the country. And I think, to the extent there could be I wouldn't call it a fair or level playing field, but it's just the assurance around taxation, around legal matters and predictability.
Exactly. I mean, stuff that's been on the table.
And we need that FDI capital. Because, I mean, that's going to be the difference
without
between
a doubt. We do need that FDI capital. Plenty there to unpack. But, Bob, let's continue with the India conversation in the context of what's happening with the global reset at this point in time. To Rajat's point on competitiveness, to the point on your point on supply chain diversification and supply chain resilience, the role that you believe India is likely to play, when we look at what happened between 2017 and 2024, and this is the data that McKenzie has put together, the beneficiary of the supply chain diversification out of China was to the ASEAN region and more to countries like Vietnam. So India has seen an incremental uptick, but perhaps not to the potential that it would like to see. How do you believe that's likely to change?
I might maybe one comment just on the past bit. I think the MNCs, just to close on that topic, it's not only for capital, but it's also for technology transfer,
and innovation.
Right? And we should look at both aspects as catalysts to growth for India. And my sense is it's less a level playing field, but more examples of MNCs that have thrived in India because it's a viral game. And so the more examples of folks who have actually been successful will be in the boardrooms around the world saying it's possible. And what does that look like? And then you will know the better preconditions of that. But if you come back to the future growth potential for India and you start with manufacturing, India is nowhere near its full potential around this. And you highlighted, I think, a success story. I think you have to hand it to Vietnam in how quickly they moved. But on a relative basis, Vietnam's small. And Vietnam now is facing all of the secondary issues labor shortages, supply chain issues, overconcentration, et cetera, that India won't face for a while. And I think this is really the moment to now move from a catalytic change that has started in India about this notion of a strong manufacturing base to now kinking the curve and really starting to drive acceleration at scale. And so I am very excited, and I'm excited because you root this logic not in tariffs, right? You root this logic in the fundamental notion of resilient supply chains. And therefore, from an investment decision, whether you're an Indian company or an MNC, looking at Indian manufacturing and Indian supply chain, you can get excited about making that long-term investment.
And you believe it makes business sense, irrespective of whether the tariff differential varies and India stands to benefit at this point in time or not?
Could be, just building on that, I think there could be granularity to that approach as well, right? And granularity at two levels. I think firstly, where are the end markets? I mean, if you are really exporting, manufacturing in India for the world, we cannot be super competitive in everywhere, right? I mean, you have to pick your. It's like going and winning Olympic gold. You pick your categories, as opposed to saying in all the 120 sporting categories, I'll win a gold. You say here are my 10 or 12. I think that analogy plays out even in manufacturing. We actually have identified 10 to 12 value chains. In fact, further segmented into saying we are already competitive globally. Let foreign capital come in here. Let it create jobs. Let it create investment, and let's scale. Pharma formulations is one of those examples. Auto components, specialty chemicals. I would call them as the scale industry. Just build scale from 20-odd billion of exports towards 80-100 billion.
And by the way, to your point, we shouldn't be solely focused on the U.S. in this.
Sure.
When you think about global growth and India's position to this, you get very excited about other markets as well. ASEAN, the GCC and the Gulf, but also looking at competitiveness into Europe. And so I think that that's the other lens to this. Sometimes we get obsessed with the US, and it is the largest economy in the world. But this manufacturing in India for the world also can take advantage of differential growth rates in other markets around the world aside from the US.
Don't be so US focused necessarily. But on the point that you were making about the US, Bob, and as companies are looking at the possibility of moving supply chains back to the US, where do you believe we're likely to see that happen the fastest? There are, of course, restrictions that the Trump administration is imposing, saying that for particular industries, you will have to operate out of the U.S., for instance. But where are you seeing the most momentum at this point in time in terms of actually moving supply chains to the U.S.?
Well, I think first I come back to the logic on this needs to endure past a tariff regime. And so where you start to see movement, you see logic around semiconductors.
Strategic.
And semiconductors has multiple components to it. One is a very fragile supply chain that has a pinch point dependency, particularly around Taiwan. You layer in a national security incentive around this, and a large job growth multiplier that puts incentive not just at a federal government or tariff level, but the mayor of Phoenix provides massive incentive to TSMC because of the job growth potential that this drives for the Phoenix area and Phoenix, Arizona. So you see semiconductors as one of the supply chains that is really moving, and I think moving irrespective of tariffs. The other are ones that are energy dependent. And one of the things I think we also forget in this discussion is that the U.S. has a really strong competitive advantage in energy, in particular in natural gas.
Right.
So natural gas provides a really unique opportunity as you think about the revitalization of the petrochemicals industry, and also around LNG exports. Now, these things are going to be robust irrespective of a tariff regime. And so you start to see large capital moving in, taking advantage of low-cost natural gas. That is something that is a long-term trend that would be robust. Those would be two verticals that I would pick that are already in the acceleration phase, independent of the tariff regime.
Pharmaceuticals, and I ask you this in the context of decisions that Indian companies, the larger suppliers of generics to the US, will perhaps have to look at. I mean, the Trump administration has made it very clear that there will be tariffs on pharmaceuticals. They've also asked for supply chains to move to the US. You know, do you see that being a possibility? I mean, today when we talk to Indian CEOs in pharma companies, they believe that that's far more complex, you know, to move, and not just from a cost point of view.
Yeah, maybe my quick perspective on that is, you know, to his point, it has to last beyond, it has to endure beyond the tariff flip and flop and so on, right? Tariff regime, and therefore the cost imperative is a pretty important one. So I think the disruptor there could be AI coming into manufacturing, humanoid AI, for example. The waves are moving, right? The Gen AI waves are fast moving. There was a text and prose creation wave. There's been an agentic AI wave now, and I think humanoid AI, you know, where, you know, human-like robots with cognition could be on the shop floor to solve shop floor issues and so on. That starts to change the game, because then the labor cost is thrown out of the equation. If that kind of disruption comes in, frankly, the imperative will build. So, but I would base that development on much more the cost competitiveness and technology enablement.
Well, and life science in particular is probably the trickiest one, because there's, as you know well, there's many factors at play in this. The U.S. drives the disproportionate share of the global profit pool for pharma, and it drives this through its pricing structure. The pricing structure is a complicated system of government reimbursement, et cetera. And so independent of the tariffs, there's also a view on what is going to happen to the health system going forward, which is one of the largest sources of federal spending, you know, in the U.S. And how global pharma companies think about their footprint first depends on what do you think about the global profit pools in the United States. That has an aspect of reimbursement, pricing regimes, et cetera. And so you need to take a view first on that. I think then you take a view on, well, what impact does then tariffs and also tax incentive have in terms of where I place my manufacturing? And you are seeing several announcements. Novartis was one of the most recent of moving some of the manufacturing to the US. And I think you will see that. The part, though, that I get excited about is I wonder if the question for India, and you two will know more about this, is really a manufacturing question game as it relates to pharma, or an innovation game. And this builds a bit on, Rajat, where you are going, but you know what I see as one of the greatest opportunities for India is that India moves from an era of phenomenal high-quality, low-cost production to a source of R&D and innovation. And that you move up the value chain, that this becomes core R&D as we start to do more and more of the applied technology here in India. Then the value is in the IP, not in the manufacturing, which then becomes less a geographic question and one that India can retain most of the value from. And so I wonder if that's an exciting, maybe corollary to this question.
No, absolutely. And that coupled with the fact that we have such large market opportunity domestically. I mean, ultimately 60-65% of the GDP is domestic consumption, and that's likely to continue to power it. And if you fast forward 20-30 years of GDP cumulatively, right, you know that all the essential goods and so on are about 25-30% of the consumption. You know, housing is up there with 15, mobility, cars, and all sorts of mobility is another 15%, and so on and so forth. Then you start to get to some desirables around travel, hospitality, 10%. So you have trillions of dollars of that spending coming. And to his point, is there a way to accelerate the consumption curves on the back of innovation? Because that suddenly opens up larger and larger markets. With larger markets, you can also get globally competitive faster. So there is a virtuous cycle there that we could get to.
No, there certainly is a virtuous cycle, but what we're seeing happen on the innovation and R&D side, disproportionately housed in the global capability centers that many companies like yours have set up in India, as opposed to Indian companies spending on R&D, which continues to be quite low at this point in time. But Bob, you know, to the no regret moves that you were talking about, and I think this is something that Indian IT is going to be looking at very closely, because at the start of the year, the expectation was on the back of deregulation in the US, this was going to be an explosive year as far as demand for IT services was concerned. What's the expectation? Do you believe that there's going to be a slowdown on discretionary spends on technology, or do you believe that this is going to be one of those things that will continue irrespective?
You know, Sri, I think it's a great question, and if you do back up, there was a lot of enthusiasm amongst business leaders all over the world in November, December on the deregulation front, and you know that theme also shouldn't be lost. Sometimes I know that the tariff theme tends to dominate, but there is a lot of move in the U.S. in particular around deregulation. And I think that one will now start to gain momentum and is one to watch. So I'd keep your eye on the deregulation. But the other excitement was coming agnostic of government intervention, which was the whole Gen AI revolution and how do you move into now value creation. Now, the interesting part was we did a survey of 500 of our clients worldwide and asked a very simple question. How many of you could identify P&L improvements from Gen AI in 2024? And the number was less than 14%. So what I actually hear right now is we're at an inflection point, and I'll simplify things, but if I ask a CEO, non-tech CEO, many will say, Bob, you know, do I listen to my CIO or my CFO?
Yeah.
Right? So my CFO is saying, I don't see the value yet. My CIO is saying, yeah, but we're right at the time. Don't lose faith right now. And what we're finding is that there's real learnings in those 14% of enterprises that are figuring this out. That there's massive disruption potential to reinvent the business. And when I look at 2025 and 2026, I think you'll see that number really start to rise. And here's where I think Indian technology providers can play a really unique role in changing the fundamental thesis from amazing talent that is resident here to amazing technology that is delivered. An amazing technology that is delivered not just for efficiency grounds, but for transformative grounds. And how to actually be, I think India has a moment to be a leader in Gen AI, first in services, but then let me put a marker in, back to our manufacturing topic.
Yes.
The next big application is going to be in robotics. And so is Indian manufacturing not just efficient, but more effective because it leapfrogs, say, Vietnam, by already adopting robotics from day one to get to a position that no one else can touch.
You know, let's talk about what this also means in terms of not just FDI, but M&A. And you said that this could perhaps be an opportunity for people to consider bold bets as well. Do you believe that we're likely to see a risk-off on M&A as well as FDI, or do you believe that some strategic deals may perhaps go through, or are the deals likely to be more existential in nature?
You know, again, take a more medium-term view, not just the next couple quarters, but the next couple of years. I think you could make a case that there's a logic for more M&A activity, and more M&A activity in multiple vectors. So one vector is cross-border, and this idea that we didn't value diversification across geographies as much as we should have, and it's a way to deal with this inherent volatility. And we are seeing a very high increase in requests on cross-border M&A scans. So I think cross-border. The second is cross-product. And you know, for years we always grew up with the stick to your knitting, focus, et cetera. And I think one of the things we've seen, if the world's going to be fundamentally more volatile, we may have undervalued diversification, particularly if you can provide some synergy across the collection of assets. And so we're seeing an increase in requests around step-out opportunities for particular companies. And then the third is with a technology thesis. How do I deepen my technology quotient, particularly if I'm a non-tech company, where I know that I'm not going to be able to outsource this. I'm going to need more tech, whether I'm a manufacturer, whether I'm a pharmaceutical company, et cetera. And so how do I see step-outs in acquisitions that have more of a tech component in this? And I think you're going to see accelerated activity across all three of those vectors, at least if we take a multi-year horizon on this.
And if you look at the Indian corporates, I think Indian corporates incumbents are pretty good at domestic M&As to go take positions in new verticals, adjacencies, tuck-ins.
Or consolidation within
consolidate
sectors,
a particular sector, absolutely, you know, an unorganized sector, just roll it up. I think we're still learning the art, if you ask me, despite some acquisitions that have happened cross-border, large acquisitions, to gain access into newer markets and to gain access of technologies or capabilities. I think that art is still being learned, if you will, with Buy India Inc. And I think opportunities will come up, but now there is a supply side question of really going and doing it right so that it, again, starts to create the confidence to go and acquire.
Well, you know, we're pretty much at the end of our time, so let me ask you, Bob, it's 100 years for McKinsey in 2026, 30 plus years here for McKinsey in India. You know, as you look at the McKinsey playbook today, and I'll ask you this in the context of the many learnings as well as the setbacks that you've had to deal with. You've settled with the Department of Justice for over $600 million in the case that you had with Purdue Pharma. I know you've decided to prioritize distinctiveness over growth in an environment that's as challenging as the one that we're in today. Does it become harder for you to say no to clients, you know, even though you want to believe in being distinctive versus driving for growth?
Well, I think it's a great question, Shreen, and I'd start with India, and we're incredibly proud that 1/3 of our total history is with India. And the reason I come so many times a year is I do believe, we've talked a lot about the volatility in the world. Oddly, I actually think a lot of this volatility could be great for India. And I think there is this moment, and you know, I've been on record before of India's century, and I'm not backing off of that. I really do think this is the moment for India to lean forward with all of this volatility and figure out how do we accelerate coming out of it. And so I start with that notion. You know, you made mention that our broader history, so we invented this profession, and yes, we'll turn 100 in 2026, and we're using it as a moment to both look back and look forward. Look back, how did we get here, and what did our predecessors do to build the firm that we've all inherited? Because we have stewardship to then move it forward. And then looking forward, what does this mean for how do we continue to reinvent ourselves? And you've hit on one of the key themes for us, and folks may not know, but you know, we're a private partnership that looks at the future around this notion of distinctiveness. And you and I spoke about this previously, but the idea that you're not going to hear McKinsey talk about its own growth, obsessed with how we're doing, because we're obsessed with how our clients are doing. And this idea that we want every bit of work that we do with our clients anywhere in the world to pass this marker of distinctiveness. And you know, you mentioned, is that harder or not in times like this? Look, they can't be values or objectives if you're not willing to pay something for them, right? And this is where you're tested on core principles of values. And one of our values is that distinctiveness will help drive long-term health and growth. But it does come at this ability to say no to things. But saying no in that instance is good for us over the long term because it separates the kind of work that McKinsey should work on versus not. We think we should work on the toughest problems, not all problems. There are other folks who can solve some of that solution space. We want to focus on the stuff over here. And it comes with fortitude, but we're pretty confident that that times like this will actually be good for us on this dimension.
So you've spent about, what, $1 billion in risk and compliance related spends. Do you believe that you need to do more as you look ahead?
Absolutely, because it comes down to trust. And ultimately, we work with our clients on their most sensitive topics. Things that are intimate, things where the CEO is vulnerable. We need to give that CEO and their whole team the absolute assurance that we're doing everything we can to keep them safe. And that becomes more and more complicated around the world when you operate in 70 countries across a whole range of industries. So I don't think we're ever going to be there. I want us to stay on the edge of defining the professional standards for our profession. And that means we're going to continue to reinvest in risk and compliance, just like we're doing in R&D, just like we're doing in upskilling. It's now a category because it's a category, I don't mean this not for the regulators. It's a category for our clients that says this is why you should put your trust in us, because we're going to set the standard for professionalism for our industry.
So you said that, to operate in India, and I remember both of you saying this, you require an immense amount of stamina and resilience. But, but as we look at 2025, and, Larry Fink believes we're already in a recession, Ray Dalio believes we're going to see something far more profound than a recession, and there's all kinds of opinion on what this could mean. How do you... What is the 2025 forecast? Let's just keep it near term, because we don't know what's going to develop in the next few days.
Yeah, I mean, like for India, I would say absolutely. Like there's some commentators who are talking about, oh, is this a 1991 moment, particularly precipitated by tariffs? By no means. I think we're far from that. I think we've had a mild correction. My sense is we're just about to turn the corner back on growth. So we're very buoyant. We're very sanguine about it. And frankly, I mean, look. As we get to 100 globally and 35 in India, we're super, super committed to make sure that we bring about sustainable and inclusive growth for the country in the next 20 years. It's our time. And accelerate the digital revolution, the technological revolution in the country, because we are absolutely sure that will provide us the escape velocity as a country.
Global?
My thought is it depends on if we think this question is exogenous or endogenous. If you think it's exogenous, that it's going to happen, and I'm not an actor. As a private sector CEO, I'm not an actor. I think we're in for tough times, right? If you think this is endogenous and that I play a role in this, and back to some of the conversation we've been having, there are many actions that I can take despite this volatility. Leaning forward and taking those actions will end up driving economic growth, and I think things will be better than some of the most pessimistic forecasts have. If it leads to periods of stagnation and we move into a wait mode, I think those could actually come to pass. What we're setting out to do is to try and build as much conviction with CEOs around the world that this is an endogenous question and not an exogenous question, to try and avoid that particular outcome. So I think it's in our hands.
It's in our hands. We'll have to wait to see how this plays out. But Bob and Rajat, many, many thanks for joining us here to take us through what the world view looks like, and more importantly, the outlook for India. Appreciate your time, and look forward to seeing more of you again. And Bob, seeing you back in India when the McKenzie Global Board visits, which is going to be in a couple of months from now. But thanks very much for joining us.
Thanks for having me.
Thank you.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue. From all of us here on the team, for now, goodbye, and many thanks for watching.
and welcome to Startup Street. I'm Ritu Singh, and here are the key headlines from the startup space. Urban Company is set to cut the size of its proposed IPO by 80% because of recent market upheaval. Sources say the company will file papers with SEBI next month to raise 528 crore rupees. The issue will value the company at more than $2.5 billion. Teacher accreditation EdTech startup Center raises 20 crore rupees in its Series A1 round, led by Colosa Ventures, with participation from existing investor Discovery Assets and angel investors as well. These proceeds will be used to grow in India and other markets and to improve the technology systems. Indian cricketer Jasprit Bumrah has joined luggage brand Uppercase as an investor. Bumrah will expand his role beyond being an endorser and actively contribute to the brand's development. The startup had recently raised $9 million in its Series B round, led by Accel. Moglex, a B2B e-commerce firm, has announced the appointment of Sanjeev Arora as its new Chief Financial Officer. And in this role, Arora will lead the company's financial strategy and operations with a focus on capital planning and advancing its long-term growth journey, including preparations for an IPO. And Mark Zuckerberg takes the witness stand on the first day of a historic antitrust trial in Washington, defends Facebook's parent Meta from allegations of creating an illegal monopoly. The US authorities are seeking to unwind the acquisition of both Instagram and WhatsApp. Well, those are the headlines we're tracking for you today. Now, Swiggy has launched an AI-powered app that is called Ping, making its entry into the professional services market. The app leverages AI to connect users with verified professionals from more than 100 specializations. Shilpa Ranipeta is here with more details on this story. Shilpa, what does this mean for Swiggy? How is the app going to work?
Well, from ordering food on Swiggy or groceries on its quick commerce platform, there's a new service that has been added. Swiggy has forayed into professional services with the launch of a new standalone app called Ping Now. This is currently live in Bengaluru for offline services, and the platform also offers online access to various services nationwide. Now, what is Ping? It is an AI-powered professional services marketplace which connects users with over 1,000 professionals across 100+ categories. This is anywhere from health and wellness experts to financial advisors, astrologers, dance teachers, career coaches, and even packers and movers. Now, Swiggy plans to onboard 10,000+ experts across India. Now, how this works is that the app allows users like you and me to chat with AI assistants for personalized recommendations and real-time support, or users can also directly reach out to the professionals that are listed on the platform and either book them directly or have a chat or a 15-minute call with the service provider. Now, the app also gives you access to events, WhatsApp groups, and updates, and is also offering a money-back guarantee if users don't find value in the service that they book. Now, the listing is currently free for the experts with zero commission as a launch offer, but Swiggy is eventually expected to monetize this by charging them for leads. Now, if you look at this, Ping is a broader play compared to, say, an Urban Company, which focuses mainly on home services. Meanwhile, remember, Blinkit also, which is owned by Zomato, is also eyeing a similar foray into at-home services space. And remember, because of this, Zomato CEO Dipinder Goyal had resigned from Urban Company's board back in 2023. So, professional services and at-home services, that looks like the next big play for the quick commerce industry. Back to you.
Well, yes, we continue to see that trend of quick commerce players expanding into other segments. Shilpa, thanks very much for bringing us that story. Now, here's the CNBC-TV18 exclusive. Ather Energy, we understand, is going to file its RHP very soon. Now, according to sources, the electric two-wheeler maker aims to list on the Lal Street this month itself. Let's go across to Rachna Dhanrajani for more. Rachna, what have you picked up? There's been a bit of back and forth. When will we finally see this listing?
Well, sources have told CNBC-TV18 that Ather Energy is likely to file its RHP soon. Finally, after the months-long delay, it is expected to file it tomorrow, with the company expected to open its IPO subscription on April 23rd. The electric two-wheeler maker is aiming to list by the end of this month. This comes after 2 rounds of updates to its DRHP, which were filed amid volatile market conditions and a weak investor sentiment. And as a result, both the IPO size and valuation have been revised downward, as we have been reporting reporting constantly. Week after week, we have been keeping up with Ather's updates. But now, finally, the IPO size is expected to be in the range of about $350 to $375 million, which is approximately about 2,900 to 3,200 crore rupees, at a post-money valuation of about 12,800 crore rupees, pretty much in line with what we have been reporting for all these weeks.
Yes, Rachna, and thanks very much for bringing us that story. But stay with us. You know, Ather is not the only company to have cut its IPO size amid the volatile market conditions. Tell us about Urban Company, where you've been reporting the proposed IPO could be cut by 80% because of the market upheaval. What's going on there, Rachna?
Well, their sources have told us that Home Services Unicorn, that's Urban Company, has secured a shareholder approval to raise about 528 crore via an IPO. The company will file its DRHP by the end of next month. While the company had initially planned to mop up about 3,000 crore rupees, market volatility has forced a rethink. A pre-IPO placement with select investors may shrink the offer size further. The IPO, which will include a stake sale by existing investors, is expected to value Urban Company at about $2.5 to $2.8 billion, leading the issuer Kotak Mahindra, Goldman Sachs and Morgan Stanley. On the business front, Urban Company reported a 30% jump in FY24 revenue, clocking in at about 827 crore rupees, and losses have also narrowed to just 93 crore from 312 crore in FY23. The company offers a wide range of services as we know it. It goes from home cleaning, repairs, pest control to beauty and wellness, which continue to be its strongest category. In FY23, home services made up nearly 78% of its revenue, with product sales, which now also includes selling native RO purifiers that also contribute to the rest. The company is also diversifying into new categories like wall panels and smart locks, and is currently operational across India, UAE and Singapore.
All right, Rachna, we'll leave it at that. Thanks very much for bringing us both of those stories. Now we'll move on to what else is brewing today. Indian cricketer Jasprit Bumrah has invested an undisclosed amount in sustainable travel gear brand Uppercase. Now Bumrah has been associated with the brand as its ambassador for the last 3 years and will now expand his role beyond being just an endorser and actively contribute to its development. The company says it is going to work closely with the cricketer to create a distinctive product line. For more on this, joining me now is cricketer and investor Jasprit Bumrah and Sudeep Ghosh, who is the MD and founder of Uppercase. Gentlemen, thanks very much for your time here. Jasprit, we know you're in the middle of an IPL, but tell us about this investment. You've been associated with Uppercase in the last 3 years, and now you're coming on board as an investor. What got you to sign the check, and why did you choose to invest in Uppercase?
It's been a good 3-year cycle with Uppercase. I've been happy to be associated with them. We came during the COVID times, and I've seen the brand grow from strength to strength, and the vision that they have is aligned to my vision as well. So yeah, very happy to be associated, and hopefully now I'm more involved in the brand and I've invested in it as well. So it will grow from strength to strength, and we'll accomplish great things together.
Well, Sudeep, let me ask you then, since we didn't get the answer from Jasprit, what is the amount of the investment that he's made? And you'd also recently raised this $9 million in your Series B round. So is this particular investment more strategic in nature, and how will you deploy the money?
Okay, so this is definitely more strategic in nature. Currently, the papers are getting filed in Ministry of Corporate Government Affairs, so I'll not be able to disclose it. Of course, it'll get disclosed once filed. But more important is the fact that when a brand ambassador we've been with you for some time, decides to invest in the company, it tells a lot about the organization and the brand that they're doing. We have been knowing each other for the last 3 years, and it was Jasprit's idea, and he came up here and he said he would like to invest, and we were all over the moon, because it kind of gives us a huge pat on the back, saying whatever we're doing must be doing good, because we have personalities like Jasprit who are coming forward and saying, hey, you guys are doing well, let me be part of this journey, not just as a brand ambassador, but somebody who can grow the organization along with you. So that's
all
more
right.
important for us.
All right, Sudeep, you plan to use this money to bring out a new line. How will this be different from what you have in your portfolio? And, when you're looking at the pricing strategy, because you're calling this product premium, how will it differ from what you have, and how soon is it going to go on the shelves?
Good question. See, in India, we have our luggages are very generic, if you really see. For instance, I'll give an example. I have heard people talking about the fact that there are not good camera bags, for instance. So when we were discussing, Jaspreet had very clearly told us that he wants products which are meant for sports people, especially backpacks and gym bags, because he says that we need to carry few things which we usually put it in a regular bag and then we keep looking for it. So we are now planning a product line specifically for sports people. Typically for us, we're an organization who design, develop, and produce here in India. We're a 100% Indian brand, and it takes about anything between 4 to 6 months for the concept to consumer. That's what we say, to reach. So we have already started working, and we expect the product line to hit by end of September, early October. That's where the target is, just before the season or the festive season starts. And when we say premium, we buy our band of operation is in the middle. So premium to our brand, but not premium to some of the premium bags that's available. We want sustainability and fashion and functionality to be available to majority of Indian market, not just
Got it.
And that's always been our plan. We have stores in Sonipat and we have stores in Mall of Asia in Bangalore. So we straddle a larger piece.
Well, Sudeep, a quick word. We're running out of time. But the kind of sales you're currently clocking and the profit margins you have, especially now with this new premium product in the pipeline.
So we are averaging an ARR of about 120 currently. Our gross margins are about 50%, around 50%. So as far as the margins are concerned, we are okay. We do not want to unnecessarily price up and get the product out of reach of consumers. So this will be available for people at a price. But of course, it will not be the cheapest from our stable, but somewhere on the higher side of our spectrum.
All right, Jaspreet, finally a question to you as a cricketer and investor. What kind of similarities do you see between cricketing and investing, and the lessons you draw from one that can be applied to the other?
The one thing that I learned from my cricketing career is back your instincts. I've always done that as a player. So even in investing and anything that I do in life, I go with my instinct, and that is what I felt over here as well, that this aligns with my vision, and all of these attributes that they have match to my thought process as well. So it was an easy choice for me to invest in the company, and obviously going further I'll have more inputs of the things that I believe in. So obviously it's a work in progress with both teams coming together. So yeah, hopefully all of this comes to one bigger goal and we achieve that, and lots of success can be achieved.
All right, Jaspreet and Steve, we're going to leave it at that. Thanks very much for your time here today on CNBC-TV18. We're going to have to slip into a short break on that note, but up next, Spine secures $16 million in a Series A funding round. We'll put the spotlight on its founder, Sanjay Varnal, on the other side of this break. Stay tuned. Welcome back. You're watching Startup Street. Now, a deep tech platform for the automotive industry, Spine, has raised $16 million in a Series A funding round that was led by Vertex Ventures. Now, the company says this investment is going to help fuel its growth, focusing on aggressive expansion in the US and developing its next generation AI solutions that are designed to transform automotive retail. For more on what the company's future trajectory looks like and how this capital is going to boost their growth, joining me now is Sanjay Varnwal, who's the co-founder and CEO of Spine. Sanjay, thanks very much for your time here on Startup Street today. Before we get to that funding, briefly tell us about what you do, because you started out focusing on technology solutions for many industries, e-commerce, food delivery, and whatnot. And then in 2023, you decided to pivot to just the automotive sector. Has that worked out well for you so far? And what is the size of the opportunity you're chasing?
Thank you so much for inviting me on the show, Ritu. Great to be here. So, yes, you said it right. We started the company in 2020 with a goal to help long tail sellers compete with the top brands with the good-looking merchandising that they showcase online, right? So we started catering to all kinds of sellers across food, e-commerce, real estate, automotive, but gradually realized that if you solve for every industry, you'll be average at everything, right? So we wanted to focus on one given sector, and the goal was to build a world-class product that will be, and that will truly do the justice for the clients that we'll be serving, right? So we focused on automotive as a core sector because one, the TAM was big. US, Europe is like massive automotive markets, especially in the pre-owned space. And second, the intent to pay, because the automotive is a large value ticket, right? So the cars typically are sold at about anywhere between $10,000 to $30,000. So the dealers have good intent, right? So that was the intent, and last 2-3 years we have been building only in the automotive.
Well, in that case, tell us about the $16 million funding. How exactly are you going to use this? What will be the priority area for growth?
No, so I mean, last 2 years have been entirely focused on building the core merchandising solutions for the automotive dealers. Like, so you see, there are big dealers like CarMax in India. You'll have Spinny, Cars24, just to be the equivalent companies of CarMax or Carvanas in the US. But there are hundreds of thousands of smaller dealers which are not able or do not have the kind of resources that they can spend to get those premium visuals, right? So we started with giving them the kind of solution that can help them compete with those bigger companies, the smaller dealers. And after building our solutions deep into this particular market, we realized that there are more gaps that we can fulfill. And the way the AI is transitioning, we are now looking to get into more, how can we make the inventory management more like agentic AI in its approach, right? So inventory management, the marketing, the CRM, all built using new age generative AI. So that's the space that we are now tracing. And the goal is to build the future of automotive retail, right? So you can think of us as a company which is kind of building Shopify for car dealers using generative AI. So that's how we can be best, yeah, in future.
All right. Your plan is to expand the dealer base as well from 1,500 to 20,000 in the coming years. Just give us a sense of whether the focus will continue to remain on one of your largest markets, that is the US, even in the current environment, talks of a recession and whatnot. What sort of trends are you seeing on ground there, and will you continue to double down on that geography?
Yeah, absolutely. I mean, this current tariff issue has, in fact, proven to be a boon for us because the used car transaction is going to go up. Production of new cars is going to be impacted. That's where dealers are doubling down on transaction of the used cars right now in the market. And you see, in the US and Europe, there are close to 80,000, 100,000 dealers, and we are talking about right now. We are just working with about 1,500 odd dealers. Next 2-3 years, we can have a real shot to get to about 8,000 to 10,000 dealers that we are tracking right now. Every month, we are adding about 100 to 150 dealers right now on our platform. So at the current rate itself, we'll be able to get to 3,000-4,000 dealers by end of the year. And next 2-3 years, the goal is to get to closer to like 10 to 15,000 odd dealers in the ecosystem. Yeah.
All right. So you don't see a hidden demand because of what's happening in the US right now. Also in the past 15 months, you claim to have seen a 5 times growth and you're targeting a 3x revenue increase in the current financial year. Give us what this means in terms of absolute numbers, and what kind of profit are you looking to clock in the coming year or so?
Yeah, so we are a high gross margin business. So we run at about 85-86% of gross margin. SaaS, right? True SaaS, built using AI. So of course, because the market is deep and the product market fit is fully established in the US dealership segment, so we were able to clock that particular growth 5x, as you just mentioned. We are in the later side of the single-digit ARR right now, and within this year we'll be targeting to go at least like to 3x of the number that we are doing right now, right? So and we are on track. Like, so it is based on the current velocity that we are doing, we should be fine hitting about 3x of the revenue that we are doing right now.
All right, Sanjay, we'll keep a track of that and hopefully have you back later as and when you have more updates. Thanks very much for your time here today on CNBC-TV18.
Thank you so much for inviting us. Thank you.
Well, with obesity rising sharply in India and global weight loss drugs like Ozempic grabbing headlines, a Mumbai-based startup claims it has a natural, affordable alternative, and that it claims is backed by clinical trials. My colleague Aishwarya Anand gets us that story.
Obesity in India has become a silent epidemic. According to National Family Health Survey, nearly 24% women and 23% men in India are obese, indicating a public health crisis. At the same time, GLP-1 based drugs such as Ozempic have become a global phenomenon where they're promising rapid weight loss. However, risks such as side effects, shortage of supply and high price point have led to consumers wanting some alternative sustainable solutions. Enter Mumbai-based gut health startup The Good Bug, which has launched a natural GLP-1 based drug called Metabolically Lean, which promises the weight loss journey for consumers without the side effects or the risks involved with pharmaceutical interventions. I'm here at Startup Mahakumbh to get a sense of what this means amidst the whole debate around a GLP-1 drug. How does it compare to the pharmaceutical drugs that are available in the market?
In our R&D, we've been carrying out pharma grade sort of clinical trials. We've always been a very science first company and business. So, we do randomized, double-blinded, placebo-controlled sort of trials. And with the composition that we've put together using probiotics and prebiotics, we've sort of really naturally built a GLP-1 play that helps sort of regulate appetite, which sort of then puts you into a calorie deficit and helps you lose weight. And not only weight, but benefits across, body circumference, BMI, HbA1c levels, lipid markers. So this is a natural composition that we've put together to deliver similar outcomes, which has been validated and clinically proven through our clinical trials, giving 12% weight loss in 90 days.
Prabhu, coming to you, just help me understand, how do you think this will define India's weight loss industry?
The new age GLP-1 drugs that they're launching in the market are way, way, way high priced compared to anything that can happen. And of course, they come with a whole bunch of side effects, and it is prescription. It is prescription for a reason, because of the issues that come with it. We think this solves for a whole lot of accessibility, because we're far more, a 3 months regimen at something like a 4,999. It opens out a large consumer base, and we think that that is a big difference that will make to the Indian obesity drive.
This clinical data is currently under external peer review and is expected to get published in the Curious Journal of Medical Science. According to the preprint of the study shared with CNBC-TV18, the clinical trial was conducted on 106 patients, of which 53 were on placebo and 53 on metabolically lean. The study shows that patients witnessed weight reduction of 10.3 kg using metabolically lean versus 3.1 kg while being on placebo. As per Dr. MKN Manohar, senior consultant at Manipal Hospitals and the trial's principal investigator, what stood out was the self-reported drop in cravings and improved satiety.
When we tested, we got heartening results like weight reduction about 12%, about 9% waist circumference reduction, total body fat reduction more than 24% over a period of 3 months. What was heartening is hardly any side effect because it is a probiotic and fiber, and acceptance was good. We also studied the mental well-being, gastrointestinal scale, and stress relief factors as per the standard scales which is used in all the clinical trials. And we found it to be very, very favorable in people who were using our product. In the trial, we took the set of patients who are having a BMI of 30 to 40. We excluded people who had or on other weight form therapies. We also excluded people who are uncontrolled diabetic, hypertensives, and so on. So these things are not strictly possible in the real world. Having said that, we have already discussed in our plans to have a real world data also. We will identify researchers who are willing to participate in these trials, real world evidence, to see whether we can match up. Sometimes we can even outdo what we have found in the trial.
Available at 2,000 rupees per month or 5,000 rupees for 3 months, the Goodbug solution, which is FSSAI approved, is accessible via online platforms and retail stores.
In terms of average order value, today we operate at about 1,300 to 1,400 rupees on our own website, but our products start at a price point of about 400 rupees on our website.
With clinical trials showing over 10 kg of weight loss in 90 days and a price point far below pharmaceutical GLP-1 drugs like Wegovy, Ozempic or Mounjaro, could the big bugs metabolically lean mark the beginning of a new, more accessible chapter in India's weight loss journey, or will questions around long-term efficacy and regulatory oversight still hold sway? With camera person Saurabh Chauhan, Aishwarya Anand for CNBC-TV18.
All right, on that note, it's a wrap on this edition of Startup Street. Thanks very much for watching. With more news and updates, we'll continue on the other side. So stay tuned.
अमित जी, मोदी जी ने कहा कि उस वक्त के जो नेता थे उन्होंने राष्ट्र हित को के ऊपर सत्ता को रखा। तो मैं ये जानना चाहता हूं आपसे कि मोदी जी किन लोगों के बारे में बात कर रहे हैं, कट्टरपंथियों का साथ किन नेताओं ने लिया और ऐसा क्यों किया? और पार्टीशन के लिए वो कहते हैं कि जो है मुसलमान नहीं चाहते थे कि पार्टीशन हो, गरीब मुसलमान नहीं चाहते थे ऐसा हो।
नहीं, देखिए, ये तो सब जानते हैं कि जब मुस्लिम लीग चुनाव में खड़ा हुआ और 2 राष्ट्र के सिद्धांत के आधार पर खड़ा हुआ, पार्टीशन के पहले जो अंतिम चुनाव हुए स्थानीय विधानसभाओं के, उसमें पाकिस्तान के हिस्से में भी मुस्लिम लीग का पराजय हुआ था। मुस्लिम जनता सच अर्थ में नहीं चाहती थी कि इस देश के टुकड़े हो। और ये बात मोदी जी ने ठीक ही कही है कि उस वक्त के कांग्रेस के नेता ही राष्ट्र के विभाजन के लिए जिम्मेदार हैं। उनकी तुष्टीकरण की नीति ही राष्ट्र के विभाजन के लिए जिम्मेदार है। और आज मैं आपके कार्यक्रम के माध्यम से मैं देश के युवाओं को विशेषकर कहना चाहता हूं, बाकी कुछ भी सहन करना, मगर तुष्टीकरण ऐसा जहरीला नासूर है जिसको देश से हमेशा के लिए युवा पीढ़ी ने उखाड़ कर फेंक देना चाहिए। जो तुष्टीकरण की राजनीति करते हैं वो देश हितों के साथ समाधान करते हैं, वो देश हित की नीतियों के साथ वोट बैंक के कारण कॉम्प्रोमाइज करते हैं और देश के अंदर ही एक नया देश बनाने का बीज बोने का काम करते हैं। मगर मोदी जी थोड़े चिंतित दिखते हैं। मैं भी कहना चाहता हूं युवाओं को कि समय बहुत निकल गया है। मोदी जी ने ही 10 साल में इस देश को जातिवाद, परिवारवाद और तुष्टीकरण से मुक्त कराकर विकास की राजनीति की ओर ले जाने का काम किया है। हमारी युवा पीढ़ी ने इसको आगे बढ़ाना हो। दल कोई भी तय करिए, दल के अंदर युवाओं को समान मौके होने चाहिए। दल की नीतियां दल के हित में नहीं बननी चाहिए, देश के हित में बननी चाहिए। और दल जातिवाद, प्रांतवाद, भाषावाद से ऊपर उठकर देश की चिंता करने वाला दल होना चाहिए। दल कोई भी चुनिए, वोट उसी को दीजिए जो दल जातिवाद, तुष्टीकरण और परिवारवाद से मुक्त हो। और यही हमारे देश के विकास का, हमारे देश के लोकतंत्र की रक्षा का सच्चा रास्ता है।
कांग्रेस में उस जमाने में बहुत बड़े बड़े नेता हुए, आपने मेरे सवाल का जवाब नहीं दिया। किस नेता के बारे में बात हो रही थी? वो कौन से नेता थे जो ये कर रहे थे?
नहीं, ऐसे सिंगल आउट करना तो बहुत तकलीफ होगी, मगर कांग्रेस ने बाद में प्रधानमंत्री नेहरू जी को बनाया था,
तो इशारा उन्हीं की तरफ है।
इशारे का सवाल नहीं है। प्रधानमंत्री तो अंततोगत वही बनता है जो फैसले करता है। हमारे सर्वोच्च नेता मोदी जी है तो मोदी जी प्रधानमंत्री बनेंगे। अब कांग्रेस ने उस वक्त नेहरू जी को बनाया था, परंतु मैं इतना सुनिश्चित रूप से कहता हूं, आज देश के युवाओं को खड़ा कर दीजिए, किसी को भी उठाकर मंच पर लाकर पूछ लीजिए उस वक्त आप विभाजन लेते क्या? विभाजन किया नहीं गया है। कांग्रेस पार्टी के उस वक्त के नेताओं ने विभाजन को स्वीकार किया है। और ये मैं मानता हूं इससे बड़ा देश हित से समझौता कोई हो नहीं सकता था।
अमित जी, दूसरे सवाल की ओर चलते हैं। आप कहते हैं कि वक्फ बिल लाकर आप लोगों ने मुसलमानों पर अन्याय खत्म कर दिया, और मुसलमान समुदाय ये कहता है कि उससे बड़ा कोई अन्याय ही नहीं है।
देखिए राहुल जी, आप पूरे समुदाय के नाम से इतना बड़ा लोडेड स्टेटमेंट मत करिए, आपको तकलीफ आएगा। मुसलमान समुदाय ऐसा नहीं चाहता है उनके साथ अन्याय है, कुछ गिने चुने नेता चाहते हैं। मैं आपको 2-4 सरल सवाल पूछता हूं
जी।
अभी का जो वक्फ का कानून है, इसके अंदर महिलाओं के लिए कोई कंपलसरी प्रावधान है क्या? आना चाहिए या नहीं आना चाहिए? इस देश की मुस्लिम महिलाओं को वक्फ बोर्ड और वक्फ काउंसिल में हिस्सा मिलना चाहिए या नहीं मिलना चाहिए? 80% मुस्लिम समाज पसमंदाओं का है, जो गरीब है, एक प्रकार से ओबीसी है। उनको वक्फ में प्रतिनिधित्व मिलना चाहिए या नहीं मिलना चाहिए?
जी।
सिया, आगा खानी, दाऊदी वोरा, मोहम्मदिया, अहमदिया, ये सारे मुसलमानों का कोई प्रतिनिधित्व नहीं है। वो भी मुसलमान है, क्यों नहीं मिलना चाहिए भाई? और कांग्रेस पार्टी तो माइनॉरिटी की बात करती है, तो माइनॉरिटी विद इन माइनॉरिटी को हम रखते हैं तो विरोध करते हैं। ये जो बिल आया है वो बिल मुस्लिम समाज के हरेक अंग का प्रतिनिधित्व करने वाला बिल है। दूसरा, आज मैं, आपने बहस देखी ही होगी, कांग्रेस के नेता कहते थे कि क्या गलत हुआ है। मैं आज देश की जनता को टीवी 18 के कार्यक्रम के माध्यम से बताना चाहता हूं कि आजादी से लेकर 2013 तक, आजादी से लेकर 2013 तक, इस्लाम जब से भारत में आया तब से जितनी वक्फ में भूमि वक्फ घोषित की गई वो 18 लाख एकड़ थी, जिसमें मुगलों के पहले से भी जो वक्फ हुए हैं वो सारे आ गए, क्योंकि दिल्ली में तो वक्फ सल्तनत काल में हो गया था। और 2013 का कानून आने के बाद 18 लाख एकड़ में 21 लाख एकड़ भूमि और बढ़ गई। तो यही बताता है कि 2013 के कानून में आपने ऐसी व्यवस्था करी जो न्यायपूर्ण नहीं थी। किसी की भी भूमि को आपने वक्फ घोषित कर दिया, चाहे भूमि हिंदू की थी, पूरे के पूरे गांव वक्फ घोषित हो गए जिसमें लोग रह रहे हैं। कहीं मंदिर, 1500 साल पुराने मंदिर वक्फ घोषित हो गए जहां पूजन अर्चन होता है। इस तरह से कैसे चल सकता है? और ये 2013 के पहले नहीं था। 2014 के चुनाव के एंड मौके पर कांग्रेस पार्टी ने अपनी वोट बैंक सुनिश्चित करने के लिए काम किया था। और मैं आपको कहना चाहता हूं, सारे मुसलमान भाई भी मुझे सुनते होंगे, ये 39 लाख एकड़ भूमि हुई है। इसमें से आर्गुमेंट करते कुछ तो कब्रिस्तान है, कुछ तो मस्जिद है, कुछ तो दरगाह है, ये सब मिल मिलाकर 5% से ज्यादा नहीं है। 39 लाख एकड़ की भूमि से राजस्व क्या मिलता है, आय क्या मिलती है? 123 करोड़ रुपया। रेलवे और सेना से बड़ी भूमि है भाई ये। तो ये आय कहां जा रही है? जो बैठ गए हैं वो भ्रष्टाचार करते हैं, क्योंकि ऑडिट की व्यवस्था ठीक नहीं है। हमने कानून के माध्यम से ऑडिट की व्यवस्था ठीक करी है। कानून के माध्यम से मुस्लिम समाज के हर तबके को इसके अंदर प्रतिनिधित्व दिया है। और उनका एक बहुत बड़ा आर्गुमेंट है कि हमारे धार्मिक मामलों में दखल देना। राहुल भाई, इससे बड़ा झूठ कोई हो नहीं सकता। वक्फ जो है वो वाकिफ बनाता है और मुतव्विल इसका मैनेजमेंट करता है। वक्फ बाकी सारे धर्मों के हिसाब से देखे तो ये ट्रस्ट है। ट्रस्ट तो उसी का होता है जो वो बनाता है, वक्फ उसी का होता है जो बनाते। इसमें कोई नॉन मुस्लिम रखने का प्रोविजन हमने नहीं किया है।
पर 2 मेंबर वो तो आपने डाले हैं ना?
वो वक्फ बोर्ड में डाले हैं और वक्फ काउंसिल में डाले।
वो कहते हैं टेम्पल ट्रस्ट में।
सुनो ना भाई, टेम्पल ट्रस्ट है ना जी। टेम्पल ट्रस्ट में नहीं रख सकते, वक्फ में भी नहीं रख सकते। पर चैरिटी कमिश्नर हिंदू होगा, ये कंपलसरी है क्या? वो सिख भी हो सकता है, मुसलमान भी हो सकता है, क्रिश्चियन भी हो सकता है। टेम्पल ट्रस्ट में नहीं रखना चाहिए, मैं भी मानता हूं। वक्फ में भी नहीं रख रहे हैं। जैसे ट्रस्ट होता है, इसका मैनेजमेंट अगर रिलीजियस ट्रस्ट है तो हिंदुओं के हाथ में होना चाहिए। वक्फ अगर अल्लाह के नाम पर दान दी गई संपत्ति है तो मुस्लिमों के हाथ में होना चाहिए। मगर ट्रस्ट चैरिटी के कानून के हिसाब से बरोबर चल रहा है नहीं चल रहा है, इसकी देखरेख, ये तो व्यवस्थात्मक काम है। इसमें धर्म कहां से आता है? फिर भी हमने तो 22 में 2 रखे हैं भाई, 14 में 2 रखे हैं। और एक बात मुझे बताओ, जो मैंने पहले कहा पूरे के गांव कर दिए वक्फ, कोई मंदिर भी कर दिए, तो संपत्ति का डिस्प्यूट नॉन हिंदू का भी है या नहीं है?
जी
हुआ या नहीं हुआ? तो वो पार्टी है या नहीं है? 2 हिंदू इसका पक्ष न्यूट्रलिटी से देखेंगे तो क्या बिगड़ जाएगा? क्या इस देश में हिंदुओं को इतना भी अधिकार नहीं है भाई? ये बिल्कुल खोखली बात है जो कांग्रेस ने फिर से उनके समाप्त होते हुए अस्तित्व को आधार देने के लिए अपीसमेंट की पॉलिसी। और अगर इतना ही था तो प्रियंका जी तो वोट डालने भी नहीं आई, राहुल जी ने भाषण भी नहीं कराया। अगर आपकी पार्टी की प्रमुख पॉलिसी है तो पार्लियामेंट से बड़ा मंच क्या हो सकता है? लोकतंत्र में सबसे बड़ी पंचायत है। राहुल जी वहां बोले ही नहीं। इनकी पार्टी को 50% समय दिया था हमने, 50%, और कहते हैं हमें बोलने नहीं देते। भाई आपकी पार्टी के वक्ता तो आप तय करोगे, आप बोले ही नहीं। अब हम क्या कर सकते हैं? अब चिल्लाएंगे रोड पर, हमें बोलने नहीं देते, हमें बोलने देते थे। उनकी पार्टी को जो टाइम दिया है उसमें पूरा टाइम राहुल गांधी बोल सकते थे। ना उनकी पार्टी चाहती है ना वो चाहती है।
ये ऑपोजिशन पार्टीज ये भी कह रही हैं कि ये जो नैरेटिव आप बना रहे हैं, आप भी बहुत दमखम से बोले लोकसभा में, कल प्रधानमंत्री जी ने भी शानदार स्पीच दी यहाँ पे। वो कह रहे हैं ये पासमंदा मुसलमानों और महिलाओं को, गरीब मुसलमानों को अपनी तरफ वो करने का एक तरीका है, एक वोट बैंक को उनका वो करना। पर मेरा क्वेश्चन थोड़ा लार्जर है। क्या आपको लगता है कि मुसलमान भारतीय जनता पार्टी के संग कभी आएगा? क्या कोई ये ट्रस्ट बिल्ड हो पाएगा आने वाले समय में जिससे कि आपको उधर से भी कुछ वोट मिलेंगे?
देखो राहुल जी हर काम वोट के लिए नहीं करते हैं। अगर हर काम वोट के लिए होता तो हमने इतने बड़े बड़े फैसले किए, वो न कर पाते।
जी।
कुछ काम देश के अंदर गलत पॉलिसियों को निकालने के लिए भी करने पड़ते हैं, और वो ही कर सकते हैं जो देश का सोचते हैं। और अगर ये लोग ऐसा सोचते हैं कि हमारा ऐसा करने का उद्देश्य है कि मुस्लिम बहनें हमें वोट दे दे, पसमंदा मुसलमान हमें वोट दे दे, सिया, बोहरा, आगा खानी, मोहम्मदिया, ये सारे हमें वोट दे दे, तो आप क्यों नाराज कर रहे हो भाई? आप भी ले लो, स्वीकार कर लो इसको। वो करने की खातिर आर्गुमेंट करते हैं। उनको भी मालूम है वोट का मामला नहीं है, व्यवस्थापन का मामला है।
अमित जी, जब सीए का बिल पारित हुआ था तब उस वक्त थोड़ा हिंसा का माहौल बना था देश में। कुछ आप लोगों को कोई इस बात की चिंता है कि इस बार भी
बहुत
कुछ हिंसा
अच्छा
हो सकता?
किया आप सीए निकाल दिया। मैं चाहता था कोई पूछे, कोई पूछता नहीं था। आपने पूछ लिया, अच्छा हो गया। भाई पूरे देश के सामने ढिंढोरा पिटा राहुल गांधी एंड कंपनी ने कि सीएए से मुसलमानों की नागरिकता चली जाएगी। अब सीएए पूर्णतया लागू होने से 2 साल हो गए। मैं राहुल गांधी को सार्वजनिक चुनौती देता हूं, एक भी मुसलमान की अगर नागरिकता गई है तो हमें बताए। पूरे देश को कांग्रेस पार्टी ने गुमराह किया, इनके इंडी अलायंस वालों ने गुमराह किया। मुसलमानों की नागरिकता चली जाएगी, नागरिकता चली जाएगी, नागरिकता चली जाएगी, और देश में हिंसा करे। यही जिम्मेदार है हिंसा के लिए।
तो इस बार नहीं लगता आपको कि ऐसा कोई डर?
कुछ तो समझे होंगे।
अमित जी, थोड़ा दूसरे सब्जेक्ट डिलिमिटेशन की ओर बढ़ते हैं। ये मुद्दा भी बहुत गर्म रहा है पिछले कुछ महीनों में। तो डिलिमिटेशन से क्या आप आज ये आश्वासन साउथ सदर्न स्टेट्स को दे सकते हैं कि डिलिमिटेशन से उनकी सीटों पे कोई कमी नहीं आएगी प्रोपोर्शनेटली?
देखो, मेरे कोरे आश्वासन से शायद साउथ के हमारे भारतीय है वो नहीं समझ पाएंगे। मैं थोड़ा कहना चाहता हूं।
जरूर।
हिमाचल में कांग्रेस की सरकार है
जी,
वहां डिलिमिटेशन के लिए कुछ हो रहा है? जरा बोलो ना भाई।
जी जी,
नहीं हो रहा है। कई जगह इंडी अलायंस की सरकार है, वहां डिलिमिटेशन के लिए कुछ हो रहा है?
नहीं।
सिर्फ तमिलनाडु में क्यों हो रहा है?
चुनाव आ रहा है।
चुनाव है। अभी डिलिमिटेशन सरकार ने घोषित किया है क्या?
जी नहीं।
नहीं, एक सेकंड।
जी जी।
डिलिमिटेशन एक्ट हमने बनाया है क्या? नहीं बना।
जी नहीं।
डिलिमिटेशन कमीशन में किसी सुप्रीम कोर्ट के जज को अपॉइंट किया है क्या? नहीं किया है। तो आज है क्या? क्योंकि रैंपड करप्शन कर कर तमिलनाडु की जनता आपके खिलाफ हो गई है, इसको ढकने के लिए ये मुद्दा आज उठा रहे हो। आज बुरहत क्या है डिलिमिटेशन लाने का? मगर आपने कहा है, मैं स्पष्टता कर ही देता हूं, दक्षिण के किसी भी राज्य ने, किसी भी मतदाता ने, किसी भी पॉलिटिकल पार्टी ने चिंता करने की जरूरत नहीं है। भारतीय जनता पार्टी का वादा है कि किसी को अन्याय नहीं होगा, आपकी प्रोरेटा सीटें बनी रहेंगी।
तो मतलब अगर 7.5 सीटें होंगी तो प्रोरेटा के हिसाब से उनकी जो बनती है 180
मैंने कह ही दिया भैया, पहले भी कह चुका हूं, मगर ये सुनना ही नहीं चाहते
जी।
क्योंकि ये शोर शराबा बंद कर देते हैं तो उनको करप्शन का जवाब देना पड़ेगा, उनको परिवारवाद का जवाब देना पड़ेगा। चुनाव मुद्दे पर वो चाहते नहीं।
तो जैसे 750 सीटें अगर हो गई तो उत्तर प्रदेश की सीटें भी बढ़ के 110 120 हो जाएंगी, तो ये बहुत बड़ा नंबर है।
राहुल जी, ऐसा है कि डिलिमिटेशन कमीशन का हर बार एक्ट बनाना पड़ता है। अभी तक की एक्ट का आयुष्य 25 तक था। अब नया एक्ट आएगा तो वो भी समझते हैं, हम भी समझते हैं, पार्लियामेंट में आएगा। छिपा कर नहीं हो सकता। इसके पहले ऑल पार्टी कंसल्टेशन होगा, एक्ट आएगा, शायद समिति को भी जाएगा या डायरेक्ट भी होगा, तो चर्चा होगी ना
जी।
अभी कुछ आया ही नहीं है और आप हो अल्लाह कर रहे हो क्योंकि आपको चुनाव में मुद्दा चाहिए।
मैं ये कह रहा था कि अगर उत्तर प्रदेश में इतनी ज्यादा सीटें हों तो जैसे मायावती जी एक समय कहा करती थी कि उस प्रदेश का विभाजन होना चाहिए, 4 टुकड़ों में उसको बांटना चाहिए।
देखिए, वो वोट बैंक के लिए कर रहे हो, आप टीआरपी के लिए कर रहे हो। अभी भैया आया ही नहीं है डिलिमिटेशन, काहे को डिलिमिटेशन करते हैं।
डिलिमिटेशन अमित जी तभी हो सकता है जब नया सेंसस आए, तो ये कैसे होगा, कब होगा? और इसमें कास्ट सेंसस की जो बात चल रही है, जो ऑपोजिशन की भी डिमांड है, उस पर आपका क्या विचार है?
गट डिलिमिटेशन भी 2001 के जनगणना के आधार पर हुआ था, ऐसा जरूरी नहीं है, परंतु डिलिमिटेशन जब भी करना पड़ेगा, किस प्रकार से करेंगे, किस जनगणना के आधार पर करेंगे और किस प्रकार से करेंगे, ये सारा एक कानून बनकर संसद में पारित होता है, तब जाकर डिलिमिटेशन की प्रक्रिया शुरू होती है, क्योंकि वो हमारे लोकतंत्र का मूल आधार है। जो लोकतंत्र को सत्ता तय करने का कॉलेजियम है, हमारी संसद है, हमारी विधायिका है, वो वहीं से चुनकर आती है। तो उनकी कॉन्स्टिट्यूएंसी का डिजाइन करना, इससे बड़ा महत्वपूर्ण कार्य लोकतंत्र में और कोई हो नहीं सकता। वो पार्लियामेंट के कानून से, और पार्लियामेंट के कानून को राष्ट्रपति महोदय के अनुमोदन के बाद ही होता है और उसमें कोई पार्टी इन्वॉल्व नहीं होती है। इसमें सुप्रीम कोर्ट के एक जज इसकी अध्यक्षता करते हैं।
जी अमित जी, एक और बड़ा मुद्दा आप लोगों का रहा है वन नेशन वन पोल, काफी चर्चा भी हुई है, उसमें आपने काम बहुत किया है। ये कैसे कर पाएंगे आप? इसको पारित करने के लिए आपको 2/3 बहुमत की जरूरत है, तो और कौन सी पार्टियां जुड़ सकती हैं आपसे? इस मुद्दे को कैसे, इस कार्यकाल में इसमें हम कुछ देखेंगे क्या?
देखिए भाई, आप तो ऐसा सवाल कर रहे हो, गांधी जी ने देश को आजाद करने की मांग की, तो वो कोई पूछ लेगा उनको, कैसे करोगे भाई, अंग्रेजों का राज है। ऐसा है भाई, हम हमारा मुद्दा लेकर जनता के सामने गए हैं, हम जनता के बीच में कार्यक्रम कर कर भी जा रहे हैं। 2-3 साल होते होते माहौल ऐसा होगा कि कोई पार्टी वन नेशन वन इलेक्शन का विरोध नहीं कर पाएगी, क्योंकि ये देश के भले में है। कोई मुझे बताए कि बार बार चुनाव कर कर, खर्च कर कर हम क्या करना चाहते हैं इस देश में? एक साथ चुनाव क्यों नहीं होना चाहिए? कारण क्या है? ये कहते हैं संविधान सम्मत नहीं, कोई आर्गुमेंट नहीं करता, एक वाक्य लिख कर दे दिया है, बोले रखते हैं संविधान सम्मत नहीं। कैसे संविधान सम्मत नहीं? और नहीं है तो आपने 3 चुनाव कैसे कराए?
जी,
कांग्रेस पार्टी ने जब तक सरकारें तोड़ने की शुरुआत नहीं करी, उनकी सरकारें आती थी, तब तक तो सभी चुनाव एक साथ करे, और 2-3 राज्य 4 राज्य नए बन गए, इसके चुनाव आगे पीछे हो गए। तो वो एक साथ करने के लिए असेंबलियां डिसॉल्व कर दी कांग्रेस ने। वही कांग्रेस पार्टी ये कह रही है कि लोकतंत्र के विरोधी है। 7 राज्यों के असेंबली डिसॉल्व कर वन नेशन वन इलेक्शन कराया था, और आज वही विरोध कर रहे हैं। जनता वो मानते हैं ऐसे नहीं सोचती है, जनता के अपने के सोचने के तरीके। कुछ नेता ऐसा मानते हैं कि मैंने कह दिया तो बस जनता मान गई, और फिर परिणाम आते हैं तो कहते हैं कि भाई ईवीएम में गड़बड़ हो गया। एक्चुअल में भैया आप जो बोलते हो वो जनता मानती नहीं है।
अभी तो कह रहे हैं महाराष्ट्र का इलेक्शन भी जो है उसको भी चोरी कर लिया आप लोगों ने।
अगर हम जीत जाते तो क्या, वो जीत जाते तो क्या कहते? हम तो वो है 10 साल, हमारे 10 साल में इनकी तेलंगाना सरकार बनी, चेन्नई में सरकार बनी, बंगाल में बनी, हिमाचल में बनी, वो कैसे बनी फिर? तो
कांग्रेस की बात हो रही है तो एक सवाल यहाँ पे आपसे पूछना चाहूंगा। ये एआईसीसी का सेशन चल रहा है, उसमें जो खबरें हम पढ़ रहे हैं, देख रहे हैं, जो वहां से निकल के आ रही है, तो उसमें लीडर्स का मानना है 2 तरीके के थॉट्स हैं। एक तो ये है कि मोदी को गाली दो, मोदी के खिलाफ भाषण देते रहो, मोदी के पीछे पड़े रहो, और दूसरा कुछ नेता ये मानते हैं कि आप अपनी ऑल्टरनेट सोच, अपना विजन भी सामने लोगों के रखें। आप क्या कहना चाहेंगे इस पर राहुल?
देखिए, इसका मतलब है कुछ तो समझ वाले लोग अभी भी वहां बचे हैं क्योंकि इतने सालों का अनुभव है, 2001 से लेकर 2025 तक का, जितनी बार मोदी जी को गाली दी, इनकी माता जी ने भी दे दी, इन्होंने भी दे दी, जितनी बार गाली दी मोदी जी और मजबूत होकर बाहर आए हैं। उनको मालूम नहीं हमारे दल का चुनाव चिन्ह कमल है, जो कीचड़ में ही खिलता है, ज्यादा खिलता है। तो हम तो गालियों के कीचड़ में ही खिलकर बाहर आते हैं, वो उनको मालूम नहीं।
अमित जी, आपको काफी दिनों बाद इस बार इंटरव्यू कर रहा हूं। 2024 के चुनाव के समय आपसे बात हुई थी, एक सवाल उस पर भी। 2024 में आप लोगों को उम्मीद थी, नारा था अब की बार 400 पार, सीटें आई भारतीय जनता पार्टी की 240। कहां गड़बड़ हो गई, कहां रणनीति में कमी रह गई?
देखिए राहुल जी, हम भी मानते हैं कि हमारी सीटें कम हुई, वो तो आंकड़ा है
जी।
मगर ये जो कह रहे हैं कि भाई ये तो ये कह रहे थे ये आए, ये कह रहे थे ये आए, मुझे बताओ, कोई खिलाड़ी मैच खेलने जाएगा, सामने टीम कैसी भी हो, पिच कैसी भी हो, वो क्या कहेगा? नहीं हम आज हार जाएंगे, ऐसा कहेगा क्या? अरे भाई हमारा 300 था तो हमने 400 कहा, इसमें क्या बुराई की है भाई? हम तो सोचते ही हम बढ़ोतरी करेंगे और करेंगे। अभी भी मैं कहता हूं हम तमिलनाडु जीतेंगे, बिहार भी जीतेंगे और इनका सुपड़ा साफ हो जाए।
नहीं, 2024 की उसके बाद आपने 3 शानदार विजय भी वो की हैं, दर्ज की हैं। आप हरियाणा में जीते बहुत अच्छी तरीके से। महाराष्ट्र में तो मुझको फडणवीस जी ने कहा कि वो सोच भी नहीं रहे थे कि इतनी सीटें आएंगी, और उससे कहीं ज्यादा सीटें आई। तो दिल्ली में आपने जो है केजरीवाल जी की सरकार को परास्त किया। तो ये कैसे हुआ? ये आप लोग बाउंस बैक कैसे करें?
देखिए, जनता ने चुनाव में कुछ झूठा प्रचार किया गया, कुछ भ्रामक बातें फैलाई गई, इसका कुछ तो असर हुआ, कुछ वोट कम मिले। जब परिणाम आया तो सबके मन में एक प्रकार की रंजिश थी कि हमने मोदी जी के साथ ये ठीक नहीं किया, और इसके कारण ही भारतीय जनता पार्टी का समर्थन भी बढ़ा है और बड़े जोर के साथ मोदी के काम पर थप्पा लगाने का काम ये 3 राज्यों में।
थोड़ा सा आप हिंदी के पक्ष में बहुत बातें करते हैं, तो थोड़ा एक लैंग्वेज मुद्दे पर भी बात कर लेते हैं। ये भी साउथ से जुड़ा हुआ है।
पहले मैं थोड़ी स्पष्टता कर दूं, मैं हिंदी भाषी नहीं हूं, मैं गुजराती हूं। मैं हिंदी के पक्ष में बात करता हूं, ये विपक्ष का प्रचार है। मैं भारतीय भाषाओं की बात जरूर करता हूं, और मैं मानता हूं कि इस देश को अपनी संस्कृति, अपने संस्कार और अपने इतिहास के साथ जुड़ना है तो देश की हर एक भाषा को जिंदा रखना पड़ेगा, और ये मेरा अकेले का नहीं, देश का हर नागरिक का दायित्व। क्योंकि व्यक्ति अपनी मां की भाषा में ही सोच सकता है, अपनी मां की भाषा में ही व्यक्ति विश्लेषण कर सकता है, मतलब एनालिसिस करता है, तर्क कर सकता है, मतलब लॉजिक इसका डेवलप होता है, इसके आधार पर वो निर्णय लेता है, और इसके आधार पर इंप्लीमेंटेशन की वो योजना बनाता है। ये पूरी प्रक्रिया मां की भाषा में ही होती है। मगर अब कुछ लोगों की भाषा यहाँ की नहीं है माँ की, तो मैं क्या कर सकता हूं भाई। मैं तो भारत में जन्मा हूं, तो भारत की भाषाओं की बात करता हूं। ये सब निरर्थक हो अल्लाह करते हैं। मैं आपको बताता हूं कि हमारे आने से पहले, मेरा स्पष्ट मानना है, हमारे आने से पहले कांग्रेस पार्टी ने इतने सालों तक हिंदी और अंग्रेजी को सभी भाषाओं के बच्चों पर थोपा था। यूपीएससी की परीक्षा जो आईएएस आईपीएस की थी, वो अन्य भाषा में नहीं आती। 2015 में नरेंद्र मोदी ने निर्णय किया कि आप तमिल में भी पेपर दे सकते हो, गुजराती में भी दे सकते हो, मराठी में भी दे सकते हो, मलयाली में भी दे सकते हो। 2020 तक सीएपीएफ की जो भर्ती होती है, इनका पेपर सिर्फ हिंदी और अंग्रेजी में लिखा जाता था, आज 13 भाषाओं में लिखा जाता है। हमने तो तमिल की एंट्री की है, गुजराती की एंट्री की है, मराठी बंगाली की एंट्री भारतीय जनता पार्टी ने की, आपने अंग्रेजी पर छोड़ दिया था। इनके समय के अंदर लोकल स्टेशनों पर लोकल भाषा में अनाउंसमेंट भी नहीं होते थे, वो भी हमने किए। इनके समय में मेडिकल और इंजीनियरिंग कंपलसरी अंग्रेजी में ही पढ़नी पड़ती थी, हमने उसको स्थानीय भाषा में एंट्री करा दी और आज मध्य प्रदेश में हो चुका है, उत्तर प्रदेश आगे बढ़ चुका है, राजस्थान आगे बढ़ चुका है। पूरे के पूरे मेडिकल के कोर्स हिंदी में अनुवादित हो गए। 13 भाषा में इंजीनियरिंग पढ़ाने की व्यवस्था 2026 के पहले हम कर देंगे।
तो डीएमके का ये कहना हिंदी, हिंदू, हिंदुस्तान, ये गलत है कि आप लोग?
नहीं भाई, मैं देखो, अभी मोदी जी गए थे, उन्होंने बहुत अच्छे तरीके से कहा कि एक भी डीएमके नेता का सिग्नेचर तमिल में हो तो बताओ मुझे।
अंग्रेजी में करते हैं।
हमारे राज्यों ने तो अपनी भाषा में मेडिकल इंजीनियरिंग के कोर्स का अनुवाद कर दिया है, वो तमिल में शुरू भी नहीं करते हैं।
ये जो टैरिफ वॉर चल रहा है इस वक्त, उसका भारत पर क्या असर होगा, आप ये जरा सा समझाएं।
देखिए, असर का आकलन करने के लिए बहुत जल्दबाजी होगी। सिर्फ अकेले भारत पर टैरिफ नहीं डाला गया है, ढेर सारे देशों पर डाला गया है। हमारे कितने ऑप्शन खुलेंगे, अमेरिका में भी हमसे ज्यादा हमारे स्पर्धक है, वो देशों पर टैरिफ डाला गया है। तो इसका असर क्या होगा? हो सकता है कि हमारा सामान ज्यादा भी जा सकता है, कई सारे देशों में हमारे सामान जाने की व्यवस्था भी होगी। बहुत कॉम्प्लेक्स मसला है, इसमें इतनी जल्दबाजी में इसका असर का आकलन किसी को नहीं करना चाहिए।
पैनिक एक जो आ रहा है, आपको लगता है कि भारत में कोई ऐसा पैनिक का कोई वो?
नहीं, मुझे लगता है कि देश की जनता ऐसे पैनिक में कभी आती नहीं है। ये थोड़ा मीडियाबाजी होती है तो असर तो होता है, असर नहीं होता है ऐसा नहीं, मगर धीरे धीरे संभल जाएगा।
अमित जी, सब लोग जानना चाहते हैं, मेरे कुछ कॉलीग्स ने भी बोला है कि आपसे जरूर पूछूं कि भारतीय जनता पार्टी का अगला अध्यक्ष कौन होगा। बहुत दिनों से चर्चा चल रही है, सुर्खियों में भी है, मगर कोई नाम निकल कर नहीं आ रहा है।
अभी तक तय नहीं हुआ है।
बिल्कुल तय नहीं हुआ, तो कितना समय लगेगा? आपकी मुस्कुराहट से मुझे लग रहा है कि कुछ नहीं बता रहे,
नहीं हुआ भाई। 13 करोड़ के मेंबरशिप के पार्टी का अध्यक्ष छिपा नहीं रह सकता ना, तय होगा उसी दिन सार्वजनिक हो जाएगा। वो पर्चा भरेंगे तो तुरंत ही नाम घोषित हो जाएगा।
तो समय क्यों लग रहा है अभी तक? तो
जी, समय लग रहा है
जी। मुझे याद है एक बार मैंने इनसे ज्यादा सवाल पूछा था कि कितने टिकट बटेंगे, किसको क्या मिलेगा। कहता है जब होगा तो आपको भी बुला लेंगे तो आपको पता चल जाएगा। अमित जी, दिल्ली हाईकोर्ट के एक जज के घर में आग लग गई, आउट हाउस में आग लग गई, तो उसमें भारी मात्रा में कैश करेंसी बरामद हुई। तो मेरा सवाल यह है कि इस तरह का एक चित्र देश के सामने आया है, तो क्या आप संतुष्ट हैं कि इसके पीछे क्या कार्यवाही चल रही है, क्या होना चाहिए, कैसे लोगों को विश्वास दिलाया जाए कि?
देखिए, परंपराओं से जो परंपरा अब तक बनी है वो ये है कि जुडिशरी की जांच में इनिशिएटिव अगर हाईकोर्ट जज के लिए कोई मसला खड़ा होता है तो सुप्रीम कोर्ट के सर्वोच्च न्यायाधीश ने लेना होता है। उन्होंने एक कमेटी बनाई है। हमें ये न्यायिक प्रक्रिया पर, सुप्रीम कोर्ट की प्रक्रिया पर भरोसा रखना चाहिए। इसकी रिपोर्ट आएगी तो काफी सारी चीजें स्पष्ट हो जाएगी। मगर मैं इतना कहना चाहता हूं, उन्होंने कमेटी बनाने के निर्णय करने में कोई तक देरी नहीं की है और मैं आशा करता हूं कि जल्दी, क्योंकि पूरी जनता भी इसको बहुत गंभीरता से देख रही है, तो जल्दी ही ये कमेटी की रिपोर्ट और उसके बाद ऐसा भविष्य में न हो, इसके लिए क्या कदम उठाए जाए वो सुप्रीम कोर्ट की ओर से सार्वजनिक होगा। हम भी राह देख रहे हैं, आप भी राह देखो।
एक जुड़ा हुआ सवाल जुडिशरी पर, हायर जुडिशरी के जो अपॉइंटमेंट प्रोसेस का एक सवाल काफी मुद्दा चल रहा है। एनजेसी की भी बात हो रही थी, सुप्रीम कोर्ट ने उसको अनकॉन्स्टिट्यूशनल बताया। इस पर आपका व्यक्तिगत क्या मत है?
देखिए, मेरा व्यक्तिगत कोई मत नहीं हो सकता क्योंकि मैं एक पार्टी से बंधा हुआ व्यक्ति हूं। मेरा कोई व्यक्तिगत मत नहीं होता है। मेरा मत व्यक्तिगत मैं पार्टी में रख सकता हूं। पार्टी एक निर्णय पर पहुंचती है, फिर पार्टी का मत मेरा मत होता है। इसी तरह से सरकार में भी मेरा कोई व्यक्तिगत मत नहीं होता है। व्यक्तिगत मत जब प्रधानमंत्री जी चर्चा करते हो तब मुझे रखना होता है या तो कैबिनेट में रखना होता है। इसके बाहर तो कैबिनेट का जो डिसीजन होता है वही हमारा डिसीजन होता है। परंतु मैं मानता हूं कि इस पर एक नए सिरे से एक बहस ये घटना के कारण खड़ी हुई है। जनता में काफी उत्सुकता भी है। हम राह देखते हैं कमेटी क्या करती है। उससे काफी
आप कह रहे हैं उसके बाद बहस होनी चाहिए?
नहीं, बहस तो अभी कर ही रहे हो आप। बहस में तो कौन किसको रोक सकता है, परंतु कमेटी क्या रिपोर्ट देती है इसके आधार पर सारी चीजें स्पष्ट हो।
जम्मू और कश्मीर की ओर चलते हैं। कल आप वहां पर थे भी। राज्य का दर्जा कब तक मिलेगा, क्या आपको लगता है, और नई सरकार का कैसे आप आंकलन करते हैं?
देखिए, भारतीय जनता पार्टी एक अखिल भारतीय पार्टी है। हमने भारत में दो नेताओं के नेतृत्व में सरकार बनाई। एक अटल जी के नेतृत्व में बनाई और एक लंबे समय के लिए लगातार तीसरी बार मोदी जी के नेतृत्व में बनाई। भारतीय जनता पार्टी ने कभी भी केंद्र में सत्ता रहते वक्त राज्य सरकार किसकी है वो नहीं सोचा है। ना हम कश्मीर के लिए सोच रहे हैं। कल ही मैं रिव्यू करने के लिए गया था। उमर साहब मेरे साथ ही बैठे थे, भोजन भी किया, बड़े अच्छे से इनकी फोटो भी आई है।
जी जी।
और हम सभी राज्य सरकारों के साथ जिस तरह का हमारा व्यवहार होता है इसी का है। परंतु सुरक्षा और अलगाववाद, इस पर हमारा स्टैंड फर्म है। इसमें कोई कॉम्प्रोमाइज ना हम करेंगे ना किसी को करने देंगे।
अभी कठुआ क्षेत्र में कुछ घुसपैठी घटना जरा सा सामने आई है, इसमें कुछ आपको लगता है ये पाकिस्तान स्पॉन्सर टेररिज्म टाइप के कुछ?
नहीं, घुसपैठ तो पाकिस्तान के अलावा रसिया से कैसे हो सकता है? वहीं से हो सकता है और ये तो सालों से कर रहे हैं। मगर देश के जवान बहुत मुस्तैद है, देश की सरकार भी मुस्तैद है। हम यहाँ पर कोई कांड नहीं करने देंगे और करेंगे तो दंडित भी करेंगे उनको।
अमित जी थोड़ा इलीगल माइग्रेशन की ओर चलते हैं। ये मुद्दा जो है आपने भी कई बार उठाया है, खासकर बांग्लादेश में जहां तख्ता पलट होने के बाद सर ये बढ़ा है, तो इस पर क्या कदम उठाएंगे कि ऐसा ना हो? इसको हम कैसे टैकल करेंगे?
देखिए, सबसे पहले तो मैं इसके लिए बंगाल की जनता को विनती करना चाहता हूं, आने वाले चुनाव में भारतीय जनता पार्टी की सरकार बना दीजिए, ये समस्या वहीं से समाप्त हो जाएगी। इसलिए क्योंकि ममता जी हम पर आरोप लगाती हैं कि भाई बीएसएफ बॉर्डर को देख रही है और आप कैसे घुसपैठ हो रही है, और बंगाल से दिल्ली तक, बंगाल से जम्मू तक कैसे पहुंच जाते, भारत सरकार क्या कर रही है? पूरे देश को मालूम है कि बॉर्डर पर फेंसिंग करने के बाद भी लगभग 250 किलोमीटर बॉर्डर ऐसी है जहां फेंसिंग हो ही नहीं सकती। नाले हैं, बड़ी बड़ी नदियां हैं, विकट भौगोलिक परिस्थिति है, और 400 किलोमीटर बॉर्डर ऐसी है जहां पर बंगाल सरकार हमें फेंसिंग करने के लिए भूमि नहीं दे रही। अब जिस बॉर्डर में 600 किलोमीटर खुला रह जाए वहां घुसपैठ का रोकना बहुत दिक्कत होता है। मूसलाधार बारिश में, ठंड में, गर्मी में नदियों के नाले खुले हैं, वहीं से आते हैं, न जाने घने जंगलों से। परंतु मैं एक छोटा सा सवाल देश की जनता के सामने, सवाल और स्पष्टता दोनों रखता हूं। वो आग तो गए देश में, चाहे रोहिंग्या हो चाहे बांग्लादेशी हो, उनका वोटर कार्ड कहां बन रहा है, जिसको लेकर वो पूरे देश भर में उत्तराखंड तक और कश्मीर तक ट्रैवल करते हैं। वो सारा वोटर कार्ड बंगाल के 24 परगना जिले से ही बनता है। हजारों पकड़े गए बांग्लादेशियों के पास से जो दस्तावेज मिलता है, जिला भी नहीं बदलते, इतना बेखौफ हो गए। सभी के फर्जी वोटर कार्ड, फर्जी आधार कार्ड, वो 24 परगना जिले के। और अब मैं ममता जी को पूछना चाहता हूं, किसकी जिम्मेदारी है? कोई विदेश से आता है, घुस गया, चलिए, इसकी जिम्मेदारी जनता तय करेगी। मगर घुस कर गांव में आया, क्या पटवारी को मालूम नहीं पड़ेगा कि गांव में 25 लोग नए आ गए हैं? क्या पुलिस वाले को मालूम नहीं पड़ेगा? कौन इनका आधार कार्ड बना रहा है, कौन उसका वोटर कार्ड? और वो कहती है आधार कार्ड भारत सरकार की एजेंसी अंततोगत्वा कलेक्टर होता है, जो आपके अधीन है। इलेक्शन कमीशन की भी एजेंसी तो कलेक्टर ही होता है, जो आपके अधीन है। परंतु ये सब इंडिया अलायंस की पार्टियों को उसमें अपना वोट बैंक दिखाई पड़ता है।
तो इसका समाधान
अब आसाम से क्यों बंद हो गया?
जी
देखो भाई, समाधान तो हम जरूर ढूंढेंगे, मगर मैं तो इस मंच का उपयोग कर बंगाल की जनता को कहता हूं, इसका एक सरल समाधान है। इस बार कमल फूल की सरकार बना दीजिए, अपने आप समाधान आ जाएगा।
क्या लगता है अगले चुनाव में भारतीय जनता पार्टी की सरकार बनेगी? पिछली बार भी बहुत वो था, पर आप लोग सरकार नहीं बना पाए, और लोकसभा के चुनाव में भी धक्का लगा है आपको वहां।
देखो भाई, ऐसा है, हमारे 4 मेंबर थे। मैं मीडिया का रुख, जिसमें आप भी आ जाते हो, वो समझाता हूं। हमारे 4 मेंबर थे, 4 से 77 हुए, हमें झटका लगा। जिस कांग्रेस पार्टी ने 23, सुनो ना यार, जिस कांग्रेस पार्टी ने 27 साल राज करा, ये 0 हो गए, उनको झटका नहीं लगा है। जिस कम्युनिस्ट पार्टी ने 27 साल राज करा, वो भी 0 हो गए, झटका नहीं लगा है। भाई 4 से हम 77 पहुंचे एक चुनाव में, तो 77 से कितना होता है, जरा गुणाकार करो। सरकार बनती है, और कई सरकार हमने बनाई है।
नहीं, 77 तो बहुत बड़ी आपकी वो थी, बहुत अच्छा प्रदर्शन रहा था। मैं ये कह रहा था कि अगला चुनाव को अगर देखें तो इस बार के लोकसभा चुनाव में ज्यादा अपेक्षा थी, कम सीटें आई।
स्वाभाविक रूप से कम हुई है, मगर हमने इसके बाद में काफी हमारे संगठन का विस्तार भी किया है, सदस्यता भी की है, ड्राई एरिया में भी सदस्यता करी है, हमारे फुल टाइमर भी निकले हैं, और हम इसको अच्छे से देख रहे हैं। बंगाल केवल भारतीय जनता पार्टी के लिए जीतना जरूरी नहीं है, भारतीय जनता पार्टी के लिए जीतना तो जरूरी ही है, परंतु बंगाल देश के लिए भी भाजपा या तो कोई भी राष्ट्रवादी दल जीते, ये बहुत जरूरी है। इसलिए हम बंगाल के पीछे।
अभी 25,000 जो अनलमेंट हुआ है सुप्रीम कोर्ट का डिसीजन, उसके खिलाफ भी ममता जी खड़ी हैं, कह रही हैं कि किसी की नौकरी नहीं जाएगी, मैं देखती हूं कौन क्या करता है।
चलिए, अब वो तो कुछ भी कह सकते हैं, मैं ऐसा नहीं बोल सकता कि सुप्रीम कोर्ट के फैसले को मैं नहीं मानूंगा, वरना आप लोग मेरे थोड़े से जो बाल बचे हैं वो भी नोच लोगे भैया।
मोहम्मद यूनुस जी का कहना है कि बांग्लादेश के इस संदर्भ में एक सवाल और, कि जो वहां के इंटरिम लीडर हैं कि नॉर्थ ईस्ट स्टेट जो है वो लैंडलॉक्ड स्टेट्स हैं, और चाइना को जो है जो भी कुछ करना है वो बांग्लादेश के थ्रू जो है वो मार्केट एक्सेस है, चारों तरफ सी का वो है। इसको आप कैसे देखते हैं, इनके स्टेटमेंट को कैसे देखते हैं?
देखिए, मैं इतना ही कहना चाहता हूं कि नरेंद्र मोदी की सरकार है, भारत की 1 इंच जमीन पर हम किसी को आंख नहीं डालने देंगे, एंट्री का तो सवाल ही नहीं।
आपने हरदम, मैंने आपसे ये सवाल 2-3 बार पूछा है, फिर से पूछता हूं क्योंकि नया कार्यकाल है, इस तीसरे कार्यकाल में पाकिस्तान ऑक्यूपाइड कश्मीर पीओके के बारे में, इस पर क्या इस थर्ड उस पे
देखिए, भारत का स्टैंड बड़ा रुख है, स्पष्ट है और सालों से है कि पाक ऑक्यूपाई कश्मीर हमारा है। और जहां तक कब आएगा इसका सवाल है, तो इतना तो तुम भी समझते हो राहुल, मैं सार्वजनिक मंच पर इसकी तिथि न बता सकता हूं, ना योजना बना सकता, मगर हर भारत सरकार का दायित्व है कि पाक ऑक्यूपाई कश्मीर हमारा है। वो हमारा सिर्फ क्लेम नहीं है, हमारी बिलीफ है और ऐतिहासिक डॉक्यूमेंट भी है और हमारा लीगल केस भी मजबूत है।
पाकिस्तान कहता है कि जो बलूचिस्तान में अटैक हो रहे हैं उसके पीछे इंडिया का हाथ है, इसको कैसे आप देखते हैं?
चलिए, अब उनसे संभल नहीं पड़ता, वो तो कुछ न कुछ कहेंगे, वहां की जनता को क्या करेंगे, मगर अब उनकी समस्या है, उनको निपटना चाहिए।
पर क्या इंडिया सपोर्ट करता है बलूच लोगों के लिए इंडिपेंडेंट स्टेट? हमारी
इंडिया के सपोर्ट का सवाल ही नहीं होता। उनके यहाँ जिस प्रकार से शासन चल रहा है, इसके कारण कुछ प्रांतों में असंतोष है, इसको हम रिपेयर नहीं कर सकते।
नेपाल में जो है, नेपाल में इस वक्त हिंदू राष्ट्र की जो है एक मांग है, इस मांग को आप कैसे देखते हैं?
अब वहां पर भी डेमोक्रेसी है, सब लोग अपनी अपनी मांगे करते हैं।
चाइना का स्टैंड जो है इधर कुछ सॉफन होता हुआ आपको दिख रहा है, हम लोग देख रहे हैं कि बातचीत बढ़ रही है। क्या चाइना से इन्वेस्टमेंट्स आने की कोई उम्मीद है?
देखो, मैं मीडिया का आदमी नहीं हूं
जी।
एक स्टेटमेंट से देशों के रुख तय नहीं होते हैं, बहुत सारे हमारे मुद्दे हैं, सकारात्मक समाधान निकलता है तो अच्छी बात है।
तहव्वुर राणा का जो है एक्स्ट्राडिशन जो है हो रहा है, वो कुछ दिनों में यहाँ आ जाएंगे। क्या डेविड हेडली के लिए भी हम ये वो करेंगे? कुछ उम्मीद है कि वो भी?
देखिए, मोदी सरकार का प्रयास है कि जिन लोगों ने भी भारत की जमीन, भारत का सम्मान और भारत के नागरिकों के साथ दुर्व्यवहार भी किया है, वो हमारे कानून के जद में लाना चाहिए। और मैं मानता हूं तब राणा की यहां वापिस आना, ये मोदी सरकार की कूटनीति का बहुत बड़ी सफलता है
जी।
तो क्योंकि जिनके समय में जब बम धमाके हुए वो तो ला नहीं पाए, मगर आज वो वापिस आएगा, हमारी अदालत के सामने पेश होगा, हमारे संविधान के तहत उसको सजा होगी। ये देश के लिए बहुत बड़ी उपलब्धि है।
अमित जी, आपने नक्सलिज्म पे बड़ा बयान दिया है, इसका रोड मैप क्या है, कैसे खत्म होगा पूरा? आपने एक टाइम फ्रेम भी दिया है, थोड़ा सा अगर हमारे दर्शकों को बताएं।
देखिए, नक्सलिज्म अब 120 जिलों के आसपास था, घटते 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 अब 12 जिलों तक सिमट कर रह गया है। एक जमाने में स्वप्न देखते थे पशुपति टू तिरुपति का, वो सपन उनका चूर चूर हो गया है। बिहार मुक्त हो गया, झारखंड मुक्त हो गया, महाराष्ट्र ऑलमोस्ट मुक्त हो गया, कुछ तहसील बच गई है, मध्य प्रदेश ऑलमोस्ट मुक्त हो गया, कुछ तहसील बची है, तेलंगाना मुक्त हो गया, आंध्र प्रदेश मुक्त हो गया, उड़ीसा मुक्त हो गया, केरल मुक्त हो गया है, कर्नाटक मुक्त हो गया है। अब कुछ जिले और कुछ तहसीलें बची है, और ये थोड़ा लेट भी इसलिए हुआ है कि बीच में 5 साल कांग्रेस पार्टी की सरकार आ गई। मैं जब कहता हूं तब कांग्रेस पार्टी वाले मुझ पर बड़ा आरोप लगाते हैं कि आप नक्सल के खिलाफ की लड़ाई में पक्षापक्षी करते हैं, मगर मैं आंकड़ा देना चाहता हूं जी। 24 में हमारी सरकार बनी छत्तीसगढ़ में, 24 से अब तक 25 में टोटल 436 नक्सली मारे गए, 1364 गिरफ्तार किए गए और 1400 सरेंडर हुए। 15 साल का टोटल ये नहीं है। छत्तीसगढ़ में हमने सुरक्षा वैक्यूम को समाप्त कर दिया है। विगत 5 सालों में लगभग 380 कैंप बनाए हैं और सीआरपीएफ के जवान, आईटीबीपी के जवान, बीएसएफ के जवान और छत्तीसगढ़ पुलिस घने जंगलों में, एक प्रकार से इसके लिए शब्द उपयोग करना है तो घोर तपस्या कर कर इनके पीछे लगे हैं और उनके उन्मूलन में लगे हैं। फिर भी मैं तो आज के कार्यक्रम से माध्यम से कहना चाहता हूं कई लोगों ने सरेंडर किया है, जिनके हाथ में हथियार डाले, मेन स्ट्रीम में आए और अपना जीवन अच्छे से बिताए। उत्तर पूर्व में भी 10,000 लोगों ने सरेंडर किया है, 20 समझौते हमने किए हैं और उत्तर पूर्व में कमोबेश टेररिज्म समाप्त हो चुका है। परंतु एक बात निश्चित है कि 31 मार्च 2026 इस देश में नक्सल हिंसा पास्ट बन जाएगी। ये हमारी सरकार का बहुत फर्म निर्णय है कि हम नक्सल से मुक्त भारत बनाएं।
मतलब 1 साल में। अमित जी, भारत के अंदर खालिस्तान की एक्टिविटीज कुछ बढ़ रही हैं क्या? आपका क्या वो है? और पंजाब की सरकार जो है वो कितनी सक्षम है इसको कंट्रोल करने में आप लोगों के साथ मिलकर?
देखिए, पंजाब सरकार की प्राथमिक जिम्मेदारी है
जी,
मगर भारत सरकार की भी जिम्मेदारी है। कोई भी किसी भी नाम से अगर देश को तोड़ने की बात करता है तो हम जरा भी सहन नहीं कर सकते और उसको बिल्कुल सख्ती के साथ दबाने का काम भारतीय जनता पार्टी की सरकार करेगी।
पंजाब में क्या लगता है आपको, अगले चुनाव में भारतीय जनता पार्टी का क्या रोल, क्या भूमिका रहेगी? क्या आप अकाली दल के साथ लड़ेंगे?
ऐसा कहते हैं कि सृष्टि की रचना ब्रह्मा जी ने करी है। पंजाब के अगले चुनाव का आकलन तो ब्रह्मा जी भी नहीं कर पाएंगे भैया, ऐसा मैस होकर पड़ा है। मगर मुझे आशा है कि चुनाव आते आते पंजाब की जनता एक अच्छे निर्णय की तरफ पहुंचेगी और एक पूर्ण बहुमत की सरकार कोई न कोई जरूर बनाएगी।
मणिपुर में आप जो है दोनों कम्युनिटीज के बीच बातचीत का माहौल एक बना रहे हैं, कब तक प्रेसिडेंट रूल रहेगा? कैसे, कब?
देखिए, प्रेसिडेंट रूल पूर्णतया नहीं लगाया गया। अभी हमने असेंबली को सुषुप्त अवस्था में रखा है
जी।
तो हमारा तो प्रयास है कि जल्दी से दोनों समुदायों के बीच में बातचीत हो और शांति स्थापित हो। कुछ सफलता मिली भी है, घटनाएं तो बंदी हुई है मगर बातचीत में भी कुछ सफलता मिली है। परंतु मुझे लगता है कि 2-3 दौर की बाढ़ और होगी।
जो सबसे पास चुनाव है वो है बिहार का चुनाव, तो क्या बिहार में क्या लगता है आपको, क्या
एनडीए अब तक के सबसे बड़े बहुमत के साथ बिहार में सरकार बनाएगा, इसमें कोई दो राय नहीं।
और जो सीट शेयरिंग होगी वो क्या जैसे पिछली बार थी उसी प्रोपोर्शन में रहेगी?
प्रदेश में हमारी पार्टी और हमारे साथी दल बैठकर तय।
पर क्या नीतीश जी के चेहरा होंगे चुनाव का? बाकी मुख्यमंत्री
तो नीतीश जी मुख्यमंत्री है ही, सवाल ही कहाँ है कोई।
तो वही मुख्यमंत्री बनेंगे अगर आप जीतेंगे?
अरे भाई, अभी नीतीश जी के नेतृत्व में ही हम चुनाव लड़ रहे हैं।
कुछ पर्सनल सवाल आपसे पूछना चाहूंगा, हर बार 2-3 पूछता हूं पर इस बार भी
पर्सनल पूछकर क्या करोगे, कुछ निकलेगा नहीं यार।
मैं फिर भी कोशिश करता हूं। मैंने सुना है कि आपका जब जन्म हुआ था तो आपका शरद पूनम के दिन जन्म हुआ था, तो बहुत दिनों तक आपको पूनम भाई के नाम से भी लोग जानते हैं और आपके नामकरण में बहुत देरी भी हुई थी, इसकी क्या वजह थी, कुछ बताइए।
नहीं, मेरी बुआ ने मन्नत मानी थी कि 5 साल का होऊंगा तब नाम तय किया जाएगा। चूंकि मैं पूनम के दिन जन्मा था तो सब पूनम कहते थे। इसमें कोई बड़ा रहस्य नहीं है भाई, हर एक बच्चे के साथ गांव में होता है।
एक कहानी जो मैंने आपसे भी सुनी है थोड़ी बहुत, कि जब आप 11 वर्ष के थे तो आपको आपके घर वाले चाहते थे कि आप यूएस चले जाएं, तो आप घर छोड़कर भाग गए।
छोड़ो, मैं भारत छोड़कर कहीं नहीं जाने वाला, यहीं रहूंगा, यहीं लड़ूंगा और यहीं जीऊंगा।
अगले साल मोदी जी के गवर्नेंस में करीब 25 साल पूरे हो जाएंगे और आपने उनके संग बहुत क्लोजली बहुत समय तक काम किया है। इस केमिस्ट्री के बारे में कुछ बताएं, किस तरीके से ये जोड़ी इतने साल से साथ में काम कर रही है, आप एक दूसरे को कैसे कॉम्प्लीमेंट करते हैं?
देखिए, कोई भी दो कार्यकर्ता एक साथ काम करते, एक नेता और कार्यकर्ता एक साथ काम करता है तो इतने लंबे समय तक काम करते करते एक दूसरे की काम की पद्धति भी समझ में आ जाती है, एक दूसरे का सोचने का ढंग भी समझ में आ जाता है और एक दूसरे का स्वभाव भी समझ में आ जाता है। अंततोगत्वा तो चाहे मोदी जी हो चाहे मैं हूं, हमें हमारी आइडियोलॉजी के अनुरूप काम करना है। तो हमारी आइडियोलॉजी है, वो हमारी गाइडलाइन है, इसीलिए कभी मतभेद पैदा नहीं होते हैं। वो भी आइडियोलॉजी के लिए, देश के लिए, संविधान के लिए सोचते हैं, मैं भी आइडियोलॉजी के लिए, देश के लिए और संविधान के लिए सोचता हूं। तो मतभेद होने का कोई सवाल ही पैदा नहीं होता। जहां एक दूसरे को कंट्रीब्यूट करने का सवाल है, इसमें जरूर एक दूसरे को कंट्रीब्यूट कर रहे हैं, मगर अलग प्रकार से। मैं मोदी जी जो लक्ष्य तय करते हैं, इसका पूरा करने के लिए मेरे साथियों को साथ में रखकर पूरा प्रयास करता हूं। ये मेरे कंट्रीब्यूशन का तरीका है। मोदी जी हमारे नेता है, हम सब कार्यकर्ता जो इनके साथ तैयार हुए, इनके नीचे काम कर रहे हैं, वो सभी के छोटी गलतियां हैं, उनको मोदी जी माफ कर सुधारते हैं। तो हमें भी वो कंट्रीब्यूट करते हैं एक तरफ से कंप्लीट बनाने में। तो इस तरह से एक दूसरे का कंट्रीब्यूशन हो ही जाता है। परंतु ये उदाहरण जो आप दे रहे हो नरेंद्र मोदी और अमित शाह का, ऐसे नरेंद्र मोदी के साथ जुड़े हुए इस देश में हजारों कार्यकर्ता है, जिनमें कार्यकर्ता बनाने से लेकर उसको बड़ा सोचने तक, तरीके से सोचने तक की पूरी प्रक्रिया नरेंद्र मोदी जी ने की है, हमारे कई नेताओं ने की है। और ये बहुत बड़ी बात है। और इसी के कारण हम चुनाव अनेक हारे, मगर हमारी पार्टी कभी टूटी नहीं जी। चुनाव हारे, हम साफ नहीं हो गए। यूपी में कांग्रेस चुनाव हारी, साफ हो गई। बिहार में चुनाव हारी, साफ हो गई। हम साफ नहीं होते, इसी का कारण है कि हमारे कार्यकर्ता आइडियोलॉजी के लिए काम करते हैं, देश के लिए काम करते हैं, देश के संविधान के लिए काम करते हैं।
अमित जी, एक आखिरी सवाल। अगर एक दिन मान लीजिए आपको बिल्कुल फुर्सत हो, कुछ भी करने को ना हो, कोई मीटिंग ना हो, आपके पास पूरा समय हो अपने लिए, तो आप क्या करेंगे उस दिन?
मेरे पास 8000 पुस्तकें हैं, काफी सारे पढ़ने का बाकी है, और मुझे शास्त्रीय संगीत का भी बहुत शौक है, जिसको मैं समय नहीं देना पड़ता। पुस्तक तो जरूर पढ़ूंगा और संगीत सुनते सुनते पढ़ूंगा।
अमित जी, आज आप हमारे संग जुड़े, आपने हमारे सारे प्रश्नों का उत्तर दिया। आपका राइजिंग भारत मंच पे आने के लिए बहुत बहुत धन्यवाद।
Guest tonight, Mr. Vaishnav, is one of the government's key technocrats, alumnus of IIT Kanpur and Wharton, handles some of the government's key economic ministries and very important initiatives like those on AI, semiconductors, Vande Bharat, electronics. And Mr. Vaishnav, you had a very busy day today. There's been a cabinet meeting, a cabinet briefing, and I'm told you were at the rail, you're coming straight from the Rail Bhavan with meetings with railway officials. So thanks very much for making time for Rising Bharat, sir. Mr. Vaishnav, let me begin with what's occupying the minds of many people, which is around AI. There's a huge debate around AI around the world with around deep tech. You have said that our foundational AI model for India will be ready in, say, next 5 or 6 months. Are we on track for that, sir?
Absolutely, we are on track. See, if you look at the talent concentration that we have in our country, among the highest talent nations is India. When we look at how we are democratizing the access to AI GPUs, compute power, our model has been today appreciated by everybody, right? So we have already got 14,000 GPUs empaneled and another round getting soon. So combine these two, the talent as well as the compute power which is available for many people to use, this has given us a very good edge to our developers and our startups, and it's going very well. I must say, I recently read a tweet from, I think Sam Altman tweeted, the way our country has adapted AI, it's phenomenal. It's really, really huge, enthusiastic adoption of AI.
So also on the first Made in India chip, you would put a deadline of September, October this year. How realistic is that, and is that happening?
Oh, that's very much on track. All the 5 units construction going on very well. The plants are now getting set up. At some places, the validation of the machinery is going on. So it's absolutely on track to have the first Made in India chip rollout this year.
Right. So you said that, we are going to have a foundational model very soon. Are we late in the game? There is this whole debate that, if China could come from behind, produce DeepSeek that has totally shaken Silicon Valley, why couldn't India do that with a fraction of the cost, considering we have the best tech talent in the world? So, do you think we are late in the game? Secondly, sir, where do you stand on this whole debate on whether India should look at models? Should India look at use cases? Because Nandan Nilekani has often said, let the big boys in the valley spend all the money. We will build the best AI applications on top of it. Where do you stand, sir?
See, this is just the first chapter of the AI book. This is just a beginning of what AI can do, what it is going to do in coming years. In the industrial world, we have been using AI for almost 20 years now. Lots of maintenance work, lots of machine, lots of industrial plants, where it was not called AI, it was called machine learning and large data, big data kind of things. A lot of IoTs, a lot of sensors, lots of those things were already happening in the industrial world. Now it has come to a B2C kind of consumption, a new setup where practically everybody is using AI. So I wouldn't say that we are late. I would say that since this is just a beginning of this entire new industrial revolution, as many people call it, we are very much in the race, and we will be among the top few countries who have that ability to harness the power of this new technology. Foundational models would be needed. They would be needed for two different reasons. First reason is your ability to have control over, as a country, not just as government, but more as a country, your ability to have control over this very key technology is very, very important. Just like it's very important to have your own telecom stack. Just like it's very important to have your digital infrastructure. Just like it is very important to have your own semiconductor manufacturing and design capabilities. Similarly, we must have the LLM within our ecosystem. Second reason is biases. Biases can be very dangerous. They can really play very negatively, play out very negatively. So it's very important to have the bias-free, diversity-embracing, understanding the cultural context of our country, making sure that so diverse a country as we are, we should be able to have the AI understand that and be free from those biases. That's why it's important.
So on social media, sir, there are issues around fake news, and there is also the DPDP bill which has been passed, which was passed by your government under your tenure. What is the time frame for operationalizing those rules, and when will we see the rubber hitting the road, as it were?
See, the approach that we have followed, there are two things that we have meticulously followed. One, we decided not to make either the rules or the act very prescriptive. We wanted it to be very principles based. Now that's a very different approach from what the Western governments took, that approach. Their approach was very prescriptive, identifying the number of hours and all.
Hello and welcome to India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Global markets continue to reclaim lost ground. US President Trump signals more tariff concessions after giving a breather to US tech companies. Stocks gain across Asia and Europe. The Sensex and the Nifty gained 2% thanks to strong global cues. Midcaps outperform. All sectoral indices close with gains. Shares of automobile and component makers rally after President Trump hints at some tariff concessions, including a temporary pause, but he also signals fresh tariffs on pharma and semiconductors as trade officials launch an investigation.
You see the meeting today, is that wonderful? That's a lovely meeting. The meeting like trying to figure out how do we screw the United States of America.
President Trump lashes out after China's President Xi Jinping makes a diplomatic outreach to neighboring countries after signing deals in Vietnam. Jinping lands in Malaysia. Beijing orders Chinese airlines to stop taking deliveries of Boeing jets. India's trade deficit widens to more than $21 billion in March due to a sharp rise in imports. Commerce Ministry says India and the US have signed the terms of reference for a trade deal. The first tranche of an agreement is likely by September or October this year. Inflation cools to its lowest level in nearly 6 years. Consumer price index in March eases to 3.34%. Food prices dropped to a 40-month low of 2.7%. India's weather department predicts an above-normal monsoon for this year. The long-period average of 105% is higher than the 103% estimate by private weather forecaster SkyMet, which is expecting a normal monsoon. SEBI cracks the whip on Gensol, orders of forensic audit accusing the company of fund diversion, round-tripping and breaching trading rules, bars promoters Anmol Jaggi and Puneet Jaggi from being directors on the board, also puts a proposed stock split on hold. More than 21 acres of land for just 99 paisa. The Andhra Pradesh government rolls out the red carpet for TCS, allocates land in Visakhapatnam for almost no cost in a bid to make the city an IT hub, cites the example of Tata Motors getting subsidized land in Sanand from the Gujarat government. Urban Company set to cut the size of its proposed IPO by 80% due to recent market upheaval. Sources say the company will file papers with SEBI next month to raise 528 crore rupees. The issue will value the company at over $2.5 billion.
India's century, and I'm not backing off of that. I really do think this is the moment for India to lean forward.
The top brass at McKenzie bets big on India, says the tariff war presents an opportunity to lean forward and capitalize on the manufacturing opportunity. Supply chain resilience time frame and no regret moves as the matrix CEOs are looking to navigate the current uncertainty. That's an exclusive. South Indian states top the annual rankings on the delivery of justice. The India Justice Report puts Karnataka on top, followed by Andhra Pradesh, Telangana, Kerala and Tamil Nadu completing the top 5. Uttarakhand, UP and West Bengal rank at the bottom. Well, let's go straight to the top story this evening. Stock markets are regaining lost ground across the world after President Trump's tariff flip-flops. The gains largely on account of President Trump pausing the sweeping tariffs on mobile phones, computers manufactured in China, as well as chips. But Trump has also hinted at potentially pausing the tariffs on automobile makers and auto component makers. First, let's head to Asia, where the stocks clawed back some gains after the recent brutal sell-off. So the Hang Seng, Nikkei, Kospi and the Shanghai Composite all closing in the green for the second consecutive day. However, Trump has doubled down on imposing tariffs on pharmaceuticals and semiconductors. US trade officials have launched a probe into pharma and semiconductor industries before taking a decision on potential tariffs. So that's still looming large. The FTSE in London, the CAC and the DAX also trading in positive territory. Here's President Trump.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, is very simple. It's inversely proportional. The higher the tariff, the faster they come. And yeah, we're going to be doing that. That's going to be like we have on cars. We have, as you know, a 25% tariff on cars. We have a 25% tariff on steel and aluminum. And that's what that category fits right now. I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places. And they need a little bit of time because they're going to make them here.
Well, that's President Trump, and the back and forth on tariffs continues. But back home, Indian markets playing catch-up once again after a trading holiday yesterday. And remember, Friday is going to be another trading holiday. The Sensex and the Nifty gained over 2% in what was a broad-based relief rally across the world. 1,500-point higher on the Sensex, the Nifty up 500 points. Midcaps, 1,400-point jump there and a 1,300-point jump on the Nifty Bank. So that's the story as far as our markets were concerned. With this, the markets have regained all the losses since President Trump's reciprocal tariff announcement on the 2nd of April. And by the way, we've got a buy figure coming in from FIIs today. Now, China is pulling all stops to win over its Southeast Asian allies in order to counter President Trump's tariff threats. China's President Xi Jinping arrived in Malaysia's Kuala Lumpur in what was his first official visit after more than a decade. In a written statement, President Xi said he expects the visit to deliver fruitful results and open a new golden 50 years of bilateral relations. This was the second stop of his three-leg trip. Xi flew down to Malaysia from Vietnam, where the two nations signed dozens of agreements on enhancing supply chains, railway cooperation, among others. Trump said Xi was in Vietnam to figure out how to harm the U.S. The Chinese president will also visit Cambodia this week.
I don't blame China. I don't blame Vietnam. I see their meeting today. Is that wonderful? That's a lovely meeting. The meeting, like trying to figure out how do we screw the United States of America.
Well, that's President Trump. Doesn't hold back his words, does he? And speaking of China, the country has reportedly ordered Chinese airlines to stop taking deliveries of Boeing jets amidst trade tensions escalating with the U.S. Madiha standing by to explain what this means for China's aviation industry, what this could mean for Boeing, and what, in fact, it could mean for India, which has an order book backlog. Madiha.
Well, to understand whether a pause on Boeing's deliveries will change anything for Boeing or China, we need to look at China's aviation landscape and how it stands as compared to India. So according to planespotter.com, China has 67 airlines, including passenger carriers, general aviation and cargo airlines. That's more than double of India, which has 22 players, big and small. Now, the next number is even more startling, which is the capacity. China has over 4,000 operational planes, and this includes your wide body, narrow body, as well as the 70 to 80-seater regional planes. Indian airlines put together have only 740 operational planes. So does China need more capacity? Let's look at how many planes Boeing has to deliver. As per Boeing's website, it has to deliver 130 planes to Chinese airlines as compared to 506 planes to Indian airlines, including Air India, Akasa Air and SpiceJet. We also have to remember that Chinese airlines had already placed orders for Airbus and Boeing, and Indian airlines are now expanding their capacity and also facing shortage. So if China market closes, it could also mean early deliveries for Indian airlines, which have been struggling to expand capacity. Moreover, China also has its own plane maker Comac, which has already started delivering its 737 and A320 rival called C919. There are 114 Comac planes operational in China, of which 13 are the narrow-body C919. So Comac has a long way to go to match the production capacity with Boeing and Airbus, but as things stand, it doesn't look like a pause on Boeing's deliveries will hit Chinese airlines very hard, as over 4,000 planes makes them seem quite comfortable with their capacity.
Madiha, many thanks. Investors should be prepared to be fooled many more times, warns Morgan Stanley on Trump's tariff plans. In a note titled, "Fool me once, shame on you. Fool me twice, shame on me." The global brokerage firm urging investors to buy the weakness and not let their guard down. Morgan Stanley's also cut its FY26 GDP growth forecast for India to 6.1% from 6.5% earlier. Meanwhile, S&P Global Ratings expects the growth of major Asia-Pacific countries, including India, China and Japan, to slow by between 0.2 to 0.4 percentage points over the next 2 years if Trump implements the reciprocal tariffs. UBS believes that higher U.S. tariffs could delay private capex pickup in India. It's also cut its FY26 GDP forecast for India from 6.3% to 6%. UBS downgraded its GDP estimates for China and the U.S. as well. India's trade deficit has widened in March due to sharp rise in imports. Exports grew less than 1% to just under $42 billion. Imports rose by more than 11% to over $63 billion. Now, this has left the trade deficit at more than $21 billion. Abhimanyu standing by with more on the trade data and what has led to the sharp spike in imports. Abhi.
Out of the top 10 imported commodities by India in FY 24-25, in both dollar and percentage terms, there was a surge in total imports, which was witnessed in 8 of these commodities. There were only 2 commodities, namely iron and steel and coal, coke and briquettes, in which there was a fall in overall imports. Now, speaking of the surge commodity-wise, at the top, of course, was 3.9% year-on-year rise in imports of petroleum and related products. A significant percentage increase had had been noted in the next two items, the next two imported commodities, namely a 12.3% year-on-year rise in imports of electronic goods and a 27.38% rise in imports of gold. Also, the Commerce Ministry has set up an import monitoring cell which comprises of officials from several departments and government ministries, which includes the Department of Commerce, the DPIIT, the DGFT and the CBIC. Now, this cell is going to act based on the available inputs and commodity divisions within the Department of Commerce, and will also remain in touch with several export promotion councils and traders across the country to keep an eye on any surge in imports from various countries and in several commodities to protect the interests of local manufacturers. Also, Commerce Ministry has indicated that there has been an assessment which had highlighted a risk of merchandise dumping into India due to reciprocal tariffs, and the rising US costs may prompt exporters from countries like China, Vietnam and Indonesia to divert goods to India, since these countries have been impacted adversely by reciprocal tariffs from the United States. So, of course, the government is keeping a close eye on any trade diversion from these countries to protect the interests of Indian manufacturers, and is going to keep a close watch on the commodities which are going to be imported into India in the coming months.
Many thanks. On to a CNBC-TV18 exclusive. The top brass at McKenzie is betting big on India. Global managing partner Bob Sternfeld believes the tariff war presents an opportunity to build resilient supply chains. Remember, India's share in the US smartphone imports has increased from nearly 8% in 2023 to 13.7% in 2024 after Apple started to assemble phones in a factory near Chennai. McKenzie believes India's manufacturing is nowhere near its potential and remains an attractive proposition for global CEOs.
What I hear from CEOs underneath this are a few things that I think are useful in these times. And on the one hand, making long-term decisions on things that may not have long-term assurance is not a recipe for success. And so many CEOs are coming back to a couple principles that at least I hear. One is the notion of resilience. How resilient is my company to future shocks going forward, because these may not be the last. And I'm hearing more and more, I may need just to plan for a world that is fundamentally volatile as opposed to hoping for a return to some kind of normality. And so how resilient is my company? And the resilience notion is not just defensive, but how do I have enough capital, enough talent to make a few bold bets while I protect myself from shocks? So I hear resilience as one. The second thing is this notion of timeframes. Will the decisions that I'm making be durable over the time frame of that investment decision? So if it's moving a supply chain, if it's developing a natural resource, if it's making an R&D decision, these are often decade-plus decisions with decade-plus payback cycles. And so what I often find is, how do I marry the return profile with the volatility profile to say, is this something that is robust no matter what? So take a practical example on this. Many are asking around the world, how much of my supply chain should I have in the US, right? Given tariffs. Well, if you back up, we had done some work in the pre-tariff era that said, supply chains aren't resilient enough, that COVID and the Russia invasion of Ukraine showed that we actually had fragile supply chains. And there was a logic for moving part of your supply chain closer to the source of demand. The US is the largest source of demand, irrespective of tariffs. And so several CEOs are coming back to that foundational logic to say, would I make this decision even without tariffs? What portion of this is robust long-term, based either on resilience logic, long-term demand logic? That's a practical example of this time frame piece. And maybe the third thing I'm hearing, if it's resilience, time frames synchronized with the investment decisions, the third is this notion of where are no-regret moves just to speed up? And in particular, one of the topics that's around that is the implementation of new technologies to change my business. No matter what happens in the world, I am going to have to implement technology faster to change my business. That's a no-regret move. And so I'm often asked the question, Bob, what are the no-regret moves that I can be implementing irrespective of, these external stimulus that's going on out there.
And you can catch that conversation with McKinsey's Bob Sternfeld and Rajat Dhawan on Global Dialogue at 9:30 p.m. right here on CNBC-TV18. The big macro data tonight. Inflation cooling to its lowest level in nearly 6 years. The consumer price index in March eased to 3.34%, with food prices dropping to a 40-month low of 2.7%. Lata's here with more on the inflation fine print. Relief and comfort for both the government and the RBI, Lata.
Well, it is a shockingly low inflation number at 3.34%, not just below the CNBC-TV18 poll of 3.59%, but way lower than the RBI's mandate, which is to keep CPI inflation at 4%. So at 3.34%, the Reserve Bank may be worried that we are entering probably deflationary territory. What adds to the fear is the components of inflation. While it is welcome that food inflation has fallen to 2.69%, which is a multi-year low, core inflation has also fallen to 4%, only if you include gold. Gold is a big component of core inflation. If you subtract gold, then economists tell us that core inflation, that is non-food, non-fuel inflation, falls to 3.2%. With both headline and core way below the 4% mark, the stage could be set for the Reserve Bank to give a double cut. That's not the consensus expectations we get from economists at this point in time, but that's certainly an expectation from the bond market. The OIS market is already pricing in a possibility of a double cut or a 50 bips cut in June. Just to give you a few more details, food inflation is lower, not just because of vegetables, which is a minus 7% year on year. It's also lower because of cereals. Cereals is again a negative number. We are also getting a negative number or a fall in prices year on year for an important protein item like egg. So all told, food inflation seems well under control. And if you add to it the IMD forecast, which came in today, of 105% monsoon this year, long-term average, it looks like food inflation for the coming Kharif also should be under control if the IMD's forecast of monsoon comes true. So chances of inflation remaining below the mandated 4% mark for all the 12 months of this year looks a distinct possibility, and hence the expectation that the Reserve Bank could give a double cut in June. That's what the bond markets are telling us. As well, for the entire cycle, the expectation now is that the Reserve Bank may not stop at 5.5, but could go to 5.25. That again is something which the OIS market is telling us. So all told, a far lower than expected inflation number, leading to expectations of a bond rally.
Lata, many thanks. And as Lata was mentioning, India's weather department expects an above normal monsoon this year. The Met is long period average forecast is at 105%. Any reading between 96 to 104 is considered a normal monsoon. So at 105, the government forecasters expect rainfall to be above normal. Private weather forecaster SkyMet has predicted a normal monsoon with the long period average at 103%. Now, the Andhra Pradesh government has rolled out the red carpet for TCS in a bid to make Visakhapatnam an IT hub. The state government has allocated more than 21 acres of land to TCS for just 99 paise. In a press release, the Andhra Pradesh government cites the example of Tata Motors getting subsidized land in Sanand from the Gujarat government. Shilpa is standing by with the details. Shilpa, the government in Andhra Pradesh, led by Chandrababu Naidu and Nara Lokesh, have, of course, been very, very vociferously talking about drawing in investments, and they're putting the red carpet out, so to speak.
Well, you're absolutely right, Shireen. This decision is part of the state government's aggressive push, not just to attract investments, but to promote Visakhapatnam as a city as the next big tech hub. And like I said, 21.16 acres have been allotted to IT major TCS for a price of just 99 paise. Now, TCS is expected to invest another 1,300 crores here to set up a development center and on this land, and it's expected to create about 12